You don't have to be a coin expert to understand why these coins are so rare. And the best news of all, we have it on a 2-payment option. So if you can't swing the entire amount today, put half down today of only $1,697.50, and we'll hold one of these sets for you. And that's critically important because we have a limited supply at this price. You can pay the balance in 30 days. This truly is a must-buy opportunity. This classic American Silver Eagle set with the heraldic eagle reverse. Again, 2021 is the last American Silver Eagle with the heraldic eagle reverse. And it's these earlier American Silver Eagles that are the rarest in high-grade condition. All those future collectors of American Silver Eagles, as this series continues on into the future, into the year 2025, year 2030, this is the most popular silver dollar series in the history of the United States Mint. So to get this set now, these early dates, these are the tough dates. These are the dates that will be most demand in the years and decades ahead. This is a set you want to put away for your kids, your grandkids. This is a set that is a true national treasure. It's what this country is all about, that walking Liberty obverse, the heraldic eagle reverse, these beautiful, magnificent silver
biscuit with prime rib at Carl's Jr. and Hardee's. See Jurassic World Dominion in theaters June 10th.
Kick off summer with 2 incredible shows. America's Got Talent.
That was sensational!
And Dancing with Myself.
My body doesn't do that.
Check your local listings.
Really? Really? Free testing and charging?
And if you need a new one, we've got you.
Really?
Welcome to America's #1 battery destination. AutoZone, your battery solution.
This one go the distance. Loud and clear, hope you listening.
Over to Shara.
What a journey this man has gone on. Gary Prohaska.
He's here to take over.
Valentina Shevchenko. She's a straight-up assassin.
Tyler Santos, flyweight's newest contender.
One of the most epic fights in the history of the UFC.
I said it loud and clear, I hope you listening.
I can't wait.
I did it all. Yeah, with every broken bone, I swear I lived.
This is how Bridget got me to switch to Aldi. Bridget loved Aldi, but I didn't know what to believe. I was like, what about ground turkey? Do they have ground turkey? And I was like, yes, get the ground turkey. Then I was like, what about specialty cheeses? And I'm like, they have all the cheeses. Brownie mix? Yes, the best brownies. Tail and shrimp? All the shrimps have tails. So then I was like, have you tried the red bag chicken? It's insane. And you were like, holy cow. I don't say holy cow. All my shopping now is legit from Aldi.
Friends don't let friends pay too much for groceries.
I swear I lived.
We're back. The Dream took the WNBA's top defense to Seattle to take on the Storm Tuesday. Seattle trying to get some momentum after a 5-5 start. Pick it up early in the fourth quarter. Storm up 15. Jewel Lloyd. She had 26 to lead everybody. Storm go up by 17. But here comes the Dream. Off the jump off, Christy Wallace, quick 3. She had 12, 10-point game. Now a 6-point game. Cheyenne Parker getting there and finishing. She had 13-0 run for the Dream. It's a 4-point game. Under 4 to play. Breanna Stewart. Not the greatest shooting night for her, 5 for 15. She did have 19 points, so Storm back up 7. Just over $130 to go. Still a 7-point game. Gabby Williams able to keep it alive off Lloyd's miss. Sue Bird gets it. Goes back to Williams for the layup. Great defensive game from the Storm as well. They held Atlanta to 36%. Brian Howard just 11 points on 5 for 17 shooting. And then Ezi Magbagor knocking down the 3. Storm hang on to win at 72-60. It's the fewest points they've allowed this season.
Well, the Liberty started off the season not so hot. 1-7. They've now won 3 of their last 4, and they're playing the Lynx here. Third quarter, it's time for Sabrina Ionescu to show up. Hits that step back. The Liberty take a double-digit lead. 3 minutes later, it's a 13-point game. Ionescu from deep drills it. Liberty up 16. Ooh, feeling her shot and all. She ain't done yet. Ionescu, this time from the logo. Why not? Put it up. Watch it drop. Ionescu, 26 points, 10 of 11 shooting. Stan, that's 90%. The first Liberty player to do so. Wow. 8 assists, 8 boards. Have a game, young star. The Liberty win it handily, 88-69. And here in LA, this was supposed to be a bounce-back season for the Sparks, but things haven't really started off that way. So the team fired head coach and general manager Derek Fisher. The Sparks are 5-7, 8th place in the standings this season. Assistant Fred Williams will act as interim head coach, and the search for a new GM begins immediately.
All right, let's give you more info you need to know heading into Game 3 of the NBA Finals. Jason Tatum averaging 20 points per game in this series, but he's just 4 for 22 on 2-pointers. That's the worst 2-point percentage through the first 2 games of a Finals in the shot clock era. To regain home court advantage, the Warriors will have to win one in Boston. Golden State has won a road playoff game in 26 straight playoff series, the longest streak in NBA postseason history. And as we mentioned before, Celtics haven't exactly been dominant at home, going just 5-4 so far this postseason. Now, the trio of Steph Curry, Klay Thompson, and Draymond Green has won 18 finals games together. That's one shy of matching the most by any All-NBA trio in the last 50 seasons. Here's Curry with Malika Andrews.
I mean, it'll mean everything because obviously pretty much means you're winning the series.
Yeah,
and
very few times.
I know. And you think about like when Andre won, when KD won his 2. There's just so much joy in that moment. No matter who wins it, there's so much joy in that moment. You want to be able to experience it. And I think the context of every series changes in terms of like what it's going to take to actually win. And I think for us to win this championship, get 3 more wins, and hold that Larry O'Brien trophy, like I'm going to have to keep playing the way that I am and hold myself to that standard. Like you said, the smaller trophy isn't the motivation at all. But you know what comes with winning the big one and what it takes to do that. So I'm focused on that. The fact that I have another opportunity and we have another opportunity to be here on this stage after the conversations over the last 2 to 3 years, that says a lot in and of itself anyway. So I'm excited about it.
Game 3, Wednesday, 9 Eastern, 6 Pacific on ABC, ESPN Deportes, and ESPN Radio. Series moving to Boston, tied at a game apiece. Coverage tips with NBA Countdown at 8:30. Mark Kestisher, Doris Burke, and PJ Carlesimo have the call on ESPN Radio.
24 women have filed civil lawsuits against Cleveland Browns quarterback Deshaun Watson, accusing him of inappropriate sexual conduct during massage sessions. In the wake of these pending civil suits, the New York Times reported Tuesday that Watson booked massage appointments with at least 66 different women over the course of 17 months from 2019 through 2021. The Times also reported that the non-disclosure agreement that Watson gave to some of these women to sign came from the Texans' director of security. The NFL investigation into Deshaun Watson is still ongoing, and Watson has denied any wrongdoing. Elsewhere in the NFL, we all remember the tumultuous offseason for Aaron Rodgers last year. Well, this year, there's a much different tune for the Packers franchise quarterback. Rodgers signed a 3-year, $150 million extension back in March. He reported to minicamp on Tuesday, and he spoke about his commitment to this franchise.
Every year, it seems like a slightly bigger commitment to commit to being the guy again in another season. Obviously, I want the team to be successful. Obviously, I don't want to be a bum, standing back there playing like crap and not able to move around. So if the talent goes, it's a no-brainer. But it's a little harder when you still can really play, and the mental part is difficult.
At one point, Stan, this was a sight we thought we'd never see again. Tom Brady back on the field. So after announcing a retirement and then an unretirement, the Bucs quarterback practiced with his team on the first day of Tampa's minicamp. The team looks for another Super Bowl run after they had a quick playoff exit last season.
Deebo Samuel requested a trade from the 49ers in April, but He was there for the first day of San Francisco's minicamp Tuesday. It was mandatory, so he avoided a fine by showing up, but he didn't practice. He did some running on a side field. It's the first time he's participated in the off-season program. Kyle Shanahan is hoping his presence is the first step in securing a long-term deal.
I don't think the relationship was ever too far away to not get it back to normal, and I think we're working on that. Anytime you're away from each other for a while, that's always harder, but it's good to get him back in here and start getting him around the guys again.
He rescinded his trade request, and are the two sides, trading numbers, are negotiations active right now?
I mean, they always talk. I mean, I'm not going to get into that, and you guys can ask Debo to speak for himself on that, but I mean, love our relationship with Debo, and hopefully that'll help us be able to solve this contractually before we get to the season.
DK Metcalf did not show up for Seahawks minicamp. It's also mandatory, and Metcalf could face fines totaling $93,000 if he skips all 3 days. He had been participating in the offseason program previously. He's seeking an extension to his rookie deal. He's also recovering from surgery to address a foot injury that lingered last season while he played through it. Sean McVay said he had a feeling things would work out fine with Aaron Donald's contract after Donald showed up to his wedding Saturday night. They did work out. Donald has a reworked deal that will pay him $95 million over the next 3 years. That will make him the first non-quarterback with a $30 million annual salary. Probably a nice wedding gift for McVay as well. Donald with the Rams at their minicamp on Tuesday.
It's more than just the business side that needed to get handled. There's a lot of things in my life personally that I had to handle. So he understood that, and that's why I love him. Because it was so much deeper in football for me, and for my decision to be made, and talk to my family about it, talk to my kids about it, and we're here now. I got a commitment with this organization. I'm gonna do everything I can and continue to play at a high level, continue to do my part to continue to trying to be another world champion and do that as many years as we can. So while I'm here.
The resume is already solid. Only 2 defensive players have been named Defensive Rookie of the Year, Defensive Player of the Year multiple times, a 5-time first-team All-Pro, and a Super Bowl champion. One is Aaron Donald. The other is Hall of Famer Lawrence Taylor. All right, still to come. She's a rapper. She's a scholarship athlete heading to LSU. Go Tigers. And she signed to Rock Nation. What else can Flau'jae do? She'll join the show next on SportsCenter.
Who the hell is that?
Elvis Presley.
We're just players dressed in black.
I believe I can be great.
Elvis Presley. Elvis Presley. Elvis Presley.
He was a taste of forbidden fruit.
Please don't let him hurt my baby.
Hurt him? Looks like they want to.
All of America will be talking about Elvis Presley.
Rated PG-13.
As electric vehicle driving becomes quieter, so do our tires. Ion. Electrified Hanguk Tire, official tire of Major League Baseball.
Welcome to the absolute world of cocktails. Here, everything is mixed. Expression, personalities, friendship. Absolute, born to mix.
With every generation, the Subaru Forester has been a leader in crash safety, working to undo the impact a crash can have on your life, which has led the Forester to even be able to detect danger and stop itself. The Subaru Forester has earned the IIHS Top Safety Pick Plus 8 times, more than Honda CR-V or Toyota RAV4. Love. It's what makes Subaru, Subaru.
If you thought one napkin for the quarter pounder with cheese was enough, it's not enough.
I love my new home. I always wanted a house with historic architecture, but it might be too Victorian.
Gosh, interesting hemline on those pants.
Yes, I do believe they're called pants.
Pardon me.
No, pardon me. At least Geico makes bundling my home and car insurance easy. I save so much.
I
have come to call upon...
Just text me. Well, I'm heading up.
It's a ghost.
For bundling made easy, go to geico.com.
It's called self-care.
Starbucks Triple Shot Energy. What gives you energy?
So, people can get a free Samsung Galaxy S22 when they trade in a Galaxy. Any year, any condition.
Oh, I get it. So you can take your old phone that you've had for 12 years and loved every minute of and trade it in for something new that suits your life now?
That's right, yeah.
Then enjoy immediate success, even though you'll never forget your old phone, ever.
It's a great trade.
Life-changing.
Get a free Samsung Galaxy S22 with any Galaxy trade-in. Any year, any condition. Only from AT&T.
Chicken fries are back on the 2 for $5 mix and match at Burger King. Want them as a side? Duh. A snack? Obviously. A meal? Yes. Mix and match chicken fries your way on the 2 for $5, only at Burger King.
They say all the world's a stage, but no stage shines brighter than this one. Because here the stars outshine the lights, and the spectacular can be found in every moment.
The Eastern Conference Final on ESPN. Will the Lightning earn a chance to cement their legacy? Or will the Rangers extend their improbable run to the Cup? Lightning, Rangers. The Eastern Conference Final continues.
50-50, honoring 50 years of Title IX and the women moving the world forward.
One of the things we really focus on, that we're focusing in on, is whose responsibility is it to tell this history, to bring this history forward. You should want to know whose shoulders you stand on. You should want to know that somebody, young girls like we were, had the same dreams that you had. I love to talk about the fact that what we passed on as recipients of Title IX transcends sports.
I believe I'm gonna be the face of basketball one day. Like everything that I want to be, I'm becoming. I say it, and then I work for it, and then I get it. So I know that I'm gonna be the greatest. I took a whole different lane with it, and I'm writing my legacy right now.
And Flau'jae Johnson joins us now on SportsCenter. Flau'jae, let's start with your music, and let's start with America's Got Talent. You were a quarterfinalist when you were 14. What did that experience do for you in terms of your confidence as an artist?
Oh, man, that experience just built my confidence up so high. You know, Simon Cowell coming back there and telling me, like, you know, you're a superstar, and, like, getting the golden buzzer, like, that really took it up there. Like, I was like, oh, my God, I'm a real rapper. Like, this is crazy.
One of the songs you performed was a song called Guns Down that has a positive message about ending gun violence. Why is that so important to you?
Well, it's important to me because, you know, my father was tragically murdered in Savannah due to gun violence. And, like, a lot of my friends and family, like, over the years have been, like murdered senselessly because of gun violence. And, you know, that was just my way of speaking out, you know what I'm saying, and getting my story heard and my dad's story heard.
Now, let's talk basketball now. All-time leading scorer at Sprayberry High School outside of Atlanta. I got to give them a shout out.
You know the vibes. Shout out Sprayberry. Shout out Coach Kelly Avery. You know the vibes.
All right. So now, when did you realize I got some game here that I can take to a different level?
You know, I realized that when I got my first offer. You know what I mean? I got my first offer from Coach Yo at Ole Miss. And ever since then, I was like, wow, I can actually do this basketball thing to the highest level. You know what I mean? Like the SEC Power 5 school. I was like, wow, my dream can really be a reality.
Mm-hmm. Then you signed with LSU. Why the Tigers?
You know, 2 words, Kim Mulkey. You know what I mean? She's a winner. She's a winner, and I want to win. You know, I want to play for the best. You know, I want to be pushed to my limit, and I want to be coached hard, and I want to win.
Back to music, you also signed with Roc Nation, which, for people who don't know, is Jay-Z's venture. What has that done for you?
It's been great for me. You know, I have a distribution deal with Roc Nation, EQ, and it's just been so cool being able to tell my story and have creative control over my music and still be able to play basketball. It's all been a blessing to see how, like, my journey has aligned together.
Mm-hmm. Have you had any interaction with Jay-Z yet?
Not yet. You know, you got to climb up some ladders, you know, to get to the boss, man. So I'm just working up. I'm working.
All right, Jay, if you're watching, shout out to Fly Jay. Get in contact.
Come on.
So now the music people in your life say, at her heart, she's an artist. And the basketball people in your life say, when it comes down to it, she's a hooper first. What do you say?
I just tell them I'm both. I don't know how I do it, but man, I do it. It's like, you know, it's crazy because like in the music world, I'm in like doors and rooms that like with the top dogs. And then at the same time in basketball, I'm at the same doors with the top dogs. Like, you know, McDonald's All-American game, Jordan's game and stuff like that. You don't get into those games unless you're talking about something, you know what I mean?
Yep.
It's just a blessing being able to do both. Like I'm blessed to pioneer it and just be an example for little girls around the country.
All right, so we'll look for you in both the WNBA and at the Grammy Awards, okay?
You just said it just right, my man.
And as a New Orleans native, let me also say go Tigers.
Go Tigers, go Tigers. You know the vibes.
Hey, Fly J, continued success to you. Great having you on the show.
Yes, sir. Thank you so much. I appreciate it. It's a dream come true.
Oh, I love her. That's awesome.
A lot of talent.
Yes, can't wait to see what she does at the next level. Here we go to San Diego. Mets, Padres. You mix the two, you can call them pets. Francisco Lindor strikes out swinging, but Marte caught stealing and a little slow to get up. Tapping at his left quad, he'd stay in, but eventually leave in the second inning. Jerks and Profar leading off in the bottom of the first, and see you later. Taking Taijuan Walker deep, thank you very much. Padres lead 1-0, his 7th of the season. Top of 2. Ooh, that had to hurt. Pete Alonso catches that on his right hand by Yu Darvish. Not great. Alonso would leave the game. Initial x-rays are negative. The Mets have been hit 40 times this season. That's the most in Major League.
This summer, prime rib is the star. Bite into the new Primal Angus Stick Burger at Carl's Jr. and Hardee's. See Jurassic World Dominion in theaters June 10th.
The Google Pixel 6. For all the Bucks fans, Serbian fans who became Nuggets fans, Heat fans who want to get rid of photobomb fans, Magic, Woj-bomb fans, Top Shot fans, all the nothing fans.
Are you taking a photo of us?
Is that okay? For that once-in-a-lifetime shot, and fans seeing it up close for the first time. There are so many ways to love the NBA, and the Pixel 6 is built for all of them.
Touchdown! Wow, did he make a great play.
This will be one of the biggest trades in NFL history.
The NFL schedule is here.
Touchdown! It's a rematch that's been talked about over and over.
This is where it all starts.
Pad level, score!
Download the NFL app today.
Was there something missing in my life till now? An absence I could not quite place but knew somehow. And then this vegan bakery came sliding down my screen. And Everjohn repaired and tightened up my seams. Voila, my cherudi, remix French dip and squid cuisine. Endless lit, infinite possibilities. I'm down. A world where personalized ads help good ideas get found.
When you use the app to get free medium fries and drink with your quarter pounder with cheese, be sure to save some fries for after, because the ketchup that falls from the QPC just hits different.
What's it like having Xfinity Internet? Well, you can get a next-generation gateway every 3 years. It's like your life is set to upgrade mode.
Really?
Really?
Whoa, that's awesome.
I know.
What? Must be nice.
It's amazing.
I wish I were a robot.
Here, play music.
Every 3 years, you can get a gateway upgrade, only from Xfinity. Unbeatable internet made to do anything, so you can do anything.
Playtime mode is the big ring. Go. Playtime mode is the big ring. Go.
It's NBA Finals time.
They let us get up on no points, it's a wrap. Don't shine every time, it's an open look. Over with. Shake them up, cross them up, post, move. Defense, lock them up. Perfect release from the top of the key. 3-step back, pull up, switch cheese, slam. Ooh. Got the crowd out they seats. One step closer to the big ring.
Playtime mode is the big ring. Go. Playtime mode is the big ring. Go.
The NBA Finals, presented by YouTube TV. Game 3 tomorrow on ABC.
Take your memories. Take them to Verizon Cloud, the cloud built with unlimited space. You and your family can save files across multiple devices, and everyone gets continuous backup from the network they trust to help keep your digital world safe and secure. Get unlimited space from Verizon Cloud for 30 days on us. Go to verizon.com/getcloud to get started.
I am Hercule Poirot. The crime is murder. The murderer is one of you.
I don't feel safe with any of them.
It was his scalpel. Me. You murderer! Lock the doors!
Someone else is dead.
I want you to find who did this.
You lie in my face!
I will deliver your killer.
Rent or own this movie today with Fios On Demand.
Sports Center is delivered by Pizza Hut. No one out-pizzas the Hut. Order today at pizzahut.com or download the app.
Welcome back to SportsCenter. Elsewhere in the country, you'd call them home runs. Not here. This is Los Angeles. We're fancy. Rodeo driving, baby. Marlins, Nationals. Second inning, bases loaded. Jazz Chisholm Jr. Play that Jazz. Hits a grand slam just over Lane Thomas's glove. And then in the fifth, with a man on, another two-run shot. Feeling himself. Marlins go on to win big, 12-2.
So I guess Don Mattingly's team meeting worked out. He was worried they were going to come out flat, but they didn't. Marcus Semien had a doubleheader on Tuesday, and he was outstanding in both. Game 1, top third of Cal Quantrill. Semien's fourth of the season. Texas were going to lose that game 6-3. Game 2, top of the third, Semien off Kirk McCarty.
Ooh.
That's number 5 on the year. Later in game 2, top 8, Semien. Still not done. This off Anthony Goes, and it goes.
Oh, yeah.
Semien's third of the night. Rangers win game 2 by a score of 6-3.
All right, the moment you've all been waiting for. We're counting them down at SportsCenter Top 10. Start with number 10, Cardinals, Rays. We go to extras. Brett Phillips laying down the bunt. Nolan Arenado in one solid motion. Watch him coming through. He'll scoop, spin, on the run, over his pitcher. Get out of here. The Rays beat the Cards in extras.
Number 9, the Disc Golf Pro Tour.
Oh, wow.
This is Gavin Babcock with a hole-in-one from 295 feet away. Oh, there it is. All right.
There it is.
Babcock gets $10,000 for that hole-in-one. He doesn't need, he buy himself a new shirt. He doesn't need that one.
Probably like 10,000 of them. Number 8. It is.
Are you trying to say that was a dollar shirt?
I don't know, maybe. Costco, they have great deals. Nick Kyrgios with a great deal here against Yuri Lehecka. He's like, what the hecka? Kyrgios with a beautiful shot, and he would beat him.
Brewers and Phillies at number 7. Nick Castellanos, ground ball to third. Check out Pablo Reyes. Barehanded. Get a great look at it from this angle.
Oh, yeah.
In time. Brewers fall to the Phillies 0-3-2.
It's all about timing. Number 6, Blue Jays, Royals. Bo Bichette, I like to call him Flo Bichette. He got the hair this time. I think it's in a man bun, but he makes sick plays. Nice catch. Blue Jays beat the Royals.
Number 5, Lynx and Liberty. Closing moments of the first half. Sabrina Ionescu. So take that with you to the locker room. Half-court buzzer beater. Liberty beat the Lynx 88-69.
Number 4, it's Cruz on Cruz crime. This is Nelson Cruz hitting the ball deep. Brian De La Cruz. Just add a few syllables to your name and you can do things like that. Boom! Into the wall, making the catch. Get him a Jersey Mike's. Marlins beat the Nats.
All right, number 3, this is football camp at Kentucky. Cornerback Luca DiLorenzo snatching that one with one hand. Going Odell Beckham Jr., but on the defensive side.
Number 2, football is life. CONCACAF Nations League group play. Ball crossed into the box. Dante Levrock wants to ride his bicycle, and that's what he'll do. He'll kick it in for the goal. Bermuda would fall 2-1.
And at number 1, Rangers and Guardians, Jose Ramirez at the plate. It's not about him, it's about Eli White.
Woo.
Down and dirty.
Get there.
Look at the slide. Rangers beat the Guardians 6-3, and Eli White, number 1.
If Philly Garcia listened to those who rejected him, he never would have made a name for himself, lining up some of the biggest names in pro sports. That's the fighting spirit. That's what makes a lion. Modelo, root for those with a fighting spirit.
Nobody's gonna believe this is real.
AGT. Check your local listings.
Introducing Gatorade Fit. Fitness starts from the inside out. Get healthy, real hydration. And no added sugar, artificial sweeteners, or added colors. Gatorade Fit. Healthy, real hydration. All G.
This burger looked at one slice of melted cheese and said, more cheese. It looked at pickles and said, also onions. It wanted to be more than hot. It wanted to be juicy. This is the Quarter Pounder with cheese.
I don't think I can do this. You said you wanted to feel the power of Cricket 5G. I thought you meant like live streaming. Oh, we're live streaming, all right. Let's roll. Smile, you're on Cricket.
This is a payday bar with tons of peanuts and caramel that get the job done, so you can think of it as a tool to hammer your hunger, cut your appetite in half, and demolish your urge for peanuts. Payday. Get to it. Also try chocolatey payday.
Baby, it's over.
I mean, we both saw this coming.
What a difference a day makes.
Chicken fries are back on the 2-for-5 mix and match at Burger King. Want them as a side? Duh. A snack? Obviously. A meal? Yes. Mix and match chicken fries your way on the 2-for-5, only at Burger King.
I always thought I wanted this kind of life, but I never imagined any of this.
A lot of people assume NBA 2K gamers can't play for real.
Just like they assume they can't afford great insurance.
Pass me the ride.
Surprisingly great rates that fit any budget. Call or click to get a quote today.
Lemon.
I'm Sandra.
And this is Bullet Train. Go off the rails. Our guest on this edition of Off the Rails is Lonzo Ball. What are the odds of a basketball player named Ball?
Seriously? I understand you like the freestyle rap.
Yes, sir. Do you want to freestyle rap something for us right now?
Sure. Riding on a bullet train with lemon and...
No.
no.
Just asked if you wanted to.
Please don't freestyle on our show.
It's like the guy at the party who's always playing the guitar.
You don't play guitar, do you? Matter of fact,
no!
Bullet Train, your movie theater, August 5th.
Your memories. Take them to Verizon Cloud, the cloud built with unlimited space. You and your family can save files across multiple devices, and everyone gets continuous backup from the network they trust to help keep your digital world safe and secure. Get unlimited space from Verizon Cloud for 30 days on us. Go to verizon.com/getcloud to get started.
I am Hercule Poirot. The crime is murder. The murderer is one of you.
I don't feel safe with any of them.
It was his scalpel. Me. You murderer! Lock the doors!
Someone else is dead.
I want you to find who did this.
You lie in my face!
I will deliver your killer.
Rent or own this movie today with Fios On Demand.
All right, before we go, Mariners taking on the Astros as I try to locate the information. Picking up bottom 4.
Yeah.
It's a 1-1 game. Jeremy Pena bringing in the run. Astros go up 2-1.
Verlander dealing with...
Justin Verlander was doing his thing. Setting him up and knocking him down. Had 12 strikeouts in 7 innings. Bottom 8, Yordan Alvarez. And that one's out of there. Astros win it 4-1. They won 6 of 8 coming in. Mariners took the first game of this series, but the Astros strike back in the second game.
All right, how about the Denver Broncos?
Yeah.
Making news tonight.
They have potentially a new ownership group, the Walton Penner family ownership group. The owners and the league's finance committee would need to approve the sale. They need 24 yes votes. So the Walton family, you may recognize that name. They're the Walmart folks. So I wonder if you go to buy Broncos tickets, they'll be slashed. You know?
Oh, yeah.
This is SportsCenter Los Angeles.
The Lightning strike first in Game 4, but would it be enough for the reigning champions to level the Eastern Conference Finals in Tampa? Joe Madden out as manager of the slumping Angels. Would his departure spark a win to stop their skid? And as the NBA Finals shift to Boston, why Steph Curry isn't concerned about his Splash Brothers dry spell. All ahead on SportsCenter.
Go, go! Let's go, go!
The ice tray. And then LeBron, just to finish it up.
Hey there, we're glad you could make it for SportsCenter along with Ashley Brewer. I'm Stan Verrett. So this was the situation for the Tampa Bay Lightning on Sunday. They were down 2-0 and down 2-0 in the second period before they rallied for a win that they had to have. Then they had to do it again on Tuesday.
Ooh, Game 4. And like Ryan McDonough says, at any point in any series, you have to turn the page. So right. Tampa Bay hoping this is the point where they can turn the page and get going. Game 4 with New York up 2-1, but the defending Stanley Cup champs. We've been there, we've done that, and we are ready. So early first no score, Zach Bogosian, the vet, with a nice move around the defender. His shot saved. Pat Maroon's would not be. Big Rig with a big goal to start things off. Look at this. Igor Shesterkin's like, no, and yes, sir, says Pat Maroon. His third goal of the playoffs, and the Lightning off to an early 1-0 lead. Later in the first, Lightning on the power play. It's Nikita Kucherov. Busy up front. Nikita Kucherov trying to sneak one past Shesterkin. Shesterkin will fall on it. Watch that. The pad slowly starts to slip towards the goal line. The Lightning think it's a goal. It's called no goal, so we would go to a review. Review says no goal. Play was dead. Score stays 1-0. 7 minutes left in the second. Same score. Andre Palat with the puck, and Kucherov's like, hey, remember when I thought I scored? Let me remind you what I just did. He'll go 5-hole on Shesterkin. Ooh, that feels even better. Kucherov's 21st point of the playoffs, and it's a beauty. Lightning up 2-0. Under 5 minutes to go in the third. Same score. It's Palat, assist machine this game. And his rebound would go to Steven Stamkos, the captain, with the goal. And when the Lightning have Stammer and Kucherov scoring, they're 11-1 within a playoff game. So it's 3-0, 7 minutes left in the game. Rangers win the faceoff, looking for anything to get a spark late in the game. Jacob Trouba trying to blast it past Andrei Vasilevsky, but good luck. Stonewall this game. 34 saves from Vasilevsky. The Lightning win.
It's nice to battle back and even it up, but, you know, we got to make sure that we're going to New York with, you know, the right intensity and the right mindset that we're going to continue to play the same way and how we've had success in the last few games.
It's the best of three in the Eastern Conference Finals, and it's something to be excited about as a group. Like we're in a pretty good spot here, and we're going to go home and do what we can to win a game.
Now, this is the third time in Lightning history they've tied a series 2-2 after being down 2-0 in a best-of-7 series. They lost to the Capitals in 7 back in 2018, and then they beat them back in 2003. The series now heads to Madison Square Garden. The Rangers have won 8 straight games there since losing their playoff opener in triple overtime to the Penguins. Here's Steve Levy and crew with more.
Well, I can tell you who's really happy and who's disappointed after that latest Rangers-Lightning game. The Avalanche love this, right? This is great. Let this series go 7. Justin Bieber now a little concerned about that Game 7 date. He's supposed to play Madison Square Garden the same night as the Lightning and Rangers would play Game 7, but we'll see about that. It's going to be over in 6. Lightning got off to a great start, fourth line taking advantage.
Yeah, who would have thought? Zach Bogosian, but the third and fourth games, they went down to 6D. Give him a little more ice time, a little more responsibility. You know, he goes around Reeves here, kind of catch some flat foot, but then Braun gets caught reaching instead of taking the body. And then you'll see here on the back check, Rooney, you know, he's back in plenty of time, doesn't look over his shoulder. And that's where you see Maroon just come in there, puck bounces loose there, and Maroon just happens to be the right spot at the right time, follows it up and finishes it off. So, you know, they make some mistakes, the Rangers, and Tampa makes you pay for it.
Great note on Bogosian. We have the last time Bogosian, and we love him, by the way, had a shot from the inner slot was December the 2nd, 6 months ago, and he sets up that first goal. Rangers, ton of mistakes. Mess looked like a Game 57 kind of effort, not Game 4 of a conference final.
They just couldn't get themselves emotionally involved in the game, and nothing happened for them to get themselves emotionally involved in the game. And because of it, they were a little bit slow reacting. They made 3 critical mistakes that were a direct result of 3 goals. And here you can see Lindgren just thinking he was going to protect the boards there, and leaves the middle of the ice wide open to the most dangerous guy on the ice. And Lindgren just got to stay back and protect it. He was anticipating the puck coming up the boards, and those kinds of mistakes, certainly in the middle of the ice at this time of year, with a guy like Kucherov.
How about the board play here?
But this is kind of typical of the Ranger game tonight in a lot of areas. They just lost a battle along the boards here. This is you got to battle harder here. You can't lose this battle. Palat had a heck of a game. Really good, talented player there, but you lose those one-on-one battles inside your own zone. Good thing, not too many good things are going to happen. And of course, where's it come to? But you know, that's just the end result. That's just the end result of just not kind of being emotionally involved in the game, getting your compete level as high as it needs to be in a game of this magnitude. Rangers couldn't get there tonight, and it might be a little sign of their inexperience there, because the hardest thing to do is play with that emotion game in and game out for over 2 months, and the Rangers couldn't get there tonight.
New York without Strome and Hedl, 2 of their top 3 centers. We'll have to see what happens for Game 5. First conference final since 1991 in which the home teams won the first 4 games. We will see you Thursday night. Game 5 from New York.
All right, guys, baseball news. At one point this season, the Angels were 24-13 and tied for the lead in the AL West. But a 12-game losing streak sapped much of the early season optimism, and it cost Joe Madden his job. Angels have scored only 35 runs during the streak, and their pitchers have an ERA of 6.31. Third base coach Phil Nevin will manage the team for the rest of the season. Shohei Ohtani reacted to the firing, saying through his interpreter, obviously this is not all Joe's fault. Players are, myself in part, to blame because I was underperforming. I just want to say thank you to Joe. I appreciate everything he's done for me. Angels hoping to stop the skid Tuesday in Anaheim, taking on the Red Sox. Nevin, in his first year with the Angels after 4 with the Yankees, We pick it up top 6. Red Sox down 5-3. Runner at second. 2 outs for Bobby Dahlbeck. That's off Oliver Ortega. Alex Verdugo comes in to score. Red Sox still down 5-4, though. Top 7. Runners at the corners. 1 out. Trevor Story. Over to Ryan Tepera, but goes off his glove. Rafael Devers scores. Game tied at 5, and Tepera can't believe it.
All right, now to the leaders of the AL East and the AL Central meeting in Minnesota. Yankees hot as ever, riding a 6-game win streak. I don't know who's hotter, his team or Aaron Judge, because see ya again. He drives that ball 431 feet. His 22nd homer of the season. That leads Major League Baseball. He's on pace to hit 65. Yankees take a 2-0 lead. A couple batters later, Giancarlo Stanton. He's like, I'll have what he's having. That one to the upper deck, 445 feet on that blast. All right, Yankees 21-1 when both of those guys hit homers, so put my money on them. Yankees up 3-0, now top of 4, 3-2. Judge again. He's got a couple runners on, and just like he likes it, drives that ball deep to left, and Yankees will extend their lead 4-2. Somebody pay the man. He's earning every single dollar he will make in this next contract whenever that day comes. Top of 7, Yankees up 5-4. Anthony Rizzo this time. Just one more as a thank you gift. 14 homers on the season. This offense, who can stop them? You can't. Yankees go on to win 10-4.
The Warriors starting to put together one of those patented third quarters.
The step was breathtaking in that order.
Doing my job.
Curry in his bag.
I know my energy and never die. I need my inner peace and peace of mind. I'm making history with all the guys. I am not satisfied with getting by. For the momentum.
The Warriors have responded.
The paths don't matter. We just got to raise our level of intensity. You know, they raise theirs, we got to raise ours.
It's not getting easier, it's only getting tougher, so got to take that up another couple notches.
Warriors and Celtics resume the NBA Finals Wednesday night in Boston. In a series tied at a game apiece in the finals, the Game 3 winner has won the series 82% of the time. So this is big. Boston will try to protect home court better. It's just 5-4 this postseason at home. Cutting down on turnovers might help. We have reports on both teams, beginning with Tim Bontemps on the Celtics.
When the Boston Celtics don't turn the ball over, they win. When they do, they lose. The formula for success is that simple. And after an awful showing in Game 2, the Celtics have to get back to it to retake the lead in these NBA Finals in Game 3.
I said it before, we've been knocked down a lot early on in the season, so we know what it feels like to be knocked down, and we know what we can withstand. And, you know, it ain't nothing that we haven't seen or been in any situation before. So for us, it's just to keep fighting because we know our potential when we do that. I mean, as any competitor would tell you, you know, when you get hit in the mouth like that, it's only one way to respond. And if you're not really ready to do that, then you don't need to be on the stage. And this is a stage where it's going to take, you know, we got to be willing to risk it all out there for your team and for the victory. So by all means necessary, that's the mindset that they have. It's the mindset we have, but we got to go out there and execute it.
Golden State's any means necessary mindset was fueled by Draymond Green, who came out with a furious intent to set a different tone in Game 2, and it worked. Now the Celtics, who have lost more games here in Boston than on the road in these playoffs, have to find their own way to turn things back in their favor in Game 3. For a report on the Warriors, here's Ohm Youngmisuk.
Thanks, Tim. Klay Thompson barely had time to sit down before he was asked about his 10 for 33 shooting in the NBA Finals. Thompson smiled before saying thanks for reminding him about his, quote, delightful shooting percentage. Steph Curry, however, isn't the least bit concerned about his splash brother.
His demeanor never really changes. It's not really something you can just look at and be like, oh, if you saw him right now, you think he's, you know, averaging 50 in this series. Like, he's got just a very confident look about him. And that's the best thing about him. It's all about the work you put in. It's about the mindset. He doesn't need any teaching points on that. And so that's why there's so much confidence that at any moment he can go off.
It could be nights where I'm hitting everything or I'm not hitting the rim at all. It's just about realizing that greatness takes time, and doesn't happen overnight. And for what I've been through the last couple years, I will gladly be in this position, especially considering where I was at last year during June.
Thompson will also look back even further to remind himself what he can do, going into YouTube to look up some of his greatest hits. Thompson told me he did this as recently as Monday. When I asked him what his go-to video is, Thompson replied, Game 6 Clay.
All right.
Yeah, it's a slow start for Thompson as he's averaging 13 points on 30% shooting so far. But based on past performances, the turnaround is coming, and it might be before Game 6. After the first 2 games of the series, Thompson is averaging 22 points per game on 44% shooting while making better than 4 threes per game.
Sports Center on the road is presented by Rocket Mortgage.
Coming up on SportsCenter from Los Angeles, we have much more on Game 3, including one accolade that has eluded Steph Curry throughout his illustrious career. Tiger Woods will skip the upcoming U.S. Open, while another major champion steps away from the PGA Tour altogether. Plus, with NFL minicamps in full swing, Aaron Rodgers talks retirement and Tom Brady returns fresh off of his retirement. It's all coming up on SportsCenter from Los Angeles.
Together, committed to helping preserve what makes the outdoors worth exploring.
Starbucks Triple Shot Energy. What gives you energy?
So the Pizza Hut $10 Tastemaker has any 3 toppings you want?
It's the best delivery deal around. Can't put a price on that.
Actually, you can. It's only $10.
Actually, it's only $10. The large 3-topping $10 Tastemaker. No, Pizza Hut. It's you.
There are many names for enthusiasts, but there's only one way to become one, by going all in. The Lexus IS. All in on the sports sedan.
Get up, get moving, and gradually reduce grays the easiest way. Just step into the shower with Just for Men Control GX shampoo. The first and only shampoo that blends away a little gray with every wash for a subtle, natural look. Control GX from Just for Men.
Take an afternoon break to see your next home. Or maybe the evening is better. Or maybe right after coffee. With flexible and easy ways to start scheduling a tour, there's no place like Zillow.
With no fees or minimums and no overdraft fees, banking with Capital One is the easiest decision in the history of decisions. Even easier than this.
I'll take Barkley.
Yes, I still got it. I told her she'd pick me first.
Yep, even easier than that. With no fees or minimums and no overdraft fees, is it even a decision? That's banking reimagined. What's in your wallet?
Everyone's excited Wendy's Summer Strawberry Salad is back.
I certainly am.
Crispy bacon, grilled chicken, and
fresh strawberries. I'm aware.
It's always good to meet another super fan.
Wendy's Summer Strawberry Chicken Salad is back.
Need to hit the road if we're gonna beat the traffic.
All right. What? Maybe we'll just beat the traffic tomorrow?
Dion, hand it over. Now, how does that make you feel?
Like a part of me is missing.
Gabrielle?
This Oat Spice Fiji hand and body lotion has me smoother than ever.
That's what it does.
Was there something missing in my life till now? An absence I could not quite place but knew somehow. And then this vegan bakery came sliding down my screen. And Everdome repair appeared and tightened up my seams. Voila, my cherudi, remix French tips and squid cuisine. Endless lit, infinite possibilities. I'm down. A world where personalized ads help good ideas get found.
I would definitely recommend the new Sensodyne Nourish to my patients. Sensodyne Nourish has a bioactive mineral action that nourishes and strengthens teeth. Patients should act now to prevent sensitivity in the future. The new Sensodyne Nourish will help patients invest in healthier teeth.
Space Center is taking you to infinity and beyond.
Whoa, meow.
Catch the galaxy's biggest showdown when Disney and Pixar's Lightyear blast into theaters June 17th.
Welcome back to SportsCenter. Stan and Ashley and Dodgers, of course, lead the NL West, but they've been slipping lately. 5-5 in their last 10 games, and Michael Kopech looking to add on to that pain. He was dealing the fastball working, getting Cody Bellinger sitting down with a 97-mile-per-hour heater, getting Chris Taylor there. He's now pitched 22 in the third inning, striking out 28 without giving up a single run against National League teams. And then David Price takes the bump, facing A.J. Pollock, former Dodger, and hey, remember me, guys, I still hit. Yep, there you go. That would score 2 runs. All the way to the corner, Pollock putting the White Sox ahead 2-0. Next pitch, it's Jake Berger. Ooh, that's good for a double-double, side of fries. Pollock then comes around to score 3-0. Reese McGuire, after a couple pitches later. So in 4 pitches, Price gives up 3 hits to score 4 runs. The Dodgers followed the White Sox 4-0.
Cardinals taking on the Rays in St. Pete. Runs were hard to come by there for a while. Top of the 4th, Albert Pujols up 1-1 count. Jeffrey Springs with a strike. And check out the home plate umpire, Nick Marley. He's going Leslie Nielsen there with that strike 3 call, but Pujols like, yo, dude, that's strike 2. A few pitches later, Pujols, base hit. It's 3,320 for his career, 9th most in Major League history, broke a tie with Paul Molitor. Springs was great, 6 hits in 6 innings, no runs. Dakota Hudson was good, too. They went to extra innings, tied at 1. Cardinals' 3rd straight extra inning game. They won the previous 2 against the Cubs. They got 1 run in the top of the 10th. Harrison Bader with 2 outs. Paul Goldschmidt heading home, and he's out. Kevin Kiermaier throws him out. So they had the bases loaded and wound up with just 1 run. Cardinals still up 2-1. Bottom 10 now, runners on 1st and 2nd. Taylor Walls, 2-2 pitch with 2 outs, and it's gone. Off the foul pole, which is the fair pole in this situation. Walk-off 3-run home run, first career walk-off hit for Walls.
Oh, yeah.
And he's giving it the body language. And it worked. And then how about an ice bath?
I see some popcorn in there, I think.
As the Rays win it in extra innings 4-2.
All right, Phillies visiting the Brewers, who lead the NL Central. Phillies on a 4-game win streak. They're 3-0 since firing Joe Girardi. Angels are like, oh, that could be us. Top of 9, Josh Hader in for the save. His last 40 outings, he's kept scoreless. That changes thanks to Alex Bohm. His 4th homer of the season, Phillies tied at 2 batters later. Matt Vierling up. Later, Hader. Yeah, that streak's really ending tonight. Phillies take a 3-2 lead. Vierling's 1st of the year, 3rd of his career. Hader, not feeling it. Last chance for the Brew Crew, bases loaded, 2 outs. Pablo Reyes, check swing, he's out of here. The Phillies hold on to win 3-2. They extend that win streak to 5 games.
Tiger Woods made it through the Masters, but he had to withdraw from the PGA Championship. He hopes to play at the Open Championship in July, so he said Tuesday he will skip the U.S. Open to give his body a chance to heal before he heads to St. Andrews next month. The U.S. Open is next week at the Country Club outside Boston, and players who are competing in the Saudi-backed Live Golf event beginning Thursday in England will be allowed to play. The USGA announced that decision on Tuesday. 12 Live players are eligible for the U.S. Open, among them Dustin Johnson, who announced that he's resigning from the PGA Tour.
Ever since I was first introduced to this idea, I thought it was, great for the game of golf. I was excited about a new format, kind of a new kind of golf that, I think is great for the game. It's great for the fans. I'm very thankful for the PGA Tour and everything that it's done for me. Obviously, you just said I've done pretty well out there for the last 15 years, but this is something that I thought was best for me and my family. Obviously, I'm exempt for the majors, so I plan on playing there unless I hear otherwise.
Whole lot of money involved. Total purse of the 8 Live events is 3 times the amount of the last 8 PGA events combined. Every competitor gets a share of the purse, and the winner gets $4 million, more than any PGA Tour event ever. Phil Mickelson is also committed to the LIV Tour. A source told a Golf Channel reporter that he has a contract with them worth $200 million. Mickelson has been away from competitive golf and the media for the past few months after comments he made about human rights abuses in Saudi Arabia. Mickelson spoke with Sports Illustrated Monday and said that he's been struggling with a gambling addiction that he called, quote, reckless and embarrassing. Mickelson said he's still financially secure, but that he has been in therapy to address the problem.
Still ahead on SportsCenter, Steph Curry has already had a crowded trophy case, but there's one spot he's saving for something special. It's coming up next.
It's still the Eat Fresh Refresh at Subway, and now they're refreshing their classics.
With a classic. Refresh. Because their classic sweet onion sauce is getting refreshed on the new sweet onion steak teriyaki.
You got a refresh too? Line?
Corona vibes bursting with tropical flavors. It's a match made in hard seltzer paradise.
Fact that, major central banks are tightening, and there's a rotation in developed market demand from goods to services. So that tells me that, look, fiscal policy needs to be more than what we're seeing at the moment, with some flexible, easy monetary policy coming into the picture as well. At that moment, I think we will become more bullish on Chinese equity markets in general.
Yeah, and into that consumer story, of course, Target sort of coming into the fore of our consumers spending less on goods. Is it more about services, at least in the U.S.? Lale, thanks so much for joining us this morning. Lale Akoner, Senior Market Strategist at BNY Investment Management. Manus, what do we got coming up?
Well, I think it's really, this Credit Suisse story is going to build momentum, Danny, isn't it? A loss likely in the second quarter at the investment bank, and they talk about all the macro risks that are out there, but also the investment banking side. The business is under pressure, and we're going to talk about that, the loss for the second quarter, and we dig into the statement right here on Bloomberg.
Half the night searching for savings on your prescriptions? Just ask your CVS pharmacist. We search for savings for you, from coupons to lower cost options. Plus, earn up to $50 extra bucks rewards each year just for filling at CVS Pharmacy.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Pull back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trychics.com and get 25% off this Father's Day with a 60-night guarantee.
This tiny payment thing is a giant pain.
Hi, ladies. Alex from US Bank. Can she help?
How about a comprehensive point-of-sale system that can track inventory, manage schedules,
and customize orders?
That's what US Bank Business Essentials is for.
What about a new oven? Can US Bank help us there?
We can serve loans in as fast as 12 minutes.
That would be a big help.
Huge.
Jumbo.
Ginormous.
Finding ways to make your business boom. That's what US Bank is for. We'll get there together.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
You're watching Daybreak Europe. Let's get the first word news now. Bloomberg has learned that the Biden administration is seeking to wean the U.S. off Russia uranium imports. Sources say the White House is pushing lawmakers to support the $4.3 billion plan to boost purchases of the nuclear reactor fuel from domestic producers. ExxonMobil, Total Energies and ConocoPhillips are among a group of Western companies poised to win stakes in a multi-billion-dollar project to boost Qatar's gas exports. Sources say state producer Qatar Energy may announce this decision this weekend. Several other firms, including Shell, also bid to be part of the expansion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manus.
Jules, thanks a million. Danny, we're going to jump into this in a little bit more detail. I think when you break it down, on the wealth management side, it's still weak customer flows and ongoing deleveraging. That's the key in the Credit Suisse story, really, isn't it?
Yeah, exactly. I think it's notable. They're talking about Asia Pacific as well. We were just discussing China with Lale about what will make you jump back in. As for now, it seems Credit Suisse customers not willing to take the jump. This is Bloomberg.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
This is Bloomberg Daybreak Europe. I'm Manus Cranny in Dubai. Danny Berger in London with the stories that set your agenda.
Hawks rule the roost. The RBI becomes the latest central bank to raise rates more than forecast. Poland's decision is later today and the ECB tomorrow. Inflation, stagflation. Janet Yellen says tackling price growth is Joe Biden's top priority. The World Bank cuts its global growth forecast, warning of prolonged recession. Plus, plunging production. The U.S. says Russian oil output is set to dive by almost a fifth next year because the EU ban. Crude prices climb for a second day. Manus, it's warnings again about inflation. It's warnings also from retailers from Target yesterday. But of course, we're waiting for some lines from Inditex, the world's biggest retailer.
We are indeed. There was the inventory build and the second profit warning in 3 weeks from Target to Inditex. They have a headline beat on the revenue side, but they're missing on the EBIT. The EBIT comes in at 1.03. That's a miss on the estimate of 1.05. Now, when you look at the margin story, it's a beat, 60.1% on the margin, so a margin expansion, even in this rising input cost environment. The gross margin here is beating the estimate of 60.1. The estimate was for 59.5. So you are just seeing that. Let's see how the market trades into that. The gross EBITDA, as I say, comes in with a beat. 1.92 billion. The market pencils in 1.75. So again, Danny, they've said nothing on the inventory side, as we saw from Target. First quarter revenue growth of 36% in terms of the numbers. So, you know, how are we reacting in a cost of living crisis? That is a debate as to whether we trade up or trade down. I'm just looking at some of the other lines on the statement. Online, Danny? Sales declined online. I suppose we suddenly got out, didn't we, at the start of the year and got shopping. Yeah, online sales down 6% year on year as stores reopened and we got back on the streets. So there you go, meaning that the group has retained almost all of the extraordinary online growth of 67% achieved in. So there you go. Last year, 67% growth in online. That made sense. The world was shut. And it's dropped just 6% year on year. So we're still shopping online, but there's a marginal change. Danny?
Anything that indicates any form of normalcy, Manus, I am all on board for. Let me take you into the market check so far this morning when it comes to equities. One of the big stories, okay, we have the retailers, Inditex just out, Target, of course, one as well, which we can skip Target this time around, but essentially Hong Kong tech, that higher, China approving more video games, that's hope for easier regulation. Euro Stocks 50 futures, those up nearly 0.5%. S&P futures declining after yesterday's gain. Of course, the gain off the back of Target and some of that yield curve flattening, Manus.
Danny, there is one line I think it is worth just pausing before we move on. Please. In the Inditex numbers, let's just go back to the Inditex numbers. They are saying they have a 216 million euro provision for costs related to Ukraine and to Russia. So they are just making that provision, and they are saying that sales increased by 17%. But it's worth just noting the impact of the Russia-Ukraine on this business. 216 million. They temporarily closed their businesses in Russia and Ukraine. So we'll leave that there. Let's see how the market chews on that. Across the assets, sell the yen, big short. You don't want to do anything dumb like buy bonds or sell the dollar, according to Kit Dukes. The yen is no longer a haven currency. Dollar yen, dollar up by 0.4%. Dollar rupee back to flat as the RBI raises rates by 50 basis points. Did we sell the fact and buy the rumor on the currency? NYMEX crude tightens up. The EIA reckons it's going to get tight from Russian exports not being on the market next year. Janet Yellen is talking about perhaps a cohort of countries that can keep the Russian oil on the market, but at a limited price. Danny, we've got to get back to the other major story of the day, Credit Suisse. Let's see how that trades on the open. They warned on the second quarter at the investment bank. I'll break down the wealth management side. You break down, I know you're going to take us inside the investment bank on the customer side. And this is something that came through when I talked to Ralph Hammers and indeed when I was in Switzerland just a couple of months ago. And it's the deleveraging in Asia. And that's what's most notable in the Credit Suisse numbers. Yes, you've got Ukraine. Yes, you've got Russia, Ukraine. Yes, you've got monetary policy tightening from the central banks, but they're seeing a substantial increase in inflation, unwind of COVID-related stimulus, and that delivers notable deleveraging in APAC. How's the investment bank?
Well, the investment bank, they're talking about potential loss for the group in the second quarter of 22. They're talking about the conditions you're speaking of, saying continued low levels of capital market issuance, the widening in credit spreads. We're going to get into that with Deutsche Bank in just a bit. And Manus, they're also talking about continuing to try to rein in costs. But of course, I was mentioning to you a financial news story where that might not be true for junior banker pay.
Absolutely, and there is a line, as I popped it to you in the IB, about costs, and they're going to seek to cut costs across the group. Cutting costs means a couple of things in my life: job losses, basically, and where you do that or where you cut back, you know, that is down to management to control. What Gottstein can deliver, we will discuss that through the morning. But it's big news flow, Danny, and it sets up the debate on what happens to the credit markets, doesn't it?
Yeah, it certainly does. I want to kick off on this point of Credit Suisse warning about low levels of capital market issuance. Let's dig into it with Henrik Johnson, Deutsche Bank's co-head of capital markets. Henrik, first off, thanks for joining us. So we have Credit Suisse warning about low levels of capital markets issuance. Is this a fair warning? Do you see low levels from here on out?
Look, it's obviously great timing to be on as you asked me that question.
More unfortunate.
No, it's a little bit, I think, backward looking. So we've had a tough time in the capital markets. So high yield issuance in Europe is down about 75% year to date. Equity issuance is down about 65%. So, you know, it hasn't been a great start to the year. But I think I'm going to be a little bit contrarian to some of your other guests and actually inject a note of optimism, particularly as it comes to the credit markets and high yield and leveraged finance, because there I think there's been enough of an adjustment in spreads. Spreads have doubled since the beginning of the year. So I think now investors, having seen outflows stabilize, are in the mood where they can actually start putting money to work, first in the secondary market, but also with primary deals restarting, hopefully.
Good to have you with us, Henrik, this morning. And that's a bullish call, because you look at, of course, you know, Mr. Reid's morning note in terms of corporate defaults in BB and CCC, the lowest in 40 years. And, you know, Mr. Reid at Deutsche Bank, he thinks that we're going to see a pop in yields to 850 basis points in the US, EU, and high yield space. So can you pair the two things together, your optimism with perhaps that moderate pessimism?
Absolutely. I knew you were going to ask me that. In fact, I'm heading over to introduce Jim at a conference we're having later on this morning. So, you know, I think people get to both our views at the same time. I think it's about the time period. So, you know, his call is largely a 23 recession in the U.S. and with an increase in yield there. You know, I think what investors now, looking at where prices are, both in the secondary market and the readjustment from where issuers are willing to print, you're going to miss out on potentially a lot of performance if you sit around and wait for, you know, spreads to widen in 18 months' time. So I think there is a short-term, you know, certainly plateau and positive markets. But you know, I wouldn't disagree with Jim. He's much smarter than I am about, you know, the outlook for a recession, you know, more midterm.
Yeah. So all right, fair enough. That's a very diplomatic way to approach it. But no, I do see what you're saying. In the short term, we get this uptick in issuance. Perhaps it's the longer term that Jim is worried about. What forces that issue where perhaps the issuance market freezes up? What sort of is that point where we could see that, if again the short term it's this plateau for now?
Well, it has been frozen, you know, to be fair, since the Russian invasion of the Ukraine. And so, you know, what's happened is that there's been an adjustment as people have started to price in rate rises, you know, price in, you know, inflation and so on. But I think now, you know, the sort of the spreads on offer in the credit markets, the high yield credit markets, you know, actually compensate you for quite a high level of defaults in a diversified portfolio. So, you know, there's always the risk of further exogenous shocks. You know, things could escalate, you know, one place or the other. But, you know, unemployment is still low. You know, consumers have cash. You know, consumption is still happening. So I actually think that, you know, we could see stability now, and that obviously makes it easier to issue debt. I think when it comes to equity, ECM issuance, that's a little bit more complicated because, you know, in the sort of the hierarchy of capital markets, IG goes first, then leveraged finance, and then an ECM deal, an IPO, you're in the market for the best part of a month. And so you need to see longer stability and probably a bigger adjustment in expectations, you know, from the potential issuers.
Yeah, and Manus, we were just looking at that data showing that it was the slowest first half for U.S. IPOs in 6 years.
Yeah, and part of that narrative, Henrik, is, of course, in SPACs. And, you know, a shout out to Danny. I'm just looking at the SPAC index. Wow, what a demolition derby. From, you know, from 2021 on the index, we've lost nearly 50%. Are you out of, is that, are SPACs dead? Or is that the biggest opportunity of them all? If you think you don't want to sit back and wait for the worst, you know, wait for these spreads to move, what do you reckon on SPACs?
So I think SPACs, you know, have clearly come back down to ground, and you know, it's a product. It reminds me a little bit of doing high yield deals in the early 2000s, right? There was a lot of skepticism, and you got into a little bit of a bubble territory that then readjusted. But is there a need for SPACs to exist? I think SPACs have a place in capital markets, but clearly we need to work through the change in regulation. And also, you know, some of the more speculative deals, let's say, you know, probably need to sort of get washed out of the system before things normalize.
So are you backing off SPACs then in your business?
I mean, we're obviously following, you know, closely what the regulation is saying, and I think investors right now aren't particularly keen on SPACs. But what I'm saying is that, you know, this is a cycle, right? And you know, the froth is gone, but I think we'll still be doing them, hopefully in a little bit more controlled way as a market.
Well, that's not a bad thing, is it? A little bit of control and froth off the table. Henrik sets the table for opportunity. Henrik Johnson, Deutsche Bank's co-head of capital markets. Enjoy the capital markets forum. We will leave it there. Let's get back to Jules. She's in Singapore. She has your first word news from around the world. Juliet.
Matters. Bloomberg sources say Boris Johnson plans to press ahead with legislation to override parts of the Brexit deal relating to Northern Ireland. The draft bill could come as soon as Thursday, just days after the UK Prime Minister narrowly survived a confidence vote of his own MPs. Chancellor Rishi Sunak, meanwhile, is promising tax cuts at his budget later this year, a key demand of some disgruntled Conservatives. Angela Merkel has warned that isolating Russia isn't possible in the long term. In her first public appearance in front of a larger audience since leaving office, the former German Chancellor said Putin had made a big mistake by invading Ukraine, saying there is no excuse for this brutal aggression. Sources say Merkel repeatedly spoke to Putin in the early days of the war, calling for a ceasefire. Tech stocks have jumped in Hong Kong as the government's latest batch of new game approvals bolstered bets that the industry's outlook is on the up. Bilibili and Alibaba led the rally after China's entertainment regulator approved licenses for 60 new games in what's seen as a step towards policy normalisation. G-Space, a unit of China's Geely automotive empire, has put its first satellites into space. 9 of its satellites are circling the Earth after being blasted into orbit last week by a Chinese government rocket. It makes Geely one of the first Chinese companies to begin assembling the sort of satellite constellations pioneered by Elon Musk's SpaceX.
We think there are many synergies between auto manufacturing and the aerospace industry. It represents 5G, 5G plus, 6G, and a significant revolution of the future transport of human beings.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manus.
Jules, thank you very much. Julia Sarida in Singapore. Coming up on the show, the RBI raised its rates by 50 basis points, just the latest central bank to join the jumbo club. Poland's decision is due later. The ECB on the block tomorrow. We get the latest in the hiking cycle on Bloomberg.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable, and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for limited time.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Hi, I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
Growing up in Brazil, technology training wasn't available to me, so I taught myself. I worked as a dishwasher during the day, and I studied at night. Having access to technology opened up so many opportunities to advance in my career here at Bloomberg. But the reality in Latin America is that students might not even have the chance. Bloomberg partnered with an institution called Educando, where we're going to equip public schools with better technology. And that's going to impact about 5,000 students.
Strong enough to stay, we will never.
It's Daybreak Europe. I'm Manus Kearney in Dubai, Danny Berger in London. The Reserve Bank of India announced a 50 basis point hike in the country's key rate, and the governor there, Shashikanta Das, warns the inflation will be above the central bank's tolerance level of 6% for 3 consecutive quarters. It's just the latest central bank to join the 50 basis point hike club, with more on the decisions due from Poland's central bank a little bit later on today and the ECB. We've assembled the team. Joining me now is our chief Asia economics correspondent, Enda Karan, and our Warsaw Bureau chief, Piotr Skolimowski. And first of all, let's take it to you. India, 50 basis points. And yet, it's interesting, when you look at the currency reaction, it didn't exactly implode, but it's about the guidance on inflation, I think, that's most important. What do you reckon?
Look, it's a big move, man. It's like you mentioned, it's another central bank in this jumbo rate hike club, 50 basis points, with a warning that inflation is going to stay outside of its comfort zone. In fact, Governor Das himself said it's going to be well outside of his tolerance level. That does suggest more central bank tightening will be coming from the RBI. But the issue is, he seemed to pin a lot of it on supply side issues, especially food prices. He even singled out the price of tomatoes, which is a long-running bugbear for Indian inflation. And that would suggest that perhaps if those supply side issues get ironed out in the months ahead, there will be less pressure on the RBI to jack up interest rates, and perhaps it won't be as an aggressive trajectory as expected. So that's one of the reads coming out of it today. Clearly a hawkish move by the RBI. Clearly they have more work to do given where inflation is headed, but some suggestions that they're focusing on supply side, which means they may not be as hawkish as perhaps the Fed or others.
Well, amongst all this hawkishness, the one standout, or one of the few standouts, is Japan, of course, and recent economic data showing that their economy contracted less than expected. Is the very accommodative stance, is it finally starting to work? Are we starting to see a recovery gain traction in the region, Enda?
I don't think anyone's calling a recovery just yet, Danny. The first quarter did shrink less than expected, 0.5%. That was down to the consumer holding up better than expected, even though there's a lot of ongoing restrictions to contain the virus during those 3 months. Inventory buildup also helped. I think the feeling for this quarter, though, is that it's all about inflation. The cheaper yen means Japan is importing higher energy costs and higher food costs. That's going to weigh on the consumer side of things. There's the spillover from the big lockdown in Shanghai. That's going to impact the production side of things in Shanghai. And then, of course, there's the inventory build-up from the first quarter, which means factories won't need to make as much stuff in this quarter. So I think the feeling is that the BOJ won't be going towards the hawkish camp, even as inflation hits its 2% target. They're keeping an eye on that waning consumer, and they'll continue to support the economy in the near term, at least.
Okay, and you stay there. Piotr, good to have you with us. So the Polish Central Bank is due to make their decision later today. Looking at Goldman's, never mind 50, leave it to the polls. 75 basis points is what we're expecting. How real is that? How real is that risk? Talk us through the narrative. Good to see you.
Hi. Yes, indeed. So it's a 75 basis points, and it's the second consecutive quarter, second consecutive month when they will raise by 75 basis points. But the whole cycling, the whole hiking cycle has been going on for 9 months now, if they hike today, which, you know, to put it in perspective, it's quite extraordinary, because when the central bank started, the rates were at 0, and it was in October, or nearly at 0. So you can imagine that now, with rates going up to 6%, that's going to hurt. And we already see some of the mortgage borrowers complaining about this. There's a big uproar in the mortgage among the borrowers about this. Now, at the same time, inflation is 13.9%. It's the highest in almost a quarter century. So it's obviously understandable that they are raising rates, and probably will continue.
I'd be remiss if I didn't ask you about the ECB while we have you here with us. Is tomorrow's meeting, is it a live one?
Well, in a sense, right? Obviously, the expectations are they will end the QE program, but that will pave the way for the rate hike, most likely the following month. So at this point, we're obviously looking at the end of the bond buying program, which is obviously a big deal for the ECB, and also another headache, considering the fact that, as we remember from the past, this is not just one economy. These are number of economies with different problems, and if you end the QE program now, you have to consider what happens to yields on bonds from different member states. So that's something that the ECB will have to consider going forward, how they want to make sure that this channel of how the monetary policy is transferred to all the economies in the Eurozone is working properly for everyone involved. But again, when it comes to the rate hike, that's the next month most likely. The scale is still in the play, but from what we heard from Ms. Lagarde, we are probably going to zero.
She certainly has set the tone, hasn't she, last week in Davos. Time is the thief on this show as ever. Gentlemen, thank you very much for joining Danny and myself, Enda Curran in Hong Kong on the RBI decision. Piotr Skolimowski for the very latest on what we can expect from Poland. Coming up on the show with Danny and I, we've broken the headlines. Credit Suisse, the woes continue. What next for the bank? Right here on Bloomberg.
This one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango. And with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands?
Huh?
How can our feet look just like our hands?
Oh, boy, I'm freaking out here.
For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious.
That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah.
Hint. Water with a touch of true fruit flavor.
Shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
It's Daybreak Europe with Manus Crenny. That's me in Dubai. Danny Berger in London. We've covered the Credit Suisse story with the top lines, a loss of the investment bank for the second quarter. Let's get to Patrick Winters. He is our finance reporter in Singapore. So, Patrick, the top line here is, I mean, this adds to a string of losses for Gottstein. Where's the injury?
Yeah, it certainly does. I mean, it's another surprise, but should we really call it a surprise anymore at Credit Suisse? Credit Suisse has just come out with a statement saying that the second quarter hasn't gone very well. They're pointing to weaker customer flows in Asia. Asian clients are borrowing less, and also weaker capital markets issuance, and I think that's globally. And all those are going to contribute to the bank most likely having a loss, as well as the investment bank having a loss for the second quarter.
Patrick, talk to me about what this means for cost cuts at Credit Suisse.
So the bank also said today that they're going to accelerate cost cuts. What that typically means in kind of banking speak is redundancy. So I would expect to see another round of cuts on the back of this. It's not exactly clear yet how quickly they're going to come and when we're going to see them.
Patrick, let's see what it means for Gottstein. He said, of course, that people were asking questions, but it wasn't necessarily the time for him to go. Patrick Winters there in Singapore with Rayleigh on Credit Suisse. And I think, Danny, that's what the market is going to ask itself when it comes to opening up here. Where do you cut costs? I think you sent me through a story yesterday about raising the pay for junior bank. I told you what I want to come back as in a second coming, didn't I? Junior banker.
It's going to come true. You're going to be reincarnated as a junior banker. And yeah, if you're coming back at Credit Suisse, according to Financial News, a story yesterday, they're getting a raise, $110,000 for junior, $125,000 for second year. So where a cost cut's going to come from, I guess not for the junior bankers. Well, that's it for Manus and me, Bloomberg Markets Europe. Up next, this is Bloomberg.
Do you know how much
Promotional products people use and love from the experts at 4imprint. Your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Good morning. Welcome to Bloomberg Markets Europe. I'm Anna Edwards, live in London. The cash trade is just less than an hour away. Here are your top headlines. Joining the half-point hike club, the RBI becomes the latest central bank to raise rates more than forecast, with Poland's decision later today and the ECB tomorrow. More trouble at Credit Suisse. The company sees a loss at the group-wide level and investment banking level in the second quarter. And the World Bank's warning. The organization cuts its global growth forecast, warning of prolonged stagflation. Welcome to the programme, everybody. It's just gone 7 o'clock in London, which means we've got some corporate news that is breaking. Let us get to some of that right now. And we start with the aviation sector in Europe. Wizz Air reporting numbers. We've got a load factor so far and a revenue figure, 1.66 billion for the full-year revenue number. That's exactly in line with the estimate. Of course, this is a very topical industry at this point. I mean, Wizz Air, of course, we've spoken to them in the past about, tragically, how they've had to reshape and rethink their business over in parts of Eastern Europe because of war in Ukraine. But more recently, of course, there's been chaos at various airports. In particular in the UK, this has been focused on a lot. So we will no doubt want to get some further thoughts on that, as well as fuel costs and staff costs, inflation pressures on the top line, inflation pressures on the cost line. We will talk to the Wizz Air CEO about that a little bit later on this hour. Joseph Ferrazzi will be joining us here in London to talk through those numbers. Now, we're just under an hour away from the start of cash equities trading here in Europe. So let's have a look at the futures picture. And it's been a pretty indecisive start to the week. We've been up and down and up and down. But the European equity markets yesterday finished in negative territory, but US markets finished positive, so we had to play catch up there. So we see European equity market futures point higher. The US futures picture looks a little more negative, but again, not by a huge amount. E-minis down 0.3%. NASDAQ futures down 0.4%. A bit of a lack of conviction as we start this week. Waiting for CPI data, waiting for consumer confidence measures out of the United States on Friday, and that is going to be crucial given our focus on inflation at this point and whether it has topped in the US. A valid question in the US, even if it is not something we're asking here in Europe very much. We've also had the World Bank warnings to think about. We talked about that in our headlines. Let's get to the GMM and show you what is moving around on the global macro movers screen here on the Bloomberg. And you can see that we've got some equity market buoyancy coming through in the Asian session. Japanese equities getting a bit of a boost from the weakness in the yen. That's helping some exporters. We also see some movement higher in Chinese stocks, in particular technology and the gaming sector. The latest news flow there adding to some optimism. So that's what we see on the GMM this hour. You can see the weakness in the yen continuing to be a feature. Now, Credit Suisse says it expects to make a loss at the group-wide level, and it's at its investment banking business in the second quarter. It blamed challenging market conditions after Russia's invasion of Ukraine and tightening monetary policy. Joining us now is Bloomberg's finance and investing editor, who's been tracking this story for us. Patrick, good to speak to you. And I say tracking this story because, yes, this is dropped in the last couple of hours, but, of course, this is a long-running saga for Credit Suisse. The latest line, then, in what's been a string of profit warnings from the business.
Absolutely. Well, they've been saying 2022 is their transition year, but I think they probably said the same thing about 2021. Just in now is the latest profit warning. They're saying that the second quarter isn't going very well, pointing to weak customer flows, Asian clients deleveraging, that means borrowing less, at the same time lower capital markets issuance, and that is all set to lead to a loss in the second quarter. What they also pointed to is cost initiatives being accelerated, and that basically means cost cuts. So we would expect to see a round of redundancies as a result of this.
Right, yeah, that's really interesting because they've already been talking about a talent exodus, or at least those are the words that us in the media have been using around Credit Suisse because of various scandals that they've faced. I mean, if you're cutting costs and the price of bankers is on the rise, that's a difficult combination.
It's always a delicate balance. I mean, I would say in the last year or so, they've still been trying to hire aggressively, at least in some areas, because they need to grow the business, but at the same time, they're trying to reduce costs. I mean, it could be a philosophical question for banking as a whole, but yes, it is definitely a challenge for them at the moment to grow while trying to cut costs at the same time. Difficult space for sure.
Yeah, and remind me of where we've been on this story then, Patrick, because we've seen scandal after scandal that hit the business. So although the profit warning right now focuses on some of the market conditions and the aftermath of the beginning of war in Ukraine, this has been a long time coming in terms of the news flow and the negative news flow surrounding Credit Suisse.
Yeah, it's a bit of a double whammy. I think the way markets have turned this year, at least for Credit Suisse, coming on the back of their twin scandals of Archegos and Greensill last year, they seem to be kind of sinking ever deeper into a kind of quagmire. And of course, it's getting more difficult for the CEO. The chairman of the bank is sticking behind him for now, and we'll see where things end up, I guess, in the next couple of months.
Patrick, thanks very much. Thanks for the early analysis. Bloomberg's finance and investing editor, Patrick Winters, joining us there with the latest on Credit Suisse. We'll certainly watch where that share price opens. How under pressure will it be in 55 minutes' time when we see the start of European trading? Let us get a Bloomberg First Word News update. For that, here's Alice Atkins.
Morning, Anna. Bloomberg sources say Boris Johnson plans to press ahead with legislation to override parts of the Brexit deal relating to Northern Ireland. The draft bill could come as soon as Thursday, just days after the UK Prime Minister narrowly survived a confidence vote of his own MPs. Chancellor Rishi Sunak, meanwhile, promised tax cuts at his budget later this year, a key demand of some disgruntled Conservatives. Bloomberg has learned that the Biden administration is seeking to wean the US off of Russian uranium imports. Sources say the White House is pushing lawmakers to support the $4.3 billion plan to boost purchases of the nuclear reactor fuel from domestic producers. Angela Merkel has warned that isolating Russia isn't possible in the long term. In her first public appearance in front of a larger audience since leaving office, the former German Chancellor said Putin had made a big mistake by invading Ukraine, saying there's no excuse for this brutal aggression. Sources say Merkel repeatedly spoke to Putin in the early days of the war, calling for a ceasefire. Tech stocks have jumped in China as the government's latest batch of new game approvals bolstered bets that the industry's outlook is on the up. Bilibili and Alibaba led the rally after China's entertainment regulator approved licenses for 60 new games in what is seen as a step towards policy normalization. ExxonMobil, TotalEnergies and ConocoPhillips are among a group of Western companies poised to win stakes in a multi-billion-dollar project to boost Qatar's gas exports. Sources say state producer Qatar Energy may announce its decision this weekend. Several other firms, including Shell, also bid to be part of the expansion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna?
Alice, thanks very much. Alice Atkins here in London. Now, coming up on this programme, we broke the news around Wizz Air a little bit earlier on this hour. We brought you some of the early headlines from the business. We will talk about the business of travel with the Wizz Air CEO, Joseph Ferrari. That's after the company, of course, reports those earnings. We'll discuss fuel costs, staffing costs, everything to do with aviation right now. That discussion at 7:30 a.m. London time. This is Bloomberg.
When your small business needs financing, you need a fast, secure way to get the right loan at the right time. We're Smart Biz Loans, rated the #1 online marketplace for SBA loans. We'll help you pre-qualify for both low-cost SBA loans and affordable fixed-rate term loans through our bank partners, all with one easy application.
It was way easier, way faster, and at the end, we got the loan.
So go to smartbizloans.com today. Apply now.
Scribd is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Scribd is ebooks, audiobooks.
Magazines, podcasts, Scribd, it's awesome.
At Empower, we help you open doors to get you ready for everything that lies ahead. Because your financial wellness is what matters most. Behind every door is an opportunity to save for life's moments. These are your goals, and it's time to help get you there. We've been opening doors for more than 17 million customers across America as they save for the future they want. We are Empower, and we're ready to open some doors for you.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Life doesn't always give you time to change the outcome. Prediabetes does. With early diagnosis, prediabetes can be reversed. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Look, this should be a nonpartisan issue. This should not be a partisan issue. There is not a Democratic or Republican value in one single act of these shooters. It's not. But people in power have failed to act. So we're asking you. And I'm asking you, will you please ask yourselves, can both sides rise above? Can both sides see beyond the political problem at hand and admit that we have a life preservation problem on our hands? So we got a chance right now to reach for and to grasp a higher ground above our political affiliations. A chance to make a choice that does more than protect your party. A chance to make a choice that protects our country now and for the next generation.
That was the actor Matthew McConaughey there, making an impassioned plea for new gun control during a visit to the White House 2 weeks after the elementary school massacre in his hometown of Uvalde in Texas. Let's get back to the global finance agenda. And the Reserve Bank of India has announced a 50 basis point hike in the country's key rates as Governor Shaktikanta Das has warned inflation will be above the central bank's tolerance level of 6% for 3 consecutive quarters. For more, we're joined now by Bloomberg's Shruti Srivastava, who's in New Delhi for us. Shruti, really nice to have your contribution on the program. So what are the reasons for this outsized rate hike? India's in good company. We've seen quite a lot of this recently.
Yeah, so this is an outsized rate hike by the Central Bank of India. The 50 basis point hike comes right after the off-cycle rate hike, which was done by the central bank last month. That was by 40 basis point. Now the the central bank has been clearly very worried about the inflationary pressures, which has remained elevated since the beginning of this year. Inflation has remained elevated since the beginning of this year, which is reflected in higher fuel and food and commodity prices, raising concern both for the government and the central bank. So we have seen a lot of coordinated action by both the central bank and the government for the last 2 months. While the central bank has raised its benchmark rate, the central government also came out with its own inflation-fighting measures. It cut fuel taxes, it waived import taxes on a couple of items, and it also raised subsidy for fertilizers and cooking gas. All in all, the coordinated action has led to some cooling of fuel prices, but inflation is likely to remain elevated through the third quarter till December, as per the RBI.
Yeah, so talk about food prices, talk about fertilizer. I'm sure these themes strike a chord elsewhere. I've certainly heard that referenced in parts of Africa. Will the rate hike help to rein in inflation then, Shruti? I mean, clearly that's what central bankers hope.
So while the action is expected to bring down inflation somewhat. However, the expectation of the central bank is that the inflationary pressures are likely to remain above its tolerance level throughout the third quarter till December this year. Because of that, the central bank has also revised its inflation forecast for this year significantly from 5.7% to 6.7% in today's policy. And the central bank has also made it clear that till the supply side constraints, which are due to geopolitical reasons, due to Russia's war on Ukraine, till that is taken care of, inflation is unlikely to see much easing out this year.
Shruti, thank you very much for the analysis. Bloomberg's Shruti Srivastava joining us there with the latest on what we've heard from the RBI. Joining us now, Viraj Patel, global macro strategist at Vanda Research. And let's globalise the conversation then, Viraj, which is very easy to do in this context. India is now joining more than 50 monetary policy authorities globally that have increased rates by 50 basis points at least in one move since the start of this year. As my colleague Matt Miller said yesterday, 50 is the new 25, it seems.
Exactly, 50 is the new 25. And to be honest, I think this is not going to be the last. And so, as we look into one of the themes that we've been writing about over the past month or so is that effectively the bond market has moved away from the Fed and started to think about all of these G10 tightening laggards, in Europe, for example, as well with the ECB. We had Australia yesterday, obviously in the EM space as well. So I think, really that's really been the theme of the bond market. And one of the reasons why probably we think Treasury yields have been to somewhat bid. It's not really anything to do with the Fed over the past month. It's really to do with what's going on in the rest of the world. And, look, we've got an ECB meeting tomorrow. We would probably categorize the ECB as probably being central bank number 51, really, around when it comes to 50 basis point hikes, looking for that in July. And even now, potentially, given how broad-based inflationary pressures are, potentially seeing back-to-back 50 basis point hikes from the ECB in July and September.
OK, but you've also said, I know you say in your notes ahead of our conversation, it might be time to buy the hawkish ECB rumour and sell the fact. So what you painted there was a picture of a hawkish path ahead, albeit not starting tomorrow, but the groundwork being laid for it tomorrow. What is it that you don't think will be as hawkish as expected then, Viraj?
I think it's going to be tricky from a communications perspective. Look, we've seen every central bank struggle this year with trying to communicate what their plans are, really. And effectively, the ECB has been caught massively behind the curve in the past couple of months. We've seen a big repricing at the front end. I think from a flow positioning perspective, it's natural that if we get a more balanced tone from Lagarde, if we get slightly more two-way risks, you could see a knee-jerk sort of buy the rumor, sell the fact type of reaction. I think that's probably what we're looking for. We'd like to see slightly cleaner positioning, things like longer dated European bonds and the euro to some extent. We wouldn't really be chasing either higher here. So I think from that perspective, that's really our view, trying to think about things on a very tactical basis. But look, I think the bigger picture is that there will be hikes coming in Europe. The magnitude is all up for debate, and it's really just this narrow window that the ECB has to execute before any recessionary fears really kick in later this year.
Yes, exactly, and that's where I wanted to go next with you, Viraj. How long do we have for this hiking cycle still remaining before the dominant theme turns, and the dominant theme turns to slowdown or even recession? Fears of recession in Europe, of course, lots of people point to that area of the global economy as being very vulnerable. We heard from Ray Dalio, hedge fund founder, of course. He was saying central banks globally will have to start cutting in 2024, and the World Bank is already cutting its growth expectations for this year, has been doing. Viraj, so how long is this hiking cycle going to be?
Yeah, I think we're in an inflection point or transitioning away from sort of these, like I said, G10 tightening laggards that are driving global bond yields higher towards this idea that maybe we're at the peak of some tightening cycles, at least what's priced into markets, maybe the UK, maybe the US, for example, and also then thinking about rate cuts, rightly so. So, that transition is important. Timing is key to that. We don't think the ECB will deliver anything close to what's priced in 2-3 years out in terms of rate hikes, but it's really hard to play that when you have these sort of narratives as like headlines, especially coming out of India, that central banks are hawkishly surprising. So we want that to fade. There will be a point later this summer where that we get that inflection point, the turning point where the doves will be in control versus the hawks, but we're just not there yet. So yeah, I think it's meeting by meeting, quarter by quarter. We know the Fed are on autopilot for the next couple of meetings. I think the ECB fairly similar, and it's all ready to play for in September. We could be in a very different environment.
Okay, you mentioned the UK there, Viraj, in your response, and I want to ask you about the UK because you said, and I've heard other people say this, that the UK could act as a bit of a canary in the coal mine when it comes to global recession. How so? Why do you think that happens? Is it just that the UK gets there first, gets to recession first, or is there something of an experimentation going on here in the UK?
I think two factors. Probably the first, that the UK has almost been leading economic cycles, especially in the G10, both from a policy perspective as well as a economic cycle perspective, just from the exiting of COVID restrictions relative to what we saw in Europe, for example. So, I think watching what happens in the UK, as well as the fact that it's a very consumer-oriented economy, especially when you get things like a cost of living crisis, it's really things like the services sector, how consumption slows down, which will be the canary in the coal mine to a global recession in this particular case. So, I think watching the UK is going to be an interesting phenomenon. And when we translate that to sort of policy cycles, especially the BOE, for our view, we're now thinking about, okay, when is the first BOE rate cut likely to happen? It's not priced in any meaningful way for next year, and that's a trade that we are looking for, and I think that's worth actively positioning for.
Okay, so that's what we look for next. One place that investors have liked to hide out from inflation or protect themselves a little bit has been around commodities, Viraj, and commodity stocks. Is that overdone now? Has that come and gone, or is there still room in that trade?
Well, one interesting divergence was from a flow position perspective is that actually energy stocks have been more bid than spec commodities, for example. Things like copper, even some of the other base metals that we've seen have actually seen a real reduction in positioning over the past couple of months, surprisingly, really expressing those global cyclical concerns, global growth concerns, largely emanated from what we're seeing in China. So, I think if you're a commodity bull here, it's about being nuanced on how you play that, and actually playing it through commodities may be a better way and a cleaner way than trying to chase energy stocks higher. Look, I think that's probably the path of least resistance. Some of these recession fears on a global scale may be slightly overblown. You could see commodities bounce back, but it's a slightly different way. We would, for example, think about things from avoiding some sort of inflation hedges like energy stocks, as just the positioning on that particular scale is very crowded.
Thanks very much, Viraj. Thanks for your time. Viraj Patel, Global Macro Strategist at Vanda Research. Thank you so much for joining us. 7:20 here in London. We will be talking about retail next. Coming up on the programme, Inditex reports its highest level of profitability in 10 years. We'll bring you the details as the Zara clothing chain reduces costs and raises prices to offset inflation. That's next. This is Bloomberg.
think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle? Then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Welcome back to Bloomberg Markets Europe. 7 minutes until the start of cash equities trading, and we have European equity market futures pointing a little higher, US futures point a little lower, as we look a little indecisive globally in terms of risk appetite. Now, Inditex has reported its highest level of profitability in 10 years. The world's largest clothing retailer, owner, of course, of the Zara chain, has reduced costs and raised prices, trying to offset inflation in garment prices. Let us bring in Bloomberg's Rodrigo Orihuela, who joins us now and has been looking at the numbers here. Rodrigo, good to speak to you. So what do you take away from the numbers that we've had so far from Inditex and its ability to cope with the current climate?
Well, one thing's pretty clear, and is that they seem to have found a way to deal with inflation across the board. They say that their costs have increased less than their sales, which is quite impressive. They are not very transparent with their numbers. They have never been. But what we know is that they indicated in the first quarter that they were going to increase prices this year by mid-single digit. According to some investment banks and analysts, they have been increasing it by quite a lot in some markets, as much as 10% a month. And it seems to be working for them.
Seems to be working for them. I mean, when we look at the retail sector, when we look at clothing and other retail spaces, I mean, one of the big themes coming out of the US recently, Rodrigo, has been inventories and inventory levels. And I know that some in the retail space, clothing retail, have had to face those issues earlier on in the pandemic. None of that seems to be sticking to the Zara owner at this point. I suppose in fast fashion, maybe that's not one of the issues that they face.
No, it is really an issue for most of the sector, but one of the advantages and the edges Inditex has always had is how lean they are when it comes to inventory. And that is where one of the interesting things and one of the interesting trends we're seeing with them since the last quarter is that they're changing what they've always done. Whereas they were always at the forefront of just-in-time inventory, right now they're increasing inventory significantly, both last quarter and this quarter, because, as they explain, it's to avoid any bottlenecks in supply chains. So they are buying more from their suppliers to not have supply chains issues. And I would presume that that is also a way to fight against inflation, because if you get your supplies earlier on, there's less risk of having higher prices from your suppliers down the line.
Rodrigo, thank you very much. Bloomberg's Rodrigo Orihuela joining us there with the analysis on Inditex. We've had news out of Inditex this morning, news out of Credit Suisse this morning. Of course, another profit warning coming through from that business. Weak inflows and client deleveraging are the things that they blame for this most recent update for the markets. There's also a lot of focus on talent, of course, and paying for talent in the financial services sector. This after a number of scandals. So we'll continue to watch out for all of the corporate news flow this morning, including Credit Suisse and Inditex. We'll get an update on where we expect those share prices to open for you shortly, although weakness is expected in the Credit Suisse share price as a result of the news there. We'll also talk about the aviation sector. Coming up here on this programme, Wizz Air full-year revenue matching estimates. We will speak to the airline CEO, Joseph Ferradi, about how he's navigating the travel sector and its turbulence, whether that's higher staff costs, higher fuel bills, turmoil at airports, all of that very topical. This is Bloomberg.
Healthcare professionals agree that sleep impacts everything you do. Chiic's performance sheets are engineered to keep you cool, dry, and comfortable. Chiic's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chiic's now.
Go to trychics.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trychics.com now.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Hi, this is Lisa from 4imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes, certainly. You know, we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow. I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Welcome back to Bloomberg Markets Europe. Half an hour to go until the start of cash equities trading. Here are your top stories. Joining the half-point hike club, the RBI becomes the latest central bank to raise rates more than forecast, with Poland's decision later today and the ECB tomorrow. More trouble at Credit Suisse. The company sees a loss at the group-wide level and investment bank in the second quarter. And the World Bank's warning. The organization cuts its global growth forecast, warning of prolonged stagflation. Welcome back to the programme, everybody. Let's have a quick look at where we are on the futures picture. We have a pretty divergent picture across European equity markets and US equity markets right now. So FTSE futures up 0.3%, DAX futures and CAC futures both up by 1%. So we see some movement higher in those European equity market futures. The US futures picture looks a little bit more negative. We're down by down by 0.25% on NASDAQ futures, so actually pulling back from some of the earlier losses. Now, there are a number of corporates we're going to keep in focus as we go through this morning. We talked about Inditex a little bit earlier on. We've had results out from that Spanish clothing company, so we'll certainly have that one in focus. We'll also be talking about Credit Suisse, of course, and Credit Suisse out with another warning, the latest in a string of warnings about its performance. They've been blaming weak inflows and client deleveraging. And we will be keeping an eye on the aviation sector because we've had numbers out from Wizz Air this morning. So results in from Wizz Air reporting revenue that for the full year matched the average analyst estimate. Europe's third largest discount airline has been caught up, like many other airlines, in the travel chaos following the pandemic. It also says it will close its base in Doncaster in the north of England this week after failing to secure guarantees over commercial terms at the airport. Lots to discuss then with the Wizz Air CEO who joins me now on set. That is Joseph Ferrazzi. Really nice to speak to you, Joseph. Thank you very much for coming in to talk to us. So let me start by reflecting on the full year performance, I suppose. I mean, the revenue numbers look to be in line with what people were expecting. A full year net loss. How do you think the business is performing?
Well, I mean, first of all, I think last year was obviously not great in terms of financial performance, but at the same time, we have been growing a lot during this period. We have taken 45 aircraft deliveries since the breakout of the pandemic. Our capacity right now is up 40% versus the same period, 2019. So we have been taking this time to build the business to continue to invest.
Yeah. Do you ever worry that maybe you're growing too fast, Joseph? Because you often talk to us about the strength of your growth plans.
No, not really. I mean, this is what you do. I mean, we are the lowest cost producer in the industry. We are the most innovative airline. We are the fastest growing business in Europe. I mean, this is really your opportunity to step change your business when the whole industry is going backwards. This is the time for you to go ahead and push ahead. This is what we have been doing. We knew it that the moment governments are out of their restrictions on COVID, demand will come back immediately, and actually demand came back immediately.
Yes, so you've got the post-COVID recovery working for you, the structural growth of lower-cost airlines also, and the expansion there. But on the other hand, customers are facing higher inflation at the moment. I wonder if you're seeing anything in your data, in your numbers, that leads you to believe that customer demand is being affected by higher inflation.
We are seeing incredibly strong demand. The least issue in the industry at the moment is demand. People are back, people want to fly. Actually, people have some savings to spend. And the issue is a lot more around the supply chain performance right now. But in terms of demand, we are seeing a lot of people booking. I mean, if I just look at the last few weeks, our booking rate is 55% up versus the same period in 2019. So demand is incredibly strong.
So the last thing you have to worry about is demand. Demand is strong, but one of the issues that is creating is quote-unquote chaos at UK airports and maybe other places as well. You tell me, is this a UK story or is it elsewhere?
It is not a UK story. I think the UK story is probably a little bit bigger than in the rest of the world, but we are seeing systemic issues across the industry globally. The supply chain is out of labor resources. We are seeing constraints in ATC, air traffic management. We don't have enough controllers in the system. As a result, we are suffering a lot of delays and ending up with cancellations at the end of the day. We are seeing airport security, ground handling, not having sufficient staff. As a result, they are putting a lot of strains on the operation of the industry. Yeah. So that's the issue.
So there's a number of issues you listed there. I mean, how many more flights have you had to cancel than would be normally operational?
I mean, we hardly cancel. I mean, we cancel less than 1% of our flights. But in recent days, we had to cancel 4% of our flights due to this very distressing operating environment. The industry must restuff itself. We need to get sufficient number of people properly trained to properly operate this industry. We have been maintaining some unproductivity in the system during the COVID period to make sure that when ramp up is coming, actually we are ready to ramp up. Many of the other players, stakeholders in the industry decided to lay people off in a big way, and now here we are, people are back to travel and they don't have people to support the operation.
Do you think that, I mean, some critics of the sector suggest that maybe too many tickets are being sold for flights that perhaps won't be operated. Do you think that the sector has an issue, even if you don't think you have an issue? Do you think the sector should not be selling so many tickets if those planes are not going to be able to get off the ground?
This is the market. I mean, the sector is acting on demand. So if people want to fly, I think we as the airline industry needs to meet demand, and we should be supporting the intent of the customer and you know, their ambition to fly. The issue is that we have to ramp up the supply chain properly, make sure that we are actually able to operate all this demand.
Okay, so that's the operational side of things. Another thing you'll be thinking about, of course, is higher energy prices. The fuel costs have been on the rise. I mean, Brent prices at $120 a barrel as I speak to you now, and jet fuel has been rising. My colleagues at Bloomberg Intelligence say that your airline is under-hedged on fuel versus rivals, that others maybe are more hedged. How comfortable are you with your hedging position?
Well, when it comes to hedging, obviously, you take a structural view on hedging. Hedging is adding cost to the system. No airline has ever made money on hedging. At this point in time, indeed, it would be good to be more hedged, but this is a short-term issue. Actually, we are partially hedged, so we have been placing an insurance policy on commodities. We're going to go through this, but we also have some other offsetting mechanisms by operating a much younger fleet of aircraft than our rivals that offsets some of the pains coming from the higher fuel prices.
Yes, I mean, 36% hedged April to August is what I read. Is that still accurate?
This is still accurate.
Yeah. Let me ask you about wage costs then. You have a largely non-unionized workforce, I understand. Are you facing pressures to increase wages just like others in the sector might be?
Simply we just go with the market. If the market goes on wages, we go with the market. So yes, I mean, we are seeing some pressure on wages, but we are a very productive airline, and we are happy to do that. I mean, we want every stakeholder in our business to be happy and satisfied with what we are doing, including our employees.
I've talked to you in the past, Joseph, about your businesses, well, in Eastern Europe, of course, and in particular in Ukraine, what you used to do in Ukraine and don't do anymore in Ukraine, and of course your thoughts, I know, are with all of your colleagues who've been operating and who live there. Let me ask you about the Ukraine, Moldova and Russian capacity that you took out of there and you put elsewhere. Are you now in a new steady state? Have you sort of changed the business sufficiently and now you're stable once again?
Oh, absolutely. We acted on the situation very quickly already in March. We reallocated that capacity that was intended to fly to Ukraine, Russia and Moldova. Now it's a new setting. It's pretty much fully matured by now, so we are out of that crisis.
Okay, all right. Thank you so much, Joseph, for joining us. The Wizz Air CEO and co-founder, Joseph Varadi. Let's get a Bloomberg Business Flash. Here with the latest corporate stories is Alice Atkins.
Hi, Anna. Credit Suisse said it expects a loss at the group-wide level and at the investment bank in the second quarter. The troubled lender warns market conditions remain challenging after the invasion of Ukraine and monetary tightening across the world. It says that's led to weak customer flows and ongoing client deleveraging. Tech stocks have jumped in China as the government's latest batch of new game approvals bolstered bets that the industry's outlook is on the up. Bilibili and Alibaba led the rally after China's entertainment regulator approved licenses for 60 new games in what is seen as a step towards policy normalization. ExxonMobil, TotalEnergies and ConocoPhillips are among a group of Western companies poised to win stakes in a multi-billion-dollar project to boost Qatar's gas exports. Sources say state producer QatarEnergy may announce its decision this weekend. Several other firms, including Shell, also bid to be part of the expansion. G-Space, a unit of China's Geely automotive empire, has put its first satellites into space. 9 of its satellites are circling the Earth after being blasted into orbit last week by a Chinese government rocket. It makes Geely one of the first Chinese companies to begin assembling the sort of satellite constellations pioneered by Elon Musk's SpaceX.
We think there are many synergies between auto manufacturing and the aerospace industry. It represents 5G, 5G+, 6G, and a significant revolution of the future transport of human beings.
That's your Bloomberg Business Flash. Anna?
Alice, thank you very much. Coming up on the programme, we turn our attention to Europe and European monetary policy as the prospects of normalisation from the ECB put the spotlight on the continent's periphery. We will speak to the Director General of the Spanish Treasury next. This is Bloomberg.
Browsing the web without NordVPN could mean sharing your personal data with more people than you think. Get NordVPN and protect your sensitive data from being spied on. NordVPN. Online security starts with a click.
Oh, this one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango. And with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands?
How
can our feet look just like our hands?
Oh, boy, I'm freaking out here.
For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious.
That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah.
Hint. Water with a touch of true fruit flavor.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Strong enough to stay, we will never.
Welcome back to Bloomberg Markets Europe. We still have 18 minutes to go until the start of equity trading here in Europe. And European futures point higher, up by 0.4% on DAX futures. For example, US futures a little bit to the downside, though. NASDAQ futures down 0.25%. Let's get to the bond markets now. And Spain has completed a 10-year bond placement worth 8 billion euros, one of the last debt operations from the euro nation before the ECB begins its latest monetary policy tightening ahead of a highly anticipated decision, which comes tomorrow. Now, the prospect of normalization has put the spotlight back on peripheries, the periphery of Europe facing potentially higher borrowing costs. And we've seen some of those rises already. I'm pleased to say that joining us now is Pablo de Ramon Laca, a Director General of the Spanish Treasury and Financial Policy. Very nice to have you with us, Pablo. Let's start with the bond placement specifically and then broaden our conversation. Colleagues tell me that the order for this sale, it was about 40 billion euros compared to an average of maybe 60 billion. Some traders saying the pricing wasn't as generous as maybe recently. Why do you think it developed that way? Why was it priced like that?
Good morning, Anna. The placement went very well and compared to previous placements during the summer. It mustn't be compared to the 10-year syndications in January, because January tends to be a bigger moment for investors. The book was bigger than the summer 10-year syndications we used to seeing before the pandemic. So we're getting back to normal, which is a good thing. Also, I would point to the very high quality of the accounts. More than 81% was non-resident, and most of it was so-called real money. The bond is now performing very well in the secondary market, so it was a very successful transaction.
Okay, and so I wonder, yeah, you talk about who's buying it there, and I wonder, with the ECB stepping away from buying all kinds of debts, and, well, set to, Pablo, how convinced are you then that other investors are going to step forward and pick up what is issued?
Well, what yesterday proved is that there is more than enough saving in the world to finance a treasury like Spain's that wants to grow and knows how to grow. Again, 4 times oversubscribed. Our job is to manage the transition to higher rates, to make sure that the investor base is as broad and deep as possible, to step in as the Euro system steps out. But this can be a smooth transition.
This can be, you think. Do you have any concerns around where spreads will have to head to attract those investors as the ECB steps away, Pablo?
Well, rates are higher, yes. We're all seeing rates unseen since 2014, Germany too. But our spreads against Germany, they are at levels of spring of 2019. So once again, after the pandemic, we're in business as usual, and that's a good thing.
What do you want to hear from Christine Lagarde and the ECB about their thoughts on spreads? Because clearly there is some work underway to make sure they have the right mechanisms available to them if they were to see any spread in peripheral, any growth, sorry, in those peripheral spreads. What would you like to hear from the ECB?
Well, the Euro system has one job, to keep inflation close to 2% in the medium term, and the sufficient tools with which to achieve it. I have every confidence that they will do what's necessary. Our job is to make sure that spreads are contained, and we are not seeing the type of fragmentation as yet that we were seeing 10 years ago. So I expect them to do what's necessary to make sure that inflation expectation is contained, and we will take it from there.
How concerned are you about levels of inflation across the Eurozone or in Spain, Pablo, at this point? And how concerned are you that expectations around inflation will not remain anchored?
Well, inflation is a real threat. It's transitory and temporary nature makes it no less threatening, or no less dangerous, no less painful. It must be contained. And this is why the ECB's job is so important. I think they have more than enough tools with which to contain inflation expectations, and they have a single objective, which I know they are obsessed about achieving in the medium term. I have every confidence that they will be able to do it.
Every confidence there. Back to where we started the conversation around debt issuance, Pablo. Do you have plans for more green debt sales? I think the last one that Spain held was back in September. What's still to come there?
No, there was a launch in September for 5 billion, very successful. But since then, we have tapped that bond twice to the tune of 2.2 billion additional amounts. So this bond is now 7.2 billion big. It will continue to be tapped for the next couple of years regularly, and the greenium is increasing. So investors are paying up for this bond. Initially, the greenium was 2 basis points, then it rose to 4, and in the last auction about a month ago, it was 7. I believe it will stabilize in the market between 2 and 3 basis points. This is a very successful program.
Okay, the movement of the greenium, the premium for green bonds, really interesting. Thank you so much for joining us. Pablo de Ramon Laca, Director General of the Spanish Treasury and Financial Policy. Let us get a Bloomberg First Word News update with the top stories we're covering this morning. Here's Alice.
Hi, Anna. The World Bank has slashed its global growth outlook, citing a surge in prices and supply disruptions triggered by the war in Ukraine. The lender now expects the world economy to grow 2.9% this year, down from its April forecast of 3.2%. And more than the 4% when the year started. Officials say there is a risk stagflation could persist for several years.
Many countries will have a hard time avoiding a recession. We're not in, it's not a global recession yet. It could, the downside risk is that it could be a global recession. One of the key variables is whether supply comes back online in order to add growth and slow down the inflation rate. But this is the sharpest slowdown in 80 years.
Bloomberg sources say Boris Johnson plans to press ahead with legislation to override parts of the Brexit deal relating to Northern Ireland. The draft bill could come as soon as Thursday, just days after the UK Prime Minister narrowly survived a confidence vote of his own MPs. Chancellor Rishi Sunak, meanwhile, promised tax cuts at his budget later this year, a key demand of some disgruntled Conservatives. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna?
Thank you very much, Alice. Just want to bring a red headline to you. We've got a red headline across the Bloomberg that says, that alerts me to the fact that Alibaba shares have jumped 10% in Hong Kong amid a broad China tech rally. And we see Chinese tech on the front foot this morning, gaining. There had been some news flow surrounding gaming in China, and that led to some thinking that maybe the worst could be over, or there might be some slightly better environment for gaming regulation in China. So that certainly added to positivity around Chinese tech, and we see that tech shares in China have been moving higher this morning. Now, coming up, we will look at your stocks to watch here in Europe as we are 10 minutes away from the start of the European trading day. Including Credit Suisse, the troubled Swiss lender expects a loss at the group-wide level and investment bank in the second quarter, adding to its woes after a string of profit warnings and hits. That conversation next. This is Bloomberg.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable, and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for a limited time.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to Bloomberg Markets Europe. We still have 7 minutes until the start of cash equities trading. Futures point slightly higher, they point slightly lower over in the US. Lots of interesting corporate stories to go through, though. Let's do that with Danny Berger, who's with us to take us through the latest. Let's start with the banking sector then, Danny.
Yeah, so Credit Suisse, this broke about 2 hours ago, giving us an update, basically, Gaussian, saying that they're attending a European finance conference for Goldman tomorrow. So in lieu of that, they've updated their numbers, and it doesn't look great. It's another loss. They see a second quarter loss, not just group-wide, but for the investment bank as well. Blaming a lot of macro factors, be it the war in Ukraine, be it the end of the pandemic spending boost. And they also say they're going to be weak customer flows, client deleveraging, especially in Asia. Now, they also say capital markets issuance, they see that coming in light, and they're worried about credit spreads widening as well. So, Anna, within all of that, they said that they are going to accelerate their cost-cutting measures.
Okay, and we will also focus on Inditex then, the retail giant, the fast fashion giant, giving us an update. What were the takeaways?
Profitability very strong. In fact, profitability at a 10-year high. This, of course, contrasts with the retailers. Yesterday, we had Target, a lot of fear there about the consumer, but at least for Inditex, it is strong. So their profitability is good because they were able to raise costs, or rather raise prices, certainly not costs. They were able to cut costs, to the contrary of that. So all of that means really strong profitability. And look, if it's a recession, if it's lower spending from consumers, we're worried about as they start to budget. Fast fashion, like Inditex, of course, the parent of Zara, might be one of the ones that benefits.
And Ubisoft, this is a games maker, the video game maker. Tell me what the news flow is here. I was just talking about this in the context of China.
Yeah, well, that's exactly it, Anna. So China approving more video game licenses. Of course, this is concentrated on Chinese tech, trying to revive that sector. So not necessarily a French video game company, but still these shares are called higher today. Could see video game makers in all of Europe, again, just rise in sympathy with their Chinese peers.
Danny, thanks very much. Bloomberg's Danny Berger with the latest on the stocks that we have in focus as we work our way towards the start of Wednesday's trading session. Still 5 minutes away. Futures have been pointing a little bit higher, but really we're just trying to play catch up with what we saw in the United States yesterday. We've seen quite a bit of indecision, it seems, at the start of the week as to where we want to go with risk assets. US 10-year yields just down below 3%, actually. So the start of the week, we talked a bit about going back over 3%, how much that changes the Tina narrative about there being no alternative to equities. Well, now the 10-year yield just dropping below the 3% level for those who care about those round numbers, of course. That is it for this programme. The European Market Open is coming up next. The team taking you through then the start of trading from a slightly cloudy London. This is Bloomberg.
If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at hurricane.com.
This is an urgent appeal from UNHCR, the UN Refugee Agency. As conflict and tragedy strike Ukraine, the world is watching and worrying, desperate to save their lives and protect loved ones. Some have fled within their country, while others have sought safety across borders. Most are women and youth, and a heartbreaking amount of children are arriving in neighbouring countries alone. Please go online and give what you can today.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg Terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. Joining the half-point hike club, the RBI becomes the latest central bank to raise rates more than forecast, with Poland's decision later today and the ECB, of course, tomorrow. The World Bank's warning, the organisation cuts its global growth forecast, warning of prolonged stagflation. Plus, more trouble at Credit Suisse. The company sees a loss at the group-wide level and investment bank in the second quarter. Let's take a look at the futures then. There's divergence between the futures that we're seeing here in Europe versus what we're seeing in the US. You had, of course, some modest gains stateside notched up on Wall Street. In terms of the futures here in Europe, a bit of catch-up and some optimism as well from Asia on the back of regulatory changes in the technology space. We'll dig into that shortly. So Pointing to potential further tax cuts later this year. We know that Prime Minister Boris Johnson, after surviving that vote of confidence, is now looking at rewriting legislation around the controversial Northern Ireland Protocol as part of that Brexit deal. The Spanish IBEX gaining 0.4%. The FTSE 100 now gaining just a little over 0.1%. Again, a positive handoff from Asia. The MSCI Asia Pacific, that benchmark, gaining, and in China as well, particularly the tech stocks. We'll break that down for you. Optimism that maybe some of the regulatory squeeze is starting to ease. The DAX gaining 0.3% or 43 points. The CAC current also higher by 0.2%. Let's switch on, see how things are playing out then cross assets. The RBI, of course, that central bank in focus for today, coming out with 50 basis points, as we said in the headline. Rates now in India close to 5%. We're looking ahead to the ECB, the asset purchase program expected to end tomorrow. That announcement we're expecting from Madame Lagarde. The question then is, do you get a hike in July, and is it 25 basis points or 50 basis points? That is a live debate, we know, within the halls of power at the European Central Bank. The future stateside, again, that divergence between what we're seeing in terms of the optimism, the modest optimism here in Europe versus the futures in the US, pointing lower by 0.3%. Euro dollar currently at 106, just softer by a little over 0.1% on the single currency. The US 10-year back below 3%, 2.99. Yields up, though, around 2 basis points. And here is the HS Tech Index, just to underscore what you've seen. The likes of Alibaba soaring almost 10%, again, on the back of some approvals for gaming from the regulators over in China, following that report in the Wall Street Journal around DD and the ending, again, according to that report, of the regulatory probe into that ride-sharing company. HS Tech currently at 4,790, gaining 4%. Let's check in on some of the individual corporate movers. Credit Suisse in our headlines for the right reasons, of course, or for the wrong reasons when it comes to the bank. Another warning around profits, deleveraging of some of their customers, down. Look at that, 3.7% for Credit Suisse. Their woes just continue. A squeeze on investment banking and the group as a whole. Another warning there as they try to rewrite that ship. Inditex, look, gains of more than 3%. Zara, they managed to push up profits across Inditex to about a 10-year high. They've raised prices for Zara, so they're managing to absorb some of that input costs and passing those costs on to the consumer. Inditex currently up 3.5%. Wizz Air meeting the estimates, currently down 2.4%. They're seeing strong demand, not quite yet back to pre-pandemic levels. They're still looking to add capacity, but of course also warning that the market and the sector remains very volatile. Wizz Air currently down 2.4%. Let's get back to the macro then, and the World Bank cutting its forecast for global growth in 2022 even further, warning that several years of above-average inflation and below-average growth lie ahead, with potentially destabilizing consequences for low and middle-income economies.
Many countries will have a hard time avoiding a recession. We're not in, it's not a global recession yet. It could, the downside risk is that it could be a global recession. One of the key variables is whether supply comes back online in order to add growth and slow down the inflation.
Thank you for joining us in the studio. What do you make of this downgrade when it comes to growth from the World Bank? How consequential is this? What does it tell us about the risks, as they say, of stagflation for the global economy?
I can tell you that the camp of pessimists is starting to gain count. You know, earlier last year, not a lot of us were talking about stagflation. We were saying probably not yet, but that's definitely a big risk now, even for emerging markets, even more so. You saw RBI earlier today raise rates. That was expected, and it's a little bit more political in India in particular, because at some point, if inflation remains elevated above 6%, the central bank actually has to write a letter to the government as to why they failed. So it's quite a detrimental issue there.
Okay, Marcus, let's bring you in at this point. Marcus Morris-Ayton from Allianz Global Investors. Good morning, Marcus. Are you starting to position, should you and your clients start to position now for a potential recession?
Well, it's a good question, and it's one that we're all pondering on a daily basis. And ultimately, I think the key arbiter of that will be the consumer. On the one hand, we're currently seeing relatively robust consumer spending, and Inditex's results today are a testament to that. But on the flip side, consumer sentiment data looks continually very weak. I think that will probably change as we enter the winter and the impact of higher energy prices begins to bite. And ultimately, I think that the really sad factor is it will probably be lower income households that will be most affected by this, because they spend a higher proportion of their income on food and energy. So yet again, we see a greater divergence in the equality gap.
The bottom tranche, once again, feeling the most pain. Noor, let's bring you back in at this point as we look ahead to the ECB and whether or not that will be a factor. They weigh up the potential pain across households. You're looking potentially, now the market's pricing in a rate hike in July. The question is 25 basis points or 50 basis points. Can the economy of the Eurozone stomach 50 basis points from the ECB at this point?
I think the peripheral countries on the peripheral side, so Italy, Spain, Portugal, might feel the burn a bit more, but you definitely need it. I would love to see the ECB raise rates by 50 basis points. I don't know how likely that's going to be because of just how dovish the central bank is and just how much they have to consider factors of all these different economies. And they're looking at core inflation, which is not as elevated as the headline inflation print is.
Marcus, what are you going to be looking for from the ECB? The inflation forecasts or any guidance on 25 basis points, 50 basis points? What is going to be in focus for you?
Yeah, I think those are the two key factors. Firstly, will be where the ECB see inflation settling, and secondly, really the cadence of rate hikes that they expect. Everyone's aware that we will see a rate hike in July and September. The question is it 25 basis points or is it 50 basis points? And markets seem to be broadly split in the middle at the moment. But Lagarde has certainly kept the door open for a 50 basis point hike. So we will be waiting eagerly to see what happens.
And Marcus, on a sector-by-sector basis, which sector is most vulnerable, at least most exposed to that increase, whether it's 25 basis points or 50 basis points across the Eurozone? What are you looking at?
I think the banking sector is the obvious one in terms of being exposed to rate hikes, and they've clearly struggled with negative and zero rates in Europe for much of the last decade. The other issue is inflation, though, and inflation is really what dictates the rate hikes. And there, the sector that is most exposed is consumer discretionary. But this appears to be very much in buy-side and sell-side models already. Consumer discretionary sector has been the weakest sector in Europe this year. You've got stocks like ASOS and Zalando down 60, 70%. So the market is very much positioned for that. And I think we're approaching a point where if you believe in these business models long-term, although the next couple of quarters may be challenging, the valuation opportunities in some of these stocks may be pretty attractive in the coming months.
OK, the valuation opportunities may be in discretionary. Noor, let's bring you back in just briefly before we let you go and get back to break. In terms of the China factor as a potential catalyst, some now starting to look at China with an optimistic view. Can China prove a catalyst for the Eurozone as well in terms of that demand as the lockdowns start to ease?
Absolutely. China can definitely be the factor that helps risk assets, particularly tech, rise through this growth fear wave that we're seeing through. I know there are growth concerns, but what we're seeing out of China is very optimistic. And I'm looking forward to seeing more regulatory ease when it comes to their common prosperity mantra. We've seen what happened with DD recently. It jumped instantly, just as we've seen reports that they're going to ease that probe into that company. Investors are waiting for these signs to go back into China. And the more we see from China that willingness or that openness to tech companies again, the more we'll see investors come back in.
Marcus, just briefly, do you agree on that?
Yeah, I think China hopefully provides the upside for markets and for those that do want to get bullish. The challenge, though, is yes, China provides an improvement in demand, but equally a resurgent China and potentially stimulus from China may increase the inflation that we're all seeing at the moment. So I think there's very much a delicate balancing act in terms of how you view those contradictory factors.
Yeah, contradictory impacts on inflation from supply chain easing out of China, but of course that increased demand as well for things like energy, oil in particular. Marcus, you're staying with us. Thank you. Nora Al-Ali, of course, from my MLive team, breaking down some of the key themes. Thank you for coming to the studio this morning. More with Marcus and some of his calls after the break. Let's check in on Credit Suisse, but big corporate stories of the day in terms of that additional profit warning, just another profit warning from the Swiss lender in terms of the second quarter, warning that they're going to be challenging market conditions. That is already happening, largely as a result, or flagging the implications of the conflict in Ukraine, but also monetary tightening and what they describe as client deleveraging. You can see the stock down almost 4%, 3.8% just in the last 2 days. We'll keep across that story, but just again highlighting the pressures on that Swiss bank as they try to rewrite that ship in the face of a number of scandals, of course, and of course now market volatility and challenges. Right, coming up, moving on, Boris Johnson presses ahead with legislation to override parts of the Brexit deal as he looks to put the vote on his leadership behind him. We will discuss the UK and plenty more with Marcus Morris-Ayton, get some of his calls as well next. This is Bloomberg.
At Empower, we believe in opening doors. Let us help move you towards financial freedom for all of life's moments. We've been helping over 17 million customers create the future they want, and we're ready to open some doors for you.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Hold back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right. Own the night. Visit trycheeks.com and get 25% off this Father's Day with a 60-night guarantee.
When your small business needs financing, you need a fast, secure way to get the right loan at the right time. We're Smart Biz Loans, rated the #1 online marketplace for SBA loans. We'll help you pre-qualify for both low-cost SBA loans and affordable fixed-rate term loans through our bank partners, all with one easy application.
It was way easier, way faster, and at the end, we got the loan.
So go to smartbizloans.com today. Apply now.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Welcome back to the Open. We are 13 minutes into the European trading day. Currently across European equities, losses of about 0.1%. So the futures had been pointed to some upside for European equities. That hasn't materialized, at least in the first 14 minutes or so. The pressure most acutely felt in the CAC down 0.2%. Similar picture over in Italy and Spain as well. Spain, in fact, just holding up to gains of 0.2%, and the FTSE 100 range bound. Future stateside pointing to losses of between 0.5% and 0.6%. 0.5% on the S&P E-minis. The NASDAQ futures pointing lower by 0.6%. Let's get back to the UK, though, and all things politics, of course. The UK Prime Minister Boris Johnson trying to move past the major rebellion he suffered earlier this week, pressing ahead with legislation to override parts of the Brexit deal. Meanwhile, his Chancellor, Rishi Sunak, has promised to cut taxes at his budget later this year, one of the key demands of some disgruntled Tory lawmakers. Red meat for the Tory backbenchers, some would argue. Still with us is Marcus Morris-Eiton, Allianz Global Investors European Equity Portfolio Manager. Marcus, are the markets, are UK equities, are UK assets, in fact, underpricing political risk?
No, I don't think they are. I mean, clearly, in many ways, the vote on Monday was much narrower victory for Boris than he probably would have liked. But I think this is a less of a worrying event than perhaps it could have been a few years ago. On the one hand, we must differentiate between a leadership election within a party, where you're unlikely to see a material change in policy, versus a general election. And actually, secondly, the policy differences we have today between Keir Starmer's Labour government and Boris Johnson's Conservative government are relatively small. Both parties are seeking to govern from the centre. So I don't think we have that big left-tail risk that we had a couple of years ago, for example, when we had Jeremy Corbyn in charge of the Labour Party. And that's why you're probably seeing the slightly more muted reaction in markets post-Monday. The one challenge.
How are you thinking about exposure? Marcus,
sorry,
let you finish. I'll let you finish that point. The one challenge for Boris.
I was just going to say, the challenge Boris has is generally when you see a leadership challenge, it's about one disgruntled policy or potentially a very serious challenger for his throne. In this case, it was much rather really a general distrust across the wider party and all factions of that party over Boris's leadership style himself. And that's often much harder to come back from. So I think in answer to your question, this situation will not be resolved immediately, but actually the impact on markets is much less than it could have been.
Do UK equities maintain their relative ability to act as a safe haven? At least it's all relative, but year to date they have outperformed many of the other major indexes. Do you want to be increasing your exposure to UK equities in this environment?
Yeah, I think UK equities are probably a relatively good place to be at the moment. You look at the sector composition, they're very much exposed to A, defensives, but B, sectors that are performing in this environment, with energy being one, and equally banks if we are to continue to see this rising rate environment. And actually on the flip side, they have very little exposure to tech and consumer discretionary, which has stood them in good stead this year. And remember that UK valuations are significantly below our friends the other side of the Atlantic, even despite the moves that we've seen year to date.
And you've talked about that valuation squeeze on consumer discretionary. What else is looking potentially oversold for you at this point, Marcus?
Well, I'm a growth investor, and it's clearly been a challenging couple of months to be a growth investor. But the upside of that is now we have a multitude of stocks that have actually performed very well from fundamental reasons, but where the valuation has materially come back. So we aren't short of ideas in those higher growth, higher quality names that fundamentally are performing well, but have been hit by the rising rate narrative. And clearly, you've got to be selective. One example would be a company like Adyen, the online payments business. They grew 60% last year. They've grown 50% per annum over the last 5 years. Yet the shares are down 40% year to date on purely valuation grounds. So those are the types of stocks that we really are trying to take advantage of in this environment. I think for those that have a long-term mindset, we will look back at today and recognise that there were some pretty interesting opportunities for the long term.
Okay, so maybe some opportunities within growth. Is it becoming more challenging to find pricing power? You look at the results of Target, the warning there around margins and the profit squeeze. On the flip side, arguably, Inditex holding up pretty well in terms of pricing power. Is that becoming more challenging to find that pricing power within individual equity names?
I think we'll see a growing divergence between those companies with pricing power and those without. And Inditex is a perfect example. This morning they posted gross margins of 60%, which is a 10-year high. So what that shows is they do have the pricing power to be able to pass on these inflationary pressures to their customers. Their prices are 10% higher than they were a year ago, and they're already talking about further price increases in the spring and summer. What potentially will be worrying for the central bank is actually if this pricing power becomes more widespread. because that would be indicative of these inflationary pressures being passed directly onto the consumer, and may indicate that inflationary pressures will be much more sustained than many people believed a couple of months ago.
Okay, Marcus Morris-Eitan, Allianz Global Investors European Equity Portfolio Manager. Thank you for the analysis this morning. Some views there on consumer discretionary and, of course, continue to focus on those companies that hold pricing power. Let's get the Bloomberg Business Flash now with Alice Atkins. Alice.
Morning, Tom. Tech stocks have jumped in China as the government's latest batch of new game approvals bolstered bets that the industry's outlook is on the up. Bilibili and Alibaba led the rally after China's entertainment regulator approved licenses for 60 new games in what is seen as a step towards policy normalization. ExxonMobil, Total Energies and ConocoPhillips are among a group of Western companies poised to win stakes in a multi-billion-dollar project to boost Qatar's gas exports. Sources say state producer Qatar Energy may announce its decision this weekend. Several other firms, including Shell, also bid to be part of the expansion. G-Space, a unit of China's Geely automotive empire, has put its first satellites into space. 9 of its satellites are circling the Earth after being blasted into orbit last week by a Chinese government rocket. It makes Geely one of the first Chinese companies to begin assembling the sort of satellite constellations pioneered by Elon Musk's SpaceX.
We think there are many synergies between auto manufacturing and the aerospace industry. It represents 5G, 5G plus, 6G, and a significant revolution of the future transport of human beings.
That's your Bloomberg Business Flash. Tom?
Alice, thank you very much indeed. Of course, the owner of Geely, Li Shufu, has a major stake in Daimler as well. Right, coming up, Credit Suisse falls after extending its losing streak. We will dig into that top story next. The implications, of course, for that Swiss lender. This is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Welcome back to the Open. We are 24 minutes into your European trading day. You're seeing losses across European equities of close to 0.2%. US futures also pointing lower by between 0.5 and 0.6%. The sector that is feeling the most pain at this point here in Europe is the banking sector, down more than 1%. And Credit Suisse is certainly a factor there. The company is falling this morning, close to 6% as things stand, 4.8%, after saying it expects to make a loss at the group-wide level and at its investment bank in the second quarter. It blamed a challenging market after Russia's invasion of Ukraine and tightening monetary conditions. Let's bring in then Tom Metcalf, who leads our finance coverage here in the city of London. Tom, just break down the key results then, what you took away from this. What is driving the loss at Credit Suisse?
Yeah, look, it's just another bit of bad news for the bank. So, you know, they came out with this statement earlier today, and as you say, pointing at Ukraine, pointing at kind of, you know, this higher rate environment. And, you know, for me, the big thing is just like, this is yet another problem for them. You know, we've had it for months and months. I think I've been on here, you know, for about a year now talking about Credit Suisse woes. And I think why investors are acting so sharply, so something like 6% down, is just this sense that, you know, as much as they come out and say we've got a handle on this, boom, there's something else coming through, and you just wonder where does it end. And, you know, they're now looking towards 2023 as sort of the critical year of the turnaround. But, you know, how much faith do investors have that? And judging by the share price, it looks like there's not much out there.
Yeah, currently down 5.6%, as you say. Thomas Gottstein has said this is a crucial year for the business and trying to turn it around. What else are you looking for? What else stood out for you from the statement, and what else are you looking for in the months ahead for this bank?
Yeah, there was an interesting line in the statement, just a line, no further detail, but they talked about sort of further cost measures. So they have a big investor day coming up, I think, at the end of the month, and they'll say they'll, you know, give a bit more detail then. But you wonder what that is. Is that sort of job cuts? Is it kind of pulling back from more business lines? I mean, the interesting thing about that statement was they're saying it was the investment bank is going to make a loss. And I think a few days ago, they just came out and said, hey, we're turning a page, we're good to go. And
one of their top bankers, right?
Exactly,
back in the
top
game.
Investment banker. So it's just slightly odd communications, and, you know, perhaps that's partly why the shares are down so much, because they had this message going, hey, we're back on the line again. But.
Okay, Tom Metcalf, thank you. Watching for that investor day then from Credit Suisse, and potentially any additional details around those costs and ability to cut costs at that bank, which remains challenged, of course. Tom Metcalf leading up our finance team here in London. Right, coming up, Wizz Air posts results in line with analyst estimates and is bullish on summer demand. We take a look at the figures and prospects for the wider low-cost airline sector next, amid a lot of travel chaos across the continent as well. The markets, you're looking at losses of 0.2% here in Europe. Stay with us. This is Bloomberg.
I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been in Ukraine since 2014. Now we are expanding relief efforts inside and outside the country to provide medical and mental health services, protection for women and children, and clean water. The needs are immense. You can help. Please visit internationalmedicalcorps.org to find out how.
Strong enough to stay, we will never.
Fred, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Life doesn't always give you time to change the outcome.
Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Bloomberg Green, bringing you the business data and innovations to fight climate change. I'm Kaylee Lyons in conversation with pioneers like Gina McCarthy.
Climate change is also a public health crisis.
Green superstars like Robert Downey Jr.
I don't know what it's going to be, but I know that we're going to do whatever it takes to get there.
And political game changers like John Kerry.
Human beings created this problem. Human beings can solve it.
Reinventing climate news on TV, Quick Take, and Bloomberg.com.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Credit Suisse stumbles. The Swiss bank kicks off today's session deep in the red after warning of a second quarter group-wide loss. Joining the half-point hike club, the RBI becomes the latest central bank to raise rates more than forecast, with Poland's decision later today and the ECB tomorrow. Plus, the World Bank's warning. The organisation cuts its global growth forecast, warning of prolonged stagflation. OK, let's check in then on these markets. The futures have been pointed to some upside here in Europe, but that is not how things have turned out. The World Bank warning in terms of stagflation, so higher inflation, lower growth, cutting their growth forecast for the global economy to around 2.9%, so below the previous estimates of around 3.2%. Currently seeing losses of 0.2% across the European benchmark. The DAX is lower by 37 points, 0.2%. The FTSE 100 here currently around range bound. You're looking at the Chancellor Exchequer, Rishi Sunak, saying yesterday that there are potential tax cuts coming later this year. Let's switch it on, see how things are breaking up sector by sector then. Banks under pressure, thanks to Credit Suisse largely. Financial services and banks, currently banks down almost 1%. Retail gaining, though, more than 2%. Inditex part of the mix here in terms of that ability to pass on cost to the consumer through the Zara Group. They hit a 10-year high on profitability at the Spanish retail giant. Travel and leisure also up 0.7%. Energy, you've got Brent above $120 a barrel still. And the last time I looked, the US 10-year was just above 3% in terms of that benchmark. So that's the sector-by-sector breakdown. A more modest look in terms of how equities are playing out than maybe the futures have suggested. Future stateside also, the last time I checked, pointing to losses. Let's get to the travel and leisure sector then. Wizz Air reporting a full-year loss as the pandemic continued to impact passenger numbers. The airline's CEO told Bloomberg's Anna Edwards a little earlier that while there are challenges in supply chains and with recruitment, he remains bullish on summer demand.
We are seeing incredibly strong demand. The least issue in the industry at the moment is demand. People are back, people want to fly. Actually, people have some savings to spend. And the issue is a lot more around the supply chain performance right now. But in terms of demand, we are seeing a lot of people booking. I mean, if I just look at the last few weeks, our booking rate is 55% up versus the same period in 2019. So demand is incredibly strong.
So the last thing you have to worry about is demand. Demand is strong. But one of the issues that is creating is, quote-unquote, chaos at UK airports and maybe other places as well. You tell me, is this a UK story or is it elsewhere?
It is not a UK story. I think the UK story is probably a little bit bigger than in the rest of the world, but we are seeing systemic issues across the industry globally. The supply chain is out of labor resources. We are seeing constraints in ATC, air traffic management. We don't have enough controllers in the system. As a result, we are suffering a lot of delays and ending up with cancellations at the end of the day. We are seeing airport security, ground handling, not having sufficient staff. As a result, they are putting a lot of strains on the operation of the industry. Yeah. So that's the issue.
So there's a number of issues you listed there. I mean, how many more flights have you had to cancel than would be normally operational?
I mean, we hardly cancel. I mean, we cancel less than 1% of our flights. But in recent days, we had a day we had to cancel 4% of our flights due to this very distressing operating environment. The industry must restuff itself. We need to get sufficient number of people properly trained to properly operate this industry. We have been maintaining some unproductivity in the system during the COVID period to make sure that when ramp up is coming, actually we are ready to ramp up. Many of the other players, stakeholders in the industry decided to lay people off in a big way, and now here we are, people are back to travel and they don't have people to support the operation.
Wizz Air CEO and co-founder Joseph Varadi speaking to Bloomberg's Anna Edwards a little earlier. For more, we are joined by Bloomberg's European Airlines reporter Siddharth Philip. Sid, a bullish tone then from Wizz Air. Were there any surprises from these results?
Actually, just the caution that the airlines actually showed in terms of, low-cost carriers were the most bullish about the economy and the rebound in travel. And the sort of pessimism that's creeping in is actually quite interesting because for the most part, low-cost carriers have maintained that demand is relatively inelastic and people tend to trade down every time there's a sort of slowdown in the economy. And with Wizz Air being a little more pessimistic, it does sort of make you pause a little bit.
OK, so that is something of a question mark then for that company and maybe the broader industry. When it comes to the tensions between the airline industry and the UK government, they're becoming more acute. Tell us what is happening there.
So the UK government and the airline industry has been trading blows on who's responsible for the chaos that we've seen during the recent sort of Easter break and as well most recently during the Jubilee weekend celebration when a lot of travel was disrupted. There were serious queues at airports as well as people were forced to miss their flights. Flights were cancelled at the last minute. And so the government has come out and said the airline industry was ill-prepared. They didn't have enough staff and they oversold tickets. While the airline industry sort of blamed the government, saying that the sort of ever-changing regulations forced them into the position where they had to sack staff. And actually, because of the sudden ramp-up in demand, they're sort of struggling to bring in staff, as well as delays in processing all those various staff members.
OK, so the blame game there between the industry and the government. is, how challenging is it?
I think most of the direct exposures that I referred to before have been managed or are being actively managed. So I don't think that's really a serious area of concern. Our focus right now is more about making sure that there is proper implementation of the swift measures and sanctions that have been put by the European Union, but also by the G7, and the banks are complying with the imposition of those sanctions, and making sure, as I said before, that the exposures to the overall macro uncertainty arising from the war, at what we call the indirect exposures, continues to be managed properly.
And what's your assessment as we weigh up all of these risks for the banking sector? What is your assessment of the health of their balance sheets and the additional need, potentially additional need for further capital? Are they well capitalized? Can they weather these tensions at this point?
Yeah, I mean, our assessment at the beginning of the year before the war, was that the capital ratios of the banks were good, were high. Actually, they actually had increased by 40 basis points through the COVID period. They were at 15.4% core equity tier 1. That was the average for the sector as we enter 2022. As we go forward, as I said before, the macro environment still looks to be worse than before, but not as dramatic. Just as a point of comparison, we ran a stress test of the banking sector last year. We published it in July, and there we had a macro scenario that was forecasting a 3.6% decrease in EU GDP growth. And we're far from that situation. And even in that scenario, our assessment was that the banks were robust and will end up coming out of that scenario with a good position of capital. So I think that the starting point of the banks is good. Of course, there's a distribution around the average on these numbers that I'm talking about, and we need to focus on individual institutions, but I don't see really any significant concerns to financial stability at this stage.
When it comes to the question of ESG, the ECB has been critical of European banks for not moving faster on integrating ESG into the way that they operate. Is there a reason for why this has been slow, why the banks have been slow to adjust to this? Do you want to see more action from the banking sector on the question of ESG?
Yeah, to be honest, I think it's an area in which we're all linked, and I would like to see more action, not just from banks, but from all of us, including regulators, if I may, as well as non-financial corporates. It's a clear and present danger, and we need to move forward to try to address those risks. We've been working actively on this, and I actually just put a consultation paper last month, in which we are asking the industry for feedback on how best to address these concerns from the prudential framework, if there's anything that needs to be done on the existing prudential framework to make sure that we foster in that area. But that's just one of the areas in which we're working. We're just, earlier this year, we published a requirement for banks that next year will have to publish information on the Pillar 3 on disclosures of their exposures to climate risk, not ESG broadly, but only climate-related risk. And I think this is an agenda we need to continue to push going forward.
Would you expect that they'll face at some point at least ESG capital requirements?
Well, this is a part which we need to work through. My impression at this stage is that more than ESG capital requirements, we need to address whether there are risks arising from ESG that are not properly covered now within the existing prudential framework. That was the key question that we put in this discussion paper. And the evidence so far, I think, is that we need to gather more evidence, that we don't have enough information, and that we need to work that further. I don't think necessarily that, I think that as long as capital is needed to cover risks, then we should always amend the prudential framework, but we should not amend the prudential framework for other purposes in order to cover potential risks that may arise from the situation.
Okay, Jose Manuel Campo, European Banking Authority Chairman, thank you very much for your time joining us out of Rome this morning. All things European banks and the challenges that sector faces. Right, let's get to the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. The World Bank has slashed its global growth outlook, citing a surge in prices and supply disruption triggered by the war in Ukraine. The lender now expects the world economy to grow 2.9% this year, down from its April forecast of 3.2% and more than the 4% when the year started. Officials say there is a risk stagflation could persist for several years. Angela Merkel has warned that isolating Russia isn't possible in the long term. In her first public appearance in front of a larger audience since leaving office, the former German Chancellor said Putin had made a big mistake by invading Ukraine, saying there's no excuse for this brutal aggression. Sources say Merkel repeatedly spoke to Putin in the early days of the war, calling for a ceasefire. Bloomberg has learned that the Biden administration is seeking to wean the US off of Russian uranium imports. Sources say the White House is pushing lawmakers to support the $4.3 billion plan to boost purchases of the nuclear reactor fuel from domestic producers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom?
OK, Alice Atkins, thank you. Coming up, Brexit override. Boris Johnson plans to scrap parts of his deal with the EU, but how much can the Prime Minister actually get done after barely surviving that confidence vote? We will explore that next. This is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's Enterprise Solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
Welcome back to the Open. We are 53 minutes into your European trading day. Losses across European equities of 0.2%, and the futures are not looking positive for the States either. The S&P E-mini is down 0.4%. Similar picture for the NASDAQ futures as well. OK, let's take a look at some of the things to watch out for today. At 10 a.m. UK time, we will have some euro area data, including GDP and employment. Now ahead, of course, the ECB decision tomorrow. Also at 10 a.m, the OECD Economic Outlook report is released. Then at 5 p.m, we are due Russian CPI. This comes as later today, Russian Foreign Minister Sergei Lavrov is expected to visit Turkey for talks on unblocking Ukraine's grain exports. Now, back to all things politics here in the UK. The UK's Chancellor of the Exchequer, Rishi Sunak, has promised to cut taxes at his next budget. That's in the autumn. It was one of the demands of some members of Boris Johnson's Conservative Party, who, of course, almost deposed the Prime Minister earlier this week. Bloomberg's also learned that Johnson plans to press ahead with legislation to override parts of the Brexit deal. Controversial, to say the least. Joining us now is Lizzie Burden, our EMEA EcoGov correspondent. Lizzie, is this an attempt then by Boris Johnson to cynically change the agenda and move away from the vote, the scandal and the pressure on him from within his own party?
You could argue that it's Boris Johnson coming out guns blazing. Even some of the Tory press called it a hollow victory, so why wouldn't you want to move on from that? Or you could question where this is coming from. The Foreign Secretary, Liz Truss, has been trying to show that she's not afraid to stand up to Brussels, even though once upon a time she was a Remainer. And if you look at the timing of this, it's a massive gamble for Boris Johnson. It risks stoking the anger among the pro-EU MPs who voted against him on Monday night. Brussels isn't going to be in a mood to compromise when he's weakened. And if Brussels retaliates with a trade war, it'll only add to the cost of living crisis in the UK. So I would question where this is coming from.
And what would you say about Rishi Sunak's announcement then, that maybe you're going to see tax cuts later this year at the budget? What does it say about his ambitions when he looks at a weakened Prime Minister?
So interestingly, this is tax cuts on business. It'll be interesting to see whether there are also personal tax cuts to help with the cost of living crisis. There's, of course, it's always a benefit to a wannabe Tory leader to try to look like an heir to Margaret Thatcher, a tax cutter.
And so far he's struggled to do that. Because taxes remain very high across the board.
And he's recently increased the windfall tax. He's raised the windfall tax on energy companies. So he's got some ground to claw back in that area. Never mind the fact they had this debacle over his wife's tax affairs. So unsurprisingly, he's slid down the list of runners and riders to replace Boris Johnson.
So possibly some jockeying still at play there within the leadership of the Tory party and, of course, the government. Lizzie Burden, thank you, as ever, for breaking down what is happening here. That controversy, I should say, around the Northern Ireland Protocol, whether that's going to be rewritten, and, of course, that announcement from the Chancellor that maybe there are tax cuts in the offing. In terms of your markets, just checking back in, the FTSE 100, by the way, down now 0.2%. We've been discussing the relative ability for UK assets to look through the increased political risk here in the UK. Currently down 0.2%. The CAC current is lower by 0.3%. And when you look at the S&P E-minis, futures pointing lower by 0.4%. We've had 2 days of gains for US equities. That may be unwound later today. Looking ahead, of course, to CPI and that all-important inflation print from the US on Friday. But before we get there, it is the European Central Bank, the ending of the asset purchase program expected to be announced tomorrow, and any clarity on inflation forecasts and the rate of increases. That is it for the European market open. Surveillance early edition up next. This is Bloomberg.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Many countries will have a hard time avoiding a recession.
I think that bringing inflation down should be our #1 priority.
The last few years have been challenging in terms of just the volatility that we've seen.
But this is the sharpest slowdown in 80 years.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 8th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The half-point hike club. Well, the RBI becomes the latest central bank to raise rates more than forecast, with Poland's decision later today and the ECB tomorrow. More trouble at Credit Suisse. The company sees a loss at the group-wide level and investment bank in the second quarter. The lender weighs a new round of job cuts. And amid questions over his long-term leadership, UK Prime Minister Boris Johnson presses ahead with revisions to the Brexit deal as Rishi Sunak promises to cut taxes in the fall. Now, first thing is first, we do have a lot of top stories, and in the last couple of minutes, actually seconds, we have a Bloomberg scoop saying that Credit Suisse is probably looking at weighing a new round of job cuts after the loss warning that we had earlier. So we'll have, of course, a look at what Credit Suisse stock price is doing. For the moment, you can see European stocks down some 0.4%. They turned lower. U.S. equity futures also lower on persisting worries about high inflation and slowing growth. That, despite a lot of the opening actually being supported by technology stocks in China. You can see Credit Suisse, of course, warning on their profit, down some 7.3%. And then that Bloomberg scoop just seconds ago saying that they're also weighing a new round of job cuts after this loss warning. Now, let's get straight to what the European map looks like. This is one, of course, of a story of inflation. Tomorrow is ECB day, something that will be closely watched. I know, for example, in some of the periphery countries, they're extremely worried that spreads will widen if the ECB does not do something to contain that. So I would suggest getting into tomorrow, and we see that widening of the spread, for example, between Italian BTPs and German bunds, but that is probably one of the main market stories that we should watch out for tomorrow as well. U.S. Treasury Secretary Janet Yellen, meanwhile, told lawmakers that inflation is likely to stay high.
Let me say, I think that bringing inflation down should be our #1 priority. And President Biden, in an op-ed on inflation in recent remarks, has indicated that it is our top priority.
And World Bank President David Malpass is warning of years of pain ahead. Speaking to Bloomberg, he raised the possibility of a global recession, though he said we're not there yet.
Many countries will have a hard time avoiding a recession. We're not in, it's not a global recession yet. It could, the downside risk is that it could be a global recession. One of the key variables is whether supply comes back online in order to add growth and slow down the inflation rate. But this is the sharpest slowdown in 80 years.
Now we're joined to talk markets and, of course, investments by Rupert Harrison. He's portfolio manager for multi-asset strategies at BlackRock. So many questions, Rupert. First of all, on where do you hide if inflation's coming or a policy mistake could bite us?
Well, look, this is the challenge for markets at the moment. I think we're not past the peak of this inflation problem. And central banks, so we've got the ECB tomorrow, overwhelmingly focused on inflation and not at all sensitive to what I think is going to be a coming slowdown in growth. I think that might be the story by the time we reach the end of the year. But for now, inflation absolutely the driver of policy. And I think we are, at the moment, maybe in a little bit of a pause in this sell-off in risk assets. No. Positioning is now extremely low. There's maybe some short-term relief from China as the kind of reopening after some of the COVID lockdowns. But I still think this is not a great environment for risk assets, not a great environment for corporate bonds. We like owning alternatives, gold, other diversifiers in portfolios.
So gold does what? A hedge against inflation. Is crypto a hedge against inflation?
I mean, I don't really see crypto as a hedge against anything. I think it's a speculative asset, really, as a mainstream asset class. I think that gold is a good hedge against fears of inflation.
Okay.
Ex-post turns out not to be a particularly good hedge against inflation.
Is there a danger that actually we have too many hikes and then they have to cut in 2024, a lot of central banks? And I don't know how you play that in the markets.
Yeah, so look, I think that the policy error narrative is something that I think will emerge particularly in Europe later this year. I think that the slowdown in European growth and in the UK is going to bring, whether we get an actual recession or not, I'm not sure, but I think we will end up with growth very, very low, close to zero. And I think that central banks at the moment are overwhelmingly focused on that inflation challenge, but that growth concern will take over, particularly as the kind of peak inflation data start to recede later in the year. In the US, the fundamentals are just that much stronger. We've already seen
recession.
Well, I think we are seeing a slowdown. I think we're going to see manufacturing PMIs in the ISM, for example, down towards 50 or even below by the end of the year. But we've got a huge amount of balance sheet strength for consumers. We're seeing already actually credit data start to pick up in the US to kind of take up some of the slack. So I think the US has that much more momentum.
Do you worry about the ECB not doing a kind of backstop for the widening of spreads between, for example, Italy and Germany, or is that a market play?
Yeah, look, I think that is a concern. We've obviously heard this sort of suggestions that they have some plan coming to try and narrow the spreads. It's not clear what that, we've been around this so many times with the constraints of the capital key and things like that. I think in an environment where the central bank is overwhelmingly focused on inflation and where growth is slowing, look, that's going to remain a concern.
So, but you wouldn't buy any European periphery bonds or anything like that. What would you buy in Europe?
So we continue to like energy equities. I still think that for now that the tightness in those markets, agricultural sector, I think that these are kind of medium-term stories that are going to continue to play out. We continue to be underweight European equities overall. Still think that the growth slowdown is something that is going to drive risk assets generally lower.
So we have a mini survey. I mean, I call it mini, but actually it's quite a mega survey because we ask everyone who comes on which commodity will do best and which will be the worst through year-end.
Best, probably still oil.
Yeah.
Worst, I'm not sure, to be honest. It's.
I mean, dynamics are quite. Again, we're kind of assuming, of course, that the war in Ukraine stays on for a long time. I don't know what's being priced in, or whether markets are moving a little bit away from the immediate impact on war and longer-term inflation prospects.
Yeah, so I think in commodity markets, and particularly energy markets, it's not just about the war in Ukraine. Look, it's going to be very hard to forecast the month-by-month developments there, although I would certainly personally fade any sort of short-term hopes of ceasefires or resolution there. But energy markets are tight for a lot of other reasons. And I think that that's going to remain the case for the foreseeable future.
How do you play China? Do you play China?
So yeah, absolutely, we do play China. I think that we've been underweight, neutral to underweight Chinese equities for some time now. We've seen quite a sharp bounce in some parts of the market in response to this reopening. Every now and again we get these sort of stories and signals that, for example, the sort of regulatory crackdown is easing, policy easing is coming. I think our bias at the moment continues to be to kind of fade that positive news. I don't see a fundamental change in Chinese policy coming. I don't think that they are going to resort to large-scale stimulus. I don't think that there's the ability or will to do that. And I still continue to think that those Chinese assets at the moment require some kind of premium to sort of make them attractive.
Okay, Rupert, thanks so much. Rupert Harrison there from BlackRock stays with us. In the meantime, we also need to look at Credit Suisse. We understand from our Bloomberg reporting that it's weighing a fresh round of job cuts, part of a renewed push to slash costs after it warned this morning of a second quarter loss. Now, the job cuts are according to people familiar with this matter, so it hasn't been confirmed, but certainly on the back of that warning of a second quarter loss, the share price for Credit Suisse down 7.3%. Now, coming up, we talk banks. We also talk about the UK economy with BlackRock's Rupert Harrison, who says it's not all doom and gloom. That's next, and this is Bloomberg.
I'm Jeff from Nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. We still deliver the freshest nuts, dried fruits, snacks, and sweets to families all around the country. Nuts.com. Enjoy free shipping on your first order.
Your personal information gets exposed so often, it might as well be hanging in a museum. Everyday activities like online shopping, banking, and even data breaches may expose your information and make it dangerously easy to have your identity stolen. No wonder there's a new victim every 3 seconds.
Someone stole my information and tried to buy a car in my name. Felt really devastating because I had no control.
But protecting your identity can be easy with LifeLock. LifeLock monitors threats to your identity, and if an issue is detected, a dedicated U.S.-based restoration specialist will work to fix it.
If something happens, you have somebody fighting for you.
All backed by LifeLock's $1 Million protection package, including reimbursement for stolen funds.
Everybody needs to have LifeLock.
Identity theft protection starts here. Call the number on your screen or visit lifelock.com/get25 and use promo code GET25 to save 25% on your first year of identity theft protection.
From Rishi Sunak to deal with the cost of living, it was pretty big. You know, we're talking 1.5% of GDP. I think with him still in number 11 and the Treasury as a sort of someone who cares about the public finances, I would be surprised to see another big loosening in fiscal policy. I think that path has now largely been set. That will help to cushion the slowdown. It will certainly help for those on lower incomes because a lot of that money was focused on them. But I wouldn't expect a kind of big change in the overall policy stance.
Where do you see sterling because I mean, it's been, you know, one of the most interesting maybe currencies out there.
Yeah, I mean, still looking to play sterling largely to the downside. I think, as I say, I think the Bank of England is priced relatively aggressively relative to the path we'll see over the next 6 months. I think that concerns around growth and the energy shock will continue to drive lower rather than higher.
Are we underestimating, and this is not only for the UK, but in general, some of the supply chain shocks that companies need to deal with? So we talk a lot about, you know, the companies that have the pricing power and that can bring prices up to deal with inflation, the ones that don't. But some of them also, you know, have struggled to get some of the parts.
Yes, look, what we have all been, I think, or many people have been wrong-footed over the last year to 18 months is the persistence of these problems. And I think we know now that that's going to continue to play out. The sort of on-off of COVID lockdowns in China is the latest thing to kind of prolong that story. I think that supply, and particularly labour supply, actually, is going to be the kind of big defining trend over the next 18 months or so. Like, if we do see labour supply coming back really across the developed world, then that's going to make life a lot easier for central banks. I think that'll be a better story for risk assets. In the UK, interestingly, if you go back 6 to 12 months, it was labour shortages that were the big story. And interestingly, that has resolved itself for most sectors in the UK. So I think that's less of a problem. We actually, interestingly, now have very high levels of immigration again in the UK. And I think that that's, again, coming through in a way to sort of solve some of those labour supply shortages. So that may be a sort of optimistic little silver lining for the UK economy, that those labour supply shortages are really much less acute than they were.
Rupert, thank you so much. As always, Rupert Harrison, their portfolio manager for multi-asset strategies at BlackRock, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Angela Merkel has warned that isolating Russia is not possible in the long term. In her first public appearance in front of a larger audience since leaving office, the former German chancellor said Putin had made a big mistake by invading Ukraine, saying there's no excuse for this brutal aggression. Sources say Merkel repeatedly spoke to Putin in the early days of the war, calling for a ceasefire. Now, Bloomberg has learned that the Biden administration is seeking to wean the U.S. off of Russian uranium imports. Sources say the White House is pushing lawmakers to support the $4.3 billion plan to boost purchases of the nuclear reactor fuel from domestic producers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, hedge funds were tallying gains on their hottest bets in years when Dan Sondheim reached an unusual deal with JP Morgan to go even further. With the bank's help in August 2020, Sondheim's D1 Capital Partners used its stakes in private companies as collateral for borrowing $2 billion that the firm could put towards yet more of those stakes, amongst other things. Now, last year, that focus on private companies looked brilliant as D1 updated its valuations and posted a whopping 70% gain in that part of its portfolio. Now, the industry is bracing for a reckoning. Across Wall Street, billionaire investors and their advisors are urgently trying to figure out how much exposure they have to plunging values in Silicon Valley unicorns and other private ventures. Well, joining us now to discuss all of this is our very own Danny Berger. Danny, you're an expert in hedge funds, so they've basically been dipping their toes into VCs.
Yeah.
But because tech is tanking, it's a bit of a nightmare.
Yeah, it really is. And this is something that, as you were talking about, they're often leverage bets for these hedge funds. So yes, interest rates rise, the valuations of these go down. And hedge funds are kind of in this unfortunate position where a lot of private funds, they are only really assessing these investments. They only have to look at selling them maybe 3 to 7 years. But hedge funds, they'll report quarterly or monthly results. So their clients are looking at that and saying, hey, these are falling. We want to get out. We want to sell these. But they're really hard to sell. I mean, they're a liquid asset.
Liquid, exactly.
Yeah.
But they were meant to be immune also from volatility.
Right. And of course, that's not true when you have to assess them every month or every quarter, because again, that immune from volatility assumes that you're not marking these to the market every single day. And look, the hedge fund industry has gotten a lot, the private equity industry has gotten a lot of criticism about this as of late, as the market has turned. Cliff Asness, for example, he's a hedge fund manager, so maybe a little biased because he just does public equities, called it volatility laundering, basically saying that it's this appearance of illiquidity, or it is illiquidity, but that's making it appear less volatile. But actually, it's just as volatile as everything else. You just don't sell it as often.
All right, Danny, I have so many more questions. I know we'll get you back on to discuss this further. Danny Berger, there, our daybreak Mike Europe anchor. And you can read our full Big Take. It's a great one. I'll also push it out on social media on NI Big Take Go on the Bloomberg terminal. Coming up, Credit Suisse's string of troubles continues. While the Swiss bank expects a loss for the second quarter, we'll dig into that story next. This is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Black people make up only 5% of doctors. What is the barrier to getting more Black medical school students to graduate? Plain and simple debt. Almost 1,000 students woke up and heard Bloomberg Philanthropies was helping to lessen their debt burden by $100,000 each. That is what we're investing in at Bloomberg to really get under the issue so we can see where can we actually create change.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Credit Suisse says it expects to make a loss at the group-wide level and at its investment bank in the second quarter. Now, it blamed challenging market conditions after Russia's invasion of Ukraine and tightening monetary conditions. Just in the last 20 minutes, also, Bloomberg has learned that the lender may be planning further job cuts. The stock is dropping this morning. I think it's around 7.2% lower, now 6.5% lower. Now, let's bring in Tom Metcalf, who leads our finance coverage here in London. Tom, I mean, they just can't catch a break, right? We also spoke to the chief executive in Davos. He was in a quite cheery mood, or certainly more relaxed, but every time it's a loss or it's something that's not quite working out.
Yeah, here I am again, talking about Credit Suisse again. And I mean, this is particularly extraordinary because I think this week one of their top bankers was coming out saying, hey, we've moved all this, you know, beyond this, we're okay. And then today, statement, another quarterly loss. And then that news just now that, you know, they're obviously looking at more job cuts pretty much across the bank. So why? I mean, I don't know whether there's an underlying, is it that they just can't get ahead of it, or is it they keep on making mistakes? Yeah, it's one of those situations. The things they pointed to was Ukraine, you know, the rise in rate environment, but all banks are dealing with this. So it does seem that perhaps they're just kind of continually stumbling over their feet. They just can't draw a line under these number of scandals. So perhaps it's just the cumulative effect of that. And I really think investors, you see with the share prices, really starting to lose patience patience now.
Yeah, currently down 6.5%. Is there anything else that jumped out at you in the statement?
Well, before about 20 minutes ago, I was going, that's an interesting line about costs, so we know what that kind of probably suggests now. It does sound like they're really, this June 28th meeting, when they're doing a deep dive with their investors, that's going to be pretty significant. Sounds like they're really going to lay out how to sort of steady the ship, so it'll be interesting to watch that.
Where does this leave the chief executive?
Well, it's the perpetual conversation around him, right? Like, they've come out and said, look, my mandate's clear. The chairman came out recently and said, I'll fall back in. But it's 2 years into his tenure, and it's pretty much just been marked by scandal and the inability to move forward and set a clear path. So his sort of future is definitely in the spotlight.
I mean, there were always rumors about possible mergers or selling off assets. Is any of that going to come back?
I mean, yeah, there's a perpetual sort of rumour in the market, I suppose. I mean, I was looking at the market cap earlier today, and it's something like 16 billion Swiss francs. So, I mean, Credit Suisse right now is extremely sort of cheap in historical terms, but obviously then you look at statements like today and you wonder, who would want to buy it?
Tom, I mean, interest rates going higher doesn't really help them, right? Because this is a whole other set of problems.
Yeah, it's an interesting dynamic there, right? Normally higher interest rates will at least help, most parts of lending, etc. I think what was interesting, as they did flag this in the statement, is Asia in particular, clients seem to be staying on the sidelines, and that is going to really hit their fee income, particularly in wealth, the big growth area that they're targeting. So I think that's probably the worry, is maybe it's the volatility and the uncertainty, and right now it's just they can't catch a break.
Tom, thank you so much. Tom Metcalf there, who leads our finance coverage in London. Now, coming up, a new era of monetary policy for the euro area, maybe ahead as the ECB pivots to confront the threat of inflation. We preview tomorrow's rate decision next. This is Bloomberg.
Is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Scribd is ebooks, audiobooks,
magazines, podcasts. Scribd, it's awesome.
I'm Sienna Miller, and I am a global ambassador for International Medical Corps. Our teams have been in Ukraine since 2014. Now we are expanding relief efforts inside and outside the country to provide medical and mental health services, protection for women and children, and clean water. The needs are immense. You can help. Please visit internationalmedicalcorps.org to find out how.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Strong enough to stay, we will never.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it.
Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, the half-point hike club, the RBI, is something that we need to watch out for. It becomes the latest central bank to raise rates more than forecast, with Poland's decision later today and the ECB tomorrow. More trouble at Credit Suisse. The company sees a loss at the group-wide level and investment bank in the second quarter. The lender weighs a new round of job cuts. And amid questions over his long-term leadership, the UK Prime Minister Boris Johnson presses ahead with revisions to the Brexit deal as Rishi Sunak promises to cut taxes in the fall. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it is Wednesday, the 8th of June. Armed with new forecasts and with prices rising at a record pace, ECB President Christine Lagarde and her colleagues look set to end trillions of euros of asset purchases and cement a path of exiting 8 years of negative interest rates at tomorrow's monetary policy meeting. Well, we're now joined by Hetal Mehta, Senior European Economist at Legal & General Investment Management. Hetal, thank you so much for joining us. So many questions on the ECB, because we heard from Christine Lagarde. She tried to get that governing council to be on the same page. A lot of people saying like she tried to do a Draghi, but then we still had calls for hikes. So what are you expecting from the ECB?
So I think obviously in terms of tomorrow's meeting, it's going to be very much talking about the need to act, ending the asset purchases, taking policy away from that kind of extraordinary stimulative level. But I think, yeah, the hawks have got the upper hand at the moment, given where inflation is. It's still likely to creep a little bit higher. So, yeah, she's going to face some pressure where she's taken the unprecedented step of laying out effectively the path for the next 2-3 meetings. You know, she's facing quite a challenge.
And Hetal, if you look at money markets, so they're expecting a 50 basis point hike by July. I mean, that's pretty punchy.
Yep, I agree. And completely flies in the face of the gradualism message that they've been trying to tell us for a long time. But the last few months have been, you know, extraordinary in terms of what we've seen. And I think that there's a very high chance that that is where they end up going.
Hetal, we made some great charts. Actually, thank you, Valerie, as always, for putting some great charts together with us. Now, we're looking at the balance sheet for the ECB, but maybe we can also look at the components to Eurozone inflation, which is one of the most interesting ones, because a lot of it is also, you know, flights, airplanes. I do expect inflation to have reached its peak, or can it get much worse from here?
It's most likely close to its peak now, but there are still some risks to the upside. I mean, big unknowns in terms of food prices, energy prices. You know, there are lots of shocks that are still there. I mean, the supply constraints have not all abated either, and exactly how that plays out. Economists' inflation models have been broken for a long time, so I think we have low conviction in that.
I also have two other great charts. Now, one is basically the bond spread, you know, for example, between Italian and Spanish bonds, and this is one of the biggest concern. I mean, I caught up with actually Italian MPs yesterday, and they said the ECB has to support them at some level, because otherwise it could be really, really ugly for them. Will the ECB do it?
I'm a bit sceptical that they will do anything concrete other than some sort of verbal intervention in the short term. I mean, there was the speculation recently that they are all willing to sign off on some sort of program. It's just going to be really hard to get another Draghi-esque, whatever it takes, moment. And remember, there are lots of people who want the bond purchases to come to an end. Exactly fine-tuning the minutiae of it so it can favour one country over another, I think is still going to be difficult.
So if we don't get some kind of agreement, and there were rumours in certain press, you know, what happens to actually Italian BTPs? Do they blow up, and then do we have another crisis on our hands?
I mean, it's a risk, and I think this is why the ECB has to be more gradual than other central banks. They can't afford to shock markets. So where other central banks can be more aggressive in terms of hawkish surprises, trying to bash down inflation expectations, the ECB has to tread more carefully. And maybe that's why we've seen that more telegraphed short-term path. But in the absence of them trying to at least give some, not illusion, but at least some idea that they could step in if really required.
But that won't be enough, right? And I guess, is it a philosophical concern of hiking rates and buying bonds, which is a great Valerie question?
Well, I mean, it's ultimately the market could test the ECB's resolve, and we've seen that before. But we're still a long way away from see where we were 10 years ago with the sovereign debt crisis. Remember, the ECB has a huge chunk of BTBs on its balance sheet, so the Italian Treasury gets a nice kind of kicker from that, where Italian debt financing costs are not as high as the actual yield we all see on our screens.
Yeah. But again, if that, if they don't, I guess, take care of that for the moment, and this is because of Russian gas, right, and the dependence of Italy to Russian gas, then could we see some kind of, I mean, I wouldn't go as far as maybe an IMF program, but could we see a Eurozone crisis back on our hands?
I think we could definitely see spreads widen further from here if there isn't some more support. But I do think that actually the Italian structural budget has actually seen some improvement. Obviously, we've got a bit of fiscal easing going on at the moment, but you can have some reasonable assumptions and still have debt relatively stable.
All right, Hetal, thanks so much. Hetal Mehta there, Senior European Economist at Legal & General Investment Management, joining us this morning. Now, coming up, Deliveroo, Oatly, and Goop. We speak next to the venture capital founder, Frédéric Cour, about how to spot these trends in retail and tech. This is Bloomberg.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
Oh, this one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango, and with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands?
Huh?
How can our feet look just like our hands?
Oh, boy, I'm freaking out here.
For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious.
That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah.
Hint. Water with a touch of true fruit flavor.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night. Bloomberg. Top experts. Great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the conversation on venture capital. Frédéric Cour has been in the industry since 2001, and he's built a record of spotting trends early in technology and retail. Now, he racked up big wins as the first investor in Farfetch and early bets on mobile payments platform Zong and Dailymotion, earning his European awards for investor in the year of 2012 and 2019. Then in 2015, Frédéric launched Felix Capital, which focuses on early-stage investments in digital lifestyle opportunities, new brands and platforms. Its portfolio includes Deliveroo, Peloton, Oatly, and Gwyneth Paltrow's Goop. Well, we're delighted to be joined by Frédéric Cour. He's Felix Capital founder, and he joins me now. Today, it's also announcing an injection of new funds. It will be doubling in size to $1.2 billion. Frédéric, thank you. I feel like this is a great moment to catch up because you're also doubling in size. You've gotten so many things right. Is there an investment that you regret making, first of all? Is there something that was a mistake? And then we'll get on to your successes.
They are, I think, at the right time. We always make the decision with the data we have. Right. And then the key for us is to not overexpose ourselves with too much capital in the wrong opportunity. So, it's difficult to point to a specific, you're putting me on the spot there. But overall, we are very pleased with the community of founders that we built, which has overall helped us to get to where we are today.
How difficult is it, and first of all, congratulations, of course, on doubling your fund. How difficult is it to understand the trends going forward? So I know we were taken by surprise by inflation. If you look at Netflix, we all thought that we were going to watch more TV, but this was more of a pandemic era thing. So is it more difficult to spot the trends in 2-3 years because of COVID?
I think that today, all our industry, where we are very focused on micro, because we're backing businesses that are typically quite small, and then we back them for the long term. We're sort of humbled by macro, because inflation, interest rates, all of this impacts our industry a lot, especially when we make investment decisions at a certain point that will typically get a reading 5-10 years later. So these things are quite different. Consumer behaviors are where we're focused. Economic environments, that's where we have to navigate. The key is not to make the wrong decision, especially on price, which has been harder.
But it's harder, but I mean, okay, Oatly, I've been drinking Oatly for a long time, and then the valuation came in, I was like, why didn't I think of that? So you spot these trends, a lot of people spot them in their daily lives, but without making money investments. How do you do that?
We spend a lot of time watching people, watching how people live, watching how people, especially younger generations, who are setting trends, and that's and looking at social media, for instance, it's an amazing resource.
Through algorithms?
Well, through data, but also through just watching, through looking at hashtags, looking at what's getting momentum, and younger people in particular, because they're very much setting the direction. Gen Z and millennials, who are now getting older as well, impacting every single generation.
We're still millennials, Frédéric. I'm certainly millennial at heart.
Me too.
So how, what's the next big trend? What do you want to invest in now?
I mean, to some extent, things haven't really changed. The economic environment has changed a lot, but when we look at the micro level, the companies we've backed, for the most part, are still doing really well. Maybe the cost of goods have increased, maybe some of the marketing expenses have increased, but the trends towards people wanting to have a better life, thanks to technology, so wellness broadly defined, that's a fundamental trend. The trend towards a more sustainable lifestyle, that's a very long-term trend as well.
In terms of retail or in terms of
in terms of really every aspect of our life, from electric mobility to shared ownership to plant-based eating. This is a very profound trend.
So one of the things that actually surprised me, for example, was payments, the Klarnas of this world, of you pay over a certain amount of time. I mean, I remember speaking to chief executives of big banks saying, this is the next big thing, I want to get in on that. And actually there were doubts of this in the last couple of days.
Well, this trend is very, very strong. Maybe what we've seen in the past couple of years is some exuberance on some of those aspects. So I think, personally, I underestimated the power of buy now, pay later. It's been embraced by consumers in a very compelling way. The question is, what are those companies offering that service worth? Because the unit economics on this service are pretty thin, and so maybe there needs to be a readjustment there.
I mean, do a lot of the companies you're invested in, do they have price elasticity? Because they tend to be on the higher end. Is it easier to pass on consumer costs to them?
So not all on the higher end. I mean, if you look at electric mobility with shared scooters, that's pretty affordable. We backed a company in Germany called YFood, which is offering a kind of meal in a bottle, which costs around 2 to 3 euros. So that's very affordable. There is some price elasticity up to a point. So a lot of what the companies are doing today is looking at their cost base, looking at their margin structure, looking at their offering as well to focus on the best offering.
When it comes to food, do you worry about food accessibility? We also had this pretty incredible story about KFC having to replace the lettuce with cabbage because there was a shortage and it was too expensive.
Well, we haven't seen that at the level where we operate, but obviously that's more of a bigger trend for people to worry about. I think what we are seeing is a rise of interest in experience, in hospitality. The restaurants are full, so people are going back to the real life, and food is very central to this.
The other question is basically if you look at how easy, I don't know if it has been easy actually to raise capital, but what kind of investor do you have invested in you? Was it people that used to be in public markets that'd rather have it in private?
What we've seen that in our industry in venture capital, we've been lucky to have from the very beginning people who've been thinking long term. We understand that it's important to be invested across cycles. So our fundraising happened pretty fast. More capital we expected from existing investors, typically blue chip institutions, fund of funds, endowments, foundations, and some pension funds, and some new investors as well from the US, but also increasingly from Europe, which is a great sign for Europe.
Brilliant. Frédéric, thank you so much, as always, for coming on. Frédéric Courder, the founder of Felix Capital. Now let's get straight to a Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse says it expects a loss at a group-wide level and at the investment bank in the second quarter. The troubled lender warns market conditions remain challenging after the invasion of Ukraine and monetary tightening across the world. It says that led to weak customer flows and ongoing client deleveraging. Now, tech stocks have jumped in China as the government's latest batch of new game approvals bolstered bets that the industry's outlook is indeed on the up. Bilibili and Alibaba led the rally after China's entertainment regulator approved licenses for 60 new games as what is seen as a step towards policy normalization. Now, Francine, what is the most expensive city in the world to live in as an expat? For the second year in a row, it's Hong Kong. That's according to the ECA International. Higher prices and a strong currency kept the city at the top. New York, Geneva and Tokyo round out the top 5. And that's your Bloomberg Business Flash. Francine, actually, London in the top, it's 4th place now. So quite high there.
I'm not surprised. I feel like my cappuccino has increased by like 30% in the last 6 months. I'm not surprised at all, Leanne.
Well, it's not cappuccinos increasing, Francine. Apparently, it's rent, so we're just all paying a lot more rent.
I know, I've seen certain parts of London 25% higher, and then you wonder why people don't want to come back to work in the city. Leanne, as always, thank you so much for the update. Now, the UK's Chancellor of the Exchequer, Rishi Sunak, has promised to cut taxes at his next budget in the autumn. It was one of the demands of some members of Boris Johnson's Conservative Party who almost deposed the Prime Minister this week. Now, Bloomberg's also learned that Johnson plans to press ahead with legislation to override parts of the Brexit deal. Well, joining us now is Lizzie Burden, our EMEA EcoGov correspondent. So, Lizzie, first of all, the latest Brexit news would not only concern the EU, but certain MPs in his party. So is it just diverting attention away from Boris Johnson's issues?
Well, you could argue that this is Boris Johnson coming out guns blazing, trying to draw a line under that vote on Monday, which even some parts of the Tory press have called a hollow victory. But I would question where this is coming from. The Foreign Secretary, Liz Truss, wants to show that she's not afraid to stand up to Brussels. She is one of the runners and riders to replace Boris Johnson. And remember, once upon a time, she was a Remainer. And the reason I question it is the timing. This is such a gamble for Boris Johnson. As you mentioned, he'll stoke the anger of the pro-EU rebels in his party. Brussels isn't going to want to compromise when he's looking weakened. And if they retaliate with a trade war, it's only going to add to the cost of living woes in the UK.
Yeah, I mean, without making any judgment, I just find it incredible because they're the ones that signed the protocol in the first place. The other big news is, of course, the tech news and the Chancellor. Is this, again, him trying to appease the rebel factions that think this is no longer a Conservative government because they're increasing taxes by so much, or is it him trying to be Prime Minister?
Yeah, Sunak, another name on the runners and riders list to replace Boris Johnson, though he slipped down it because of that windfall tax on energy companies. So he's obviously trying to bolster his tax-cutting credentials, but this is a tax cut for business to boost boost productivity and hopefully wages. Will there be tax cuts, personal tax cuts, to help the poorest households through the cost of living crisis? That remains to be seen.
All right, Lizzie, thank you so much. Lizzie Byrne there with the very latest on the UK. Coming up, Wizz Air sees booming demand from tourists keen for getaways during the summer high season. It's warning on staffing and air traffic control disruption, though, so we'll have plenty more on that story next. And this is Bloomberg.
When your small business needs financing, you need a fast, secure way to get the right loan at the right time. We're Smart Biz Loans, rated the #1 online marketplace for SBA loans. We'll help you pre-qualify for both low-cost SBA loans and affordable fixed-rate term loans through our bank partners, all with one easy application.
It was way easier, way faster, and at the end, we got the loan.
So go to smartbizloans.com today. Apply now.
I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
Healthcare professionals agree that sleep impacts everything you do. Cheik's Performance Sheets are engineered to keep you cool, dry, and comfortable. Cheik's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Cheik's now.
Go to trycheiks.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trycheiks.com now.
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Check out the new Hurry Cycle too. Lightweight and low impact, you can easily move it without bending. Find both at hurricane.com.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Wizz Air has reported a full-year loss as the pandemic continued to impact passenger numbers. The airline's chief executive told Bloomberg's Anna Edwards a little earlier that the airport disruptions have been felt across the industry.
We are seeing incredibly strong demand. The least issue in the industry at the moment is demand. People are back, people want to fly. Actually, people have some savings to spend. And the issue is a lot more around the supply chain performance right now. But in terms of demand, we are seeing a lot of people booking. I mean, if I just look at the last few weeks, our booking rate is 55% up versus the same period in 2019. So demand is incredibly strong.
So the last thing you have to worry about is demand. Demand is strong. But one of the issues that is creating is, quote-unquote, chaos at UK airports and maybe other places as well. You tell me, is this a UK story or is it elsewhere?
It is not a UK story. I think the UK story is probably a little bit bigger than in the rest of the world, but we are seeing systemic issues across the industry globally. The supply chain is out of labor resources. We are seeing constraints in ATC, air traffic management. We don't have enough controllers in the system. As a result, we are suffering a lot of delays and ending up with cancellations at the end of the day. We are seeing airport security, ground handling not having sufficient staff. As a result, they are putting a lot of strains on the operation of the industry.
Yeah.
So that's the issue.
So there's a number of issues you listed there. I mean, how many more flights have you had to cancel than would be normally operational?
I mean, we hardly cancel. I mean, we cancel less than 1% of our flights. But in recent days, the other day, we had to cancel 4% of our flights due to this very distressing operating environment. The industry must restuff itself. We need to get sufficient number of people properly trained to properly operate this industry. We have been maintaining some unproductivity in the system during the COVID period to make sure that when ramp up is coming, actually we are ready to ramp up. Many of the other players, stakeholders in the industry decided to lay people off in a big way, and now here we are, people are back to travel and they don't have people to support the operation.
Well, for more on Wizz and the summer travel chaos, we're joined by Bloomberg's European Airlines reporter, Siddharth Phillips. Sid, I mean, first of all, I know we need to talk about Wizz Air, but nobody really wants to travel at the moment because it's an absolute nightmare. It's a chaos. I've done it like 4 times in a week. For Wizz Air, I mean, any real surprises about how they're handling this?
No, I mean, I think the whole, the fact that fuel costs are rising is going to be some sort of concern as we go into the summer. But at the same time, we are looking at Wizz, and Wizz has been sort of one of the better off carriers compared with some of its peers like EasyJet and BA, which have had to cancel much more flights.
I mean, BA, we actually have some breaking news out of Brussels Airlines. This is according to the standards, cancelling some 148 summer flights. I mean, what is happening to BA? It seems like they're in the doldrums. Did they cut too many people off, and so can't, you know, there's so many flights that they can't operate?
So BA has been ramping up staffing. I mean, at the height of the pandemic, they did cut about 10,000 staff members. And so they are ramping up, but then at the same time, it is a hard labor market. It is very difficult to hire, and as well as the fact that you need security clearances and other clearances, which take time. So essentially, it's a sort of waiting game against the rush of summer demand.
Yeah. I mean, I'm going to confess that I've always been a huge fan of this airline, and now I'm thinking, like, I need to get somewhere. I'm looking at other airlines. Is there a worry that people will switch to airlines that are considered more reliable?
At the moment, it's sort of sporadic, so it keeps happening to different carriers when you least expect it. So, I mean, it's really hard to plan which carrier is going to have which cancellation at what date. So it's really a it is a systemic problem across the board. The UK is facing it much more because obviously we've had the consequences of Brexit. But we've seen demand, we've seen issues at airports, including Brussels, in Dublin, in Schiphol, in Amsterdam. So across the board, we are seeing issues with security queues in airports, chaos at sort of check-in counters, and even those cancellations.
Sid, in 10 seconds, what did they miscalculate most? The demand or the cost cuts?
I think it's a question of it's both. So they expected demand to come back sort of more gradual pace, and it's been a massive surge in pent-up demand.
Okay, Sid, as always, thank you so much. I could talk to you about traveling and the chaos of travel for the next 2 hours, but I know you have a full-time job to do. Sid Phillips there, our airlines expert here at Bloomberg. Now, in the meantime, Credit Suisse, definitely left, right, and center for top news. A Bloomberg scoop suggests they're weighing a new round of job cuts after a warning of a second quarter loss. That's according to people familiar with the matter. The share price is down 5%. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kay Lyons, and Anna Edwards. This is Bloomberg.
Your personal information gets exposed so often, it might as well be hanging in a museum. Everyday activities like online shopping, banking, and even data breaches may expose your information and make it dangerously easy to have your identity stolen. No wonder there's a new victim every 3 seconds.
Someone stole my information and tried to buy a car in my name. Felt really devastating because I had no control.
But protecting your identity can be easy with LifeLock. LifeLock monitors threats to your identity, and if an issue is detected, a dedicated U.S.-based restoration specialist will work to fix it.
If something happens, you have somebody fighting for you.
All backed by LifeLock's $1 million protection package, including reimbursement for stolen funds.
Everybody needs to have LifeLock.
Identity theft protection starts here. Call the number on your screen or visit lifelock.com/get25 and use promo code GET25 to save 25% on your first year of identity theft protection. Enroll now.
Using Wi-Fi without NordVPN could mean sharing your private stuff with more people than you think. Get NordVPN and encrypt your internet connection. NordVPN. Online security starts with a click.
Don't print
this is Lisa.
Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it.
Find some wow now at 4imprint.com. 4imprint, for certain.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg Terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Many countries will have a hard time avoiding a recession.
I think that bringing inflation down should be our #1 priority.
The last few years have been challenging in terms of just the volatility that we've seen.
But this is the sharpest slowdown in 80 years.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. More trouble at Credit Suisse. Shares are falling after the bank came out with a 6th profit warning in the last 7 quarters. A forecast from billionaire hedge fund manager Ray Dalio. He says central banks will be forced to cut interest rates in 2024 after their economies are hit by stagflation. And Angela Merkel's warning on Russia. The former German chancellor says Vladimir Putin made a big mistake by invading Russia, but isolating Russia in the long term isn't possible. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Lots to discuss then when it comes to geopolitics and when it comes to the global growth story, Kaylee. For the moment, the European global equity risk asset picture seems a little indecisive at the start of this week.
Yeah, and of course, that's as investors continue to weigh both the growth and inflation picture, and we're continuing to see cuts to growth forecasts and elevation to inflation forecasts. We're just getting some breaking headlines out of the OECD, which cuts their global growth forecast to 3% for this year, 2022, then down to 2.8% in 2023. They see euro area inflation at 7% this year, 4.6% next year, while cutting the Eurozone growth outlook down to 2.6% for this year. The U.S. growth outlook for this year cut to 2.5%. And then as for the picture in Asia, the OECD cutting its China growth outlook to 4.4% this year. Of course, that is well below the 5.5% target that Beijing has set out. Now, speaking of China, we did get some better news on the regulatory front, maybe out overnight, with China approving licenses for about 60 video games. That is lifting sentiment that maybe the worst of the regulatory crackdown on Chinese technology companies in particular is over. So that really lifted risk sentiment in the region broadly. The MSCI Asia Pacific Index was up about 0.8% overnight, but the really outperformance came from those technology stocks. The Hang Seng Tech Index up nearly 5 full percentage points. The other big story out of Asia we're following is that the RBI, India's central bank, has joined the 50 basis point rate hike club. With that larger than expected hike to tame inflation, they signal that more is to come. Interestingly, you're not seeing too much reaction in the Indian rupee. It's actually fractionally weaker against the dollar at the moment, trading right around 77.77. But the big story in FX continues to be the Japanese yen. It is the biggest underperformer in both Asia and G10, weaker against the dollar by nearly a full percentage point. We're all the way out at 133.81 on dollar yen. That is the weakest Japanese yen once again in 2 decades.
It's unreal. I mean, imagine if you're Ford or General Motors trying to compete with Honda and Toyota. Sales in this country are putting fat margins on the books of the Asian automakers and not helping the U.S. car makers at all. S&P futures right now down about 1/3% after a really incredible rally yesterday. I mean, we saw another turnaround in equity markets that was dramatic. So definitely a market that you want to be watching closely. The U.S. 10-year yield still holding steady at 3%. This was interesting after the first auction yesterday in which the Fed didn't play a massive role. I think it was a $44 billion auction of 3-year notes that went fine. NYMEX crude up about 0.2% to $120.22. So TI now over 120. Inflation, you know, you can stop it on household goods and bicycles, as I think we heard from the administration, but not on gas. And Bitcoin right now down about 3%, $30,462. It's really not interesting the last few weeks to watch the price of Bitcoin, but everything going on under the hood is pretty amazing. Anna, Kaylee and I had a great crypto show yesterday. If you didn't see it, you can get it on the internet.
You can get it on the internet. You can go to TV Go. You can watch older episodes of that program and of this one. Let's have a look at what's happening on these European markets right here and now, though, Matt. And we have some negativity across European stocks. We opened up in positive, trying to catch up with the U.S. session of yesterday. But that didn't last long in the face of slightly weaker U.S. futures. So CAC 40 and Xetra DAX both down 0.2%. The London market down 0.1% or so. Retail is a real area of positivity, though. And this is really interesting in the context of all the worrying we've done about Target, about Gap, and all the retailers in the United States that have not done too well of late. This is the picture for European retail today. The sector up by 1.7%, and a lot of this is Inditex, and that is putting an upward sort of fire behind other retailers. Even in the UK, could there be some short covering going on of UK retail stocks is what one broker is talking about today. So here's Inditex up by 4.5%. This is the fast fashion business that owns the Zara label. They seem to be managing their costs okay. They reported a decade-high level of profits, and there wasn't much talk about inventories and build-up of inventories. It seems that trading down for more expensive labels is something that could play to the advantage of a business like Inditex. So too for Wizz Air. This is a low-cost airline here in Europe, and they like to give you the same narrative that customers trade down when budgets are tight. The stock moving in the other direction, though, down by 6.7%. Disruption at airports overriding a strong demand picture. He said demand is through the roof, the CEO of Wizz Air, when I spoke to him earlier. Credit Suisse, we're going to get more details on this one, Kaylee, shortly, but I just thought I'd emphasize the share price move we're seeing there. Another profit warning from Credit Suisse as the saga there goes on.
And that is something we will continue to follow throughout this program. We'll have more on that in just a minute. But first, let's take a look at what is ahead today. The Bloomberg Tech Summit will be kicking off with a great lineup of key CEOs, including the chief executives of Uber, Amazon, and MasterCard. Plus, President Biden and the First Lady will be in Los Angeles, California, to host the 9th Summit of the Americas. And finally, on the economic data front, we'll be getting Russia's CPI data out at 12 p.m. New York time, Anna.
Yeah, lots to watch out for then on the macro front. Let's get back to the corporate agenda. I mentioned Credit Suisse, the stock down by 5%. The company issuing its 6th profit warning in 7 quarters. The lender said it is accelerating cost savings across the group. Let's get more then with Bloomberg's Danny Berger. Danny, a focus then on cost cutting at the company. That's what they're saying now.
Exactly, cost cutting. And since then, Bloomberg has also learned that they're going to be concentrating on job cuts as well. According to people from Real, this is ahead of a new update that they will give near the end of this month. But the update they've given us so far, yes, as you say, the 6th quarter in 7 of profit warnings. Not a great look, especially when less than 24 hours ago, the head of investment banking, of global investment banking, was saying, hey, we're back online, taking a victory lap with clients. Well, the investment bank is likely to post loss in the 2nd quarter, as is the entirety of the group. Now, they're blaming very macro forces. They're saying, look, we have a war in Ukraine, and at the same time, there's the inflation issue with monetary policy tightening extremely quickly. But of course, this is something that all banks have to deal with. So they're seeing client flow looking challenging. They're seeing deleveraging at the same time. So you have to wonder how much of this is the big banking picture, how much of it is Credit Suisse, which has lost 30% so far this year, just having a really hard time drawing a line under all of the scandals they've had.
All right, Danny, well, you mentioned the fact that banks broadly are grappling with tightening monetary policy, but Ray Dalio out overnight saying that a couple years from now, what we're going to be talking about is easing. Walk us through his thinking.
Yeah, so these were in comments to the Australian Financial Review, hence overnight, Australia time. So he said, essentially, we believe we are in tightening mode, and that can cause corrections or downward moves to many financial assets. That pain will force central banks to ease again close to the next presidential election in 2024, predicting a stagflationary environment. We heard it from the World Bank as well, warning about that with David Malpass. So yes, he says rate cuts might come. We are seeing markets in the U.S. starting to price in rates 2 years out, but that's not so unusual when you have this immense amount of rates hikes being priced in now. Sometimes that's just sort of a mathematical equation. But yes, Matt, the warnings are growing.
Oh, hey, Danny, how's it going? Yes, definitely watching that very closely. Bloomberg's Danny Berger, thanks very much. Now, after Matthew McConaughey made a plea for new gun control during a visit to the White House, that's 2 weeks after the elementary school massacre in his hometown of Uvalde, Texas. Let's get more now with Emily Wilkins, our Bloomberg government reporter, who joins us from Washington, D.C. And Emily, his message seemed really carefully crafted, not to offend the Second Amendment supporters in Texas.
Yeah, Matthew McConaughey, he really presented himself as a Texan, as someone who grew up shooting guns and who grew up respecting the power that guns have. And that's kind of how he tried to message it when he was at the White House yesterday, gave a very emotional speech. You could kind of see him choking back tears, holding up photos of various students who were killed during the shooting at Robb Elementary School. And he has called for various policies to pass that would help eliminate some of these potential mass shootings, such as raising the age on the minimum age to purchase assault weapons. You saw him call for that in an op-ed, and you've seen him this week meet with lawmakers. He's been on Capitol Hill. He met with Speaker Nancy Pelosi's staff yesterday. He's met with a number of top lawmakers, and he was at the White House yesterday. I was actually speaking with a lawmaker who sat down with McConaughey on Monday in a bipartisan group of lawmakers, and he said that he is optimistic that this is a difficult issue, but he believes that there is a good chance to actually get something done. Of course, exactly what still remains to be a question. Republicans are very concerned about limiting certain types of guns or preventing individuals from getting guns. But there does seem to be potential movement around those red flag laws, which allow guns to be temporarily taken away from individuals who might pose a threat to themselves or others.
And obviously, Emily, this is an issue that will definitely be at the forefront of voters' minds as they head to the polls in November for the midterms. But before we get there, we saw a number of primary races yesterday, including the LA mayor's race. Billionaire Rick Caruso looks like he'll be heading to a runoff with Congressman Karen Bass. What stood out to you most out of yesterday's primary race results?
I think the big takeaway from yesterday's primaries, particularly with the mayor as well as with the attorney general recall, was that Americans do have high concerns right now about crime and crime in their communities. And they want individuals, candidates who are going to really be willing to crack down on that crime and make sure their communities are safe. I mean, this is a similar dynamic that we saw play out last year with the New York mayor's race and Eric Adams ultimately winning that. You've heard President Biden really take on that messaging, talking about their support for the police, wanting to make sure they're backing them, making sure they're lowering crime. But this is an issue that we expect to come up really in a lot of major cities and have a lot of Democrats wind up dealing with. And I think that's something we're just a repeating theme that we're going to see throughout the rest of these primaries and into the general election.
Emily, thanks very much. Emily Wilkins there, Bloomberg government reporter out of Washington, D.C. Now, Russia's foreign minister is in Ankara for talks that may restart grain shipments out of Ukrainian ports on the Black Sea. But Kiev is skeptical of the Kremlin's intentions. Let's get more with Bloomberg's European government team leader, Ben Sills. So, Ben, obviously they're skeptical after they've been under attack for the last, what now, almost 4 months. Can you trust anything that the Kremlin says?
I mean, if you're sat in Kiev, it's very difficult, isn't it? I think the Ukrainians are conscious of the fact that their economy depends upon their ability to export critical commodities, including grain. They're conscious of the fact that the global food supplies, and particularly in countries like Africa, countries like Egypt and other African countries, the Ukrainian grain is really critical to maintaining food supplies, but at the same time, they're not about to send their ships out with Russian escorts. The Ukrainians have been saying they need third party, they need other nations to provide naval escorts, and agreeing that with Moscow looks extremely difficult.
Right, yes. I mean, the Russians saying they're ready to ensure safe passage for ships, but we take on board what you're saying about what Ukraine will make of those kind of commitments and assurances. We've seen also Angela Merkel warning against isolating Russia. So this is a slightly more long-term story, I suppose, Ben. What do we make of this intervention? She hasn't made all that many big interventions, I suppose, since leaving the Chancellery.
No, she's been very low profile. It's in part, this is about defending her legacy. She was a big proponent of building ties with Russia when she was in the Chancellery, and that obviously looks questionable now. She's very much in line with Emmanuel Macron, the French president, who was a big ally of hers when she was in power. Macron, with the same line that Merkel is making, has really angered the Ukrainians in recent days with his talk of not humiliating Vladimir Putin. You can kind of understand the long-term rationale, but at the same time, it's a stark contrast with somebody like, for example, Boris Johnson in the UK, who's very much kind of defending, and encouraging the Ukrainians to take a much more bullish approach.
All right, Bloomberg's Ben Sills, thank you so much for joining us. Now, another story we're following is the plight of Cathie Wood's ARK Investment Management. The firm's lineup across 9 ETFs now holds just $15.3 billion, a 48% drop since the start of the year. That's the steepest drop in assets among the 25 largest U.S. ETF issuers. The drawdown in assets is a result of weak performance rather than investors yanking out cash. Now, the firm's flagship ARK Innovation ETF, ARKK, has plunged almost 55% this year, the second worst showing among its funds. It's currently higher by about half of a percent or so in pre-market trading. And don't forget, Bloomberg TV is actually going to have an interview with Cathie Wood herself later today, 1 p.m. Eastern time on ETF IQ, so don't miss that. As for some other stocks you shouldn't miss in pre-market trading this morning, one to point out is actually Western Digital. It said overnight that it's considering strategic alternatives after discussions with activist investor Elliott Management that could see the company split up its two businesses. That stock is up about 3% as a result. And I mentioned earlier the big rally we saw in Chinese tech shares in Asia overnight, and that is feeding right through to those ADRs as there's optimism around those video game license approvals, and if that means the regulatory crackdown is over. After Alibaba rose 11% in Asia, those ADRs up about 5.5% before the bell here in the U.S. Anna.
Lots to talk about this morning, Kaylee, with Callum Pickering, Berenberg senior economist. He'll join us shortly. We'll digest the new lines we've got from the OECD, their reduced estimates for growth this year. We'll get to that conversation. And it was the hottest hedge fund bet in years until it all started melting down. More from our big take story, that's still to come. Plus, how Walmart is dealing with labour and supply volatility. Part of our interview with the company's senior vice president of transportation. This is Bloomberg.
This is the planning effect. This is how it feels to know you have a wealth plan that covers everything that's important to you. This is what it's like to have a dedicated Fidelity advisor looking at your full financial picture, making sure you have the right balance of risk and reward, and helping you plan for future generations. This is the planning effect from Fidelity.
CDW. We get if your network power goes down, your business goes with it.
Thanks for calling. We are unexpectedly closed today.
CDW experts can keep you up and running with an APC SmartOps lithium-ion UPS from Schneider Electric. It offers cloud-enabled remote monitoring and 3 times the battery life, so you can get the performance and certainty you need to stay open for business. For resiliency at the edge, trust Schneider Electric and IT orchestration by CDW. People who get it.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
What the world needs now is people. People who see energy a little bit differently. Where a switch to cleaner power means a more resilient grid. With renewables and gas power, providing energy whenever it's needed. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome back to Bloomberg Surveillance. This is the early edition simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York, Anna Edwards in London. Now, we have seen record inflation in the Eurozone. 8.1% is the level right now, and the core number is climbing closer to 4. So the ECB, at least from the German perspective, seems to be way behind the curve. Noor Al-Ali joins us, Bloomberg's Market Live editor, to talk about what's going to happen at tomorrow's meeting in Frankfurt. Nora, what do we expect?
You're absolutely right, Matt. The ECB is definitely behind the curve when it comes to pricing and inflation. Inflation expectations have gone through the roof for the euro area. The debate now for the ECB is whether or not they continue to tout the 50 basis point hike in July, or if it's going to continue to be 25 basis points. I mean, all the hope is that we do see more of a hawkish turn from the ECB, and we do get those pointers for 50 basis points move, or at least indicators that that's still on the table so the markets don't go wild.
Noor, good morning. I mean, we've had so many hawkish surprises recently, haven't we? We've had the RBA, we've had the RBI, and that's just in the last 2 days, both of them going more than had been anticipated. What would a hawkish surprise from the ECB tomorrow look like? Because we're not actually expecting a rate hike, as you said. It's about laying the groundwork for the future, and some people are already expecting 50 in July. So how could they be hawkish if they wanted to?
If they confirm that 50 is definitely on the table and it's a real consideration for the euro area. And let's not forget that the first quarter GDP final print today, usually the final is not, a big thing to consider, but it actually showed that GDP grew 0.6%, so that's 0.3% higher than the prelim figures. So you do have some numbers out here that shows you that perhaps the economy is doing well enough for the ECB to come out tomorrow and say, we're happy with 25 basis points. So 50 basis points definitely the turn that we need to see.
Okay, Noor, thanks very much. Noor Al-Ali of the Bloomberg Markets Live team. And remember, you can get further market analysis. Check out MLIV Go on your Bloomberg terminal. That's where you'll find the Markets Live blog. This is Bloomberg.
Introducing Flippy, the world's first AI kitchen assistant. Let the robots do the robotic work, so people can do the people work.
Fall, September, late September, 25th.
May I be of assistance, sir?
Please. I know the 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
Crypto doesn't have to be overwhelming.
That's exactly what I was thinking.
Wonderful. I'll bring that over.
Great choice.
Ask your financial advisor about Bitwise, the world's leader in crypto index funds.
Throughout history, I've observed markets shaped by the intentional and unforeseeable. For investors who can navigate this landscape, leveraging gold, a strategic and sustainable asset. The path is gilded with the potential for rich returns.
Tune in to today's Options Insight, sponsored by Thinkorswim by TD Ameritrade.
In a global economy, there are countless moving parts. If you want to grow, you've got to know. Vertex, cloud-powered tax tech that enables frictionless transactions, invoicing, and payments. Companies who know, go with Vertex.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
Take the world by cloud. Accenture, let there be change.
This is Bloomberg Surveillance Early Edition. I'm Caitlin Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In the UK, Bloomberg's learned that Prime Minister Boris Johnson will go ahead with legislation to override part of the Brexit deal. That risks inflaming tensions with members of his own Conservative Party and the European Union. Johnson's government has been pushing to rewrite the Northern Ireland Protocol. That keeps the region in the EU single market while creating a customs border with the rest of the UK. Western Digital has announced a strategic review that could result in the separation of its two businesses. The announcement came after talks with activist investor Elliott Management and other shareholders. Western Digital is one of the world's largest makers of a type of chip, flash memory. It also makes disk hard drives. And the son of the founder of Walmart, Rob Walton, is leading a group that has agreed to buy the National Football League's Denver Broncos. That would be my team. ESPN reports that the Walton Group offered almost $4.7 billion. That would be the highest amount ever paid for a U.S. professional sports team. And Matt, obviously, I'm into this story for a number of reasons. The record price, of course, is very, very interesting. The fact that this is a billionaire heir to the Walmart empire is interesting as well. And then also it's the Denver Broncos, which I am a lifelong fan of. We have Russell Wilson.
But why?
New ownership.
Aren't you from Virginia? I mean, just because UVA has the same colors?
Well, I mean, that's just a happy coincidence, Matt. But my dad is from Colorado, born and raised. I had no choice in the matter. So
here we are.
All
I'm
right,
sure
well.
it goes, there you go. She's explained it. It goes much deeper. How dare you suggest such a poor reason for an allegiance to a team. I, on the other hand, know nothing about American football, so we'll say nothing. Let's tell you what's coming up on the rest of the program. Callum Pickering, Berenberg senior economist, he joins us. We'll talk to him about expectations, reduced expectations for growth globally and in Europe. The ECB set to come out with its contribution to global tightening tomorrow. We will talk about that next. This is Bloomberg.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, oh, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
Never be afraid of your strength, because your body is capable of amazing things. Own your strength and see how far it takes you. Tonal, be your strongest.
I got my degree at SNHU for my family.
This degree is for me. I did this for my partner.
My siblings.
My daughter.
My son.
Congratulations, Dad.
All right.
No matter who you get your degree for, Southern New Hampshire University can help you get it done with low online tuition and multiple term starts per year. So the best time to get started is right now. Visit snhu.edu.
Time for our summer sale on the Sleep Number 360 Smart Bed. Why choose proven quality sleep from Sleep Number? Because every Green Thumb, 5K, and all-day dance party starts the night before. The Sleep Number 360 Smart Bed senses your movements and automatically adjusts to help keep you both comfortable all night and to help you get almost 30 minutes more restful sleep per night. Sleep Number takes care of the science. All you have to do is sleep. And now save up to $700 on select Sleep Number 360 Smart Beds. Plus 0% interest for 36 months, only for a limited time. To learn more, go to sleepnumber.com.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Depression can be a really tough thing to go through. Fortunately, people always have a lot of ideas how to help you through.
You just gotta snap out of it.
You have so much to be happy for.
Fake it till it feels normal.
Cheer up.
It's all in your head.
It's because you're a Leo. Think about all the people that have it worse than you.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. More trouble at Credit Suisse. Shares are falling after the bank came out with its sixth profit warning in the last 7 quarters. Bloomberg's learned it's now considering a fresh round of job cuts. A forecast from billionaire hedge fund founder Ray Dalio. He says central banks will be forced to cut interest rates in 2024 after their economies are hit by stagflation. Dalio told the Australian Financial Review the current tightening mode will cause corrections to many financial assets. And Angela Merkel's warning on Russia. The former German chancellor says Vladimir Putin made a big mistake by invading Russia, but isolating Russia in the longer term isn't possible. Merkel says there's a danger of Putin forming an alliance with China if he gets boxed in. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. We were searching for direction earlier on in the European trading session. Matt, we seem to have found it with weakness in US futures, but a bit of a lack of conviction. I guess we're all waiting for that inflation print at the end of the week.
Well, certainly we're watching for the inflation print and a number of data points, but keep in mind how trading's been this week. I mean, we continue to see these huge turnarounds. So even if you think that we've found a direction for the first 4 hours of trading. It could change by the end of the day. Yesterday, we were down in the cash trade, and then we closed up pretty big. So right now, S&P futures are off 0.4%. U.S. 10-year yield, really little changed at 3.01. We just saw it, the yield coming down, and now we see the yield coming up. So a little bit of a flip-flop there as investors sell off that debt. NYMEX crude still over 120 for Texas Intermediate, 120.62 a barrel, and of course Brent is even higher. So this just adds to the inflation picture. Of course, not the core. The core of inflation is the stuff that you don't need. The stuff that you do need is getting more expensive. And Bitcoin right now down 3%, but still hovering around the seemingly unbreakable 30,000 range at 30,413. Kaylee, what are you seeing in the pre-market?
Matt, when Bitcoin breaks out of that range, I'm going to get us hats. I feel like it'll be worth celebrating because it's been quite a while. As for what's going on in pre-market trading, this is a story we talked about earlier, but the optimism coming through for Chinese technology stocks after China regulators approved 60 video game licenses overnight. That is feeding into the idea that maybe the worst of the regulatory crackdown is indeed over, and that's giving a nice lift to ADRs of Chinese technology companies. Alibaba is up about 5.3%, JD.com by 4.3%. You also have DocuSign hired and announced an expanded partnership with Microsoft overnight, so that's lifting the stock the better part of 5 percentage points. And then a story we also mentioned earlier, Western Digital talking with Elliott, looking at strategic options, potentially the splitting of its two businesses. So that stock is up a little more than 4% before the bell as a result, Anna.
Kaylee, European equity markets then a little bit sluggish this morning, down by 0.4%. A lot of sectors in negative territory. I pulled out one that's in positive, though, because it's an interesting comparison transatlantically. The retail sector here in Europe up by 1.6%. A little bit of short covering perhaps going on here as expectations for the retail space have been so damaged of late. But we do see some positivity around Inditex, and here's Inditex, lifting the whole sentiment around that sector. Inditex up by just over 4% today. This is the owner of the Zara chain, of course, and they came out with their numbers, a decade high profitability, managing their costs okay, and not much talk about inventories, which was, of course, the dominant theme when we talked about Target yesterday. And we've had a lot of gloomy reports coming through from, well, certainly some of the US retailers. Credit Suisse down by 5.25%. And, of course, this business has put out a number of profit warnings. This just the latest in a long line, Kaylee. And they say, as we mentioned in our top stories a moment ago, they say that they're going to focus on costs, and we understand that means job cuts.
Yep, really interesting to watch that saga continuing to play out. It is just bad headline after bad headline for Credit Suisse. Let's bring in now Callum Pickering, Berenberg senior economist, who is joining us now. Callum, we've seen a number of cuts to growth forecasts, raises to inflation forecasts just in the last 24 hours. The OECD, the latest out just this morning. The World Bank yesterday cutting their growth outlook, warning of stagflation. And now Ray Dalio overnight in an interview with the Australian Financial Review said, and this is a quote, "We believe that we are in tightening mode, that can cause corrections or downward moves, ... The pain of that will become great and force the central banks to ease again, probably somewhere close to the next presidential elections in 2024. Callum, what's your take on that?
Well, what we've just seen are two risks which simultaneously cannot occur together. We can't have a world in which we have runaway inflation, which is what the growth revisions are showing, and a world in which we can't afford these higher prices. If we can't afford these higher prices, then the inflation goes away. And so we're going to have to figure out which world we're in. At present, we seem to be in the first world. We have a big, an unbelievably large, in fact, nominal adjustment in the world where we're severely supply constrained. And so in real terms, output is stagnating or it's falling. But in nominal terms, everything is growing. So there's no lack of demand. The risk to watch here is that suddenly we get significant demand destruction in the second half of the year, and this turns into a disinflationary shock. But for now, there's no real evidence that that's happening, and hence central banks should be tightening monetary policy to try and arrest this nominal adjustment.
Callum, why then are we starting to see job cuts pop up all over the place? On a micro level, it's really well illustrated by Tesla, although now Elon Musk has walked it back, and you never know what to believe that comes off of his Twitter account. But he was going to cut 10% of jobs at Tesla, and meanwhile, the waiting lists for their cars are 6, 7, 8, 9 months long.
Yeah. Well, judging by the US JOLTS data, there are 2 job vacancies for every unemployed worker in the US, and that's an unbelievably tight labor market. It's a historically tight labor market. So let's have a 25% drop in labor demand. You still have 1.5 job openings for every unemployed worker. That will push wages up over time. You know, we just need to remember back to the 1970s. Things can get quite bad in a stagflationary environment. If you have this nominal adjustment, which becomes entrenched and aggressive, you can have rising unemployment and rising inflation. And so we just need to end this inflation as fast as possible. If that entails significant demand destruction in a temporarily weaker economy, unfortunately, that's what we're going to have to suffer. The narrow path to a soft landing is getting narrower each month. And so we have 2 problems, inflation and supply. Let's get rid of the inflation and, with any luck, allow the private sector just to fix this supply problem over time.
So are central bankers really considering, you know, Bullard-Dalio type scenario where they raise rates steeply at first and only to lower them at the end of next year?
Well, put it this way, central banks have already committed a policy error by overstimulating last year. Question is, can you now overcome that without another policy error, namely a recession? That's going to be difficult. History suggests it's difficult, and so you have 2 problems. If you over-tighten now, then you get a short recession, you get rid of the inflation, and you restart. If you under-tighten, the next recession is even bigger because you have to create deep downturn in demand. You have to generate a lot of unemployment to recalibrate inflation expectations. That's the Volcker scenario that you want to avoid. So if you're a central banker, especially the Fed, especially at the Bank of England, you say, let's play for a soft landing, but actually we need to have a preference for running the risk that has the smallest output loss, which is the over-tightening.
Okay, that's interesting. Good morning to you, Callum. I spoke to one guest this morning who was saying the UK is the canary in the coal mine for where the global economy goes because of the presence of these stagflationary threats. That was his view at Founder Research. But your view on the UK, the OECD saying this morning that they think that the UK needs to cut taxes before the economy grinds to a halt. That might sound inflationary. So do we have to decide which problem we're trying to fight here?
Exactly. I mean, to me, that sounds economically illiterate because you have very strong demand growth in the UK. Nominal wages plus bonuses in March in the private sector up 10% year over year. That's consistent with the inflation rate of 10%, and yet the economy is not growing because of supply problems. And so if you add to demand when your problem is supply, all you do is produce more inflation.
Okay, I think to be fair, reading a little lower, I think they said that they don't expect that demand situation to continue. They expect some of it to be destroyed in the future. That's their view. Onto the ECB, we see money markets now wagering on 200 basis points of ECB rate hikes by May 2023. Where is that? That's almost a year from now, Callum. Does that chime with what you're expecting? I mean, how much tightening will we have time for before economies slow down?
Well, look, if economies are slowing down, if we are expecting demand destruction, then we don't want central banks to be doing much. Okay, the inflation problem will essentially cure itself because prices will have risen by too much. The ECB is in a different situation to the Bank of England and the Fed. The ECB faces mainly supply-side inflation, not excessive tightness in labour markets, and no risk that wages suddenly start shooting off to the upside, partly because there's a lot of collective bargaining in the Eurozone, so it acts like a speed bump between inflation expectations and wages. So the ECB can go slow. The Bank of England and the Fed, they potentially have a labour market and wage problem, so they need to address that. If I were at the ECB, they'll probably hike in the next couple of meetings, not this one this week, but they should be going a little bit slower.
Callum, I obviously cover a lot of the U.S. stocks here, as well as retailers, which have been in focus over the last several weeks. And Target, in just a 3-week span, has warned about its profit twice, cutting the margin outlook again yesterday, talking about these inflationary forces, the buildup of inventories that they now have to mark down merchandise to get rid of. What is the economic impact if we see others following suit?
Well, the risk is that we're already in a recession, unfortunately. Probably you got about a 40% chance of that outcome in the US. But we often think that the recession is the problem. No, the problem came earlier. The problem came because of necessary, but unfortunately highly distortive restrictions from COVID, the excessive Fed stimulus, the needless stimulus checks, similar policies in the UK and Europe, and now the economy just has to work all of this out. A recession is a normal part of a business cycle. We want to avoid them if we can, but we need to realize the problem is not the recession, it's what came before it that caused the recession may actually be the solution. If it gets rid of the inflation, if it gives supply chains just a little more time to adjust, then we should allow this to play out and then look beyond it. If we look beyond it, what we see is actually fundamentals are pretty good. If we can just give this process a little bit of time, I'd expect probably a year and a half from now, a pretty decent business cycle to emerge.
Right, and I'm guessing China maybe still plays an important role in where we go later in the year on that front. Callum, thank you very much. Callum Pickering joining us there from Berenberg. Coming up on the programme, it was the hottest hedge fund bet in years until it all started melting down. More from our big take story around hedge funds. That's next. This is Bloomberg.
FlexShares ETFs are built with advanced modeling to fill portfolio gaps and target specific goals, strengthening client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
When I look at ransomware, I look at it as a much more efficient business model. You compromise a system, you encrypt it, and you get paid.
So you steal from a company and then force them to buy it back, which is how hip-hop works. Good job, music industry. You're ransomware. This is Lenovo Late Night IT.
The world sometimes feels like making a profit comes before the environment, that profitability and social progress aren't compatible. But what if another world were possible? A world where investments could drive companies to change. This is why Amundi offers investments that allow you to help build a different world. And you, in what world do you want to invest your money and your future? Amundi, confidence must be earned.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Pull back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trycheeks.com and get 25% off this Father's Day with a 60-night guarantee.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, OECD Chief Economist Laurent Spoon. That's at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, it was the hottest hedge fund bet in years. D1 Capital Partners used its stakes in private companies as collateral for borrowing billions and posted massive gains. But now, as valuations are fading, the industry is bracing for a reckoning. Our hedge fund reporter, Hema Parmar, joins us now to talk about not only the fact that they borrowed billions on these private stakes, but then they reinvested it in the same kind of assets. And so now as those fall, they're just losing a ton.
Yeah, and we're seeing this kind of across the industry. D1 is one of the bigger players when we look at hedge funds that are doing both public and private companies. And they've really sort of ramped up over the years. But now as we see, you know, different ways that they can go about increasing their allocations to privates, taking on a loan to do so. But the industry is kind of going through this reckoning now as they look at how things are trading.
Well, how much exposure are we talking about when it comes to some of these more illiquid assets?
So, for example, D1, about half of their assets are in private investments. They're about a $20 billion hedge fund. Some of the other funds that have moved significantly into the space, Tiger Global,
By the way,
Viking.
half of their investments, and how leveraged up are they?
Well, we don't always have clear access into how much leverage they're using on everything, but clearly they've taken this, you know, $2 billion loan. They've used some of that to reinvest in these sorts of private illiquid companies, and this is a big part of what D1 does, which is really pushing into startups, venture capital, capital, more private equity type investments, and they are one of the bigger names in the industry that does this.
What do clients do when they're looking at the valuations of these assets being written down and yet they can't necessarily pull their money out easily? I mean, is this not a reputational problem for these funds?
Well, the investors do know from day one that when they invest in D1 and when they invest likely in other funds that do this, that these assets are likely going to be side-pocketed. So when you invest in it, you get in and then you get out when this private investment is exited in some way. They're often told that at the beginning, and we've been seeing a couple other funds like Tiger & Co. too saying, you know what, guys, if you want your money back, we're going to have to side pocket it as to be prudent for your money, but it means that they're not going to be able to get it back soon.
And so, Hema, how do these hedge funds consider the value or show the value of these investments in their books? And how frequently, I suppose, do they have to update those? I mean, you have this concept of mark-to-market, but when it's a private business, I wonder, what are the rules about how they have to hold the value of these assets?
So typically they will mark quarterly. Some funds that do more like venture capital stuff will, like a venture capital fund, could mark annually. But you know, each fund can mark things differently, and according to their own valuation policy. They can take different things into account, such as the fundraising round that was most recent, financials about the company, a basket of public companies that are very similar to the private company. And so these things can influence how they value the position, but it's not uncommon to see, you know, different funds using their own methodology. They do have to do what they tell investors they're going to do and abide by their own policies. But different funds, depending on when they get in these companies, can have different marks for the same company.
So I suppose, Hema, that they will be, from what you said then, if they're using maybe publicly available movements in share prices, for example, as a kind of proxy for what they're holding, then they will be having to represent these losses fairly shortly.
Yes, we've seen some already in some of the funds, marking down things like Instacart, marking down a number of other private companies. Some of the funds like D1 will be marking quarterly, so at the end of this month, I think people are going to be keeping a very close eye to see what the marks are looking like, and I think the industry really is expecting a great deal of markdowns across the space as we look through the rest of this year.
Who are the winners that you're focused on? We hear so much about the losers, and it's a fantastic piece of reporting. I read it top to bottom as soon as I saw it. But who are the winners this year?
So, you know, we're seeing some success among the macro funds. We're seeing success among the multi-strat funds. These are funds that are a great deal more diversified. They can trade currencies as well as stocks. They can use, some of them are market neutral, meaning they try to trade in a way that's not parallel to the market. And we're seeing a little bit more less volatility in those types of managers, while among the stock pickers or those that focus on public and private companies together, we're seeing a little bit more of a difficult time.
Hema, thanks very much. Bloomberg's Hema Palmer joining us there with more on the big take story. NI Big Take, that is the function to use on the Bloomberg to get a look at the big take story that we put out daily. Now, coming up on this program, how Walmart is dealing with labor and supply volatility, part of our interview with the company's Senior Vice President of Transportation next. This is Bloomberg.
Right now, we're all feeling a little strapped. But weekends are still all about grilling. And Walmart always keeps prices low on our fresh ingredients, so you can save money and live better.
Small business owners know they've got to be prepared for anything. You gotta be prepared! And when you use Constant Contact, prepare accordingly. Let's send this. Let's sell this. Let's win this. With email marketing and more to drive your business forward. Try it free at ConstantContact.com.
Tommy John has been dedicated to elevating underwear for over a decade. Now, we're proud to reveal our most premium men's underwear yet. This is Apollo. All new, ultra breathable, rigorously tested for durability, and enhanced with exclusive dry release tech. We've upgraded the softness and the level of comfort, so don't be surprised if your confidence is upgraded too. Experience high end for your rear end at TommyJohn.com and get 20% off your first order.
Clients come to us with complicated situations that occur in their lives. For them, it's the biggest milestone, the biggest accomplishment, the sale of a business, or an important event for their family. For them, it's the first and only time. We have seen this literally thousands of times in thousands of iterations. I am Vince Lumia, Head of Field Management at Morgan Stanley. Whether that's retirement, paying for their children's college education, or their son or daughter getting married, our financial advisors need to make sure that they are making objective decisions every step along the way. Every time you hit a milestone, an anniversary, a life event, the emotions will run high. Making sure that you have somebody, a team of individuals that have seen it before, have seen every circumstance and seen every challenge, and have your back when you need it most is one of the most valuable things a financial advisor could provide to a family. I am Vince Lumia, and we are Morgan Stanley.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's enterprise solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, Walmart's Senior VP of Transportation, Fernando Cortez, says the retailer has endured years of volatility. He spoke with Bloomberg's Ed Ludlow from the UP Summit in Bentonville, Arkansas, on Walmart's business challenges.
The last few years have been challenging in terms of just the volatility that we've seen around whether it's labor or whether it's capacity or just availability of goods. So we've had multiple challenges, but we have a very strong backbone, good partners, good vendors, and an impressive kind of group of associates that are always willing to kind of go and adapt and give the best that we can for our customers. So I would tell you that it's been challenging times, but we've been giving it a good fight, and we're excited about the future.
When you look around Crystal Bridges, the hangar over at Bentonville Municipal Airport, what were the technologies that kind of caught your eye? You know, is there anything that you saw and thought, I can integrate this into my fleet, I can use this?
Oh, there's so many, right? I mean, I'm an engineer by training, so I always kind of love electronics and kind of put them apart and separate them and kind of understand how they build. So yes, I mean, it was just like a kid in a candy store, so a lot of applications. I think you will continue to hear more on how we're thinking about them, but really exciting times here.
You also know supply chains. I think one thing that I was really interested in, I spoke to Stuart Walton about, is that short haul routes, you know, jumping just a few miles, traditionally done by truck or done by van. Now you have options like drone. You know, do you see the proportion of trucks in your fleet coming down and other technologies going up as the years go by?
Well, one of the things that we've had in the last couple of years with e-commerce growing and consumer preference changing on how they want to interact, whether it's a delivery or a pickup or just shopping at our stores, have given us the opportunity to kind of build this last mile solution from scratch. So that's, I think, where you will see more of these new technologies doing different things, whether it's electric, drones, zip line, kind of parachutes, all of these things that we're testing, and they're very, very exciting.
That was Walmart's Fernando Cortez with Bloomberg's Ed Ludlow. Now for what else we're watching today. And what I'm watching is kind of related to the idea of transport and logistics, because we have an interview with Emily Chang and Amazon CEO
We're right next to each other.
Jassy. I am sitting next to Matt.
It always disturbs me. I know, I understand why, but when we're in boxes and we're right next to each other, obviously I'm listening. Anyway, I'm sorry to the director.
And Anna is here in spirit, obviously. But Anna, I think I'm really looking forward to this conversation with Andy Jassy, just because of these kind of same issues, the idea of how expensive that transport and freight have gotten, and the labor issues as well. Plus, that's not the only conversation that will be happening at this tech summit. There will also be an interview around 12 p.m. Eastern time with Dara Khosrowshahi, who's the CEO of Uber. Then later on this evening, we'll be talking with the CEO of Expedia, Peter Kern. We got the CEOs of MasterCard in there as well. So it'll be really exciting to watch all of those interviews. And there's another interview on one of Matt's shows later that I'm also are looking forward to.
Yeah, well, so you just saw Ed there at the UP conference in Bentonville, Arkansas, and I think this is a really cool idea. Stuart Walton yesterday was saying, look, there's over $1 trillion of capital there that could be funneled into startups and make Bentonville, Arkansas, you know, the hub for mobility startups. One of the people who's been the biggest bettor on mobility startups is Cathie Wood. We've been talking about her hedge funds today because they've been bleeding assets. I mean, down 48% year to date, the biggest ETF issuer asset loser this year, but still a huge figure. And so Ed's going to sit down and talk to her out of Bentonville this afternoon, and we're going to play that on the ETF show. So join us at 1 p.m. and hear from Cathie Wood.
That'll be great. And I'm very sorry I interrupted your dynamic. I was like, look, I'm doing it again. But I'm glad you rediscovered your physical connection. Matt, I'm talking about rates. And this is inspired by you, actually, because you asked yesterday, one of our guests, is 50 the new 25 when it comes to rate hikes? And I thought that was really interesting. And last night we heard from the RBI. They increased rates by a surprisingly high amount. And today we're going to hear from Poland. Interest rate hikes interest rates set to go up by 75 basis points. This will be the 9th straight month we're seeing this from Poland. So a lot to talk about there. But this is a broader picture. Now, more than 50 monetary policy authorities around the world have increased rates by 50 basis points in one go so far this year, which I think is a really interesting statistic and tells us a lot about where we are in the rate hiking cycle. That is it for Early Edition. Surveillance is ahead. Lots more to come. This is Bloomberg.
Introducing Flippy, the world's first AI kitchen assistant. Let the robots do the robotic work, so people can do the people work.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Scribd is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Scribd is ebooks, audiobooks.
Magazines, podcasts, Scribd, it's awesome.
This couch.
I'm just saddled with so much credit card debt right now.
You need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
this may be the first quarter that we start to see a noticeable hit to profit margins.
Margin is at risk of further compression, and earnings expectation for this year is perhaps too rosy.
What we have here is the consumers reposition very quickly.
Lower income households are going to have a harder time, and we are going to see some pulling back.
What these companies are doing is acknowledging that there is weakness ahead.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Just one more downgrade to global growth from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 1/3% on the S&P. TK, the OECD joining the World Bank to try and look ahead to the next year or two.
Every 0.1% makes a difference, John. John, it's like Dow 10,000 is how I'd put it. Global growth of 3% is Dow 10,000. 2.9% feels way different from 3%. WTO and World Bank sub 3%. OECD comes in at a solid 3.
That's how you lose me, Tom, and lose me early on in the show. But I'll move past it because we're friends.
First
Dolly
30
Yen, Tom.
seconds.
It didn't take him long, did it? It didn't take him long, Bramo. Let's get it back on the rails, on the tracks. TK, 133 pushing 134. Dolly Yen.
The calculus of June is worth noting. Things are not unraveling, John. I don't want to be inflammatory, but the market, when you look at the Bloomberg, is absolutely fascinating. As Vincent Reinhardt with us yesterday would say, level doesn't matter. It's the rate of change, the first derivative, and the rate of change of the rate of change, the second derivative, and they are in play now. German 10-year. In Japan, we could spend the whole show on Japan. It's so important.
Well, let's start there. Let's question that word. Market. Lisa, the Japanese government bond market, the 10-year, did not trade once in yesterday's session. Literally not once. Today, yields higher in the US, higher in Germany. What are they doing in Japan? Nothing at all. Because the BOJ is sitting there capping yields. They're increasingly isolated. We've talked about that shock absorber. It's in the FX market, and everybody else is pushing against it.
So Tom just has to mention the Dow. You have to mention the JGB market being a market, and that's going to tweak me because, frankly, it is not a market. There is nothing markety about this. It is completely controlled by the Bank of Japan. At least they're trying to. And as you said, the pressure reliever really is coming from the currency pairs that we're seeing have a dramatic ramification here. At what point does Japan care? Japan's still trying to frame this as a good thing, that their exports are going to be more plentiful, are going to be more available to the world, that possibly they could get tourism. Really? Are we really buying that this could actually give a support to their economy, or is this being viewed as a massive headwind? And that is the tension they're going to have to address heading into year-end.
What will they tolerate? Governor Kuroda has got a two-handle on inflation in Japan at a national level. What are we looking at in Europe, in the US? 8 handles, and maybe 7, 6 through the rest of this year?
Yeah, and frankly, we're talking about Europe. The GDP estimates came out this morning higher than people had previously expected for this year. And this actually gives the ECB more leeway to raise rates, people are speculating, because growth is hanging in there a bit more than people had previously expected in the face of inflation. All of this pointing to rate hikes in all the developed markets, the likes we have not seen for decades, and Japan moving in the opposite direction.
I have to admit, growth estimates from the World Bank, the OECD, the IMF, they don't get me excited, Tom. Usually they are about 3, 4, 5, 6 months late. Yeah. We'll say this, though, about Europe when it comes to the OECD. They're looking at 1.6% growth next year. They're looking at 4.6% inflation. That is not the scenario, the base case of this ECB as they meet this Thursday.
John, two quick observations. One is the 2023 guesstimates. In many cases, there's a guess, and then there's a lower guess for the year following. I need to go back to Japan, John. I think it's so important. And the massive distinction of Japan is this is not your father's Japanese analysis. We've got Morgan Stanley coming up here. They have the giant Robbie Feldman in Tokyo, and he would point out that this is a Japan that is now a heavy importer of goods and raw materials. That was not the case when they were moving Toyotas out the door.
Let's get to it, Tom. Futures down about 0.4% on the S&P 500. On the NASDAQ 100, we're lower by about 1/3 of 1%. Yields climbing by 2 or 3 basis points on a 10-year. Getting comfortable in at around 3% over the last couple of days. And looking at crude, Lisa, 121, and look out, $5 a gallon. The average gas price in the United States, we're getting closer and closer to that 5 handle.
And how much is that going to be the key election issue as we head into the midterms? Today, President Biden is heading to Los Angeles for the 9th Summit of the Americas. The key issue here is that Cuba, Venezuela, and Nicaragua, all were not invited, creating some issues with Mexico's leadership. Interesting to see how people can talk about nearshoring a lot of manufacturing at a time when there is this concern about supply chain disruptions. Today, as Kaylee was talking about earlier, Bloomberg's Tech Summit is taking place in San Francisco. Interesting to see what we can hear from the CEOs of Uber, Expedia, as well as MasterCard, looking to how we can gauge the slowdown in the consumer appetite, as well as some of the shifts in technology right now. And today, Russian Foreign Minister Sergei Lavrov is heading over to Turkey to talk about unblocking the Black Sea for grain shipments out of Ukraine. How much is this real talks, right? I mean, we've heard real skepticism from Kyiv about how much could actually get achieved here. But this is key in terms of the world's food supply, John, so a lot of people are watching this.
Bramo, thank you. I want to turn now to Brian Weinstein, the head of global fixed income over at Morgan Stanley Investment Management. Brian, you said this: the Fed may keep hiking in clips of 50 basis points until something breaks. Can we talk about that something breaking and maybe have a little look at what's happening in Japan over the last few months?
Sure. Yeah, you mentioned it earlier. Well, first of all, I mean, the Fed has to keep hiking 50 basis points until there's some semblance of a demand slowdown, because that's all they've got, right? They can't help the supply side. And so the Fed is on a mission here. And then you said before about markets. I mean, we've seen a couple of these markets really teeter. Japan not trading is probably an extreme example, but you saw the high yield market gap 50 or 100 basis points higher and then 50 basis points tighter. There is just a lot of uncertainty out there. It's been a long time since the Fed couldn't bail us out, and it's going to keep going until there's an accident somewhere.
Brian, James Gorman doesn't want you to talk about second derivative dynamics out there, but let's go first derivative right now. Where is the rate of change right now that interests you most?
You know, I think we're getting back to looking at interest rates again. I think the credit market's adjusted. 10-year notes, I think, have an uneasy truce at this 3% round number. But I think it's pretty clear that we're not going to rally a lot. In other words, we're not going to wake up with a 2.25 10-year notes. It's not the direction of travel. So I think the question is, are we going to have this market move to an uncomfortable level, or a level where investors will choose income over capital appreciation? Will they buy fixed income over equities? We had a few moments of it at 320, and I think we're going to test higher levels again.
We're going to test higher levels again. Why? Which investors are stepping back? Which investors are not coming back to treasury yields for income?
Well, I think there's two things. One is that the Fed, I think, played this game a bit with the pause. I think that was maybe just to calm markets temporarily. I don't think we can predict a pause given what we're seeing in labor markets, given what we're seeing in relatively strong growth, and given what we're seeing in inflation. So I guess the first thing, Lisa, is that we just don't see investors flocking to fixed income, and there's still a lot more coming, and obviously QT is part of that. So I think that's the first thing. The second part, I think, is really just unease with inflation and growth. I don't think are going to see the turnaround as quickly as people want to in order to flock to safety. So I just don't think a 3% 10-year note with 8% inflation is enough to change the dynamic of this market.
Brian, you talk about an accident. Can we talk about the anatomy of a market accident, what it looks like in this new world? Is it credit-based, given the fact that you've got the likes of Deutsche Bank saying that they are going to see some sort of increase in defaults in the next couple of years, or is it somewhere else?
You know, listen, I think in credit we understand that the default rate will go up, right? I think it's somewhere, as maybe John was hinting at, that it's liquidity based, right? That people expect infinite liquidity at a price. But what you're seeing is less stuff trading, right? Again, Japan trading 0 10-year notes is a bit of an anomaly. But in the gappy moves we've seen in credit, for example, I don't think you've had a significant amount trading. So I think all it needs to be is we wake up one day and the JGB is not at 25, it's at 35, and that could unhinge the rate market, which could cause liquidity, people just to pull back and then things to have gappy price action. So I don't think we're talking about some esoteric crisis. It just could simply be that price discovery moves very, very quickly and surprises people on the wrong side.
I know a lot of people in fixed income who are dying for the return of price discovery in certain markets. Nudge, nudge, hint, hint, the JGB market for one. Brian, thank you. Brian Weinstein there at Morgan Stanley Investment Management. Thank you, sir. Lisa, looking for pockets of leverage. Where's the leverage? I hear that a lot. Where's the leverage? Household balance sheets are pretty strong. Corporate balance sheets, we're told repeatedly, are pretty strong. The fundamentals are decent. Can we talk about a firm? A firm,
yes,
and some of these loans that they've made not going as well as some people might have hoped for. They have got 12.7 million customers. They extended around $3.9 billion of loans in the first 3 months of 2022. The stock is down over 80% this year. The team here at Bloomberg pointing out that some of these loan packages, the value of them is going in the wrong direction.
So this is the classic buy now, pay later, and people aren't paying later after they've bought. And that seems to be the warning coming from the securitizations, right? These loans to consumers that have been packaged and then sold as bonds to investors. People who are analyzing the credit quality of those securitizations are seeing a deterioration, which is leading to some concerns about the consumer balance sheet. When do they start pushing back? When do basically the base costs of everything that they're buying start to impact how much they're willing to spend?
That's one to watch. I'm going to catch up with Judy Beale a little bit later this morning, who is also on board with this story, that this could become a problem for some of these names in a much bigger way. Here's a problem for Credit Suisse, Tom. The 6th profit warning in 7 quarters.
You're going to go there, are you?
We've got to go there. The 6th profit warning in 7 quarters. The team here at Bloomberg reporting, Tom, job cuts could be coming. Tom, what a change in the last 12 months.
John,
to have all these banks loading up on talent, fighting for talent, and now reports of more job cuts to come at a company that's really struggling to provide a guide for the path forward.
John, paragraph 42 of my agreement with Bloomberg says I only talk about Credit Suisse at Brasserie Lip in Zurich. I mean, over, you know, a $42 omelet.
And a strong drink.
Yeah, that would be true. They need a strong drink. This has been a train wreck for 30 years. I don't want to go into it, other than Mr. Gottstein has a lot of courage to make tough decisions. John, this is a key phrase. Culturally, they don't want to make them. This is about culture and nationhood, not finance.
When does the patience, Lisa, of David Harrow and others run out with this name?
Yeah, that was my first question. My next question is I want to read Tom's contract about when he'll talk about certain things, what he has to be eating, and where he has to be while he's discussing.
Forget the food. This is not about the blue M&Ms. This is all about a drink. Always is.
I liked how Brian at Morgan Stanley, he mentioned 3 as a round handle. I mean, that's like Dow 10,000.
You're going to keep bringing that up?
Yeah.
Okay. Do you want to quote it now?
No, I want to look seriously.
I'm pleased you're serious.
John, as Lisa mentioned, the credit report, the credit card report from the Fed yesterday was stunning.
Let's pick up on that in a minute. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. More problems for Credit Suisse. The Swiss lender has issued its 6th profit warning in 7 quarters. It expects a loss at the group-wide level and investment bank in the 2nd quarter. Bloomberg has learned that Credit Suisse is considering a round of job cuts, part of a renewed push to cut costs. Here in the UK, Bloomberg understands that Boris Johnson will go ahead with legislation to override parts of the Brexit deal. That risks inflaming tensions with members of his very own Conservative Party and the European Union. The Prime Minister's government has been pushing to rewrite the Northern Ireland Protocol that keeps the region in the EU single market while creating a customs border with the rest of the UK. Former German Chancellor Angela Merkel warns that isolating Russia is not possible long-term. In her return to the public arena, Merkel said in an interview that Vladimir Putin made a big mistake by invading Ukraine, but she said there is a danger of Putin forming an alliance with China if he does get boxed in. In San Francisco, residents have voted to recall progressive district attorney Chesa Boudin. Boudin tried to reform the criminal justice system, but critics accused him of being too soft on crime. About 60% of those voting favored ousting him. He will be replaced by an interim district attorney chosen by the mayor of London Breed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. This
thing. It's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
I've heard of Carvana and that we sell cars online. We believe buying a car should be something that gets you hyped up and that your new car ought to come with newfound happiness and zero surprises. And all of us will stop at nothing to drive you happy.
We'll drive you happy at Carvana.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for limited time.
You'll always remember buying your first car and buying your starter home, or whatever this is. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. We believe that your investments should work harder for the future you imagine. And that's where our strategic investing approach can help. T. Rowe Price. Invest with confidence.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
If you wake up thinking about the markets and want to make the right moves fast, get Decision Tech for insights on when to buy and sell and proactive alerts on market events. That's Decision Tech, only from Fidelity.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at Tovala.com.
Never be afraid of your strength, because your body is capable of amazing things. Own your strength and see how far it takes you. Tonal, be your strongest.
Enjoy the magic of freshness from Nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
What if value and values could coexist? They can. ESG investments are changing the world, powering the shift to a fairer, more sustainable global economy. Bloomberg helps investors and businesses navigate the changing landscape and adapt to evolving regulation. With data you can trust and insight you can act on to unlock ESG opportunities.
In honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Bringing inflation down should be our #1 priority, and President Biden, in an op-ed on inflation in recent remarks, has indicated that it is our top priority.
Janet Yellen, the Secretary of the Treasury, in the crosshairs, under the spotlight, through all of this over the last couple of weeks in a much bigger way. From New York City this morning. Good morning to you all. Tom Keene, Lisa Bramett and Jonathan Ferro. Futures -20. We're down 0.5% on the S&P. Yields higher by 3 basis points. Back through 3 on a 10-year, 3.0030%. On a WTI call right now, Tom. WTI up by 1.24%, 120.88. And I'm just looking at the average gas price, Tom, just inching away, closer and closer to $5.
Well, it's Jump Condition Wednesday here. We've got yen moving out near 134 level, weaker yen. Brent crude 122 moments ago. John, I do want to note we finally had a breakout of a trend here on Turkish lira that's, I get it, John, it's idiosyncratic, but I'm sorry, you've got to watch it, particularly with the geopolitics of the Black Sea. We're going to do more data checks today, folks. I mean, there's some really interesting nuances going on. Right now, we're going to do a little bit of politics because the politics folds into the economy, because we've been told for years that the elections of America are about the economy. It's the economy, stupid. Maybe not. Emily Wilkins joins us with a brief on the first Tuesday of June, or second Tuesday of June, the elections last night. Emily, I'm going to cut to the chase. Defund the police didn't work out. What is next for the progressives and liberals of this nation who, as a generalization, were crushed last night?
Well, they have to figure out a new way and a new message of moving forward, because between the Los Angeles mayoral race and the San Francisco attorney general, the message was very clear last night. Voters are responding to the high levels of crime that we're seeing in a lot of cities, and they're rejecting some of those progressive policies put out there that are saying go tougher on police and easier on criminals. And you saw President Biden really latch on to this after Eric Adams won the New York mayoral race, saying that, you know, he did not support defunding the police. He wanted to support the police. He wanted to have their back. And it's Democrats really trying to figure out measures where they can both hold the police accountable while not necessarily defunding them. Being able to say, hey, we are giving police departments more money. We are giving officers more support, but we're also setting limits on things like, say, no-knock warrants.
Bring it back to your Washington. The senators from West Virginia and Arizona, they're not progressive. They're not liberal. Where's the new definition of the middle ground for the Democratic Party, given what we see? Is the middle ground Speaker Pelosi?
I mean, I think I would even say it's probably a little bit more to the right of Speaker Pelosi. I mean, she likes to pride herself in being a progressive, but obviously as leader, she tries to stay on message as much as possible. And she's aware right now of what the mood in the country is. She's aware of that President Biden's approval ratings are quite low, that Republicans have a huge leg up in this midterms if you look at the polling that's being done right now. And there's an awareness that voters, their appetite right now is not really for more progressive candidates. At the same point, in some of these primaries, because of the voters who come out and vote, tend to be more towards the left and the right of their respective parties on the whole, you are seeing some progressive candidates go ahead and win over more moderate candidates across the country. I think, Tom, a lot of this is going to come down to what districts they run in. Even last night, we saw some Republicans who have bucked Trump on certain things slide to victory in states like New Jersey that tend to be a little more purple to blue. But in states like deep red Mississippi, we saw Republican members who took very similar votes, see very strong challengers in their primaries be forced into runoffs. And so it kind of seems to boil down to exactly where in the country you're running as far as what your policies need to be and how aligned for Republicans they need to be behind the former president.
Emily, I just hear Tom's voice in my head saying, it's the economy, stupid. It's the economy, stupid. It's $4.92 on average for a gallon of gasoline in the United States. And this is something that Talking Points cannot get around. What is the cohesive plan for Democrats to address this, as it seems like there is not a ceiling in sight?
I mean, you're absolutely right. I think for primaries, it's a unique dynamic, but when it comes to the general, it is absolutely going to be about that inflation, about those gas prices, about how much a gallon of gas is. And Democrats, they've really tried to get the focus off of inflation. I mean, you heard Secretary Janet Yellen say yesterday, kind of pointing out that inflation is also happening in other developing countries throughout the world. You've heard Democrats really talk about trying to lower prices on various things. I think you're going to be hearing more of that as we potentially see progress being made on the legislation that passed about U.S. competitiveness with China. That's the bill that has the $52 billion for semiconductors in it. It's something that lawmakers from both sides of the Capitol, from both parties, are working on negotiating right now. And it's something that leaders have identified as potentially easing some supply chains, helping get some of those prices back down. I think you're going to be seeing a lot of focus on that. But to a certain extent, a lot of what's going on with inflation, you can't control it from Washington, D.C. You can't control it from the White House. And I think to a certain extent, Democrats know that they are in trouble come November.
You can try and control the message. And when it comes to messaging, Secretary Yellen has been the focal point for a lot of people over the last few weeks. Emily, is there a question mark on Secretary Yellen's future at the moment?
We haven't really been hearing too much of that here in Washington. I think there's just a number of other things to focus on at this point. Certainly, she wasn't the only one to incorrectly call that inflation transitory. I think there is a sense that, she was able to kind of stick to the messaging, stick to the talking points yesterday when she spoke with lawmakers on Capitol Hill. At this point, I think there's more pressing issues in D.C. rather than the future and the fate of Secretary Yellen. She had a lot of goodwill going into the role, a lot of expertise, a lot of support. And I think she has maintained that even as she has admitted that she was wrong about inflation.
Emily Wilkins, thank you, of Bloomberg Government down in D.C. I promised us a minute of some Bramo coverage on consumer credit in America. Lisa, it is going higher, and it's going higher.
So the Fed put out a report yesterday talking about how consumer credit has risen yet again in April after a record surge in the prior month. Why? This is my question, right? How much are we seeing consumers confident about their future versus not caring? They can get credit, they can lever up, and then prices don't matter. How much is this the scenario? Which side of the coin as we talk about the strength of the consumer? And frankly, on the other side, you do see banks wanting to extend credit because they need to make those loans. So they have an incentive. They're incentivized lenders at a time when consumers need to spend. It's not a clear picture to me.
Tom, what do you make of it?
I think that things have tightened up because of the core costs across the American deciles. The lower deciles are flat out doing better. There's no question about that. But the great middle class is looking at the monthly bills in a nominal space, John. They're looking at nominal mortgage, nominal rent, nominal gas, nominal auto, all that kind of thing. And it's killing them, and they've hit the charge cards to boot.
Lower and middle income groups getting squeezed and getting squeezed a bit more by gas prices pushing $5 a gallon. Got some Brits listening in thinking $5 a gallon, come on. It's nothing, except it is. It's something. It's a whole lot if you budget for something and then it increases by a huge amount. Futures down by 19 points on the S&P. We're down by about 0.5% from New York City. This is Bloomberg.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
The world sometimes feels like making a profit comes before the environment, that profitability and social progress aren't compatible. But what if another world were possible? A world where investments could drive companies to change. This is why Amundi offers investments that allow you to help build a different world. And you, in what world do you want to invest your money and your future? Amundi, confidence must be earned.
What if you were a global energy company with operations in Scotland, technologists in India, and customers all on different systems? You need to pull it together. So you call in IBM and Red Hat to create an open hybrid cloud platform. Now data is available anywhere securely. And your digital transformation is helping find new ways to unlock energy around the world. Let's create a hybrid cloud that can change an industry. IBM, let's create.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Selling a home is expensive and stressful. So we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
This is Sandra. She gets her financial advice from her mother. This is Tony, who gets his financial advice from his old college roommate. And this is where Frank used to sit. He got smart about retirement at smartasset.com. They matched him with vetted fiduciary financial advisors to help turn his retirement priorities into a retirement reality. Everybody sure misses Frank.
Can someone get that?
Smartasset.com. Take our free quiz and be matched with up to 3 vetted financial advisors. Get smart about retirement.
From New York City this morning. Good morning to you all on TV and radio. Here's the price action. We're negative 0.5% on the S&P, on the NASDAQ 100, down 0.4%. A whole host of cuts to the global growth outlook. Yesterday, the World Bank at 2.9%. The OECD just about holding on to a 3 handle, 3% for global growth over the next year or so. We'll talk about that with the OECD in just a moment. That's the equity picture. Bond market story looks like this. 2s, 10s and 30s in America. Yields lower yesterday. Big question about whether there is a disinflationary element to the target story yesterday. Maybe we can touch on that a little bit later. Yields higher again this morning, though, up by 3 basis points, back through 3% to 3.0067%. Won't spend too much time on this. I want to turn to foreign exchange and get you set up for the ECB. The ECB 2-day meeting starts a little bit later. We'll hear from them tomorrow. Expected to lay the groundwork for a hike in the following meeting, and maybe even the one after that, the one after that, and the one after that. Euro dollar just a little bit stronger here at 107.09. That's where you get some strength in the FX market against the dollar today, because elsewhere there's some real dollar strength, particularly against the Japanese yen. Dollar yen 133.93, staring down 134, and levels we haven't seen since the end of February 2002. That currency pair, Tom, positive 1 full percentage point as the rest of the world, much of the rest of the world, starts to think about hiking interest rates, following the Fed, doing what EM's been doing for a whole lot longer. Tom, as they do that, the BOJ is looking increasingly isolated.
I would say, John, the summation of our guess is a 135 level is a round inconvenience statistic where maybe things start unraveling for Mr. Kuroda and the Japanese financial system, maybe just picking one point as suspect off dollar yen, but the rate of change here is enough to get Laurent Spoon going.
What do you think they do, Tom, in response to that? Do they let go of the cap on a 10-year JGB? What do you think they do in response to that 135?
I will defer to the late and fabulous Martin Feldstein, who was dismayed, John, at the cultural slow-motion exercise when they cleared the banking system. Why would this be any different? They got to clear out the zombies. They got to be efficient. But I'm going to say this till I'm blue in the face. This is not your father's yen story. They have a trade deficit. They're getting crushed by import dynamics.
And as Lisa has said a couple of times, Tom, I don't think we can even call some of this a market. Dollar yen right now, Tom, 133.93.
This could be a 1-hour conversation. It is so good, and she is so qualified. She's chief economist at OECD. Laurent Spoon joins us now on a trip around the world. And Laurent, I'm going to be selfish and go to the growth recession you call for in the United States, where you've got an ugly statistic, and then the next year it gets uglier for the United States. Well, take that out to a global economy and the benchmark you and I studied in school of 3% global growth as being lousy. Is our global economy heading or in a growth recession?
Well, hi, Tom, and thanks for inviting me. The global economy is paying a very hefty price for the war that Russia is leading into Ukraine. And yes, this is pushing down growth quite a lot to 3%, as you say, which is just about one of the low rates we have seen, and it's pushing inflation even higher. We're getting close to 9% or a little more than 6% if we're excluding Turkey in the OECD economies.
Do you ascribe to the idea that the only way to break Lawrence Summers stagflation, the only way to break this, given the war and given the rest, is tight monetary policy? Is that the only way you get this done?
So I think we have a little more messages than this in there. As far as monetary policy is concerned, we have, still healthy growth, employment, and high inflation. So what we're saying is remove some monetary policy accommodation. Monetary policy, as you very well know, cannot address supply shock, but they can signal that they will target this, by telegraphing what they're doing. And in those countries where there is obvious excess demand, then yes, monetary policy should be tighter.
Laurence, what's the main swing factor that led to the downgrade and that could potentially lead to more downgrades ahead?
So the main swing factor is really Russia's aggression into Ukraine. As you know, we were already having inflation going up because of the pandemic and the issue with China's supply chain and zero COVID policy. So that was already affecting us. Now, the disruptions and the cut to the production of cereals, of energy coming out of the war is obviously raising inflation. And this higher inflation is undermining consumer confidence and therefore consumption. One of the things we say, if you allow me just a 30-second sentence on this, is it has the burden of inflation, the cost of the war, should be fairly shared between employers and employees, wages and profits, so as to avoid a wage price spiral.
So this is one of the reasons why perhaps you accuse the United Kingdom of having taxes that were too high and saying that they had to cut them in order to give people more buying power. How much does there have to be, in some ways, fiscal expansion, despite the idea that people are pointing to some of the fiscal expenditures as being the cause of inflation?
Well, there are several reasons why the UK has lower growth than other G7 economies next year. One is the higher inflation. The other is tighter and faster monetary policy tightening, and also faster fiscal consolidation. So what we're recommending to the UK is actually to consider the pace at which fiscal consolidation is taking place if growth was too slow, as fast as what we're describing.
Laurence, the OEEC is part of the alphabet soup of the OECD, are the people that actually prosecuted the Marshall Plan. How do you respond when we hear so many people in a flippant way say what we need is a new Marshall Plan on Ukraine and the rest as well? How does OECD and you actually feel we will affect a modern Marshall Plan?
So I think there are two things. One is what's happening in Ukraine, where, as we can see, everything is being destroyed, all the infrastructure, and so a large part of the infrastructure and the capacity, the productive capacity of the economy, and this will need to be rebuilt. The Marshall Plan goes hand in hand, as you very well know, Tom, money on the one side, but also reform, structural policy reform on the other hand, to ensure that the money is very well channeled. So that's one thing. The other thing I think people have in mind more immediately at the moment, and that we have in mind at least, is globally to avoid a food crisis. And for this, we're just saying a couple of things. One is ensure the transport and logistics of the cereals around the world so that it reaches Middle East and Africa, where it's most needed, where it could cause not only starvation, but also social and political unrest. And for this, we might need more foreign aid, which in a sense is also part of what we call Marshall Plans.
Laurence, you've got a whole host of policy prescriptions, and I just wanted to finish on the UK because you do offer some advice to the British government. Out of the developed economies at the moment, that's the one that seems to be really fighting with low growth and much higher prices in a much more pronounced way than, say, the United States or Europe for that matter. Can you run us through your thoughts on what you think this government should do right now?
I can try. What's very what makes the UK different from other G7 economies? As I was saying, higher inflation, faster tightening of monetary policy, but also faster fiscal consolidation. And then the disruption to manufacturing supply chain, as we know, between China and some of the Brexit discussions. So there are two things, I think, which stand out. One is to carefully weigh what's happening with fiscal policy and make sure that not only the most vulnerable, but the working class, just above the most vulnerable, is actually being sheltered from the cost of war. And the rise in global oil prices is affecting everyone, as we know. And the second thing that we're saying is obviously trade has to resume faster in the UK.
Lawrence Boone, thank you. Thank you very much. From the OECD, looking for 3% global GDP. Over at the World Bank, looking for 2.9 and looking for 134 right now on dollar yen, 133.99, Tom. Getting very, very close to that level on my screen.
These are the rate of change we're seeing today, and it can be idiosyncratic like dollar lira. John, yen is not idiosyncratic. It folds in. I get the domestic focus, John, as you mentioned, with the fiction of their managing of yield as well. And at some point that's going to break. I don't want to presume to know which level, but I think it's much more geopolitics. Is an import nation, what it means to Australia up through the Pacific Rim, what it means for China obviously is front and center.
Elisa, they're getting squeezed.
Yeah, and this is definitely the issue. You know, Paul Krugman put out a tweet that the media seems to be reaching peak inflation hysteria at the very moment. Early indications suggesting that inflation are not necessarily exponentially increasing. That said, it is this squeeze that really we're talking about, right? And I think that that is what we're focused on. How is this going to affect what we're going to see ahead of time? This just distracted me because I saw this and I was thinking to myself, what does that mean? Well, peak inflation hysteria.
Do you know, my frustration with this, there are some great minds in economics, but when they become political hacks, what's the value in some of that coverage anymore? Did he forecast where inflation would be? Didn't he call it hysteria last year, essentially? Come on.
But this goes to your point about what hyperinflation is, right? And I don't think that it's fair to say anytime we're talking about inflation and the pickup, we're talking about hyperinflation, which you very well stated. That is not what we're talking about. It's not the runaway or unmoored kind of inflation. It's an inflation that squeezes particularly the lower class and that frankly changes the view for an economy that has become accustomed to a very low interest rate.
What a surprise. The front pages of the newspapers upset someone because it goes against their politics. I mean, ask anyone in America right now how they're doing in the low-income groups and ask them if it's hysteria. It's just a ridiculous statement to make. Equity futures down 0.4%, dollar yen pushing 134, 133.99. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. The OECD says the world will pay a hefty price for the war in Ukraine. The organization slashed its outlook for global growth this year from 4.5% to 3%, and it doubled its inflation forecast to nearly 9% for its 38 member countries. Now, Credit Suisse is considering a round of job cuts after warning of a second quarter loss. Bloomberg has learned the cuts would be spread across divisions, including investment banking and wealth management. It was Credit Suisse's sixth profit warning in the last 7 quarters. In LA, a billionaire developer will take on a veteran politician in the race for mayor. Rick Caruso will face Congresswoman Karen Bass in November. Caruso won 41% of the votes in yesterday's primary, while Bass won 38%. Both are Democrats, although Caruso is a former Republican who did not switch parties until January. Crispin Odey has recouped years of losses at his hedge fund. Last year, the Odey European hedge fund made 14%, boosting returns for the year to 110%. Combined with the 54% increase last year, the fund is now above the level set in 2015. That marks a full recovery and allows it to change incentive fees. Odey's bearish bets during a protracted bull market of stocks led to a 68% plunge. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
I bought our car from Carvana.
Yeah, Ma.
It was so easy. I found the perfect car. Under budget, too. And I get 7 days to love it or my money back. I love it.
We'll drive you happy at Carvana.
Introducing Flippy, the world's first AI kitchen assistant. Let the robots do the robotic work, so people can do the people work.
You'll always remember buying your first car and buying your starter home, or whatever this is. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. We believe that your investments should work harder for the future you imagine. And that's where our strategic investing approach can help. T. Rowe Price. Invest with confidence.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Sure, you'll teach her to drive a car. Then use Greenlight and teach her to save up for her own car. Mowing lawns and getting paid. Navigate the world of earning, saving, and investing together. Invest in your best investment. Greenlight.
When you use Constant Contact, prepare accordingly. Let's win this with email marketing and more to drive your business forward. Try it free at ConstantContact.com.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable, and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for limited time.
Do you know how much your broker charges on margin loans? On a $100,000 margin loan, Interactive Brokers charges just 2.33%. Fidelity and Schwab charge over 3 times as much. E-Trade or TD Ameritrade or even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at Tovala.com.
What the Fed has to worry about is the fact that the domestically generated inflation is so high, and that's coming from a tight labour market. Now, from that perspective, what they need to do is slow the economy, and they need to gently raise unemployment. But we all know what a double-edged sword that is.
David Page there of AXA Investment Managers from New York City this morning. Good morning to you. Futures down 0.4% on the S&P, on the NASDAQ 100 down by 1/3%. Yield just a little bit higher, up 4 basis points to 3.01%. Look out 135 on a German 10-year bond.
Yeah.
We'll talk about that in the next hour. In the FX market, euro dollar 107.28 and dollar yen pushing 134, Tom. I know that's got you excited through this morning.
It does. 2 housekeeping notes here. First of all, on David Page being on yesterday talking to Farrell off mic, folks, about English football. David Blanchflower of Dartmouth is scheduled to be with us today on Cardiff and Gareth.
And the labour market, Tom, and the Fed.
Oh, yeah, that as well.
That's going
we'll
to be
do
maybe,
that as well.
Maybe up top. 134 handle right now on Dolly Yen. Can I squeeze this in just quickly, Tom?
Please.
Just want to get to Credit Suisse. Forgive the snark. Just allow me just a couple of minutes of it. Just a couple of minutes. Yesterday, we put out a story on the Bloomberg with an interview with a guy called David Miller. He's the global head of investment banking and capital markets over at Credit Suisse. And this was his quote. I've been using the entire 5 months, the first 5 months of this year, running around seeing clients and telling them we're back. 24 hours later, Tom, the headline from Credit Suisse, it's another cut to the profit outlook for this name.
It has been a process,
Third straight quarterly loss.
For those that don't keep up with this soap opera, this is not a 5-year deal. This is a 10, 15, 20-year cultural phenomenon. John, I want to go to what you and Lisa were arguing about with Professor Krugman, and this is inflation, and this folds into Terrence Haynes, founder of Pangea Policy, who gets it. What you do, folks, is you set up a moving average wrapped around the culture of whatever the series is. Here's the math, Terry Haynes. The moving average of a gallon of gas is the monthly bill people face. You bring this down to the rent, to the gallon of gas, to paying the bills on whatever the day of the month is. Brent crude 30-day moving average, $113. It was $110 peak in April. We've breached through to a new monthly high on the cost of oil. Terry Haynes, how does that play for Republicans moving to November?
Well, politically, it's very good news for Republicans, and it's very bad news for Democrats. I think that's obvious. And off that, what you have is Secretary Yellen saying yesterday that that really Congress could do a lot, kind of passing the buck there, very similar to the way that President Biden passed the buck to Fed Chair Powell last week. So, what you've got is you've got an administration that wants everybody else to do the work, is not stepping up to provide a kind of a suite of solutions to really hit it, and and so the politics, as you ask me, is not going to move any off of that.
Okay, but you're reading my mind, Terry Haynes. My question is, where's the energy czar for the Biden administration? We're all very czar-like whenever we are in these crises. Where's the energy czar?
The energy czar, I think, is going home at Friday at 5 and coming back Monday morning at 9. Frankly, I have one simple test for whether there's a crisis in Washington, and it's if people stay the weekend to work. And I've been through a few where we worked for 40 days straight, like USA Patriot and all the rest. But when you have a situation where everybody from the president on down is essentially checking out for the weekend, what you have is Washington telling you that things are going to operate as normal and are not going to operate on a crisis level.
Terry, this is really important. Are you basically saying that Jennifer Granholm isn't taking this seriously enough, and that this administration is basically being caught staring into the headlights and not really prepared to understand the scope of what these gas prices and what this inflationary outlook really means?
I'm sure Secretary Granholm is taking this seriously. I'm sure that many in the administration understand very well what the issues are, what the economic stakes are, what the political stakes are. All I'm suggesting is that it's easy to tell whether people are concerned about a problem versus whether they're interested in solving it. And right now I see a Washington generally that is not interested in solving any of this stuff.
Washington being the Democrats and Republicans, just the Democrats. Do the Republicans have a plan?
I don't see the Republicans as having a particular plan either. But, I look at things going back to, say, Theodore Roosevelt's bully pulpit. I don't see an ability or a desire, frankly, from anybody. And the president's a Democrat. Democrats are nominally in charge, so a little bit more of this falls on them. To really drive it. and either try to solve problems in a bipartisan way, really reaching across the aisle, really being aggressive, energetic, all the rest, or on the other hand, politically, frankly, the Democrats trying to put the Republicans on the back foot. I don't see either of that happen.
Terry, we've heard from several reports that the president is frustrated with the strategy in the White House, the approach, the messaging, what they've allowed him to do, what they've stopped him from doing. Terry, why haven't we heard more about changes, personnel changes?
It's interesting, isn't it? I'll tell you my own view on this, which is a little bit of observation, a little bit of understanding, and a little bit of a whole lot of experience, frankly. Is very simply that what you've got is, the president made his deal with the progressive wing of his party at the very beginning of this. It is now not going so well. The advisors that brought him to this juncture and that he let bring to this juncture, frankly, are people that are more interested in continuing their relationship with the progressive wing of the party than they are about getting the president to be, more centrist, reaching across the aisle. One thing I saw this week that was very interesting, and there were a lot of elections this week and whatnot, is you see the I'm on your air all the time talking about 4 factions, not 2 political parties in Washington. What you saw this weekend or seeing is kind of the strike back of the centrists, people that want common sense solutions, people that want problems to be solved, whether that are politicians that advanced in primaries yesterday.
Okay, Terry.
Frankly, somebody like Matthew McConaughey who was in here asking for common sense gun solutions.
But Terry, who is the Democrats' new mayor Daley of Chicago? Who's going to pick up the trash?
Wow. One of the biggest problems for the Democratic Party is that there's a very short bench, and there isn't an obvious solution to that. In Chicago 40 years ago, the ship righted pretty quickly after Jane Byrne went off the rails, and we went back to Richie Daley and the kind of more Daley-like model. That's gone off the rails again in Chicago. It's been righted to some extent in New York. It's clearly off the rails in San Francisco and Los Angeles.
Yeah.
But there aren't obvious solutions to that. But you've got a lot of centrists and a lot of insurgents trying to push back on
Terry,
all of that.
There's a lot of work to do.
So we'll see.
And so little time. I've got 5 seconds left. Terry Haynes, thank you, of Pangea Policy from New York City. This is Bloomberg.
Welcome to Lenovo Late Night IT, where insiders share stories straight from the trenches.
How much did the cyber criminals pay you to write that article?
I think we're actually witnessing the end of ownership.
AI by itself is actually fantastic, but doesn't really do the job.
Yeah, it'll be like a robot dance.
Like this?
This is Lenovo Late Night IT.
We believe there's an innovator in all of us. That's why we build technology that makes it possible for every business and every person to come to the table and do more incredible things.
Healthcare professionals agree that sleep impacts everything you do. Chic's Performance Sheets are engineered to keep you cool, dry, and comfortable. Chic's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chic's now.
Go to trycheeks.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trycheeks.com now.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner. And we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Discount.
I'm just saddled with so much credit card debt right now.
You need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
This may be the first quarter that we start to see a noticeable hit to profit margins.
Margin is at risk of further compression, and earnings expectation for this year is perhaps too rosy.
What we have here is the consumers reposition very quickly.
Lower income households are going to have a harder time, and we are going to see some pulling back.
What these companies are doing is acknowledging that there is weakness ahead.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down about 1/3%. TK, the week begins tomorrow.
The week begins tomorrow, and then into CPI Friday as well. And what you've got is dynamics setting it up. You've got a lot of movements, John, and the tea leaves across a Bloomberg terminal. Moments ago, yen weaker, a 134 print.
Dollar yen 134 and a BOJ, Tom, increasingly isolated. This cycle, this tightening cycle of this Fed is different to the last one. The ECB sat out the last one. It won't be sitting out this one. Can the BOJ do the same thing again?
And what I would say, John, is it's not in isolation. I don't have the work in front of me, but the convexity of German 10-year, I'm absolutely fascinated how the various blocks at ECB, as Lagarde speaks, what do they do with the acceleration of a higher German nominal yield?
German 10-year right now, just short of 135 at 133. Lisa, the growth outlook isn't getting better, it's getting worse. You heard from the World Bank yesterday, we heard from the OECD about 30 minutes ago.
Which is one reason why people think that perhaps the ECB will get a little bit of relief in terms of how much pressure they'll have to raise rates. However, there was that economic growth picture out of the Euro region and the economy there for the first quarter, and it was actually better than expected. So fuzzy data. How much are we looking at the Fed and the ECB hiking until something breaks, as Brian Weinstein was saying? And what does that look like?
What does it take to break something in the European economy, in the European debt market? Italy has got to be the one to watch. The Italian 10-year, the whole of the Italian bond market, can they take a whole rate hiking cycle from this ECB? Have you seen some of the numbers out there? Some of the estimates, Lisa, anywhere from 150 basis points, 200 basis points plus.
Are you surprised that we haven't seen something break more materially already in that market? Remember when people were saying that it was unlikely that we would ever see a move away from negative yielding debt simply because we have so much of it and it was the normalcy? We have shifted so dramatically and things haven't necessarily completely broken. How surprising is that? To me, it actually comes as a surprise. And how much further can they go probably depends also on how much economic momentum there is.
If you'd asked me 2 years ago, can the ECB hike interest rates in the next cycle? I would have said in the last one they didn't, and I imagine, Tom, they won't be able to this time either. this story's changed really quickly in the last couple of years.
There's a huge complexity going on. Of course, all of it centered around massive uncertainty on the war and, frankly, on food prices. And, you know, wheat, corn today elevated for the first time in ages. Wheat actually with a bid as well. But, John, what's so important here is not to be inflammatory about the observation of yen or what's going on with the German 10-year, and just to say these are instabilities, and, you know, to begin a theme as we go to Anastasia here after the brief, that to begin with, it's overcome by events July, John. I think that's a new theme for me.
Looking ahead to next month, Tom, let's whip through the price action. We're down about 0.4% on the S&P, on the NASDAQ 100, down 0.25%. Yield's just a bit higher, up 3 basis points, 3% on a US 10-year. Crude at 120. 120, Lisa, up 1% on the session, and Goldman says a lot more still to come.
And how much will that really bleed into the picture for inflation and consumer strength, particularly in the United States? The week does start tomorrow and into Friday with that CPI report. Today, President Biden is heading to Los Angeles for the ninth summit of the Americas. Cuba, Venezuela, Nicaragua, all not invited. The key issue for me is how much are we going to talk about nearshoring, bringing some of the manufacturing production in Asia closer to home for the United States in order to get ahead of some of the disruptions that we've been seeing throughout the pandemic and in this current period. Today, Bloomberg Tech Summit is taking place in San Francisco, virtually as well as in person. We've got the CEOs of Uber, Expedia, MasterCard. I know that Tom is watching this very closely. He wants to know what to do with his triple leveraged all cash fund and whether there still is some growth in profits for the tech sector. And today, Russian Foreign Minister Sergei Lavrov is heading to Turkey for talks on unblocking Ukraine's grain exports. This is key. In the Black Sea, where about 90% of all grain, 98% of all grain from Ukraine typically has been exported. It has been blocked by Russia. People have been accusing Russia of holding this area hostage and for the world's food supply. How much are they really going to come to the table to negotiate, given the fact that Vladimir Putin has come out basically and said that the U.S. has to remove sanctions before they're willing to unblock some of these passages?
Yeah, but guys, what's great about this, and not to be inflammatory, I mean, it's Inflammatory Wednesday, but if Lavrov shows up at 17 lira to the dollar, does he leave when it's 18 lira to the dollar?
It's a good question, John. I'm going to pitch this over to you.
You're going to punt it back to me.
I'm going to punt that back to you. You can handle that one.
Thank you, Bramo.
Anytime.
Did you see the comments from Chancellor Merkel on Russia?
No, please.
Worried about isolating Putin.
She's been
This
quiet.
is the theme that I keep hearing about out of the European capitals. We're hearing it from the former Chancellor, Angela Merkel.
And
we heard it from Macron over the weekend too, Tom. Just something to watch. Something to watch.
I think that as General Kimmett briefed us with General Hodges, they were dead on. There's an actual war going on, John. I've said this in phone calls and meetings. You get this conversation where it's almost like pretend war were removed.
I hear you, Tom.
It's not.
It's real.
It's like real folks. It's not
kind of fallen off the front page in a way.
Yeah, it's not like a Hollywood movie. It's like really, really bad. Why don't you get to our esteemed guest who's attuned to this?
Who's not going to talk about dollar lira. Anastasia Amoroso, the Chief Investment Strategist at iCapital, joins us now. Anastasia, let's start here. You're looking for a soft-ish landing. Let's talk about the ish. Any evidence of that developing at the moment as you look at the incoming data?
Yeah, John, good to see you. I think there's a few things that I look at that give me a hope that we may actually have a wider path to a soft landing here. The first one is you look at the growth numbers. I mean, even with the OECD downgrading growth today, it's still a positive number. And if you look at the U.S., we're expecting 2.6% this year, 2% next year. This has not fallen off the cliff. It is still hanging in there. So, yes, we're squarely in a slowdown part of this, but this doesn't yet have to be in a mini recession. You know, the second thing that I look at, and frankly, I've not been able to say that, yes, we have seen peak inflation and yes, this is it. But now I feel like there is more and more evidence building that maybe we are starting to see peak inflation. I mean, look at used car prices. They're starting to decline. Look at the businesses' intentions to continue raises prices. They just can't do it anymore. So more and more of them are saying we're going to pause. If you look at businesses' intentions to raise wages, they're pausing as well. So there's starting to be sort of a preponderance of evidence that maybe inflation is in fact easing, and this is commodities notwithstanding, but the other inflationary pressures seem to be easing. And then the third thing, John, that really gives me some confidence that maybe we can engineer a soft landing is the Fed is starting to sound a little bit more balanced. Yes, of course, they need to fight inflation, but maybe it doesn't have to only be by raising rates well into tightening territory. You know, maybe they can pause and let the high prices naturally bring down demand. So I think if they back away just in time, we might end up with a 94 scenario versus the 70s.
Anastasia, everyone wants to game out where we're heading right now. What does that mean for what you're actually buying? Because you have to come up with a thesis before we have all of the dots of what the Fed will or won't do and how the data is going to come in. How risk on are you right now?
Yeah, so it's all about the balance of risks. And I would say just a month or so ago, it seems like we have priced in a lot. We were already at that point, the equity markets were pricing in a 57% probability of recession. And now we've retraced some of that. Where I am today is I think we're trapped in a range. I always thought that 3,900 for this economic environment could sort of be the level of support. We seem to have bounced off that level. But at the same time, how much are you going to pay for $235 worth of earnings? 16.5 times is fair, maybe 17.5 times is fair, which is roughly where we are today, 4,100 on the S&P. But how much more do you push that? So I think, you know, Tom, we are trapped in a range for now, but still there's some investment opportunities to look at. You know that I've liked technology, but one of the calls I have now is actually on financials.
Okay, you have it on financials, but part of this is the overarching theme, and that goes back to expect the unexpected. And I'm talking about overcome by events July. There's a mix of dynamics on the screen which are clearly out of sorts. What's the thing you're looking at for July that could be the unexpected?
Well, I think the big, I don't know if it's unexpected, Tom, but maybe it could still surprise us, is the commodity shock, right? Even though I'm saying the supply chain bottlenecks are easing and other inflationary pressures are easing, the commodity shortages are not going away.
I'm going to stop the show. You, more than anyone we know, have a visceral understanding of the coast of the Black Sea. You own the high ground on this. How do you respond to the idea that Odessa with one S or two S's could be shut down?
Look, this has a big implication for the commodity market. And, you know, as I mentioned, the world is short of everything. The world is short of wheat, the world is short of grains, the world is short of oil and natural gas. To the extent that you close off that corridor, to the extent that the tensions continuing to escalate and you can't get product out of that region, that is really, really tough. I mean, I think that's what people perhaps don't fully price in and don't appreciate. Commodity prices are up a lot this year. And, you know, I think a lot of investors say, well, how much more do you chase that? But what people probably underappreciate is that we have a structural deficit of many of these commodities. So this is not just a tactical trade for this year, but this is longer lasting.
Such a good point. Anastasia, thank you. Anastasia Amoroso there of iCapital. And Tom, I think there's something that maybe wasn't consensus a year ago is quickly becoming so, and that was the view of Christian Malik of JP Morgan Investment Bank over in Europe, Tom, when he talked about the lack of spare capacity in OPEC at the start of the year, and that felt kind of out of consensus. I tell you what, it's quickly becoming consensus for a lot of houses.
And on a microeconomic basis, JP Morgan's done a lot of great work here and others as well. Amrita Sen has been really wonderful on it. John, we don't even understand that when it is a normal hydrocarbon market, the supply and the demand is wicked tight. That's CFA talk, John. Wicked tight. Equilibrium point.
That's CFA Boston, Tom.
Yeah, wicked tight.
Without a doubt. 121 Brent, 120 WTI. Crude inching higher by 0.9 of 1%.
500 ball, Red Sox.
From New York. Are they doing better, Tom?
They couldn't do worse.
This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Guerin. So more problems for Credit Suisse. The Swiss lender has issued its sixth profit warning in 7 quarters. It expects a loss at the group-wide level and investment bank in the second quarter. Bloomberg has learned that Credit Suisse is considering a round of job cuts, part of a renewed push to cut costs. Here in the UK, Bloomberg understands that Boris Johnson will go ahead with the legislation to override parts of the Brexit deal. that risks inflaming tensions with members of his Conservative Party and with the European Union. The Prime Minister's government has been pushing to rewrite the Northern Ireland Protocol that keeps the region in the EU's single market while creating a customs border with the rest of the UK. The OECD says the world will pay a hefty price for the war in Ukraine. The organisation slashed its outlook for global growth this year from 4.5% to 3%, and it doubled its inflation forecast to nearly 9% for its 38 member countries. In San Francisco, residents voted to recall progressive district attorney Chesa Boudin. Boudin tried to reform the criminal justice system, but critics accused him of being too soft on crime. About 60% of those voting in favour want to oust him. He will be replaced by an interim district attorney chosen by the mayor, London Breed. And the son of the founder of Walmart, Robert Walton, is leading a group that has agreed to buy the National Football League's Denver Broncos. ESPN reports that the Walton Group offered almost $4.7 billion. That would be the highest amount ever paid for a U.S. professional sports team. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
This tiny payment thing is a giant pain.
Hi, ladies. Alex from U.S. Bank. Can she help? How about a comprehensive point-of-sale system?
That can track inventory, manage schedules,
And customize orders? That's what U.S. Bank Business Essentials is for.
What about a new oven? Can U.S. Bank help us there?
We can serve loans in as fast as 12 minutes. That would be a big help.
Huge.
Jumbo. Ginormous.
Finding ways to make your business boom. That's what U.S. Bank is for. We'll get there together.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for a limited time.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that, and that, and that, and that menu? And that's embroidery, but yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the printabilities are endless. Print it all at Vistaprint.com.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
I've heard of Carvana and that we sell cars online. We believe buying cars should be something that gets you hyped up and that your new car ought to come with newfound happiness and zero surprises. And all of us will stop at nothing to drive you happy.
We'll drive you happy at Carvana.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
What does the future of strength look like? It's dynamic weight that adjusts for you in real time for a more efficient workout. And you can only experience it on Tonal.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at Tovala.com.
If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at Hurricane.com.
Assalamu alaikum.
It's great to see you.
Welcome to the Qatar Economic Forum powered by Bloomberg.
Some people say that there's a de-globalization going on, but I prefer to think of a re-globalization.
Our accomplished speakers, from heads of state to business and policy leaders, will discuss evolving technologies, education, culture, sustainability, and the impact on the economy.
June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
There's no question that we have huge inflation pressures, that inflation is really our top economic problem at this point, and that it's critical that we address it. So I do expect inflation to remain high, although I very much hope that it will be coming down now.
What did Paul Krugman say? Lisa, inflation hysteria of the media.
It's the media.
That was Secretary Yellen there of the Treasury. From New York City this morning, good morning. Futures negative on the S&P, down 0.25%. On the NASDAQ 100, down about 1/10 off session lows. Yields higher by 3 basis points through 3% on a US 10-year. Tom Crude, 120.56, up by about 1%.
Hit a 122 print on Brent crude right now, 121.60. John, I think we got to go back to first principles on Friday, which is a hugely important look at CPI, and say that the top line CPI is grim, from 8.3 down to 8.2%, pretty much unched. But there's a demonstrable ebbing in core CPI. Maybe that will be the number to watch exactly at 8.
Month over month, Tom, without a doubt, for Wall Street, that's going to be the focus. For Main Street, it's everything else. And as you've said, Lisa said, I've said a million times, you can't eat or drink core CPI, and you certainly can't travel on it.
Let's get to a question that came up over dinner a couple nights ago. We can do this with Emily Wilkins in Washington. Emily, taxes vary state to state. Why are we waiting and taking a tax holiday?
I mean, a couple states, they are debating this in terms of taking a tax holiday from potential gas prices. But at the federal level, the main concern from Speaker Nancy Pelosi has really articulated this, is that if they were to take a holiday, it doesn't necessarily mean that these oil and gas companies are going to pass the profits down to the consumers. And there's additional concern that, you know, these taxes are used to help fund highways. We just passed that major infrastructure bill, and they want to make sure there is funding there.
Dumb question of the morning. It goes to you, Emily Wilkins. Do the Democrats support, and frankly the Republicans, do they support our president traveling to Riyadh?
I mean, there definitely is some debate about exactly what Biden should be doing, how he should be engaging with the government there. I think it's one of those things where it's just the real politic is dominating the moment. The fact that everyone knows that gas prices are a high concern, trying to figure out what they can do. I mean, you've seen the Biden administration try to tap into the strategic reserve. You've seen Democrats kind of rail against various companies. You've seen measures tried to be moved, and yet you haven't seen much of a change in that price. And so I think there is a reality here that this is a global issue, and that Biden will need to have global interactions to address it.
Is inflation really the center of gravity already in Washington, D.C.? We know it is outside of Washington, D.C. when you go and you talk to anybody or you go drive around. But it feels very kind of disparate in terms of the messages that we're getting from President Biden, who's currently heading to Los Angeles for a summit with North American partners.
I think that's because the White House has taken so many different messages as to explain inflation. They've tried to blame it on Putin. They've tried to blame it on the war in Ukraine. They've tried to blame it on major corporations. They've tried to blame it on the pandemic. And I'm not saying that there isn't truth in various pieces of that. But as far as one clear and consistent message, we've seen that more from Republicans who have simply been blaming Biden for it. And I think in D.C., one thing that lawmakers always like to say here is that they can walk and chew gum. There are multiple things going on at this point that are really dividing everyone's attention. Certainly, the gun debate is front and center in Congress this week. You mentioned that, Biden is looking at this conference of the Americas. That's certainly another thing on his plate as well. There's inflation to deal with. There's pricing. There's hopes that they can wind up passing something through reconciliation. So just a lot that is happening right now, and there isn't exactly one straight focus here in D.C.
Emily, for our international audience, and folks, we haven't done this too much international because in America and cable TV, the gun debate is 24/7. There's no question about that. What is the distinction right now of the quote-unquote gun debate, Ms. Wilkins?
Well, at this point, all eyes are on the Senate, where negotiations are happening between Democrat Chris Murphy and Republican John Cornyn. And Cornyn's really the linchpin on this, because we all know there are many Republicans out there who would be perfectly fine keeping the status quo as is. But, Cornyn's from Texas. He has that connection to Uvalde, and he is trying to get something through.
Emily, what are they going to do to stop the X number of people who will be killed between now and 6 a.m. Monday morning? Is there anything in the legislation to give hope to that concept?
The one thing that they really seem to be pushing right now, that gun advocates as well have been urging for, are these so-called red flag laws, this temporary removal of guns from those who have deemed a danger to themselves or others. But at this point, there doesn't even seem to be a federal law in the works. What it seems is that the federal government is going to try to encourage states to take up these own laws through a grant program. And we've seen more than a dozen states take up these laws already, including in some places like Florida, some of these red states. But at this point, that really seems to be as much as they want to do in terms of gun control. We're expecting to see some more on mental health, some more on school safety. But really, at this point, it is still a very, very difficult issue, even given how heartbreaking and tragic some of the recent mass shootings have been.
Emily Wilkins, thank you. Down in D.C. Lisa, on several fronts, you hope that we can achieve something on the policy front. Going into the midterms, it just feels like we probably won't.
I see no policy prescription right now on the table. There's a blame game, a massive blame game, with people saying it's somebody else's fault on all sides. Perhaps the Republicans are getting more traction with it because it's a cleaner message than the Democrats, and that's simply what you're getting. Beyond that, what are we looking for in terms of a Democrat or Republican win, and what the policy implications of that will be? That also not very clear to me.
Something to focus on through the next several months going into the back end of this year. Let's start here with the equity market. We're down about 1/3 of 1% on the S&P. On the NASDAQ 100, down about 1/10 of 1%. No real drama in the equity market this morning, at least. It's a quiet morning. In the bond market, too, to some degree. Yields higher by 3 basis points. But in foreign exchange, Tom, we just keep going back to it. I know actually at the moment it's the first thing you look at. It's dollar yen, the first thing you look at in the morning. Through 134 briefly earlier this morning.
You look at Euro-Yen complex. Aussie Yen is frankly just as important with our American centricity. But I also look at a lot of the other pairs, John, in the blended indices. The fact is DXY and the Bloomberg Dollar Index, which is better math, the fact is they really haven't broken out to new dollar strength. And that's a raging debate among currency pros.
Tom, looking forward to a conversation coming up with Bob Miller of BlackRock. We'll do that in just a moment. Lisa, we've got a lot to talk about in this bond market with yields breaking out over the last couple of weeks.
Yeah, although stasis right now. Are people basically believing that the Fed is going to move just enough? Is basically the idea of a soft landing or a soft-ish landing now becoming more on the page? How much is peak recession fears kind of a little bit past us?
Futures negative 1/4 of 1% on the S&P. On the NASDAQ 100, down 1/10 of 1%. On that particular conversation, Lisa, I could probably run with that. This idea that maybe we've seen this mechanical peak, which is the point that Paul Krugman was trying to make a little bit earlier.
Inflation's still the main problem facing the U.S. economy. Janet Yellen's words, not mine.
Without a doubt. Yields higher by 3 or 4 basis points. 3.01% on a 10-year. From New York, this is Bloomberg.
What if you were a gigantic snack food maker and you had to wrestle a massively complex supply chain to satisfy cravings from Tokyo to Toledo? So you partner with IBM Consulting to bring together data and workflows so that every driver and merchandiser can serve up jalapeno, sesame, and chocolate-covered goodness with real-time data-driven precision. Let's create supply chains that have an appetite for performance. IBM, let's create.
doesn't have to be like this. You don't have to live in fear just because you don't have life insurance. With Ethos, 10 minutes could protect your family for as little as $10 per month. To get a quote in seconds, go to ethoslife.com. Honey?
You know, I've been watching you, and I'm very proud of the woman you've become. My little butterfly is spreading her wings into the future. And that's why I want to give you a few shares of my Grayscale funds. Wait, this is about crypto? Yes! Grayscale offers so many different digital currency funds. They're a leader, and I want to give you the best, Mom. You deserve the best.
I really do.
Grayscale, building the future of financial legacies.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
Hi, this is Lisa from 4imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes. Certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow. I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
Selling a home is expensive and stressful, so we created our Smart Seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed in the fact that my house sold in one day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commissions. The process was as easy as it gets. They are the #1 way to sell your house.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Hi, I'm Jeff from Nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. We still deliver the freshest nuts, dried fruits, snacks, and sweets to families all around the country. From Nuts.com. Enjoy free shipping on your first order.
Nobody does anything perfectly the first time, or the second, even the third. We learn from mistakes. But when it comes to retirement planning, who can afford mistakes? Smart Asset can help you avoid those unpleasant mishaps with a free guide, The 7 Crucial Mistakes of Retirement Planning. We also match you with up to 3 vetted fiduciary financial advisors who can help you achieve your retirement goals. Using Smart Asset is free with no obligation. Discover what others learned the hard way at smartasset.com.
No drama this morning. Good morning. No drama, at least so far. Equity futures down 0.25% off the lows on the S&P. On the NASDAQ 100, down by about 0.1%. The OECD cutting their outlook to about 3% for global growth. That's not news, is it? That's confirming what we've already heard from a lot of other places, including the World Bank yesterday, looking for 2.9%. That's the equity market. Here's the bond market worldwide. I want to talk about this. Easy to spot the difference here, isn't it? Which one is the odd one out? Looking at the US 10-year, the German 10-year, and the Japanese 10-year. Yields up in the US, yields higher over in Germany, 135 on a 10-year bund, and almost totally unchanged at 25 basis points in Japan. The why? Because the BOJ is trying to cap it there. And as they do that, as they try and cap bond yields at 25 basis points, remain committed to not hiking interest rates, whilst the latter two central banks, the ECB and the Federal Reserve, look at making a continued move through the rest of this year. This is what happens through the FX market. You push this through foreign exchange, the Japanese yen has to take all the pain. Dollar yen breaking out again. 135, Tom, on dollar yen in sight after briefly breaking 134.
It's a lot of dynamics there, and we'll be looking at that in the course of the coverage of the ECB tomorrow. It will. I'm sorry, John. It's all of a sudden ever huger deal with frankly Pacific Rim ramifications.
I had someone message me this morning about the ECB, Bramo, and they basically just said, "Are you serious? I cannot believe they're not hiking tomorrow. What's this about? Laying the groundwork for future meetings. Let's go."
We were talking about this in the break. Why not, right? Why not just raise 25 basis points? Forget 50 basis points. Just get ahead of it. If you're going to talk about doing something and the need to do something, what is holding them back? And you pointed out that it was the peripheral yield market, that they're concerned about disrupting Italy, as well as Spain and Portugal and Greece. I mean, all the other countries. How much can they continue to do this? Because at some point, they've got to rock the boat to get some sort of tightening that is required for the inflation that they currently have.
Trying to hold the market's hand in a way the Fed is not. Key difference, though, the labour market in the US stronger than the labour market in Europe, may be allowing them, Lisa, just to go a little bit harder here in the States.
Yes, although they have to do something. So when does hand-holding become counterproductive and actually go against the end goal? How do they get around that? And what other policy prescriptions, supportive perhaps, for the Italian, the Portuguese, the Spanish, the Greek bond markets could they come out with?
Do you remember when President Lagarde said she wasn't there to close spreads?
You loved that. You just nailed on that. You were like, nah,
just, you know, just
next day. We're here to close
was it even
spreads.
The next day?
We're here to close
I think it was hours later.
Yes.
Let's make a quick interview with someone we like so they're kind to us and we get to say what we want to say. We'll talk about that another time. That's your cross-asset price action. Let's get you some single names, some stock movers. We can do that with Romain. Morning, Romain.
Hey, good morning, John. Of course, back here in the U.S., all eyes still focused in on consumer spending. We did get Campbell Soup earnings just a little bit earlier this morning here. They were actually pretty good, at least on the overall numbers, but it was an interesting mix here. Total sales were up about 7 to 9%, depending on the category. However, you actually saw a decline in the volume of sales here. Now, Campbell made up for that with a 3% decline in volume across the board. They made up for that with roughly about a 10 to 12% increase in prices. So an interesting mix here of a company that does, at least for now, showing a little bit of pricing power, though is also making clear that, at least on a volume basis, things have tamped down a little bit. Nevertheless, Campbell shares up about 5% here in the pre-market. Meanwhile, and also in the consumer space, you have Affirm. Those shares down about 4% in the pre-market. And we know they got battered around on Monday because of that entry of Apple into the buy now, pay later space. But there's a broader issue going on with Affirm, and it's highlighted in a wonderful Bloomberg story today about some of the securitizations that Affirm has issued, where it repackages those loans. And the prices of those, of the existing ones, have started to fall. And of course, any new issuance that this company comes to the table with, they're having to pay more, basically offer a little bit more yield. This is a big concern now. Remember, the business model for Affirm is way different from the other buy now, pay later companies that actually finance themselves primarily through debt or customer deposits. So keep an eye on that space. Remember, this is a stock already down 70% from its all-time high. And then there is still a focus on business spending. Smartsheet came out with earnings. This is a big software company. They beat on a lot of the top line numbers, but there was a deceleration in growth that has some folks concerned. Those shares down 6%. And then we heard from Intel the other day, a lot of the company's management, they were at a conference there, and according to Citi analysts, they said the mood was actually pretty dour. They were talking about a lot of challenges ahead. Intel shares down about 3%. Meanwhile, DocuSign, a big pandemic darling, they're actually reaffirming their partnership that they've had with Microsoft. That's giving them a little bit of a lift. DocuSign shares up about 5% on the day. And, well, the pandemic is sort of over, but Novavax finally getting its vaccine potentially to the U.S. market. An FDA advisory panel yesterday, Tom, did finally sign off on that. They still need full FDA approval, but those shares up 10% here in the pre.
Romain Bostic, thank you so much. The close coming up this afternoon as well. This is the conversation today. If you've opened up the proverbial envelope and looked at your bond portfolio and said, ooh, price down, yield up. Bob Miller, head of America's fundamental fixed income at BlackRock, has decades of experience at looking at that. He's younger than me. Long ago, he was with the Davidson Wildcats getting things done, and I was enjoying the last time we had a bond market like this, which is 78, 79 Volcker. Bob, what do you do to claw back to 2025? What is the attitude you take where you're down 10%, 13%, 16%, 4 years coupon, and I got to claw back out 3 years? What's the strategy?
Great question, Tom. You know, the interesting thing is there is some value that's starting to be created in the U.S. fixed income market. Let's just stay there for the time being.
Please.
You know, at wider spreads recently, some of the spread products, you know, whether it's securitized CMBS, CLO, et cetera, or even high yield and the you know BBB IG stuff started to look reasonable. Now, spreads snapped in pretty aggressively in the last couple of weeks. I wouldn't be surprised if we get another bite at the apple, but at these forward rates in treasuries, you know, we think rates probably go a bit higher. specifically out in the term structure of rates probably goes a bit higher, but we're starting to get to levels where you can build a portfolio that probably earns, 3 to 4, maybe even 5% in a certain scenario over the next couple of years.
Of the Frank Fabozzi,
so it's plausible to get it back.
Of the Frank Fabozzi variables, can you extend duration? That seems to be the biggest risk right now.
So that's a tricky one, right? I think the consensus view is yes, for a reason that I agree with, which is Treasuries now do have some portfolio hedge capabilities or properties, which they didn't have a year ago or 2 years ago because the levels were so low, the yield levels were so low. So yes, in an absolute crisis, Treasuries are going to rally a lot from these valuations. But I'm in the camp that thinks there are a number of longer-term, more secular, perhaps, influences that are likely going to work to push the term structure of rates a bit higher over the next couple of years. Things like all of the, 2 of the 3 G3 central banks abandoning QE and the Fed now starting to allow runoff. Things like Europe pursuing energy and security independence will require a tremendous amount of investment / borrowing. If the world actually does become genuinely motivated to pursue net zero, that's going to require a massive CapEx program around the world over a couple of decades. That will likely lead to a higher term structure of rates. So there are a number of things that kind of lean in that direction. They're not near-term catalysts at all. But I think the term structure could probably, I think we could have a steeper curve for the same level of inflation and same level of growth over the next couple of years.
Bob, early this year, people looked every morning at the Fed funds futures and when the Fed would raise rates, what the things were gamed out, how much rate fear was there currently in the market. We've shifted. Now people are looking at economic indicators, and it's less about the Fed parlor game, as Tom likes to say, but more about the fundamentals, some of the secular changes that you're talking about, as well as whether the U.S. economy is accelerating or actually experiencing certain stagflationary types of dynamics. What do you look at every morning when you come out with a near-term and a mid-term view of those yields?
So, Lisa, the tricky thing is that financial conditions in the U.S. have tightened a fair amount. The impulse, the magnitude of tightening from very accommodative levels is sizable on a historical basis. So it's possible that FCI, that financial conditions, have tightened enough to allow the Fed to achieve its target with respect to inflation. The challenge is you actually have to deliver the forwards in order to get that tightening, right? So or it has to come through other channels that are less favorable. So the forwards, as you said, are priced for very specifically for 350s and 225s over the next 5 meetings. I think that's probably sufficient, and we're also priced for a 3.25 terminal rate a year from now. That may well be sufficient. It's just that you've actually got to deliver that in order to get there. So the vol in the U.S. has started to come down, and that's probably a durable trend. It's not going to collapse, but realized and implied volatility has started to come down because we've kind of settled into, as you said at the beginning, or when we were talking before the show, we've settled into a little bit of fatigue with respect to the Fed, and the forwards seem pretty fairly priced for what we know today.
It's the part of the conversation we should take live to air. Just Lisa in the commercial break telling the world what she really thinks about everything. If you thought the stuff on air, was punchy, the stuff in the commercial break is so much better. Bob Miller, thank you, sir, of BlackRock. I caught up with Rick Reeder of BlackRock on Friday, and something he said has just stayed with me over the weekend and into this week as well. Just turned around off the back of the payrolls report and just said, John, that's the last strong one. I think that's the last strong one. And Tom, perhaps a negative trend is in our near future. That was the take from Rick Reeder over at BlackRock.
This bet is out there. And let me say, John, I have an immense respect for people in equities and bonds that actually have to run money. There was way more discussion of the bond bear market at the end of the 70s into Volcker than there is now. There's like this secret, this is just going to go away somehow.
Totally.
And the fact is, I'm looking on the Bloomberg, and R-squared's way above 0.90, Sharpe ratios that are unmeasurable, and I'm sorry, double-digit losses in bonds with coupons of 4%. And we're not talking about it.
Tom, that sentiment that it's just going to go away, I think that extends to so many things at the moment.
Yeah.
I think a lot of people would watch this program and say, oh, it's so gloomy. Most of the guests still believe the Fed backs away. by the end of the year.
Oh, yeah, okay.
That's the
Mrs. Keene was
consensus
hoping I
view.
would just go away.
Is she still hoping?
She's still
Will she
hoping.
get her way?
She's
got to stick with this one, Tom.
Let's
Make this one work. Futures down.
Oh,
0.6%.
Yeah.
This is Bloomberg.
At least my sweatshirts fit.
True, true.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Credit Suisse is considering a round of job cuts after warning of a second quarter loss. Bloomberg has learnt the cuts would be spread across divisions, including investment banking and wealth management. It was Credit Suisse's sixth profit warning in the last 7 quarters. Over in LA, a billionaire developer will take on a veteran politician in the race for mayor. Rick Caruso will face Congresswoman Karen Bass in November. Caruso won 41% of the votes in yesterday's primary, while Bass won 38%. Both are Democrats, although Caruso is a former Republican who did not switch parties until January. Western Digital has announced a strategic review that could result in the separation of its 2 businesses. The announcement came after weeks of talks with activist investor Elliott Investment Management and other shareholders. Western Digital is one of the world's largest makers of a type of chip called flash memory. It also makes hard disk drives. Shares of Novavax are soaring in pre-market trading. The company's coronavirus vaccine has won approval from a U.S. Food and Drug Administration advisory panel. Analysts say that it is good for the shot's chances of gaining emergency use authorization. And do you know what the most expensive city in the world to live in as an expat is? So for the 2nd year in a row, that is Hong Kong. Now, that's according to the ECA International. Higher prices and a stronger currency kept the city at the top. New York, Geneva, London and Tokyo round out the top 5. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
My name is Amy, and when I financed my car with Carvana, they had questions about my documents, but I was at work, in a mine. So Carvana worked with my shift manager to get it all worked out. I was over the moon, even though I was underground.
We'll drive you happy at Carvana.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Thousands of years ago, even if you were sitting at the top, you really couldn't count on support. It took centuries for office seating to evolve, but there were some major holes in the design. Then people were inspired to do away with office chairs completely. Yeah, that didn't work. In 2020 came the breakthrough the world has been waiting for. The first ever XHMT heat and massage chair by X-Chair. X-Chair just made history's most comfortable work chair even better by integrating heat and massage into our patented dynamic variable lumbar support. Waves of glorious massage that wake up tired muscles? Yes. Soothing heat that melts away daily tension? You bet. The all-new XHMT massage chair by X-Chair. The future feels good. Upgrade to the ultimate work chair with the one and only XHMT by X-Chair. Use the code on your screen and get $100 off plus a free footrest.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Accenture. Let there be change.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your goals are ours too. And Vanguard Retirement Tools and Advice can help you get there. That's the value of ownership.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Pull back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trychics.com and get 25% off this Father's Day with a 60-night guarantee.
Never be afraid of your strength, because your body is capable of amazing things. Own your strength and see how far it takes you. Tonal, be your strongest.
When oil prices move away from where they've been for a while, when they get salient in household decisions, when they really get your attention, that's when they matter for economic activity. And guess what? We're long past that point. Yeah. It is #1 concern among households. It's got to be crimping household spending.
We're a long way past that point. Vincent Reinhardt there, the chief economist at Dreyfus and Mellon. He was fantastic, Tom. With Tom Keene, Lisa Bramett and Jonathan Ferro, this is Bloomberg Surveillance. Your equity market looks like this. We're negative on the S&P just a bit, down 0.2%. On the NASDAQ, a little less. We're down 1/10%. Yields higher by 3 or 4 basis points, back through 3%, 3.01%. Crude, WTI, with a 120 handle. 120, spot 63, up more than 1% on the session. Year to date, up 60% on WTI, on Brent up 56.5. Citigroup making some adjustments coming into a brand new trading week, Tom, over the weekend into Monday. They raised their second quarter Brent crude forecast by $14 to 113, their third quarter estimate by 12 to 99, and their fourth quarter forecast by $12 to 85. That 4Q, Tom, compare the 85 at Citi to where Goldman are at. That is a wide spread still between the two.
This is the privilege that we have, not only working with Javier Blas, Will Kennedy, and all of Bloomberg hydrocarbons and commodity coverage, but also digging deep into the analysis of global thinkers. The giant of all this is Edward Morse with Daniel Yergin, separate, looking at the global macro moment of this commodity boom. He is global head of commodities at Citigroup, and as John says, has a bit of an outlier call right now. Ed Morse, how do we migrate back to your oil fundamentals under $90 a barrel? What are the trigger points or catalysts that break the ascent of oil?
So the catalysts really are very simple. They're called supply and demand, and we've got to get through the next few weeks to see whether there actually is going to be a driving season this summer. But underlying the differences of view is really what we think is raising prices now. And what we think are raising prices now are the dislocations that have occurred as a result of countries and companies refusing to take on Russian oil. There's no easy substitute for euros. We're not in a one oil pricing system. We're in a two oil pricing system. And we have to remember that while WTI may be at 120 or Brent may be at 120 something, euros is trading at 30% lower than that. So it's not one clear market. And it's the disruption of that lower price that we have to think about and ask why we have these higher prices.
And I'm going to just say that we're planning a trip, Lisa, John, and I, to Abu Dhabi. And, of course, we're going to have an oil summit there. And we're going to have on stage Francisco Blanch, Christian Malik of J.P. Morgan, Blanch of Bank of America, you and other worthies. And the singular distinction seems to be the guess that hydrocarbon investment will or will not come on. If we get higher oil prices, are you more optimistic than others that investment will materialize?
Well, I think for starters, I don't think there's that problem. I think we have more than enough investment in hydrocarbons. I think we have a problem in the hydrocarbon world in that the United States, the short cycle big guy, has lost a lot of oil production. The U.S. was producing, we have to remember, 13 million barrels a day in March of 2020. It went down to 10.2 million a day. It's now at 11.9 million a day. It's well below where it was and where it would have been had we not had that drop in drilling. We would have been at 14.5 million barrels a day, and there would not be this problem. We have more than enough spending into oil and gas finding and development. It's shifted a little bit, but if we look at the next 2 or 3 years and compare expectations of demand and supply, we think the market is oversupplied.
Ed, have you seen any signs that demand is starting to cool for driving, for flying, that gives you confidence that perhaps we might not see the driving season that some people are expecting?
Well, we actually we're trying to observe that, and we decided to look at not only the 4-week average at this time of year for gasoline and diesel demand in the United States, and we went back and discovered at first glance that it was the lowest it's been in 5 years, other than in that big year of 2020 when demand collapsed completely. We've now gone back 10 years to find a time when demand for gasoline and diesel were as low as it is, and we had to go back to 2012, 2013. So if we think the EIA weekly data have a semblance of reality to it, gasoline demand is down year on year, diesel demand is down year on year, and it's the lowest it's been for a decade. And that's a sign that the price of oil has had an impact on where demand is going in what still is the biggest oil-consuming country in the world.
So, Ed, why did you end up shifting your expectations, your forecasts higher, if you still hold to that conviction that we might not see the driving season that a lot of people are saying we will?
Well, we drove prices higher, first of all, to market. We had second quarter results that are marking it to market higher than where we were at. And we try to figure out what was really happening. What was really happening was that companies and countries were forswearing Russian crude. They could find no substitute for it. So they had to bid up the availability of light, sweet crude in the world that is not the same as Urals. They bid it up from the country that has the most amount of this, namely the U.S. with our open borders. And the fact of the matter is that U.S. exports have been booming. Our combined exports of crude oil and petroleum products in recent weeks have been at the 10.5 million barrel a day range. That would make the U.S. the largest liquids provider in the world, bigger than Russia, bigger than Saudi Arabia. That's up by a couple of million barrels a day from where we were. So when companies had to look away from Russia for diesel, where did they go? They went to the U.S. When companies had to look for crude oil, where did they go? They came to the U.S. And our inventories came down, giving a misleading impression that the whole world was going down in the inventory side the same way the U.S. is.
Just quickly, and I've only got a minute, and this deserves a much longer conversation, of course. How sustainable do you think that is politically? Because I don't think those numbers are that well known outside of conversations like this one.
Well, I agree with you. If it became political, people would start talking about stopping the exports, just as they talked about stopping the exports of natural gas. But it could be politicized in a way that it would be in an election year, with gasoline prices being as important as they are.
Ed Morse, thank you, sir. As always, of Citigroup, refreshing just to have someone say, we're market to market. Lisa, that's what we had to do. And looking at the spread through 4Q, and I think that's where the debate lies now, the difference between Citi and, say, Goldman. Citi at 85 in the fourth quarter on Brent. Tom, Goldman at 130.
These are huge decisions, and they're said with respect. We don't have an opinion on this, John, but I really can't say enough about in their lengthy reports, 20 pages, 40 pages, indeed 100 pages. They lay out a theory underlined by supply and demand, and that's the heart of the matter, is Marshallian supply and demand of oil. That's been the battle from day one.
Tom, what did you make of those crude product export numbers that Ed just went through?
Ed is talking about the success of the American Energy Project. I was with Spencer Abraham the day the energy policy of America went down in flames. With that energy policy, lack thereof, we have a huge export market, particularly of distillates.
How politicized does that get as the year progresses? Right now, futures down a third on the S&P, on the NASDAQ 100 down a quarter of 1%.
Where are we going to be in 6 months?
$6 gas, according to JP Morgan, maybe at the end of the summer. Tom, unreal numbers out there at the moment. From New York City, this is Bloomberg.
As a woman of color, I knew early on I would need extra support to overcome the barriers I would face. During my senior year of high school, I participated in a program called IJAC. It focuses on mentoring, financial education, and exposure to diverse careers. It's important to learn these values and to pass them down. Investing in programs that create possibilities for people of all backgrounds can create a lasting effect for generations to come.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
This list is now Angie, and it's easier than ever to get your projects done right. Inside, outside, big or small, Angie helps you find the right solution for whatever you need done. With Angie, you can connect with top local pros and see ratings and reviews. Just search or scroll to see upfront pricing on hundreds of projects. And when you book and pay through Angie, you're covered by our happiness guarantee. It's easy to make your home an Angie home. Check out Angie.com today. Angie, and done.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable, and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for a limited time.
Introducing Flippy, the world's first AI kitchen assistant. Let the robots do the robotic work, so people can do the people work.
There's a reason big dental bills often come as a shock, because sometimes you don't realize what's not covered until you get the bill. That's why affordable dental insurance from Physicians Mutual is important. It can give you benefits that go beyond what you get from more limited coverage plans. Because no one likes a big dental bill, especially if you're retired or on a fixed income. For a free information kit, call or go online now. This isn't some discount plan or preventive-only coverage. This is real dental insurance that helps cover over 350 procedures, like cleanings, fillings, crowns, bridges, root canals, even dentures, at any dentist you want. Dental insurance from Physicians Mutual Insurance Company helps cover preventive care, basic work, and major procedures, with no deductibles and no annual maximum. For your free information kit with all the details, call now or visit sendinfokit.com.
Physicians Mutual, Physicians Mutual.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks,
Magazines, podcasts, Script,
it's awesome.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Selling a home is expensive and stressful, so we created our smart seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed in the fact that my house sold in one day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commissions. The process was as easy as it gets. They are the #1 way to sell your house.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
I think the Fed has a lot of catch up to play.
Ultimately, what the Fed is trying to do here is achieve that elusive soft landing.
It does seem like the odds of a soft landing are reasonably good.
The risk obviously here is inflation.
Our view at the moment is that we avoid recession, but that probably means that the Fed stops much sooner than markets are thinking.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television on Wednesday before Friday CPI. But we got to get there first. And tomorrow, John, ECB with some tough decisions given what Italian paper is telling us.
Without a doubt, Tom, they've got to clarify the road ahead, the path ahead through the rest of 22 and perhaps into 23, laying the groundwork for something we haven't seen from an ECB since 2011. Tom, an interest rate hike just around the corner.
It's around the corner, but I mean, it's definitely a road trip to Milan for the three of us. I mean, we've got to talk about what does the tea leaf of Italian paper mean away from what's going on with the German 10-year and the Japanese yen. John, what is the signal you take from Italian paper?
This is the signal I take from you. Why don't we just do a European tour? Let's go across the whole periphery. We'll go from Italy to Greece as well.
You thought you'd never ask.
Look, for me at the moment, the Fed's made a move, but the Fed made a move last time around on its own. The ECB didn't come along for the ride. The BOJ didn't come along for the ride. This is different. The ECB is going to come along for the ride. I have no idea how long that ride is going to last, but they're going to try. The BOJ, Tom, is trying to do something they did before. Wait, sit it out, and you're seeing what's happening in the FX market consequently.
We'll get to the data here in a moment. Weaker yen through the 134 print as well. That is earth-shaking. Let's keep this thing going, Lisa, on Italian paper, and it speaks to not full faith in credit, but the idea of the mix of the bond market. I'm sorry, it's price down, yield up.
Why isn't it yield further up for those Italian bond yields? Because the ECB has had the back of the peripheral markets for so long. How do they thread this needle? How do they support the areas that are most at risk while also allowing a tighter financial monetary policy at a time of such high inflation? They got to do something. And this is the shift in the dynamic right now, Tom. Central banks have a different calculus than they've had for the past decade or more. And this is going to be a very difficult period, which is the reason why people are pricing in so much higher yields.
In bank to bank there, Lisa, your view of Friday's CPI and particularly core CPI that Paul Krugman looks at.
I'm less interested in the headline numbers. I want to see underneath how much there is some sort of gains within the rental markets. I want to see what there is in terms of the gas component, what there is in disposable spending, in experiences. How much does the consumer start to pull back, and what that means for both inflation as well as growth?
John, the real yield solid. I know you're beginning planning for your Friday real yield show with your team.
It won't be a Friday, but someone else is planning, Tom.
It's not me, is it?
It's you. You're going to do it. CPI special, Friday, 1 p.m. Eastern. Everyone's excited now. I've called it. That's it. You're filling in. Yes, confirmed.
Tom's about
just
to
now.
walk off set.
1 p.m. Eastern time, Bloomberg real yield with TK following CPI
no,
on
my people have not.
The big look ahead.
This has not been cleared by
next week.
This has not been cleared by my scheduler. John, I'm going to start with 0.24% on the 10-year real yield. It's like a rock.
I'm going to pick up on what Lisa just said. There's a shift here from goods to services from the consumer. Target speaks to that story. Target has now got a bunch of inventory, all these goods that they've got to shout down. So what we could see is a disinflationary impact on the goods side, but offset by what happens on the services side. Tom, when you put it all together, what does that mean for the rest of the year? Does the labour market continue to have this tightness and push inflation even higher through the rest of this year? That's the view of Citi. It's not the view of everyone.
Sorry, John, I was sipping some Tang there, just trying to keep
Speaking to your team,
going
keep it together.
John, on the data check here, I'm sorry.
Okay.
The dynamics here, John, for pros, there's some serious rates of change going on right now.
Sure, let's start with stocks. Not much happening, no drama, down 1/3 of 1%. Let's
nice
go to
recovery
bonds.
Yesterday.
Yields higher on a 10-year. Nice move, wasn't it, Tom? 3% on a 10-year. Yields higher by 3 basis points.
That was not me initially.
It's a nice move, Bramo. Great. German 10-year yield higher as well. What's missing here, the missing piece of this move in the core government bond market, Japan. And as Lisa has pointed out many times, I'm not even sure we can call it a market anymore. Not a single 10-year JGB traded yesterday. JGB yields are pinned at 25 basis points. Where are you going to push? You make that push in the FX market. Dollar yen, Tom, 134 earlier this morning.
In these stresses, you have to sum them together to a cogent idea of what to do with your money. It's been a terrible 2022 for that. Lots of losses taken. Beata Kerr joins us now, co-head of investment strategy at Bernstein Private Wealth. Beata, what is the new strategy, the amendment, the distinction right now for Sanford Bernstein?
Well, thank you for the question. At Bernstein, we've been thinking about the trade-off between stocks and bonds and alternative asset classes for quite some time, and this market has obviously posed some unique challenges. Talking about the increased correlation between bonds and stocks this year has been an extraordinary challenge. But what we see today is real opportunity in the high quality, intermediate duration municipal space. You were talking about it earlier. Yields are up, and they are up to levels that we have not seen in an extended period of time. So we think a lot of the selling pressure that we saw in the first quarter on the bond market is going to ease as we come into the summer. And the tax equivalent yields that we're seeing in this asset class today are really starting to approach almost 5%. So we see an attractive entry point for people that are in cash into that high quality intermediate duration municipal market.
And Beata, where does it leave credit, corporate credit?
Well, we actually see quality in corporate credit. And when you look at the credit markets broadly, including high yield, because our base case is a mid-cycle slowdown and not a recession, certainly in the next 12 months, that is our base case, we're okay leaning into credit, including high yield. So being active in today's bond market is even more critical than ever. So we like credit as well.
Beata, how do you brush off some of the threats from Deutsche Bank's credit team? They just put out this report that we're going to see a default cycle unlike what we've seen over the past decade, that we're going to see defaults seriously pick up probably around 2024 as we do get slower growth and given the glut of debt that a lot of these companies have incurred.
Well, I haven't seen their report, but what I can tell you is that our fixed income portfolio managers are managing the portfolios for today. What's happening in a cycle in 2024 is not the market's current concern. What we have been handed today is yields that are substantially higher than we've seen in practically a decade. And today, of course, we're going to be all eyes on the CPI report on Friday and continuing to measure that output versus the growth that we see. And our base case remains a mid-cycle slowdown. And that means that we don't see a tremendous increase in defaults. In fact, we see corporate balance sheets that are still really high quality. And we see a consumer who has net positive wage growth and entered this cycle with very strong balance sheets as well. So there's clearly vulnerability on price, but it's something that we're going to keep a close eye on, and that CPI number is going to be instructive this week.
Forgive me, that's exactly where I wanted to go. CPI, what aspects of it are you looking for? How are you going to use it as an instruction tool ahead?
Well, you were actually talking about it right before I came on, this balance between goods and services. That is the story of the year. It's going to be the story of Friday. We do see some moderation in the number likely to come. And the biggest moderation we think is likely to come from the housing market. With mortgage rates over 5% now, the highest number that we've seen in a decade, we have already started to see signs both in the price number as well as mortgage applications and refis. So eventually that's going to make its way over into owner equivalent rents, the biggest component in the services area. And that transition, we hope, from goods ultimately peaking to some moderation in services will take some time, but we're going to be looking for evidence of all of that on Friday's report.
So you think there could be some downside risk to the print on Friday, correct?
Well, we think we're optimistic that we've seen a peak. We're not calling a peak in the CPI, but we think we could start to see some early signs of that starting to ease.
With that in mind, what's the balance of risk around how the market will respond to it? Is it asymmetric? Do you think there's more upside to the market based on what we could get from a downside print relative to downside of the market from what we could get from an upside print?
Well, the equity markets today have really been pricing in risk at a high level. This drumbeat and chorus of recession risks over the last quarter has been driving the downside in the market. But what we see in the market in terms of earnings outcomes is actually much more positive than what the market has implied in terms of price. We've got a U.S. equity market today trading at about 17 times earnings for end of year. That's 4 points lower than where we started the year. So honestly, we think the equity market is going to be looking for direction in terms of positive momentum on that inflation change.
Beata, thank you. As always, awesome. Bernstein, Private Wealth Management, into Friday, looking ahead to inflation. Just to give you the numbers, Wall Street's going to focus a lot on that core month-over-month figure. The estimate so far, Tom, 0.5% in our survey. That's down from 0.6. I think a lot of the country, though, is going to be very focused on that year-over-year headline figure. That's what you hear about in a lot of the news. That, Tom, the estimate, 8.2%, just a little drop lower from 8.3. All that can change in the next few days, of course, but that's the survey so far.
Yeah, I'd go like David Rosenberg up in Toronto and parse it out and see what it is. Lisa mentioned that earlier, the subdivisions of inflation really matter. John, we've been sort of non-equity today, and I really want to mention the lift we saw in equity yesterday afternoon, and Alice Sanford Bernstein and Beata just there. The calculation of free cash flow forward out of these shocks, including the inventory battle, moving from just-in-time to just-in-case inventories through the pandemic, the analysis of what free cash flow is going to do into the end of the year and into next year, to me, is a massive mystery.
And Tom, you've got to pay attention to how the market responds to that incoming information. Target closed lower, but only by 2.3% yesterday.
Yeah. You called that.
I think it's notable. Well, I raised the question. I wouldn't say I called it.
No, you totally did. You said the interesting thing will see where it ended.
Rambo, if I was wrong, I wouldn't have mentioned it.
I know exactly. So you can just take a victory lap. Come on, go ahead.
No victory laps.
Okay.
No
you
victory
were out
laps.
of at 8:40 a.m. yesterday. You were buying out of the money Target.
Let's behave. Tom, I've just got a message. Lisa and I both got the same one. TK's Unreal Yield on Friday. Just a bit of a rebrand. And let's see, you could own this one into the summer. I'll do Summer Fridays for the rest of the summer, and you can do TK's Unreal Yield at 1 p.m. Eastern Time.
Everyone can watch.
You've gone so quiet. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. More problems for Credit Suisse. The Swiss lender has issued its 6th profit warning in 7 quarters. It expects a loss at the group-wide level and investment bank in the 2nd quarter. Bloomberg has learned that Credit Suisse is considering a round of job cuts, part of a renewed push to cut costs. The OECD says the world will pay a hefty price for the war in Ukraine. The organization slashed its outlook for global growth this year from 4.5% to 3%, and it doubled its inflation forecast to nearly 9% for its 38 member countries. It is a widely awaited study on the Omicron variant that could pave the way for another round of boosters in the fall. Moderna has said its COVID vaccine that targets Omicron generated a superior immune response against the variant compared to its original shot. The trial is one of the first to examine whether Omicron vaccines may offer better protection against the strain. In San Francisco, residents voted to recall Progressive District Attorney Chaser Bodine. Bodine tried to reform the criminal justice system, but critics accused him of being too soft on crime. About 60% of those voted favored ousting him. He will be replaced by an interim district attorney chosen by the Mayor London Breed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
How can your bold vision be transformed into long-term value? Is your strategy ambitious enough to drive transformation at scale? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Realize your transformation with EY.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Every day, big decisions are made without full information. Overloaded by data. Compounded by complexity. Better decisions are made in the light. With clarity and confidence.
Aon is in the business of better decisions.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours, too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
Healthcare professionals agree that sleep impacts everything you do. Chiic's performance sheets are engineered to keep you cool, dry, and comfortable. Chiic's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chiic's now.
Go to trychics.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trychics.com now.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
January of 2020, we were carrying about 3.4 million people. By the time we reached April, we were only carrying 11,000 people. Huge drop. It was really challenging, and the first thing, of course, is cash, because we were burning 300 to 400 million a month.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
For the Fed, I think that they recognize, look, they are missing on their inflation mandate. They need to get that under control. They're going to be hiking reasonably aggressively at least the next 2 meetings, and then probably guiding the market to expect further rate hikes.
Mark Cabana there of Bank of America from New York City this morning. Good morning. Futures are lower by 1/3% on the S&P, and the NASDAQ 100 down 1/3% also. Special programming announcement coming up on Friday. 1 p.m. Eastern time.
You're killing me.
I've got a team to make the graphic, Tom. There we go. TK's Unreal Yield coming up at 1 p.m.
That photo,
Eastern time.
Nixon was president when that photo was
taken. That was a special photo, Tom. You know, just to encourage you. The big debut coming up on Friday. And through the summer, until Labor Day, this will be every single Friday at 1 p.m. Eastern time.
He's going to walk off set.
As I just get a bit of rest and get ready for the end of the year, Tom.
Okay, we're going to talk economics right now and save the show. But first, with David Blanchflower of Dartmouth College, I must ask, Paige is out saying that Gareth has to play regular games to get to the World Cup for Wales. I mean, it sounds to me like he's destined for Cardiff. What do you think?
Sounds like it. We survived this year, but Wales into the World Cup seems quite a big deal.
Are you willing to donate some money here for Cardiff to play the big ticket for Mr. Bale versus going to the Tots?
He sounds pretty expensive to me. You and I will send him $20.
Yeah, John, pick it up here. You know.
Oh, you want me to get us out of this?
Yeah, well, you know, that's the only reason I had Danny,
let's start
to talk about Cardiff.
I think where you've been tremendous over the last 10, 15 years, particularly, is to provide this different perspective to the consensus view. You did that in the previous cycle with the labour market. Everyone used to talk about a tight labour market. And by the time we got to the end of that cycle, a lot of people looked back and said, maybe not. You're trying to do that again. I wanted to start with a data point, and that was the amount of credit, the amount of borrowing that consumers are making at the moment. What do you make of that, and what does it speak to?
Well, obviously, the starting point is mortgages are now obviously pretty high, and we're seeing slowing in applications, and presumably we're seeing slowing in that housing market. I mean, the other part of it is presumably what we're seeing are people being stretched. And you might expect as they're being stretched that they resort to credit cards and, trying to pay the bills as they go. So I'm not exactly sure what to make of it. I mean, I think the answer is that, down the road, we're probably going to see some defaults. But I think your point is good in the sense that much of the discussion that I hear is really quite unbalanced. I mean, we're hearing all the conversation about the Fed's going to, the last commentator, the Fed's going to do two rate rises and so on. Well, that's fine. It really depends, however, on the data. And I think something that really sets us going is the OECD forecast this morning, which again, to me, looks really too optimistic. But they cut the global growth forecast from 4.5 to 3. And it certainly looks to be too optimistic. So I think the evidence going here is that, we're going to wait and we're going to look at the data. But I think everyone seems to be saying the same thing. And there's a clearly credible argument to make that output is going to slow much quicker than you think. It's time to sit and watch and wait. And essentially, that's the position that the ECB and the Bank of Japan have taken. So I don't think we've seen a very balanced discussion. I'm not saying I'm right.
Danny.
But I think, go, Lisa.
Let's just clarify this for a second. What is the correct policy prescription in your view? Is it to not raise rates at all anymore in the Fed, by the Fed?
No, I think the answer is that we really have no idea. We have no historical precedent on what to do. There's no data points. Perhaps the only data points we have are 2008 and 1929. And so we really have to be dependent on a set of scenarios. Scenario 1 is inflation keeps rising. Scenario 2 is COVID moves onwards. Scenario 3 is output collapses. People start to default on things. Depending upon those sets of scenarios, we would have to respond. The Fed has to say we're dependent on the data. And my view is that it's perfectly feasible to argue right now that rate cuts are on the table. I mean, one possibility is they're on the table. We'll sit and we'll wait and we'll watch. But suddenly some bad data comes and all the commentators saying they're going to raise X times and so on, and we know what's coming. And the only issue is whether it gets to 4% or 3%. Well, that depends on the data. And the first thing to say today, the OECD realizes that they got their output call wrong. And I was looking at France. They're forecasting positive growth for France, the weakest for the UK. They all look overly optimistic. France has just had its first quarter GDP reduced from 0 to negative 0.2. So are you really going to argue that it's all going to be just fine in quarter 2, quarter 3, and quarter 4? I think the answer is we really don't know, Lisa. We really don't know. And to actually argue we know what's coming is just a wing and a prayer. We don't. There are counter arguments on the side that the labour market is much looser than you think. I have strong views about that. I think it is. I think people have completely got the labour market wrong, as I've said for a decade. I happily talk more about it, and I've been thinking and working a lot more recently.
But Danny, do you think that the reason why the Fed is taking the approach that they have is because it is politically infeasible for them not to come out with a much harder line, despite the fact that, as you say, there could be a more material slowdown, but right now that is not the main economic problem facing the U.S.?
Well, in a sense that, I mean, you may be right, but the reason that you have an independent Fed is to try and cut through that political push. I would have liked to see a more balanced discussion on the one hand, on the other hand. I mean, yes, you argue that politically, but that's the reason you have an independent central bank to say, hang on, folks, we're going to cut through the political rhetoric. We're going to cut through what politicians want us to do. And we're going to try and look at the data and understand what's going on. And I don't really see that. I mean, I think if you go to the UK, the votes on the MPC for rate rises last month and 3 people wanting more, a meeting coming next week. And basically, there is a counter argument to say that you shouldn't raise at all. So I'm not saying that you shouldn't, but I'm just saying that the argument is much more balanced. Output potentially is going to fall. And the big thing we know is that at points where return downs come, the revisions get you. So the consumer confidence data around the world is predictive of recession. It's predictive of recession in the United States, in the UK, in Japan, and in Europe. Now, you can ignore it, but this is the best data we have, and it just strikes me that all of these folks may be politically being pushed there, but they're being pushed into making an error. And what you need to see is a balanced discussion saying, on the one hand, the consumer confidence data are saying this. In Europe, we've certainly seen a collapse in the last 2 months. Collapse in people's views about their financial situation, collapse in consumer confidence, which and we know with Christine Lagarde and the ECB is taking very seriously. So if they're taking it very seriously, why is there not a serious discussion at the Fed? The worry is the Fed is beaten by events, and it starts to see some horrible data that it's really not prepared people for. Horrible data on the real economy, on the labor market, on output, on retail sales, on defaults.
Yeah.
So I think it's just we need to balance this discussion, and I certainly think that if you look at the FOMC and you look at the NPC, the discussion is unbalanced, and that's potentially dangerous.
Danny, one thing we can agree on, groupthink is deadly.
Yeah.
It's great to catch up, buddy. Good to hear from you. Danny Blanchflower there of Dartmouth. TK, a lot of groupthink through much of last year, and some people might argue that's why we are where we are.
I would watch the outliers from the groupthink, including this morning, dollar-yen, wow, 134.20.
Futures down 0.4% from New York. This is Bloomberg.
Another crazy day? Of course. You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want, your team, ours, or a mix of both, with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
Jacques Torres,
Nancy Silverton,
Ivan Orkin,
Kat Cora,
Jeffrey Zakarian, Chef Daniel Boulu.
The Michelin star experience in your home.
Best meatballs in the world.
I'm gonna treat myself and I don't give a damn.
Order today at goldbelly.com and get free overnight shipping anywhere nationwide.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for limited time.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Hi, I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
I've got a very serious question. Are you tired of worrying about hair loss? Are you tired of looking in the mirror and not loving the man you see looking back at you? If the answer is yes and you want to get your real hair back, I want you to take out your phone that I know is sitting right next to you and send that text down below to Bosley to get the free Bosley info kit. You're also going to get the $250 Bosley gift card. It is a huge no-brainer because Bosley is America's #1 hair restoration experts. Do you think these guys are happy they went to Bosley? Bosley uses the latest technology and science to give you your real hair back permanently. And that's a promise backed by the Bosley Guarantee. Guys, you deserve to feel incredible about yourself, and you deserve to have your real hair back. Bosley can make it happen. They're going to help you love the way you look. But you need to take action.
For your free information kit and free gift card for $250 off, text CHARGE to 642-642. Ask about the Bosley Guarantee. Text CHARGE to 642-642.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
From New York City this morning, good morning to you all. Your equity market looks like this, down 0.4% on the S&P, on the NASDAQ 100, down 0.4%. In the housing market, there's a canary coughing. It's not dying, but it's coughing, just a little bit. And you're hearing it cough just a little louder. Mortgage applications, Tom, down 6.5%.
Everyone's watching this. Of course, we turn so much in New York City to Jonathan Miller and Miller Samuel. But, John, it's a national study, and that's because of the fears here, the ramifications if and when it snaps.
And how does that fold over to the broader economy, Tom? Can you imagine a scenario where housing prices start coming down, but energy prices are still higher?
No, can't imagine that. But is it optionality?
Tough.
You got to look at it. Absolutely.
Difficult moment, TK.
No question about it. Futures in -18. Of course, Dow futures here -152. Right now with us on housing and a beautiful microanalysis he does, Ian Shepherdson, chief economist, Pantheon Macroeconomics. In your United Kingdom or in this United States of America, what's the #1 thing we get wrong when we analyze house price ascent and rental ascent?
I think the problem is that people look back instead of forwards, because especially in the US market, we get a lot of information telling us about where housing is going, but markets tend to focus on things like the home sales and home price numbers, which kind of tell you where we've been. And the mortgage numbers that you just mentioned are a great indicator of where we're going, and they are horrific, even though... If we look
define horrific. That's a large phrase for Shepherdson.
Okay, so they peaked in December, and by May they were down about 25% from the peak. They're still falling, so this month, June, by mid-year, we'll probably be down about 30% from the peak. I don't want to annualize that, it's too scary, but it points to a massive fall in home sales, which is already underway, especially in the new home sale market.
I have the clearest memory of 05 or maybe middle 06 looking at the potential mean reversion of housing prices. And we had a very mean reversion of housing prices. I believe that was the year. I could be off by 5 years. Are you looking at this? Is it a mean reversion or more of a housing plunge?
This is more of a volume plunge story. So yeah, what we saw in the great crash was a huge wave of forced selling from people whose adjustable rate mortgages reset when the Fed went from 1% to 5.25. They couldn't make the payments. We had a wave of forced selling, plus all the new buyers disappeared. So prices completely crashed alongside volumes. This time's different because we haven't had an adjustable rate mortgage boom over the last 10 years. So all that's happening is that the new buyers are disappearing, but they're disappearing at such an incredibly rapid rate that the market is going to move downwards in volumes very, very quickly. We're already seeing it in new homes. We'll see it in existing homes over the next few months. And it's possible that that speed of that drop in sales is enough to trigger maybe a short-lived decline in prices rather than a sustained multi-year crash like we saw back then. But the psychological shock of seeing home prices go from plus 20% just to, -5, I think would be quite big. And the other thing I have to remember is that if we're going to see a really big drop in home sales, then everything is connected to that. A lot of retail sales, building materials, furniture, electronics, appliances, all of this stuff tracks home sales. All of these businesses are really going to suffer when the volumes drop by 30%.
Yeah.
This is underway now. The process is just beginning.
Ian, that's where I wanted to go. As a tea leaf, as some sort of canary, what does this serve in order to say about the pace of the potential, I don't want to say downturn yet, because perhaps that's too dramatic, but just slow down in economic growth in the United States?
Yeah, this is an interesting one because, housing, when it crashed in 05, 6, 7, 8, was the whole economy. And it pulled the rest of the economy to pieces with it for years. This time around, I think it's much more kind of siloed. So I think it's entirely possible to have a housing rollover without the rest of the economy following suit. Now, this is, not something that we've seen frequently, but it's possible this time because the circumstances are so different to anything we've seen before. So, we've still got consumers sitting on $3.5 trillion of excess cash, which they seem, at the moment anyway, to be quite happy to run down every month in small increments and keep the retail sales numbers going. And remember, consumption is nearly 70% of GDP, and housing is 5, 6, 7% of GDP. So it is possible for housing to roll over and the rest of the consumer to keep going, but, we don't know. And we've not seen this before. It's possible that the rollover in the housing market crushes confidence to the extent where people say, hey, I'm going to pull back on my other spending. But this is really uncertain, and what I think hasn't happened yet is this uncertainty has not permeated through to markets or through to the Fed in terms of their interest rate discussions, where housing still doesn't really get a mention. But I'm pretty sure over the next few months, maybe as soon as the June meeting, but maybe we got to wait till July, September, they're going to have to acknowledge that housing is not just softening around the edges, it's actually rolling over, and that rollover is going to really make the policy conundrum even more difficult for them. So this is a real potential threat to this 50-50-50 idea that markets have got very deeply embedded, and I think we're going to have a rethink. Now, I don't know about the timing or the extent of this rethink, but I'm pretty sure it's coming because we can't just ignore a housing meltdown on this scale.
Yeah, and here's the problem for the Federal Reserve. They wanted tighter financial conditions to bring down inflation. A key component of inflation is rent. Rents have increased dramatically. It's not clear that it will immediately send rents lower if you do see a complete loss in the momentum in the housing market. How much is that part of the problem, that rents are going to stay high and even go higher, even if you do start to get a deceleration, even a drop in housing prices?
Yeah, this is an issue for them because even if prices drop tomorrow, I wouldn't expect to see that filtering through into rents until next year. So they're kind of stuck with that for the foreseeable future. The silver lining for the Fed here is that wage growth is actually a bigger driver of rental inflation in the CPI than home prices. And wage growth, I think, I'm pretty convinced now is moderating. It isn't weak, right? but it's certainly a lot less dramatic than it was maybe last summer, where we saw annualized numbers like 6% plus. We're now down maybe at 4%. So that might give them a bit of relief, but it is going to be awkward for them because that rent component is slow moving and it lags, and it's 40% of the core CPI. So this is they're going to end up having to perform a sort of a juggling act here, whereas at the moment it's very easy. We just bang the table and say we're going to be raising rates to dampen down inflation. That's just like a straight line narrative. It's going to become much more fuzzy and much more difficult and much more multifaceted as the summer goes on.
What's important to me, Ian, is the job formation out of the pandemic was remarkably linear, whether it's curvature, log, whatever, but it was step by step by step, beautifully sequential. I don't buy that on inflation. What point is where the next move down in inflation gets hard? Is it at 5%? 6% gloomy, or can we make it to 4% before we really have a challenge to drive inflation lower?
Well, a great deal depends on energy prices, which I'm just going to put to one side and call it a wild card because I don't know where.
Well, take core. Let's work off core. 6% right now.
So if we look at the core, I think we've already seen a moderation in some of the components which are not really sensitive to COVID and are more sensitive to wages. So, airline fares are still going crazy, but that's a very small component. You look at the bulk of it, that moderation in wage growth, I think, is already beginning to creep through at the edges. So it's hugely dependent on the view that you take of the labour market. Now, right now, the numbers are all over the map. We've got, 11 million job openings, which is a ridiculous number, 2 to 1 with the number of unemployed people. Yet wage growth is already moderating. Now, which is going to become the dominant force over the next 6 months? I just don't know. I've got no precedent. I can't point to a previous experience and say, well, the last time this happened, the outcome was X. There is no last time. But if the wage numbers do continue to moderate and we see just a leveling off in energy prices, then I think we can see inflation early next year getting really back down to some quite low levels, which will kind of transform the policy debate. And hopefully, if the economy hasn't rolled over by then, people will be starting to talk about, well, hey, maybe this expansion is going to have some legs. And we don't need to think about a recession in 23 or 24. Maybe we can look at a cycle more like the late 90s, which lasted for several years, despite, substantially higher interest rates than we have now. But this really is an exercise in threading the needle, kind of in the dark, wearing gloves. It's not easy.
Ian, being in the dark, what's your highest conviction right now in terms of what we expect to see through the remainder of this year?
Well, first of all, housing is going to be the talking point in the second half of the year because it's to me, this looks like a total disaster area, really coming up very quickly. And the second thing is that I'd be amazed if the Fed is able to go 50-50-50 at the next few meetings in a straight line and without any pushback from markets and without any acknowledgement of what's going on in the housing market. The third thing I'd say is that the rest of the economy, to me, actually looks pretty good. We've got threats from every direction. We've got China's COVID mess. We've got the people at the bottom end of the income scale being squeezed by gas prices. We've got higher food price inflation, but we've got consumers with $3.5 trillion of cash in the bank, and that, to me, keeps most of the spending going, even if housing rolls over.
Ian, thank you, sir. Great to have you with us in New York City. Ian Shepherdson there of Pantheon Macroeconomics. Greg Jensen of Bridgewater out with an interview in the Financial Times this morning.
Yeah.
Here's a quote for you. They may tighten in a very strong way, which would then crack the economy and probably crack the weaker companies in the economy too. Tom, they're betting on a sell-off in corporate bonds in Europe and in the United States.
That's a discontinuous feel of going from point A to, say, point K, and along the way there'll be massive data dependency, which will allow the Fed to adjust. They're not going to do it in a big jump condition. They're going to be massively data dependent and adjust as they go.
It is the last 10 years, Lisa, in reverse for policymakers on so many fronts.
Greg Jensen is not alone, and I was referring to that Deutsche Bank report also talking about more defaults to come in a real default cycle. How do you parse out what corporate credit is worth at a time when suddenly 10-year Treasury yields provide actual yields, right? Where all of a sudden the Fed is not about giving a put or trying to calm markets, but to actually get things a little tighter. This is uncharted territory, and people are trying to understand what the corporate credit market used to look like and transpose that into the size of what we're looking looking at right now?
Toxic brew.
Toxic brew, Tom.
I'm not saying that you come
Brahma,
to
you've been
me
asking about this. I agree.
on higher corporate credits. I'll give
Totally.
the argument.
Totally. And you've been asking for this for a long time, just reintroducing a little bit more price discovery.
I'm not asking for it.
You've been saying we need a bit of price discovery in the market.
People are worried about zombie companies getting money that don't deserve it. And that's basically the fear. And are we going to see a reversion to some sort of lack of that free money? And what does that look like?
I agree with you. I'm not sure why Tom's being so mean this morning.
Well, just,
I
you know,
don't know
I'm
what it's
toxic
about.
brew dependent.
Just getting ready for Friday, Tom. At 1 p.m. Futures down 0.5%.
Oh,
yes, you're furious about that. And the NASDAQ down about 0.5% as well.
My scheduler did not. You know, I got a staff of 14, John.
Not going to work out.
The scheduler, we're going to get an intern. The scheduler's gone. We're getting an intern in.
You do it on location, Central Park with a cigar.
Great. I was thinking
you'd do it. I'd watch that.
Can I do it at the bar at Benoit?
Of course. Judy Bill coming up. Michael Contopoulos, David Stubbs as well in the next hour on Bloomberg TV. From New York City, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Credit Suisse is considering a round of job cuts after warning of a second quarter loss. Bloomberg has learned the cuts would be spread across divisions, including investment banking and wealth management. It was Credit Suisse's sixth profit warning in the last 7 quarters. Former German Chancellor Angela Merkel warns that isolating Russia isn't possible long-term. In her return to the public arena, Merkel said in an interview that Vladimir Putin made a big mistake by invading Ukraine, but she said there's a danger of Putin forming an alliance with China if he does get boxed in. Microsoft is joining the list of prominent tech companies cutting back in Russia following the invasion of Ukraine. The company says it will significantly scale down its operations. Microsoft had already suspended new sales of products and services in Russia. More than 400 employees will be affected. In LA, a billionaire developer will take on a veteran politician in the race for mayor. Rick Caruso will face Congresswoman Karen Bass in November. Caruso won 41% of the votes in yesterday's primary, while Bass won 38%. Both are Democrats, although Caruso is a former Republican who did not switch sides until January. And the son of the founder of Walmart, Rob Walton, is leading a group that has agreed to buy the National Football League's Denver Broncos. ESPN reports that the Walton Group offered almost $4.7 billion. That would be the highest amount ever paid for a U.S. professional sports team. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
I'm always shopping The RealReal. They drop over 10,000 new arrivals every day.
From luxury brands I'm obsessed with.
Gucci, Rolex,
Prada,
Louis Vuitton,
Hermes, Cartier, Tiffany. All up to 90% off retail.
And I love that it's been authenticated.
No one else can say all that.
Because no one else does it like The RealReal.
Thousands of new arrivals daily. Up to 90% off retail. Endless luxury. The RealReal. Shop now and get 20% off at therealreal.com. Terms apply.
Take the world by cloud. Accenture, let there be change.
To adapt in a fast-changing world, you could hire a professional pit crew.
All right. Oh, okay.
They deliver real-time data and business forecasts when you need it.
I think it was fine how it was.
To help you stay ahead of the curve. Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster.
On the other hand, we had a great fourth quarter.
For an accelerate your decision-making world. Workday for a changing world.
Bitcoin in your IRA? It's possible with symbol GBTC. Grayscale Bitcoin Trust, the world's largest Bitcoin investment vehicle. Type GBTC into your IRA account to invest today. Grayscale, building the future of financial legacies.
I'm always interested in the idea that where we are really defines our kind of outlook and the way that we engage with the world.
Which world do you live in?
We all live in our own worlds. There's no reason to think of virtual communities as in any form lesser than a physical community. They are open in a way that doesn't mean you need to travel somewhere.
Hyundai Motor, connecting art and technology.
You may think every weather app is the same until you see WeatherBug over-deliver on so many layers. With millions of 5-star reviews and more free map layers than any other weather app, WeatherBug warns you the moment lightning strikes near you, prepares you for your commute with road conditions, routes, and even cameras. With everything from pollen and air quality to severe storm risks, radar, and satellite coverage, WeatherBug protects you from the unexpected. Used by over 10 million and counting. Download the WeatherBug app today for free.
Every day, big decisions are made without full information. Overloaded by data. Compounded by complexity. Better decisions are made in the light. With clarity and confidence. Aon is in the business of better decisions.
What these companies are doing is acknowledging that there is weakness ahead and that you have some companies that are saying, you know what, we're not even going to offer guidance because we just don't know. So I think that what is happening is that you are continuing to see that floor be revised downward, but I don't think that ends up being a very solid floor.
Sam Stovall, just brilliant yesterday with CFRA on free cash flow and the use of cash of corporations off the shock of Target yesterday. Really no equivalent today. Futures at -18 and the VIX, I'm going to call it quiescent, 24.61. On the turmoil of Japan, Kriti Gupta.
Thomas, the dollar-yen hits 134, of course, off the comments coming from Governor Kuroda saying that monetary tightening is not suitable here. We have to look at the ripple effects, and that's really brings me to my chart of the day. You have the offshore yuan relative to the Japanese yen, and a massive, massive shout out to Cameron Krice here. And here's why. These are both major Asian exporters, both major net importers of oil, and both are getting hurt by higher commodity prices. Both are also competing to export to the rest of the world. The significance here is when this currency pair, once again, the offshore yuan relative to the Japanese yen, hit that 20 level back in April, and then going further back in 2015, it has created some devaluation in the yuan. In fact, back in April, when it hit that 20 level, the dollar versus yuan started fixing higher, once again speaking to the fact that they are looking to compete more with the rest of the world, specifically with Japan. So when we're talking about simply how much exports are going to cost and how much weaker the Japanese yen or the Japanese yuan could get, keep an eye on this currency pair.
Kriti Gupta, thank you so much. Greatly appreciate it. We pulled him off of a beach. Damian Sassauer joins this morning with Bloomberg Intelligence on emerging markets. Damian, is Japan an emerging market? Is their central bank theory so screwed up that they're literally EM-like with their zombie companies and their completely illiquid bond market?
I don't think they're EM-like at all, but what I do think is the impact that Japan is having on emerging markets, most specifically China, and Kriti alluded to it, is significant. I mean, look, Japanese exports are weakening. They're becoming more inexpensive in the broader market, and that is definitely going to weigh on the China yuan, the Korean won, and the rest of the Asian complex, and we're seeing that.
Are we at a tipping point? A lot of people we've talked to have said 135. We're advancing weak yen to a 135 level right now. New high, new weakness for the day. Yeah. 134.29. Do you have a 135 as a Sassauer radar? Or is
140, 150, oil at 200. No, I'm kidding. I mean, these are big numbers. I mean, it's very difficult to pinpoint a number.
What is the big number for their institutions where they blink?
I think we've passed it. I mean, I think we're far gone. I think where the yen is, there's really no top to it now. With 20 at yuan yen, with 135 at dollar yen, I mean, no one really knows where the top is in many of these markets. And so the market's going to pull on that thread. You take what the market gives you. And right now, the path of least resistance is to short the yen versus all G7.
Damien, on a credit perspective, there's still concern about what's going on with China and what the slowdowns, the lockdowns, the reopenings mean in terms of the entire region and the exports we saw fall off a cliff to the United States from China. How are you gaming out where China is and what the next shoe is to drop when it comes to the bleed-through effects on the rest of the developing world?
Well, the next shoe to drop, Lisa, is total social financing. We're going to get that print this week. We know what happened last month. The market was calling for 2 trillion yuan of liquidity injected into the system. It came in with less than $1 trillion. And the problem really is that Chinese banks, it's not that they don't have the cash to lend, it's that there's no demand for credit in China because of the lockdowns. Right now, hopefully that's changing, right? We saw the PMIs improve a little bit last month, but we're looking to that TSF figure. I mean, we're looking for new yuan loans. We're looking for loans to medium and small households. We're looking for a big number of over 2 trillion yuan. And even if we do get that, they're going to run into a liquidity crunch come June, July, just based on some of the back of the napkin numbers I'm looking at, Lisa. They're going to have to cut the RRR rate. And, you know, we only saw a 25 bip cut last time. It may need to be more than that.
Have some of the Southeast Asian trading partners with China and frankly the rest of the world really factored in perhaps a 3 handle on the GDP print from China, even if it's not said by officials, if it's something like that in real terms?
Well, I mean, forget about the Asian complex. I mean, just look at what's going on out along the frontier. You've got Sri Lanka in default. You've got Nigeria and Kenya who are going to have to devalue their currencies pretty significantly. The Pakistan's looking for an IMF loan. I mean, El Salvador, I mean, my goodness, they have a Bitcoin bond that's coming due next month, $38 million coupon payment, and their Bitcoin that they bought in the market over the last few months is down 40 million. So how are they going to make that payment? I mean, these are the issues that are really front and center for me across emerging markets. The Asian complex is managing really, really well. The inflation impulse in Asia is far less than we'd seen in other regions, specifically Latin America. And so, you know, they're able to weather the storm, at least in the near term. I'm talking the Philippines, who have already started tightening, and others like Malaysia.
Oh, come on, Damien. I'm looking from call it an 80 to a 134 on yen. Is Japan devaluing their currency? Is that the end strategy? Is that the leakage out of the steam kettle of this fictitious fiscal effort?
I mean, that is
it's a devaluation.
It's a devaluation, absolutely.
President Trump, if he was president, would be out on Fox this morning screaming bloody murder about this.
Tom, you sit up here all day long talking about how central banks target unemployment and inflation at the most fundamental level. They're targeting currencies, right? Because without currency convertibility...
What is the ramification to the people of Japan, or frankly to Toyota, of a forced depreciation of the currency over decades?
A lot more tourists. No, I'm kidding. I'm joking. But, you know, truthfully, that's what they're kind of leaning on, is the fact that they're going to see more people coming into Japan, more people spending money in Japan, more people kind of seeking out Japanese goods and services. And so maybe that is kind of the competitive devaluation that we're in the midst of.
Lisa, this is like kryptonite, the way Sassauer's doing this. Do you realize, Lisa, and for those of you on radio, Sassauer's wearing a New York Yankees tie? And he expects
I didn't even know that.
To concentrate?
I don't think anyone's expecting that. I do think that the yen right now is a major issue, and I do wonder what it means in terms of central bank action, at what point policy prescription has to change. Damien Sassauer of Bloomberg Intelligence, thank you so much. And on that point...
Are you serious? The yen matters because the Red Sox need middle relief.
Hey, look, I just have to jump in here. Please. I mean, the Yankees have the best record in baseball, the best record since 2001, and we have Nestor Cortez on the mound tonight. It's going to be phenomenal.
Can they stay healthy? Damien, it's unbelievable what they've done.
Yeah, unbelievable.
It's unbelievable.
But you don't watch baseball anymore. You only watch the National League.
I watched National League, but they even ruined that. You know, I watched some Cubs last night. Hi, Lisa.
How's it going?
It's going good. Damien Sassauer, thank you so much.
I was trying to make a point, actually, about when policymakers' hands were going to get basically called. And we're seeing that with China with respect to reversing some of the tightening in financial policies, and they're trying to loosen them up a little bit more. And how much have we really seen the peak tipped in Japan as well?
I would say, Lisa, you just don't know when it's going to push, but it just keeps going. The vector of Turkish lira, 117.19. I made a joke. Lavrov's going to show up at 17 and leave with an 18 handle. And I'm sorry, I go back to the elephant in the room, which is through the show this morning. Lisa, yen has moved out 134.37. What are they going to do? Turn purple at 135?
When do they start to care? When do they start to realize that this is increasing their imported inflation in a dramatic way?
They won't show that they care. They'll just fix it. And how they fix that is fascinating. We'll unfortunately have to have Damian Sassower on with his Mets tie tomorrow. We will continue, folks. Futures at -21. Need to stay with us this morning. This is Bloomberg.
Time for our summer sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable, and to help you get almost 30 minutes more restful sleep per night. And now save up to $700 on select Sleep Number 360 smart beds, plus 0% interest for 36 months, only for limited time.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
Selling a home is expensive and stressful, so we created our smart seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed in the fact that my house sold in one day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commissions. The process was as easy as it gets. They are the #1 way to sell your house.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
There's a reason big dental bills often come as a shock, because sometimes you don't realize what's not covered until you get the bill. That's why affordable dental insurance from Physicians Mutual is important. It can give you benefits that go beyond what you get from more limited coverage plans. Because no one likes a big dental bill, especially if you're retired or on a fixed income. For a free information kit, call or go online now. This isn't some discount plan or preventive-only coverage. This is real dental insurance that helps cover over 350 procedures, like cleanings, fillings, crowns, bridges, root canals, even dentures, at any dentist you want. Dental insurance from Physicians Mutual Insurance Company helps cover preventive care, basic work, and major procedures, with no deductibles and no annual maximum. For your free information kit with all the details, call now or visit sendinfokit.com.
Physicians Mutual, Physicians Mutual.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Imprint, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
Live from New York City this morning. Good morning, good morning. No real drama in this equity market, down just a little bit, off by 0.5%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, the downgrades piling up.
We downgraded our stance.
Expect downgrades.
Of course, the situation is quite challenging at the moment.
Sentiment probably has, hit peak bearishness.
Yes, we're squarely in a slowdown.
We have all the components in place that would make that happen.
There's a lot of tightening priced in.
At some point, demand is going to start to respond.
Everybody's concerned about what the next 12 to 18 months will bring.
Global growth will continue to slow.
We have two problems, inflation and supply.
It's a tale of two halves.
The second half of the year does slow down considerably.
We need to get into Q3, see what happens.
Definitely a slower trajectory in the second half of the year.
Joining us now to discuss, Julie Bill of Kane Anderson Rudnick, Mike Kontopoulos of RB Advisors. Julie, I want to come to you. Typically, and forgive the sarcasm, the snark, when the OECD and the World Bank starts catching up, you're meant to start looking the other way. Julie, are we at that point yet?
I don't think we're quite at that point yet, because I don't think it's clear exactly how the consumer is turning out right now. It's just, we need a little bit more time and a little bit more data. We have so many factors that are making it very hard to understand exactly where we are. We don't know where we are in terms of supply. It seems like we're going to be choking on a lot of inventory. We don't know exactly where we're going to end up on rates. And I think the employment picture is starting to get a little bit more complicated. We're hearing so much about layoffs in Silicon Valley, and the question is, will the frontline work continue to be strong? I think that's where we need to focus our attention.
Michael, what's your take on this?
I think, Jonathan, that the growth story still remains intact. We are seeing obvious signs of plateauing in some of the signals out there, but there's nothing suggestive of a near-term recession. The consumer is very healthy. PMI surprised to the upside. Continuing jobless claims are very, very at a very great point right now. Obviously, unemployment is incredibly low. I always, throughout my career, I've always learned that when you get the reports of layoffs in the paper of individual companies, you're supposed to look the other way, because of course everybody always, reports on the layoffs. No one ever reports on the hiring. So I think we need to see a lot more data before we sit here and call it a massive slowdown in the economy. And in fact, as I've said before on the show, I think most likely the economy can handle much higher rates than what's appreciated, because the consumer is in such good shape. The transmission mechanism of higher rates to the real economy is not what it once was. Corporate balance sheets are strong. So, we still think there's room for the economy to run. Of course, that doesn't necessarily mean risk assets, outperform, but we do think the economy is in fine shape right now.
Julie, let's talk about that consumer. I know what you're worried about, and you've said it. I've read your notes. The tsunami of inventory hitting just as the consumer weakens. Is that a problem for certain retailers or a problem for the whole of this market?
Well, in the U.S., the consumer drives a lot of the market, so it has implications for the rest of the economy, but for retail in particular, it's a really big problem. If Target, a company that's at large and usually quite adept at managing its inventory, is choking on its own inventory, and we still have a large backlog of ships in Asia coming towards us, that's going to hit right when there's the core back to school and holiday season. That's when retailers really make their money. So I think there's nothing but trouble ahead for retail right now.
Julie, talk to me about that inventory story at the likes of Target, though. Did you see that as a sign of weakness or a sign of bad execution, bad management because of a shift in consumer preferences?
I think it's both, right? I think when a lot of inventory is ordered, you have to think about it, that's 6-9 months before it actually hits stores. So, 6 to 9 months ago, gas prices were very different than they were today. And, we still had the underlying effects of stimulus and a lot of pent-up demand. I think numbers will actually look pretty good through the summer, because the pent-up demand for travel is going to be a nice boost to the economy. But then I think when it's time for back to school and holiday, it's really going to get kind of ugly.
There's an inflation story here as well, Michael. I'd love your input on it. You've got the goods side with some disinflationary forces here with this inventory build-up that Julie's speaking to. Then on the services side, you've still got that pent-up demand. How do you think one offsets the other through the next several months, through the rest of this year?
We certainly still have the huge pent-up demand on the services side, but you also have the war in Russia and Ukraine that's causing oil prices to spike, food inflation to remain high. I mean, you look at commodities still remain at an all-time high in terms of prices. So inflation is real, inflation is alive. It's not just one area of the economy that you need to pay attention to. It's really very broad-based. Wage growth is still strong. Housing prices are still very, very high, owner's equivalent rent. But then you also have the big secular issues, right? Deglobalization, an aging demographic that's actually drawing down on the global stock of savings and spending that into the real economy, that actually has an inflationary impulse. So I think inflation is here to stay. There's certainly reasons maybe to expect that we're near the highs. I wouldn't necessarily say we've peaked quite yet. Maybe we have, maybe we haven't. But I think there are lots of reasons, from commodities to wages to rents to the sort of more secular factors, to expect inflation stays where it is. You might get a little bit of shifting of inflationary pressures from goods to services as well. But I think at the end of the day, it might be closer to a wash than most expect.
25 minutes out from the open and bow, futures down about 0.5% on the S&P, on the NASDAQ 100 down 0.5% also. Yesterday, the World Bank cutting its growth outlook to 2.9%. This morning, the OECD joining in, looking for a three-handle, just about 3% is their outlook. Katie Lyons, a big cut to the outlook from them.
A big cut, 1.5 percentage points at a global level. And when you look, there actually were some larger cuts for individual countries themselves. For example, the U.S. cut down to 2.5% growth for this year. For the euro area, cut down to 2.6%. And China, they say, is going to grow only 4.4%, which of course is well below Beijing's own target. Now, the organization is basically saying that the world economy is going to pay a very hefty price for the war in Ukraine, for supply chain issues, and of course, stronger inflation. And that is the other part of this, John. It's not just about growth outlook cuts, it's about inflation outlook hikes. The OECD doubling its inflation projection for its 38 member countries to nearly 9% this year. And of course, a large part of that driven by spiking commodity prices, oil front and center in that, with Brent up 56% just year to date. And of course, compounding, exacerbating that problem, the dollar hovering around 20-year highs, creating a huge problem for everyone trying to buy dollar-denominated goods. Oil, of course, is among them. When you put it all together, you've got hotter inflation and cooler growth, and a dilemma for central bankers who want to tame prices but also want to keep the landing soft. And looking at the bond market, you can see some concern around that, in that, yes, the 2-10s curve is no longer inverted, but still it's only in between 20 and 30 basis points, depending on the day. That is a reflection of the fear that if there's too much aggression now, it means a recession later. And we actually heard Ray Dalio out overnight in an Australian newspaper talking about stagflation, saying that, yes, now it's central banks hiking and tightening, but in 2024, it's going to be a story of easing and cutting because of that stagflation, John.
2024 is not that far away. Kelly Lyons, thank you. And this leaves the consumer trapped, getting squeezed. We've all seen it, haven't we, on the online shopping? You have the option, you're confronted with it. Buy now, pay later. Well, those buy now, pay later lenders are starting to feel the pain. The loan packages behind them are dropping in value, with new competition adding to the pressure as well. Shanali, we had to catch up this morning. What is going on, not just with the firm, but across this industry?
It's a great question, because the firm is still down pre-market today. As you've seen, it drop more than 75% already this year. Compare that with the PayPal, a little more diversified, but also doubling down on buy now, pay later, more than 50% decline this year. I'd love to tell you, John, that this is all about Apple, but you hit the nail on the head there. A lot of this is also the cost of financing. The securitization market hitting some pressure there, and of course that is going to impact a company like Affirm that funds about 1/3 of its loans through securitized lending. But there's also this broader push on Wall Street. For example, Wedbush initiating Affirm at an underperform, saying that they might get a better cost of financing by getting a bank charter. You've seen also even bigger firms like Goldman Sachs pushing into consumer lending to lower that cost of funding. The question is a bank charter worth it for a firm like Affirm? You had Jamie Dimon just a couple of months ago talking about how Affirm started as a hot buy now, pay later company, and then also expanding now into different products like deposits. And the question here is now, is that enough to get it through this very difficult cycle? Will there be a washout in this space as we see job cuts starting to come out at other companies?
Shanali, I imagine this is not going to be the last time we talk about this year. Shanali Basak there, our Wall Street correspondent. Judy Beale, I know you've got things to say, so here's your chance. What are your thoughts on what's happening here?
Whole wash of buy now, pay later is an interesting business, because you think about it, right? None of these businesses have been back tested in a recession, right? And they're securitized against things like sweaters. So how on earth should we expect these businesses to perform when customers suddenly can't pay, right? I think they're going to pay their utilities before they're going to pay for their sweater. So I think, obviously, as a long-term investor, we've never really been interested in these stocks, but I think there's a more core problem with these businesses, right? And that they're targeting young people, and young people are suddenly being told, okay, you can buy now, pay later on your sweater. Your student loans might be forgiven. please come onto Robinhood and trade on margin, I'm really worried about the financial health of the younger generation of consumers and the moral hazard that can be involved in that. So, for us, I think it's a concern because I think it would take years to repair some of the financial damages that have been done as many of these younger consumers have been overextended. And there's not a lot of financial education to really support them either. So we're definitely very concerned and obviously not buyers of Affirm.
Julie, it's a really legitimate concern. I'll give you another one in the market specific. Have we got a clean read on which companies this trend has been supporting? Because if this starts to break down, how much of the earnings of certain companies do we need to start to reassess?
Yeah, I think then we're back on retail, right? It's so many of these retailers jumped onto the buy now, pay later because, look, it's a great opportunity for them to increase their basket size. And I think, the economics of that business start to look really, really poor if suddenly there's levels of defaults. And I mean, I've been shocked to see how quickly, the Affirm loan book starts to look really poor. And that's at very high levels of employment and strong wage growth. And still people aren't paying for their sweaters.
Mike, they're not going to pay for their sweaters. That's probably not a systemic risk. What might be is something more broader. Mike, I'm often thinking about where is the leverage, where is the leverage? And I'm confronted by guest after guest who tells me consumer balance sheets, household balance sheets, they're strong. Corporate balance sheets, they're strong. If you think, Mike, where's the leverage right now? Where do you think it is?
I think there's the leverage is likely into the far sort of outer reaches of the private debt market more than anything else, right? If you think about what happened over the last 12 years, not just since COVID, but going all the way back to the global financial crisis, easy monetary policy, zero interest rates globally, at 1.27% of all fixed income assets having a negative yield. Generally low growth up until the post-COVID years. All of that incentivized a tremendous amount of risk-taking, a tremendous amount of re-leveraging on the private side of the economy, the shadow banking side of the economy. And so I think that's probably where the leverage is hidden, more so than in public companies and even on the consumer side. That's where we are.
Mike Kontopoulos, Julie Biel, sticking with us. Futures lower by 0.5% with some movers. Here's Abby.
John, well, one of the top sectors on the year outperforming the consumer staples space, and we have an example of why. Today we have the shares of Campbell Soup popping higher this on a much better quarter than expected. The stock up more than 2%. They beat. And it's interesting because higher prices lifted their sales. Prices that consumers are paying for the likes of Goldfish, their soups. Interestingly, organic sales were up even more, up 9%. Sales guidance was strong, and the company said that they expect demand to remain strong. So here's a place where consumers are really absorbing higher costs. Novavax up 8.3%. Their COVID shot has gotten the backing from the FDA advisory panel. A bit of a different delivery mechanism. Some have said that it could be very good for the booster, so those shares up 8.5%. To the downside, not by a huge amount, but we have Meta Platforms down 0.5%. The reason we're talking about it, John, this is the last day it will trade under the Facebook, the FB ticker. Tomorrow it will be under the Meta ticker. And then finally, Carnival down 2.4%. Morgan Stanley has turned a little bit chilly on the cruise line companies, cutting price targets across the board, saying that there are weak channel checks, growing macro risks, and rising debt costs. And Carnival is maintained at an underweight, John.
Abby, thank you. I will continue to call it Facebook because I still call Alphabet Google too. Abby, thank you very much. $4.96. $4.96 is the average price for a gallon of gas in America right now. And the Biden administration knows it's got a problem.
Bringing inflation down should be our #1 priority, and President Biden has indicated that it is our top priority.
That conversation up next.
Countdown to the opening bell is brought to you by Workday, the finance, HR, and planning system for a changing world.
How will your business adapt to change? You could hire an office full of Peyton Mannings.
What's up, Peyton? Morning, Peyton. Hold for Peyton.
They'd huddle.
Welcome to the Peytonverse. Such a visionary.
Game plan.
You go. No, you go.
And call audibles.
Double our investment in Omaha. Omaha! 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 Omaha!
Or you could use Workday. Omaha. The finance, HR, and planning system used by over half of the Fortune 500 for a be agile like an MVP world. Workday for a changing world.
Every day, big decisions are made without full information. Overloaded by data. compounded by complexity. Better decisions are made in the light. With clarity and confidence. Aon is in the business of better decisions.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
Introducing Flippy, the world's first AI kitchen assistant. Let the robots do the robotic work, so people can do the people work.
When you use Constant Contact, prepare accordingly. Let's win this with email marketing and more to drive your business forward. Try it free at ConstantContact.com.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
But we're not going to give up on the congressional agenda. We absolutely can't do that. When families are facing exacerbated costs in prescription drugs and health care and education and housing, we're going to do everything we can to get Congress on board in helping the American people to face this inflationary challenge. They talk about it just as much as we do. They need to pony up on the policy side the same way we're doing.
The White House confronting a problem. Gas and diesel prices jumping to the highest on record with the midterms just around the corner. This as the latest polls show waning approval of the president's handling of surging prices. Bloomberg's Joe Matthew joins us now for more. Morning, Joe.
Good morning. It's interesting to hear the messaging come from this White House, Jonathan. It's morphed over time here. It's become more deliberate as the White House tries to draw a distinction between what it can do, what Congress can do, and then, of course, what the Fed is able to do. You heard Jared Bernstein talking there on the lawn of the White House yesterday with ideas here that the administration is hoping Congress will be able to pass what we like to call the Bipartisan Innovation Act. This is the big piece of legislation that includes the CHIP Act. That's going to continue here. It's been stuck in Congress, Jonathan, for the better part of a year. The administration also trying to revive ideas from Build Back Better, things like ideas to programs to lower drug prices, maybe to expand the child tax credit. And there is an expectation that the White House will go for, Democrats will go for reconciliation to try to do that alone on just Democratic votes. But you heard Janet Yellen talking there yesterday. All of these ideas come with a caveat as well, or a reminder is a better word to use, that this is a global phenomenon, and shocks from the war in Ukraine and, of course, COVID have brought us this far. But, of course, Jonathan, we know that we were talking about high gas prices, high oil prices, and inflation across the board before Vladimir Putin ever invaded Ukraine.
In a big way as well. Joe Matthew, thank you, sir, as always. Some of the numbers in the future. We've talked about the gas price forecast from JP Morgan. They say that this summer could get crueler. Their words. We could end up at $6 for your average gallon of gas in America. On crude per barrel, $1.40, the forecast now from Goldman for the third quarter, and they think we could be stuck with that kind of number out 12 months. They're looking at the second quarter of 2023 at $1.30. Judy Bill, you've noticed something interesting about the correction we've seen. That what's worked is low-quality commodity companies, and that's not normal. Can you walk me through your observation and why you might be leaning in a different direction?
Right. I think it's been kind of an atypical correction where, normally when people are concerned about a slowdown, there's a flight to quality businesses, ones that have really durable earnings that can do well, even in a difficult macro. But because this is an inflationary environment, they've actually moved towards commodity markets. For us at our firm, where our average time horizon is 5 years, I'm a little uncomfortable loading up on commodity costs when it's really tied to, Putin's midlife crisis. That doesn't sound like a great place for me to be putting all our money in. So we're more focused on those quality businesses, which are actually kind of on sale right now. You see them in some of the software names, but a name like Market Access and Financials, These are businesses that have a lot of earnings consistency, and that's what really gets rewarded when we are in a more uncertain macroeconomic environment.
I think a lot of people calling the commodity market need a therapist much of the time. Forecasting crude is really, really difficult. Mike Kontopoulos, can you make a call, though, that we've seen the high on Treasury yields without seeing a high on crude?
Well, I think that we likely have not seen the high in Treasury yields, and you know, it can be independent of what's happening in crude, quite frankly. You know, when you look at the government debt, there are four main factors to drive Treasury yields. You have inflation, which clearly oil is going to have an impact on, but you have economic growth, you have the size of the Fed balance sheet, and you have the federal funds rate. And we know all four of those factors are suggestive of higher, not lower yields. And I actually think that over the next several months, QT, in the process of no longer reinvesting the matured principal of the Treasury holdings of the Fed's portfolio, could cause some indigestion in the 10-year. So I think regardless of what happens with oil and inflation, you likely haven't seen the highs on the 10-year this cycle. And that, you know, you might reach there in the next 1, 3, 6 months.
Let's talk about that then, Mike, because I know where you stand on the front end of the curve. Your view on the Fed is that this economy is resilient, it can take a whole lot more, they've got more work to do. I get that. Yields up at the front end. What kind of numbers do you think this 10-year could challenge? 320, the high of early May. Where do you think this is going?
Yeah, I see no reason why the 10-year couldn't get to 350 at least. And then, of course, if you whistle by the graveyard and you don't go into recession at some point in 2023 or beyond, you certainly could go higher than that. But for me and for RBA, I think it's more about the secular shift of rates and inflation. You know, for 40 years, you had lower lows and lower highs as you step down with each economic cycle. And more likely than not, what you're going to have going forward are higher highs and higher lows on yields. And so, of course, during the next recession, yields will fall, inflation will fall, but coming out of that recession, they likely go higher than the previous period. And so for the current economic cycle that we're in, maybe it's 350, maybe it's 375. You know, it'll be hard pressed to get to 4, I think. But, you know, again, if this cycle has another 2-3 years from now to run, then you certainly could. So I don't think 320 or 317 is the high on the 10-year. I would expect, you know, 325, 350 as the next level to be looking towards.
Mike, just quickly, I think you've touched on the heart of the problem for a lot of people. Still now, there's a view that a lot of this is temporary, painful, but temporary, and that this can't persist, it will fall on its own weight. You're pushing back against that, aren't you? You think the dynamics we're experiencing now can persist for a whole lot longer than people think?
We truly believe that the 40-year and the 40-year bull market in Treasuries is dead. You know, it died 2 years ago. We hit 50 basis points on the 10-year, August 4th of 2020. It's been a pretty steady rise up. You know, Chair Yellen, I'll still call her Chair Yellen, she really disappointed a couple times in the last few weeks. Now, she didn't mention the biggest driver of inflation, which is all the QE dating back to the global financial crisis, then layering more QE during COVID, plus all the fiscal stimulus. I mean, that's very similar to what we saw in the 1960s around the amount of monetary stimulus used to fund the Vietnam War, and then coupled with oil embargoes of the 1970s. That's exactly what's going on now. And she didn't even mention it. She wants to blame Putin in Russia and Ukraine and supply chain constraints, and they still have this mentality that things are transitory. Well, if you believe that, you know, going back to the crisis, this was a problem that started then hey, it's going to be around for a while.
Mike Kontopoulos, Judy Bill, to the both of you, thank you. Coming up, the morning calls, and later, Exxon, $100. That conversation coming up next.
Countdown to the opening bell is brought to you by Workday, the finance, HR, and planning system for a changing world.
To adapt in a changing world, you could hire a professor of theoretical mathematics.
We all know this equation, right?
He'd crunch numbers day and night.
That's it.
To maximize profitability.
Morning.
I have quarterly numbers. They're beautiful.
And forecast revenue from every corner of your organization.
Is that important?
Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster. For a solve problems like a genius world, Workday for a changing world.
Teamwork. It's complicated. 29% of workers now belong to 10 or more cross-functional teams. Half of workers connect with 50 or more colleagues in a typical day. And the average worker spends half their day collaborating with departments other than their own.
That's why we created Atlas, the first teamwork directory to connect the dots across teams, their tools, and their work, wherever it happens. Because teamwork doesn't need to be complicated.
From New York, let's get straight to your morning calls. Bank of America downgrading target to neutral, highlighting competitive pricing and weaker margins. Morgan Stanley downgrading Altria to underweight, expecting higher gas prices to pressure consumers. And finally, BMO naming Amazon its top pick within the mega caps, expecting shares to rally in the second half. Coming up, JP Morgan's David Stubbs. Your opening bell is up next.
Countdown to the opening bell is brought to you by Workday, the finance, HR, and planning system for a changing world.
To adapt in a fast-changing world, you could hire a professional pit crew.
Sorry. Oh, okay.
They deliver real-time data and business forecasts when you need it.
I think it was fine how it was.
To help you stay ahead of the curve. Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster.
On the other hand, we had a great fourth quarter.
For an accelerate your decision-making world. Workday for a changing world.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Never be afraid of your strength. Because your body is capable of amazing things. The one they said you shouldn't have. The one driven by a power they can't see. Own your strength and see how far it takes you. Tono, be your strongest.
I pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
Selling a home is expensive and stressful, so we created our smart seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed at the fact that my house sold in one day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commissions. The process was as easy as it gets. They are the #1 way to sell your house.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. However, we can't do it alone. Find out how you can help.
24 seconds away from the opening bell in New York City this morning. Good morning. Futures lower, just a little bit, negative by 0.4% on the S&P. On the NASDAQ 100, down 1/3%. On the Russell, squeeze that in, down about 0.5%. From New York, there's your opening bell. Switch at the board and get to the bond market. Yields look a little something like this. Higher by 3 basis points to 3% on a 10-year. Getting comfortable with a 3 handle on a 10-year the last couple of days. Euro dollar 107.37, positive 1/3%. Going into the ECB tomorrow. And crude, finally a break of 120. 120.23, up 0.7%. That's the cross-asset price action about 15 seconds in. Here are your movers. Here's Abby.
John, let's take a look at one big laggard this morning, and that, of course, is Intel. Shares have been cut at Citi after the management is basically talking down the quarterly outlook. We've had so many companies recently pre-announcing to the downside. Intel doing it in a softer way. That chip stock down 3.5%. Western Digital, on the other hand, up 4.2% as they are considering a breakup on pressure from Elliott. They would basically divide their business into 2 companies, the flash memory and then the disk drives. Roku up 5.1% as the insider sell window has closed. So essentially employees cannot sell shares. More at stake. Analysts like this move quite a bit. And then Alibaba up for a 3rd day, up about 4% as China has approved more games. So we've seen this big rebound. There's a debate now whether or not this is a buyable bottom here for China tech. The contrarian, however, John, who a while ago said that the technology China tech would keep selling or would sell off, and it certainly did, down more than 50% at the lows. He says this is not a buyable bottom. But
that
today,
is a top pick, though, for Marko Kolanovic over at JP Morgan. Abby, thank you. A top pick. China ADRs for him. Big take right now. Where are we? Information technology, middle of the pack, down about 0.6%. Energy, top of the pile, relatively speaking, up by 0.05%. Overall, the S&P 500 down about 5 or 0.6%. Crude up in a big way this year. You know that already. Energy equities as well, up 60%. More than that this year alone. Taylor Riggs has more. Hey, Taylor.
John, briefly yesterday hitting 120 on crude, and that trend continues today, now trying to hover near that 120 or so dollar a barrel. And so really the story of the year has always been about the energy sector. The themes for the days continue, really is the theme for the years. You highlighted that sector. I think what is crazy, and you mentioned some of these statistics in the introduction, crude is up 125%. So when I take a look at the S&P 500 and you're taking a look at the best performers, and it's the energy sector up 65%, that blows you away until you realize that that gain is half of what the actual energy crude really has gained here at more than 120%. So typically if we think about correlations, maybe one would expect a little bit more of a better performance here for some of the energy stocks when you think about the actual performance of energy. I think what is so interesting, though, is you're actually getting some some of the intraday stocks here hitting record highs. I think you had Valero yesterday, another price target increase. ExxonMobil was at another record high yesterday. And so some of the individual stocks are actually doing really, really well underneath the sector surface, though, even though perhaps maybe the energy sector only up 65% with the huge gains in crude that you've seen.
And Taylor, very disciplined, seemingly no interest in building out capacity.
Nope, it is all about cash flow, returning money to shareholders. That has been the theme of, John, the decade maybe, and that certainly has been continuing this year.
Taylor Riggs, thank you. Thank you very much. Just one sector to keep an eye on, of course, through the year. Katie Lyons, it has been very different over the last couple of years compared to the previous decade.
Yeah, growth has dominated for so long, John, and we've seen a couple of false starts, head fakes, where we see a period of value outperforming dramatically. It never really seems to last. The question is this time different? Because once again, this year we are seeing value outperforming as we have the specter of higher rates, which puts pressure on higher multiple, higher growth companies. We actually have the S&P Value Index only down about 4% this year. Its growth counterpart is down 21%. So that puts value on pace for the widest margin on an annual basis of outperformance relative to growth in any year since 2000. And value has now actually regained all of its losses relative to growth since the pandemic began. Now, of course, that's reflected on a sector level. Taylor was just running through how energy is far and away the outperformer. Note what is the underperformer. The 3 worst sectors in the S&P 500, discretionary, communications, and tech, all of which are, of course, tech heavy. So growth stocks are obviously dominated by those tech plays, and we have seen those tech earnings projections slashed. We had Microsoft last week cutting its estimates, talking about FX headwinds. We've seen a number of companies from Meta to Tesla maybe freezing hiring, and overall Bloomberg Intelligence says that since mid-April, growth stocks earnings estimates have slid by 7 percentage points for the second quarter. They've been cut for the second half, too. Meanwhile, values estimates for earnings have gone higher. The one thing I will say, though, when we're talking fundamentals, John, valuations for growth companies were around 30 about 2 years ago, now down at 21 for a forward PE multiple. So, yes, these stocks are still relatively more expensive, but they've gotten a whole lot cheaper, John.
Kelly Lights, thank you. How's this for a story? Some reports from a Swiss finance blog that State Street could make a 9 Swiss franc share bid for Credit Suisse. So that means we were down and down hard over at Credit Suisse, and we've erased much of that loss following that report. Taylor Reese, let's catch up on this one. What do you see? What have we heard this morning? And what do you make of the latest development?
Yeah, John, so this is interesting because we were going to be coming on and talking about Credit Suisse and potential job cuts. And this is sort of an interesting story when you think about all of the cost-cutting and job-cutting sort of conversations that we've had really throughout the industry. We've talked about retail being one of those. And then, of course, Credit Suisse warning about a third straight quarterly loss and potentially then getting some job cuts and maybe trying to blame some monetary policy. But analysts saying that a lot of this was self-inflicted wounds. And then, of course, a lot of those losses, as you just mentioned, being erased, trying to turn positive now on a potential bid. So I think we're going to dive deeper into this, but really interesting on the heels of sort of the announcement this morning of looking at perhaps maybe some more cost-cutting measures, trying to make perhaps some more attractiveness, some more value generation underway, John.
Taylor, thank you. Let's catch up on that again in about 5 or 10 minutes. Just to repeat, the report comes from a Swiss finance blog called Inside Parade, citing a single insider, just to give you an idea of what's behind this report. Bloomberg has reached out, of course, to State Street for comment. We haven't received that comment so far. We've reached out to Credit Suisse, of course, for comment. They declined to comment when contacted by the team here at Bloomberg News. So the report, citing a single insider from a Swiss finance blog called Inside Parade, saying that State Street could make a 9 Swiss franc share bid for Credit Suisse, and that offer could come as soon as the coming days. So we were down hard on that name, and now we're down just 1%. We'll continue that conversation in just a moment. For the broader equity market, we are down about 0.5% on the S&P 500, and we've seen many cuts to the outlook. Here's the latest from David Stubbs over at JP Morgan Private Bank, 4250. Down from 4,500. Goes on to say a good chunk of the recent decline in stock prices is attributable to a marked drop in distant earnings. As a result, we revise our year-end 22 S&P 500 outlook to 4,250. David, great to catch up, sir. Good friend of the show, good friend of mine. Let's work through it. 4,250, why? Basically no gains for the rest of the year.
Well, sure. Good to see you, John. In discussions with our equity team, about the outlook, I think we see some margin compression ahead, for sure. We absolutely are in the count that the growth is going to slow. Our economics team, pointing to sub 2% growth next year for the U.S. economy. You put those two things together, as well as some, some question marks over how high the Fed can go in their policy tightening, and you get to, as you say, a rather modest outlook for us. I think the point on the longer term earnings is a very interesting one. As we've seen, next 12 months earnings have continued to grind higher over this year, and the equity team are absolutely pointing to sectors such as healthcare that have that resilience over the earnings pattern. But if you look further out, estimates of 3 to 5 years growth, which are present in the market, have come in quite a bit. And that, firstly, for us, reflects a little bit of a correction after huge optimism built up post-pandemic about some of these digital trends. But most of that now seems to have actually happened, and we've seen now that no reason why you can't have good productivity growth for this cycle. No reason why the long-run trajectory of America has changed. So I think that's an important aspect to this decline we've seen in growth stocks this year.
So, David, last time we spoke, you said a softish landing is still the base case for you, and people will be struggling to reconcile that view with this view of limited upside on the S&P 500. How do you pair the market view with the economic view? You touched on it there, David. Just build on that a little bit more.
Sure. John, very simple. If nominal GDP is going to slow from its torrid pace in the last few quarters, and yet things like the labor market, wage growth, are still going to be reasonably robust, you get a compression of margins. And that's why you can have absolutely economic growth next year of below trend. Let's be clear, like we're calling for, I think, 1.4% growth next year. That's below trend for the US economy, whilst having a pretty muted earnings upside from here. And we will need, I think, to see a clear turn in optimism about corporate earnings, clear signs that the Fed that won't have to go, say, above 3%, clear signs that margins reach a bottom before the equity market will rally sustainably. Now, look, in that time, John, you're going to have tradable rallies. And if you're watching this program and you're a trader, I'm sure you can absolutely make hay in those. But before long-run investors really find a bottom, I think they need to see a few of those things together. So if you put a weak GDP number on earnings growth, it really happens to be not the most exciting outlook for equities on a market-wide level, but certainly some opportunities now for traders and indeed for some long-run investors.
And on the other side, in fixed income, in bonds. David, are you more confident in this idea there's more upside in treasuries than perhaps there is in equities, that we can get a decent rally here in treasuries now, that this is the place to be again, that bonds are back? Can you say that?
Absolutely, John. We've been saying that for a few weeks now, having a lot of conviction that when the 10-year is north of 3%, it's time to add, especially if you're holding a lot of cash. I think this represents an important evolution in the market drivers. Last 3 to 4 to 5 months, we've seen bonds be the issue. They were the ones selling off, raising the discount rate, hurting the equity multiple. We're probably at peak hawkishness right now. We think that the correlation has started to flip. Bonds can protect again, and so we are advising adding to duration when you can get more than 3% on a US 10-year. Don't get me wrong; certainly further losses would be possible if the inflation proves a bit stickier. And Friday's CPI report absolutely crucial there. If you get more hawkishness around the world, the ECB tomorrow, for example. So it's obviously not a one-way trade, but we think there's an asymmetry here. That if you are looking for a severe slowdown in growth next year, bonds are going to help protect your portfolio in a way that they haven't in the last 5 to 6 months. So that's an important evolution now. Now the focus is on how deep will the economic slowdown be, how deep will the margin compression be. We're obviously pretty cautious on those fronts, and that's why we're advocating clients that don't have a lot of duration in their portfolios to start to add.
Bonds are back, according to David Stubbs. David, stick with us. I want to talk to you about the ECB in just a moment. Coming up on the programme, we'll do that, and State Street potentially making a bid, maybe later this week, according to a report, for Credit Suisse. That's next.
The opening bell is brought to you by Workday, the finance, HR, and planning system for a changing world.
How will your business adapt to change? You could hire an office full of Peyton Mannings.
What's up, Peyton? Morning, Peyton. Hold for Peyton.
They'd huddle.
Welcome to the Peytonverse. Such a visionary.
Game plan.
You go. No, you go.
And call audibles.
Double our investment in Omaha. Omaha! 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 Omaha!
Or you could use Workday. Omaha. The finance, HR, and planning system used by over half of the Fortune 500 for a be agile like an MVP world. Workday for a changing world.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that? And that. And that. And that menu. And that's embroidery, but yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the printabilities are endless. Print it all at Vistaprint.com.
At Southern New Hampshire University, you can finish your degree faster and for less money. Transfer up to 90 college credits toward your bachelor's degree.
I was able to transfer a lot of my credits, and it made it easier for me knowing that I don't have to start all over again.
Definitely lowered the cost by being able to transfer those credits in.
Get more transfer credits, pay less tuition. Now that's something to celebrate. Next term starts soon. Visit snhu.edu.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
This is Bloomberg's The Open. I'm Abigail Doolittle. You're looking at a live shot of the principal room. Coming up, Anna Han, Wells Fargo Securities equity strategist. That's at 3:30 p.m. in New York. This is Bloomberg.
But when we think about the banking sector in general, higher rates should help them, depending on the business model of the banks, but in general, it should help them in enhancing their net interest income. Of course, it's the other side of the coin. As we increase rates, that some of the borrowers may have more difficulties confronting their obligations.
The focus on the European banks. A bit of news from Credit Suisse earlier this morning. A bit of news again in the last 10 minutes with the latest. Here's Taylor Riggs.
John, I want to be careful here, of course, as we're citing a Swiss finance blog. State Street may be, according to this report, offering to make 9 Swiss franc a share bid for Credit Suisse here. Now, when I'm taking a look at some of the Swiss franc shares here, I have about 680 or so. So hugely negative. And then, as you can see there, a spike higher, trying to gain here on the day on that report. I think what's interesting is before this and before sort of that big move upwards, the story really has been about a bank and a turnaround situation, warning again about another loss, and really then looking at cost cutting and job cuts, and something that, John, that we've heard really sort of globally and in multiple other sectors, and maybe sort of now hitting this sector as well. I think sort of another interesting story behind this is they're citing monetary policy, significant tightening that's underway. And I know that you're going to talk about the ECB, and yet Citigroup coming out and saying that, well, a lot of this could be self-inflicted. So again, sort of the big news this morning was really coming into this story, the big job cuts, a turnaround, another loss for the bank. And then, of course, a big move higher here on a Swiss finance blog report that 9 francs per share could be bid from State Street for Credit Suisse.
According to a single insider, that finance blog, and of course we're waiting for some confirmation from either party here at Bloomberg. We'll keep you on top of our reporting. That's some of their reporting out of Switzerland at the moment. Taylor Riggs, thank you. Brilliant work this morning, as always. Looking forward to the close a little bit later. That is the story for Credit Suisse. Here's the story for the ECB. Matt Miller, we might see something in the next few months that we haven't seen in a long, long time.
Yeah, and I think the key phrase there is in the next few months. The sloth is unbelievable. I was just looking at the rates, John, and the last time they were positive, Barack Obama didn't have any gray hair. He was in his first term. The hit song was Call Me Maybe by Carly Rae Jepsen. Tesla hadn't yet delivered its first Model S, and my friend Kriti Gupta was celebrating her quinceañera. So it was a long time ago. This is the inflation picture right now at an all-time high. That is, of course, since they started measuring the entire euro area inflation, but still 8.1%. It's a huge concern. The core in blue there at almost 4% is a real concern as well for the central bank, especially for the Germans. They are so far behind the curve. Take a look at where the ECB is compared to the BOE and the Fed, and it's like they haven't yet gotten the call. In fact, right now the debate seems to be whether they hike by 25 basis points or 50 basis points, but not at this meeting tomorrow, rather next month, and really in a month and a half, because that meeting is at the end of July before the August break. The one thing that they could do at this meeting, which Christine Lagarde signaled in a blog post earlier about a month ago, is start to unwind their balance sheet. This ECB balance sheet towers over everybody else's. I mean, 8.8 trillion euros, it's bigger than the Fed's, and they still haven't started to unwind it yet, even as we've seen rates jump. In fact, if you look at bunds, the gains that we've seen this quarter are going to be the biggest quarter we've seen in a century, or this century, I should say, not in the last 100 years. But it's pretty amazing, the picture there. So I think everyone's going to be glued to this meeting tomorrow.
Matt, this was nice. It's been a while, hasn't it?
Yes.
Looking ahead to the ECB. We should do that again. Matt Miller, thank you, buddy. It's good to hear from you. Matt Miller on Bloomberg Radio with Paul Sweeney in around about 10 minutes' time. David Stubbs back with us from JP Morgan Private Bank. David, we haven't seen this since 2011. We've had negative rates since 2014. Your point, your view on the big change that's come in from this ECB?
You're right, John. Absolutely historic stuff coming soon. And I think that there is an understandable desire to rapidly get away from negative rates. No one wanted to get into negative rates initially. It's this kind of crazy situation to be in if you're a central banker. And so I would expect them to get away from that fairly soon, probably 25 basis point hikes. I don't see a 50 there, but I think that is bait in the cake getting back to zero. I think there's a couple of things, though, which make us a little skeptical that what's priced into the market, i.e. their policy rate getting close to 1% in the next few quarters, is getting a little ahead of itself for a couple of reasons. Firstly, this central bank has a terrible record of hiking just at the wrong time. They hiked in 2008, just before the financial crisis. They hiked in 2011, just before the European banking crisis. They know that. They don't want to do it again. And then, of course, we still have, despite some very significant improvement in balance sheets and internal structural arrangements, some weaknesses in the Eurozone. Obviously, the periphery. Look at the spread between the Italian debt and the Bund. It's risen significantly in the last few months and quarters. The ECB is aware that they can't push the Eurozone as hard as other monetary areas, because it's not like other monetary areas. And so I think those two considerations are going to still leave an institution, as Matt pointed out, incredibly cautious, happy to be behind the curve, happy to see evidence of inflation pressures building domestically, and still moving methodically in the next few months.
The Italian bond market, the one to worry about, you mentioned it, David. And of course, the Federal Reserve doesn't have to worry about that. And the Federal Reserve gets to look at a much more resilient labour market too. I'm looking at yields higher now by 11 basis points at close to 340 on an Italian 10-year. Let's finish here, David. Do you think it's going to be difficult for this ECB to get much above zero on the depot rate? Do you think that's going to be a challenge in and of itself?
We see them hiking a couple of times above zero, so 0.25, 0.50 into next year for sure. But then the outlook is so uncertain because of the energy issues. How big a hit is this going to be? Are we going to see the Eurozone on the verge of a recession as we move into next year? Are we going to have rationing of energy and shortages and rolling blackouts, as some people are talking about, John? So I do think that they are mandated to focus on inflation. Remember, they don't have a dual mandate, unlike the Fed. They are solely focused on keeping inflation close to their 2% target and a bit below it. They have the core inflation there that is way too high. They need that to stabilize and start to come down. We think that's going to play out over the next 6 to 9 months. So we see them getting a bit above zero, but maybe not as high as the market is currently suggesting.
They do have this kind of shadow mandate, though, don't they? This unofficial mandate, if you will, and that stability in the peripheral bond market. David, Matt mentioned unwinding the balance sheet. How are they going to do that?
John, I think it's really interesting in this coming press conference tomorrow and in the next few months, if they try to lay out a stability-focused bond buying mechanism, i.e. something that is out there with clear criteria, probably quite exacting criteria, for them to restart the bond buying that they're just about to stop, but one that's focused on stability only and not on the inflation mandate. Remember, the buying of the bonds so far has been tied up with the overall macroeconomic goals. But you're right, the instability of the periphery will continue to stalk this central bank. And that is, I think, going to put a cap on what they can do on the deposit rate. I think it's something that they can and will and should address directly in some kind of facility set up to trigger further bond buying of the periphery if they see a genuine domestic reason to do so. I think that's the incredibly tough balancing act this central bank has to pull off in a way that almost no other central bank has to.
David Stubbs, JP Morgan Private Bank. David, good to catch up, mate, as always. Up next, your trading diary from New York. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
At Principal, we recognize our responsibility as a financial services leader is to help more people and businesses feel secure in their finances and their future. For us, good business has always been about people, from helping our newest investors get started to providing more valuable insights to our most sophisticated investors. We're committed to fostering a more diverse, inclusive, and sustainable world. And working together, we can create a brighter future for all of us.
I used to have to go in to the auto parts store. Paid too much, never find quite what I'm looking for. Now I just go online to Rock Auto and see all the parts my car will ever need. Lower prices, more parts, more brands. It's so easy to find the right parts fast. All the parts your car will ever need. Rock Auto. All the parts your car will ever need. RockAuto.com.
This couch.
I'm just saddled with so much credit card debt right now.
You need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, oh, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
26 minutes into the session, a raise in losses, basically unchanged now on the S&P. A busy week ahead. Let's get to your trading diary. Secretary Yellen, repeat, Volume 2 on Capitol Hill at the top of the hour. President Biden leaving for LA to attend the Summit of the Americas at 11:45. An ECB rate decision and President Lagarde news conference coming up tomorrow. And we get another round of jobless claims too. Then finally, the main event, US CPI. Coming up on Friday. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
The world sometimes feels like making a profit comes before the environment, that profitability and social progress aren't compatible. But what if another world were possible? A world where investments could drive companies to change. This is why Amundi offers investments that allow you to help build a different world. And you, in what world do you want to invest your money and your future? Amundi, confidence must be earned.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout.
Come on!
And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. However, we can't do it alone. Find out how you can help.
From the
financial centers of the world. This is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Wednesday, June 8th. Here are the top market stories that we're following for you at this hour. Dalio, central banks will cut rates. Hedge fund titan Ray Dalio says the pain of central bank tightening will force them to reverse course in 2024. How do you manage risk in that environment? Meanwhile, Exxon's hitting an all-time high. Oil prices climb, dragging crude equities with them. We're going to have an exclusive interview with Meg O'Neill, CEO of Woodside, Australia's top natural gas exporter, on her outlook for oil and gas. And Credit Suisse, help not wanted. The Swiss bank might cut jobs as it faces its third straight loss this quarter. Stock, though, tries to turn positive on a report of a potential bid from State Street. From New York, I'm Alex Steele with Francine Lacqua in London. Guy Johnson is off today. Welcome to Bloomberg Markets. Broad strokes, Francine, 10-year yield trading right at 3%. And I feel like that's the round number where it's hard for individuals to know how to price risk.
100%, Alex. And I think what individuals and traders and markets are really trying to figure out is, okay, if a lot of these central banks are really focused on inflation, and for the moment, especially in Europe, they're ignoring growth because they want to do and deal with inflation, what does it mean for a policy mistake? And actually, how do you price that? So we've been doing a bit of digging. The MLive post saying, look, a profit recession is coming to U.S. equities. What does that mean? You probably buy into some of the oil majors and things like that.
Right, and that's exactly what we're seeing, right? Exxon at a 52-week high. It was oil's been outperforming other asset classes as well. And Credit Suisse warning of sort of risk retrenchment. It's all part of the same kind of story. How much risk are you willing to take on in a more hawkish, aggressive central bank environment?
Yeah, and then you look at Credit Suisse, and that's just whipsawed because there's so much news out there. Now, possible takeover acquisition. I mean, this is something that we just discounted, but it seems that markets are so desperate to find a resolution for Credit Suisse that they believe this is a real possibility.
Yep, and that brings us to sort of what Ray Dalio was talking about also. I mean, yes, he's talking his book, right? But the idea that central banks are going to be a bit too hawkish and then have to reverse the course.
Yeah, and he was explaining actually in his blog about, you know, the nature of inflation. So Ray Dalio says central banks will cut interest rates in 2024. That's not far away from now. As stagflation, he says, will weigh on the economy. So our question of the day is, do you think central banks will cut rates in 2024? Let's ask Christina Keener, our Bloomberg Markets editor, and Vincent Signorella, macro market strategist for Bloomberg News. So thank you both for joining us. Christine, I mean, if they're hiking now and then they cut in 2024, like what happens to these markets?
Well, Francine, I think that's what's causing a lot of uncertainty in these markets because that is exactly what markets are expecting. We're already starting to see pricing in rates markets, particularly for the Fed and the BOE, to start cutting rates in 2024. And actually, you know, initially that was later in 2024, but as we get more talk of potential recessions and all the damage that inflation is doing to the consumer sentiment at the moment, that pricing is actually being brought earlier in 2024. And, you know, this is really just part and parcel of this whole conversation over whether hawkish central banks will eventually force recessions because they just have to tighten a lot and very quickly to respond to inflation, but then that would destroy growth. And I think that is the big debate that's really cornering the bond market at the moment.
Yeah, we just saw sort of the 50 basis point club, but then you had the Polish central bank. They're in the 75 BIP club. So, you know, I wonder if that's whole re-rating upwards as well. Hey, Vince, what do you think? Weigh in on this. Will we have to see central bank cut rates?
Well, I actually take it one step further. I'll say that they won't be raising rates next year. If we believe the Fed forecasts, and I do take them with a large grain of salt, given how poor they've been actually forever, but if they're correct that inflation is at 2.5% in 2023, then we're basically looking at the Fed funds rate being at 2% in 2023. So you'd have to try to find an argument as to why the Fed, and this would be the same for other G10 central banks, would want to raise their rates, their overnight rates, beyond the quote-unquote R-star or inflation rate. It doesn't make a lot of sense, especially if you think the economies are slowing and that by that time supply chain imbalances will sort of level out a little bit. So is Ray possibly correct that they will cut in 2024? It's very, very likely.
I love, Vincent, I don't think your pooch agrees actually with that call on monetary policy. But Christine, when you look at some of the questions that people really need to ask themselves, what's priced in the markets? Do markets think that central banks can engineer a soft landing?
Well, Francine, I think that really is the question that a lot of people, especially in the bond markets, are asking. And it really is creating this massive divide at the moment. You definitely have what we call the fat tails of these extreme events in markets, whether there's going to be really inflation running away on the one hand or growth hitting a recession on the other hand. These tails are starting to get a bit fatter because people are becoming more entrenched in their views. And it's really very, very polarized at the moment. You know, you have a very, very strong camp on the one hand, really believing that all this tightening and especially the pace that the Fed and various other central banks are going at will really force that recession, perhaps in 2024, perhaps even earlier. But then there's this other camp that really strongly believes that no, inflation should be the biggest priority for central banks right now. They should go at it aggressively, and they're positioning for higher yields in that environment. So it's very much a bifurcated bond market at the moment, and it's unclear which side is going to win out at this point.
Hey, Vince, I just want to drill down into your outlook for just a second. Do you think that inflation then re-rates very quickly to the downside, or do you think that the economy is just not strong enough to handle the kind of rate increases that we may need to see?
I think it's actually a little bit of both. If you look at inflation now, it is all being driven by commodity prices. Commodity prices are completely out of the hands of the Fed. This isn't Fed-driven inflation because of too much money in the market. This is commodity-driven inflation because there's been too much fiscal stimulus, and the Fed is now trying to do the fiscal policy job, which has never worked in my recollection. So the Fed is trying to raise interest rates to quell demand to match supply or lower both. So instead of raising both, where you would have positive inflation because you have positive growth, positive wage increases, you know, things going along equally where inflation goes up modestly, wages keep pace, demand and earnings keep pace, that's all fine. The Fed is now trying to do essentially the job of the Treasury, which is to try to take money out of the system and squash demand. Could get very ugly. It's rarely worked, in my opinion. I don't think it's ever worked, where the Fed has tried to basically do the Treasury's job and essentially with a tool that really doesn't work for what the problem with inflation is right now.
Vincent, yeah, what do you mean by getting very ugly? Like market mayhem? Or just a policy mistake?
More so that the Fed may find themselves in a position where if commodity prices continue to remain high and supply chain imbalances continue to remain high, the Fed may find themselves in a position in chasing inflation where they have to raise a great deal more than they would like to. That just to try to bring demand down. But by doing that, they're more likely than not to cause a recession. So the mayhem in the markets that will follow is you will have that stagflation that Ray Dalio is talking about, and that's what the Fed is trying to avoid. But unless we get commodity prices down, which is completely out of the control of the Fed, it could be where they're chasing their tail, and you're going to need you really need fiscal policy to address that issue, not the Fed.
Yeah, and so many different variables from Ukraine to just strong product demand. Christine, last thought to you, any signs within the market on a macro level that the commodity price spike may be calming down? Are investors betting on that in any way?
Well, it's interesting, Alex, because what we're seeing in terms of more broad-based, market-based inflation expectations, that is actually pulling back a little bit, quite notably in the UK, for instance, and even in the US, it hasn't really run away. And so you do get the sense that some of the earlier tightening that the Fed has already delivered is starting to flow through in terms of expectations, which is probably good news for policymakers. But then in terms of the real-world impact, I mean, I'm speaking to you from personal experience, just going to the shops and getting food here on a daily basis. I still get sticker shock because, you know, the prices of goods and services, and, you know, the commodity story is part of that, of course, but generally the prices of goods and services are still very, very elevated. And I think, you know, it's really that we're concerned about, hitting the consumer and consumer wallets and crimping their spending power, and that's fueling all this recession talk.
You live in London. How is this crimping your? How is this painful?
I'm telling you, the sticker shock here is real, Alex. More so than in London, I feel. Maybe I was just desensitized by London, but you know, having a different perspective now, I can tell you, it's true.
Maybe you're just going out a lot more because, you know, why not? You're in New York for 3 months. All right, guys, thanks a lot. Good combo. Vincent Signorella and Christina Kino, thank you both very much. Well, coming up, more on our question of the day. Will central banks need to cut rates in 2024? How do you mitigate that kind of risk? We're going to talk to Paul Christopher of the Wells Fargo Investment Institute coming up next. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
100flowers.com just made my birthday. I can't stop smiling. Wow, it's so cute. And there's berries too? Hello. How can you compete with flowers?
It's like a whole garden, just for me.
Best birthday ever.
Thanks, 1-800-Flowers.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Can a handyman fix my leaky faucet?
Home questions don't have to keep you up at night. Get peace of mind with Thumbtack. We'll connect you with local pros for any home project. Thumbtack, the easy way to care for your home.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that? And that. And that. And that menu. And that's embroidery. But yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the print abilities are endless. Print it all at Vistaprint.com.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very evenly distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
Has to say we're dependent on the data. And my view is that it's perfectly feasible to argue right now that rate cuts are on the table. I mean, one possibility is they're on the table. We'll sit and we'll wait and we'll watch. But suddenly some bad data comes and all the commentators saying they're going to raise X times and so on, and we know what's coming. And the only issue is whether it gets to 4% or 3%. Well, that depends on the data. And the first thing to say today, the OECD realizes that they got their output call wrong.
That was Dartmouth Professor of Economics Danny Blanchflower earlier on Bloomberg Television, which really takes us to the question of the day. Will central banks have to cut rates in 2024? I want to ask Paul Christopher, head of global market strategy at Wells Fargo Investment Institute. We had Ray Dalio saying yes, that they would have to cut rates. Robert Shiller also talking about how fears of a recession can really be a self-fulfilling prophecy. Paul, what do you see?
Yeah, 2024 is a little bit far away. If you're a long-term investor, you play your time advantage here. You want to be dollar cost averaging into this market in 2022, 2023, and 2024, irrespective of how the data come in. You know, the essence of the answer is that it's just too soon to call rate cuts in 2024. We don't know what might happen yet in 2023. So play your long-term advantage. If you're a long-term investor, use your dollar cost averaging, irrespective of what the data look like come 2 years from now.
Right. But Paul, the only currency that a central bank has is credibility, and the ECB tested that under Jean-Paul Trichet, where they had to do something and then reverse it very quickly. If they hike by too much and then have to cut in 2024, what does it mean for global markets? I mean, could it actually be, do they need to start thinking about it now, even if it's in a year and a half from now?
Well, the idea is that if there is a recession or a significant slowdown, you will see markets react to that, but they'll do it this year, not in 2023 or 2024. They'll do that this year. So let's play what's up first. What's up first is slowdown. You want to be invested in quality for right now. But if you use that dollar cost averaging technique that I mentioned, then you'll be buying here as the markets are going down. You'll be buying at lows. And when the Fed eventually does cut, whether it's in 2024 or some other time, then the markets begin to respond to that. They start to go higher, and you will have been buying at lows, and you'll enjoy those profits on the way up.
Shorter term, Paul, what we tend to see right now is 3% on the 10-year is where we kind of see equities rethink their stance. The best performing sector, one of the only ones that are in the green for this year in the S&P is energy. Exxon hitting a record high. Do you feel like this continues, like 3% on the 10-year, sell tech, buy oil, basically?
That's an interesting question. We were at this point where stock prices were falling and bond yields were rising, so an inverse correlation. We were at that point for a good part of the spring, and then we flipped where stock prices would go down and bond yields would go down. That's the more normal sort of pattern. We think what we're seeing now, if that pattern reverses back to an inverse relationship where stock prices fall and bond yields rise, that signals concern in the market that we're not really sure what happens with inflation. Has it peaked or not yet? That's a negative sign for investors, and again, emphasizes our call to go for quality here, especially while those bond yields rise as stock prices fall.
Paul, there's this idea of a profit recession, which means that actually inflation is so hurtful for certain companies that even if we don't see a recession in the economy, a lot of stocks and shares are going to be under pressure because of it, and Target's warning yesterday was probably case in point. What are the sectors that can afford to pass on that inflationary pressure to their customers?
We would say that there aren't really sectors that can do that. I mean, defensives historically have done okay in those times of slowdown and even recession, call it a hard landing if you like. Defensives have done okay in that environment because they continue to generate revenue. People still need to buy those goods and services, electricity, toothpaste, food, and so forth. And so they've been able to manage that. They generate the cash, they pay the dividends. So we're back to neutral on many of those defensive sectors, and we think that combination of neutral there in defensives and overweight in some of the quality sectors will be what we want to do to try to protect client capital here and savings as we go forward.
Paul, we've seen, if I just go back to commodities for a second, we've seen oil kind of outperform like everything. Can it continue? And I guess another way of asking that question is, in the back half of the year, what's going to be the best performing commodity that you guys think?
It's really going to be a broad-based basket of commodities, we think, that outperforms the war, the combination of the war and the supply and demand imbalances that were already in place before the war began, especially in energy, will really push up ag, base metals, precious metals, and energy together. We favor strongly a broad-based commodity basket there going into the end of the year.
A broad base, is there one that will outperform some of the others, Paul?
Well, it looks like energy's done pretty well lately, but we think as the economy slows, you'll see some demand destruction. We think there's some demand destruction already going on. It's difficult to tell which one may outperform. For investors, it's probably easier in terms of the liquidity available, the products available, to do a broad-based basket of commodities. So no, we don't really want to try to pick one here. The problem of demand destruction really is a question mark that leaves them all a little bit subject to flattening out. But we do think commodities do much better as a broad base in 2023. So again, we would stick with that broad base here today. Buy them when they're a little bit flat as demand gets destroyed, and then enjoy the ride up in 2023.
Hey, Paul, something that sort of puzzles many people is that inflation has an 8 handle and the 10-year yield's still at 3%. Does that imply that bonds make a good hedge like forever? This is definitely something that you want to be buying.
We're a little bit defensive on fixed income right now, and we would be sticking in the kind of the short term or the intermediate term, say 3, 4, 5, 6 year maturities for fixed income. The best hedge for inflation right now is still probably that broad-based commodity basket that I mentioned a minute ago.
All right, Paul, thanks so much. Paul Christopher there of
Thank you, ladies.
Wells Fargo Investments Institute. Now, coming up, more on Credit Suisse. I have to say, Alex, I was looking at the share price with you. I mean, it's turned positive now on reports of a potential bid. I was whipsawed just looking at the share price, and it's the first time in about 10 years that I tried to read German, because this is after speculation that it could be bought out, and this came out of a little-known Swiss blog. We'll have the latest on that. This is Bloomberg.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
You asleep? Do we have enough life insurance?
Don't worry. Just go to ethoslife.com to get your personalized quote in seconds and apply online in minutes.
Hey, I just got my free quote from Ethos.
Get a free personalized quote at ethoslife.com.
When you see value in all directions, you add value in all directions. Accenture, let there be change.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Your doctor gives you a prescription.
Let's get you on some antibiotics right away.
We could bring it right to your door with 1 to 2 day delivery from your local CVS. Or same day if you need it sooner. But aren't you glad you could also just swing by to pick it up and get your questions answered? Because peace of mind is something you just can't get in a cardboard box. That's how healthier happens together with CVS.
Well, Credit Suisse shares doing a big turnaround, like whipsawed, really, after a report of a potential buyer. Earlier today, we got reports that the Swiss bank was weighing job cuts to slash costs. Well, joining us with the very latest is Bloomberg's Sonali Basak. Sonali, I was reading, actually, this Paraderblatt. Now, let's remind everyone, this is a blog that every 4 or 5 months reports that there's a merger, they're selling off the asset management unit. Like, first of all, do we believe them?
It's a great question, because as you know, Francine, when you're talking about banking in Switzerland, there's banking and there's chocolate. Banking is a very big deal. Banks are the prized assets when it comes to the Swiss economy, right? So doing a merger is not an easy thing to do, especially when it comes to regulators. The rumor was State Street in this particular blog. It was at 9 Swiss francs was the potential deal, is what they were saying. Remember, Credit Suisse was trading at more than that at the end of 2020. So that gives you a sense of what that really means. But, you know, we have seen this how many times before? Rumors about European banking consolidation, and the rumors are pretty perennial. The deal itself would be harder to execute.
Sonali, I have to say, there's almost as many rumors about M&A as there are profit warnings from Credit Suisse. Like, when do they get on a better path?
Yeah, I mean, waking up to that this morning, it was like one day, less than 24 hours after we had published a story about a top banker at Credit Suisse going around to clients for the last 5 months saying that they are back. And at the same time, Bloomberg is now reporting, according to people familiar with the matter, that because of this profit warning as well, there might be more job cuts ahead, including in that investment banking division. Interestingly, and I know we'll talk about this a little later in the show, Francine, Credit Suisse was also a big SPAC underwriter, as well as a big leverage finance and debt underwriter. And of course, the markets have been soft, but it's notable on Wall Street that other banks have not felt the same type of pressure that Credit Suisse is seeing in those markets.
Well, what also is interesting, Shonali, is that it wasn't just investment banking that potentially they're going to warn. It was also wealth management and clients kind of retrenching because of risk appetite.
The profit warning that they put out this morning publicly did cite weakness in the Asia-Pacific region as well. Remember, that is something that is much more unique to Credit Suisse, especially when it comes to wealth management, because they don't have that big U.S. arm buffer to offset some of that pressure you're seeing in Asia. The question then becomes, how much does that overhang start to make this year go from a turnaround story to another year of trouble?
I mean, the bank has always been struggling to keep pace with, for example, some of the trading results from, some of the rivals, Shonali. Can they cut enough, to cut costs without, breaking the model?
It's an interesting question, and I think back to what was happening, for example, Francine, with Deutsche Bank in 2018. There were serious troubles. There were massive cut reductions. There was a lot of pressure on profit and clients leaving, but they did restructure. So the question to me is, at the end of this month, Credit Suisse is going to give investors a big plan moving forward. Does that plan start to get them to shrink to the place that they can win on certain businesses once again?
If I'm a top banker or wealth manager or whatever, why am I still at Credit Suisse at this point?
That's an interesting question. Remember, they still had held on to certain businesses and they had done it really well. They're a massive wealth manager. They were massive and have been a massive investment bank. They showed up pretty well on league tables last year as well. They have not completely trimmed down a lot of these businesses despite twin scandals, despite Archegos, despite Greensill. So yes, they have lost a lot of talent, but there is still talent there that is fighting hard for what is, what they're trying to fight for to reign over at the bank.
Right. They got to grow and they have to cut costs at the same time in a tough environment. Shonali, thanks a lot. Really appreciate the reporting. Good perspective. Shonali Basak joining us from Bloomberg. All right, well, coming up, let's talk about the oil and commodity market. It is a new chapter for Woodside Energy now. It merged with BHP's oil and gas portfolio. It's now the largest exporter of natural gas in Australia. Meg O'Neill is the CEO of Woodside. She'll be joining us from Texas in exclusive interview as we're looking at this markets that are very undecided as the 10-year yield trading right around 3%. The NASDAQ 100 able to hold on to some of its gains, but the S&P in negative territory now, even though oil prices continue their climb higher, and Exxon also hitting a record high. This is Bloomberg.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Dad is someone you look up to. He shows us what it means to have courage and gives us the confidence to be who we are. Dad is someone who is always there, no matter what. Celebrate Father's Day with 1-800-Flowers.com.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Check out the new Hurry Cycle too. Lightweight and low impact, you can easily move it without bending. Find both at hurricane.com.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Thanks to Scott's cheap flights, I'm taking my whole family to Hawaii.
A great deal to Japan dropped in our inbox.
Guess who's going shopping in Paris? $176 round trip.
$202 round trip. $297 round trip.
Patriotism number 12. Accounting and payroll should be simple. That's why there's Patriot's affordable, accurate, and reliable accounting software to help you keep your time and money. It works seamlessly with Patriot's affordable, innovative, and intuitive payroll software. They're easy to learn, easy to use, and tailored just for you.
With PatriotSoftware.com, accounting and payroll, keep your time and money.
Go to PatriotSoftware.com today.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
We're an hour into the U.S. trading session. It doesn't really feel like we have a ton of direction, but tech able to hold on to some of its gains. Bloomberg Abigail Doolittle is tracking those moves. Abigail?
Alex, you're right. We are somewhat directionless here, but off of the lows for the S&P 500, investors probably wondering whether we can make it 3 days. That is the case for the NASDAQ 100. Now up ever so slightly, coming off of its lows, now up about 0.2%. The S&P 500 has a little bit of work ahead of itself to do that. One potential help could be if yields go down. Right now, they're going up about 3 basis points, right around 3%. And the VIX, the fear index, the gauge of uncertainty, it is still below 25, suggesting maybe the S&P 500 will see a third up day in a row. However, it really has to do with yields. If we take a look at the influence of yields on the S&P 500, when the 10-year yield here in the top panel is at 3% or above, you can see it has a negative effect for stocks. So that's a key driver right now, inflationary valuation concerns. So that CPI print on Friday, a big look forward along with the Fed next week. As for what we have going on beneath the surface, let's take a look here at the shares of Credit Suisse, because it's really been quite a wild ride on the day. Of course, there was a Bloomberg exclusive about the possibility of staff cuts happening. Shares down sharply on that. And then there was a Swiss blog that came out with a piece saying that State Street could buy the firm at some point later this week for, I believe, 9 Swiss francs per share. You see it jumping up right now over the last couple of days. Oh, that's the one-day percent change, up 3.6%. So even though it's one source and a blog, investors taking it pretty seriously, up 3.3%. Let's see how that plays out. And then finally, we have some all-time highs, specifically in the energy sector. Take a look at crude oil. Not up so much, up 0.4%, nonetheless close to $120 per barrel. ExxonMobil, a fresh record high, up 1.4%. You also have Halliburton up 2.1%. And so interesting, Francine and Alex, is the fact that ExxonMobil, technically, it looks like it could continue to go higher from here.
Yeah, interesting you say that, Abigail. Thanks very much. Let's stay on that for a moment because we do have oil inventory numbers breaking. You actually had a crude overall inventories actually up by about 2 million barrels. We were expecting a draw. Cushing, though, still saw a draw. Gasoline inventories saw a draw. Distillate inventories, though, saw an increase. So a little bit of a murky picture, and you can also see that then reflected in the oil price. But net-net, product demand is still quite strong, and there are just not enough refineries in the world with which to fulfill that kind of demand. And that's causing many strategists that are increasing the bar for just how high oil prices have to go to hit that needed level of demand destruction. Now, last week, I spoke about the problem with the Chevron chairman and CEO Mike Wirth, and he was saying he thought there may never be a new refinery built in the U.S. despite these surging gasoline prices and surging demand.
Building a refinery is a multi-billion-dollar investment. Process. It may take a decade. We haven't had a refinery built in the United States since the 1970s. My personal view is there will never be another refinery built in the United States.
Well, joining us now for her take is Meg O'Neill, Woodside CEO. Meg is currently in Houston, Texas, for the company's merger with BHP Petroleum. The ADRs now trade in London as well as the New York Stock Exchange. This is a big merger that's been many months in the making. Meg, congratulations on it. I'm sure it feels good in this environment to get that deal done. I want to just get an idea from you is what's the pitch to investors? There has been a lot of momentum in energy stocks as oil prices have really taken off. What's your pitch for Woodside?
Thank you, Alex. It's a pleasure joining you today. And the narrative that we put out to the market when we announced the merger last August was one of how the merger would strengthen the company. It would provide us with geographic diversity. It would increase our diversity of product mix from being a company that was largely LNG to a company that had a bit more oil in the portfolio. The geographic diversity expanding from Australia to a very significant position in North America, particularly Gulf of Mexico. And from a financial perspective, significantly strengthening the balance sheet. So the merger was done on a debt-free basis. It's basically halved our gearing. And, you know, over the course of the past year, as we've been working towards merger completion, the way the market has strengthened, I think, has further enhanced the value of the merger for our shareholders by generating a company that now has significant cash flow and a great deal of investment optionality as we move forward.
Meg, I know you're going to tell me that you don't forecast oil prices. Every oil CEO says that, and I hear you on that. However, strategist after strategist are re-rating their oil price, whether short or medium term, to the upside. And I wonder if you can give us some perspective of how strong demand can remain at these high prices. What is your visibility?
Yeah, look, it's a pretty hard crystal ball to read. And what's important for us, of course, is looking through the short-term volatility towards the long-term health of the market. We do expect to see a few factors balancing out over the long term. Obviously, we've got immediate volatility with Russia's invasion of Ukraine and the strengthening of sanctions. But we've got countering factors like OPEC increasing its production. We look through over the long term to what we think global economic growth will look like. And we do expect oil prices will come off these highs. But obviously, the near-term factors are continuing to be tight, and supply is continuing to be tight. And one of the things that is going to challenge the industry is that we've been underinvesting for the past few years. So we do need to continue with investment, and that will take a bit of time. It'll take more time to get new wells online, and for the sorts of developments that Woodside does, which are largely offshore deep water, that takes years. So we do expect prices to remain high for the period, but the long-term investment decision-making is one that'll have a bit more of a sober price outlook than what we see today.
Let's have the same question when it comes to natural gas. So, I mean, U.S. natural gas prices, $9 MMBTU. I mean, these are really crazy prices. You have LNG export terminals are working as hard as they possibly can. Give me your visibility onto global LNG before we move specifically to more Australia.
Yeah, it's really fascinating, actually, the way the LNG market has evolved over the last decade. What used to be largely a Pacific trade, there's now a very significant Atlantic trade as Europe has started to import more LNG. And then, of course, as now Europe is trying to move away from Russian gas, the demand for LNG into Europe has increased substantially. So we are seeing a gas market that is now globally interconnected, that is having consequences on U.S. domestic prices. That's been a factor as to why the prices are increasing. As a gas producer, you know, it's quite positive for us. We have a very significant LNG position. About 50% of our production by volume in the new Woodside is LNG. And we feel very well positioned, actually, to help customers in countries like North Asia as well as Europe be able to receive the secure, reliable supply of LNG that they're looking for.
But Meg, to what extent are these soaring prices for oil and gas, as you say, more temporary factors? So the war in Ukraine, but also recovery from COVID. And how much of it is this underinvestment for the last decades in your sector?
Yeah, probably the best way to think about that, Francine, is if we look back to where prices were before Russia invaded Ukraine, and we saw record LNG prices over the most recent winter. That was actually following record LNG prices over the prior winter. Right. So we've seen signs of underinvestment for a couple of years now. We're seeing it play out in Australia, actually, as we speak. So there has been underinvestment, and that particularly is causing pain at points in time where demand rises because of cold temperatures.
So what would it? Yeah, Meg, what would it take to then get to more normal levels of oil and gas prices?
Yeah, investment is key. So we're starting to see some investment decisions be taken. Of course, the Qataris took a decision last year. We took a decision in 2021 to invest in our Scarborough gas field, which is going to be the most significant gas development in Australia in close to a decade. So that'll put new LNG into the market in 2026. And we're starting to see more announcements coming out of the U.S. But as I noted earlier, it takes time. You can't build an LNG plant overnight. It's going to take a bit of time to be able to get this supply to the marketplace.
Hey, Meg, Australia is really suffering right now. It's getting cold. Most of the power still is generated from coal. You're the top exporter of natural gas in Australia. Have you been asked by the government to keep any supplies in the country?
Yeah, the Australian market is really an interesting one. The West market is completely physically disconnected from the East, and so the pressures that are being experienced right now largely are in the East. There is an energy crunch. It's a confluence of factors, so cold temperatures, coal-fired generation is offline, and renewables are offline, and gas is being called in to try to save the day, but due to underinvestment in gas, it's just not available there either. So we've been having a number of conversations with the Australian government about what can be done. The LNG, movement of LNG from Western Australia to Eastern Australia is one option. But at the end of the day, it requires the right sort of long-term policy settings to tackle the underinvestment in firming capacity that we're experiencing right now.
So, Meg, help me understand that a little bit more. Does that mean that you have the capacity, but it's already contracted or being shipped elsewhere, and that you need better policy in Australia to keep it at home, or you just don't have the capacity, like you're already kind of maxed out?
Yeah, so as I said, most of our operations are in the West, and that's where our LNG production facilities are. We would be happy to bring LNG from the West over to the East if there was an import or receiving terminal. Okay. The business that we have on the East Coast is the Bass Strait gas facility, and we're producing as much gas as we possibly can there and are working with the operator to continue investment in that field. But obviously, when conditions are cold and when 30% of coal-fired power generation is offline, there's just not enough gas in the system to cover the gap.
Yeah, and it's also
so that's where the policy settings need to come to play, is to tackle that question of how do you have sufficient firming capacity for the days where you have a production outage in a coal plant and or the renewables are not delivering.
So what would that policy look like, Meg? This is just the last question here. Does it have to, is it a regulatory thing? What would be most helpful to you?
Look, one of the big challenges in Australia is there have been a number of impediments to ongoing investment in oil and gas development. We recognize that responding to climate change is extraordinarily important, but gas is a very important part of the mix. And as renewables get built out, you need that firming capacity for the days where the sun doesn't shine or the wind doesn't blow. So the policy settings that would enable further gas development would be essential for us, as well as tackling some of the bureaucracy and red tape that has slowed down efforts to make those developments a reality.
Meg, thanks so much. Meg O'Neill there, Woodside Chief Executive Officer. Now, coming up right here on Bloomberg Markets, the European close, the first day of a trading for Symbotic, a robotics and AI software maker. SoftBank is a major investor and partner, so we'll have the full story. We'll talk with the Symbotic Chief Executive Officer, Michael Loparco. That's coming up next, and then we have a bit of breaking news in the last couple of minutes. State Street, of course, part of this prepared bid for Credit Suisse. That's according to media reports. According to Dow Jones, will put a statement out on these media reports. Are they buying Credit Suisse? Are they not? Maybe we'll find out in the next couple of minutes. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on StartEngine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
At Empower, we help you open doors to get you ready for everything that lies ahead. Because your financial wellness is what matters most. Behind every door is an opportunity to save for life's moments. These are your goals, and it's time to help get you there. We've been opening doors for more than 17 million customers across America as they save for the future they want. We are Empower, and we're ready to open some doors for you.
Tommy John has been dedicated to elevating underwear for over a decade. Now, we're proud to reveal our most premium men's underwear yet. This is Apollo. All new, ultra breathable, rigorously tested for durability, and enhanced with exclusive dry release tech. We've upgraded the softness and the level of comfort, so don't be surprised if your confidence is upgraded too. Experience high-end for your rear end at TommyJohn.com and get 20% off your first order.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll fast and easy, so I can spend extra time with these guys.
Visit surepayroll.com for a 3-month free trial and find out what makes us different, because small business is our business.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
This is Bloomberg Markets. You're looking at a live shot of the principal room. Coming up, Anna Han, Wells Fargo Securities equity strategist, joins Bloomberg TV at 3:30 p.m. New York time. This is Bloomberg.
So it's been a rough ride for special purpose acquisition companies. SPACs were the preferred way for companies to go public, but the prospect of tighter regulations have left investors nervous, in some cases very nervous. Bloomberg's Wall Street correspondent Shonali Bazek has more. Shonali, they're just not that much into fashion anymore.
Yeah, and if you look at the performance as well, Francine, you have the S&P down 13% on the year, and you have an index of SPACs here down 30% on the year, so twice as much. I've got to say also, though, if you look at the Renaissance IPO index, you're down more than 40% on the year. So SPACs are not alone in this slump. However, remember, since Bloomberg has been reporting throughout May about those fears in the SPAC market, we have seen a game of musical chairs. We have hundreds of SPACs out there, almost 600 SPACs looking for merger targets. Yet 16 deals at least were announced in May. That's the most since December. And so you do see a very small amount of deals relative to how many SPACs are out there looking for a merger partner with the deadline on when they need to get that deal done, Francine.
All right, Shonali, thanks a lot. Really appreciate it. And all of it made much more complicated when you have 10-year yield at 3% and a lot of uncertainty and volatility within the market. So let's get to a company that kind of tackled all of this. Symbotic begins trading today after completing a merger with SoftBank SPAC. Now, it works with companies like Walmart to ease supply chain congestion and to lower labor costs with robotics and AI software. Earlier this week, I spoke to Walmart board member Stuart Walton on automation and these supply chain challenges.
Robots will take away some of the jobs that humans generally don't like to do, and you have to pay people to do. And so I think that's a trend that's going to continue. I think the pandemic in many ways accelerated it. And, you know, in terms of like the right time to invest, who's to say today isn't the perfect time to invest?
All right, let's get more insight. Symbotic CEO Michael Leparco, he joins us now from the NASDAQ. So congrats. It's always a good day when you finally get to go public. What was it like? You're trading right now. You're up at 80% after the stopping in trading. You're at 1604. Tell me how you feel. How was today like?
Well, incredibly excited for the amazing Symbotic team. It's been a long journey to get here. Again, Symbotic is no startup company. This company was founded 15 years ago by Rick Cohen, who's not just an industry veteran, but an industry legend. And the amazing team at Symbotic has persevered to get us where we are today. This product and this solution has been vetted and validated for more than 10 years. And through lots of in-field monitoring and testing, we've gotten to where we are today. So it's a very exciting day for the entire Symbotic team.
So, Michael, congratulations. I'll echo Alex on the congratulations. How much can you actually ramp up manufacturing your system?
Well, that's what we're doing. This is an amazing system, and as you're aware, We've got more than $11 billion of contractually committed orders. So the focus on the team is to get those orders out the door. And we're looking at our people, we're looking at our processes, we're looking at our technology. So.
But Michael, 11 billion is such a huge amount. How long will it take for you to get to that $11 billion?
This will take a course of a number of years. But if you look at what we've accomplished today, we've got a handful of customers, which obviously includes Walmart, CNS, Albertsons, some of the toughest, most demanding customers in the world. And we've got a multitude of systems deployed today. 6 systems already deployed, 9 more that are in deployment during our Q2, which ended recently. So we've got a mountain to climb, but I'm convinced that we've got the talent and the resources to go make this happen.
Michael, you mentioned Walmart, and a lot of those retailers, like we've been hearing from Target and Walmart, are having a lot of problems managing their inventory. They have too much of the stuff that people no longer want because of COVID and reopening, and they have to really, and they're tight on supply with things people really do want. How do you hurt or help them? Like, how do you help them manage that kind of inventory when inventory is what's really dragging on them? Sure.
Well, in many ways, the global supply chain is broken, and Symbotics helps retailers better serve their end customers. The Symbotics solution has radically transformed how goods and products move through a warehouse or distribution center to get products into retail stores and ultimately into the hands of consumers so they get what they want, when they want it, where they want it, and at a price they can afford.
Michael, that's great PR speak, but actually you also face some of the challenges that some of your competitors, face. It's inflation, it's the lack of chips to build some of the things, it's higher energy costs. So how long does it take for the environment for you and all of your competitors and the people they have to service to get to a more normal situation?
Sure. Well, again, this system is just very different. The way it moves product through warehouses and distribution centers using everything from artificial intelligence to intelligent vision systems and high-speed robots, as well as a fleet of autonomous vehicles. We are really optimizing the way goods and products flow through. So ultimately, customers will get the products that they want on the shelves. Retailers will have less inventory in their systems, and product will flow faster. So the system provides the benefits of speed, accuracy, and efficiency. Speed, the system has the ability to provide orders into a truck in 1 hour versus a traditional warehouse system, which may take 8 to 24 hours. The accuracy, when an order arrives at a retail store, there's a defect rate of less than 1 in a million versus a traditional warehouse operation, which may have an average defect rate of 1 in 1,000. And 1 in 1,000 may not sound like a lot, but when you're pumping 50 million cases or products through a system, that's a big number. And then the efficiency of it, to your point, the efficiency is really the throughput, being able to use about half the square footage to achieve the same throughput. So the net result is that, retailers have less inventory in their system, products get to shelves quicker, and there's less stockouts and empty shelves for customers.
Michael, to Francine's point, when you're trying to order stuff for your business, like, where are the biggest supply chain hurdles for you? Like, where are you seeing the highest costs? Is it chips? Is it your own labor? Where are you sort of struggling with the most?
Sure. Well, certainly not from a labor perspective. Symbotic is an extremely attractive company. The IPO, of course, is allowing us to recruit and attract new talent and have a currency by which to reward current and future employees. When you look at the overall supply chain, though, of course, these are tough times for any OEM or any provider or manufacturer. I think the advantages we have are, again, we've got visibility. We have more than $11 billion of committed orders. We can place long lead time items. We can order in bulk. And we now have a capital structure to allow us to do that. So supply chain shortages will be there, but I'm confident we'll be able to navigate through this effectively.
All right, Michael, thanks so much. Michael Loparco there, Symbotic Chief Executive Officer. Now, we'll have plenty more on some of the SPACs. We'll also look at Credit Suisse. We're still expecting State Street, really at the forefront of speculation that they could make an offer on Credit Suisse after many profit warnings. The latest just this morning. We're expecting them to put some kind of statement out, but that has not come yet. So we'll be on Credit Suisse State Street watch. This is Bloomberg.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Persistent worries about inflation, but also some of what the things that central banks can do to try and deal with it. Hurting European stocks today, down some 0.7%. Tomorrow's the big one, ECB. And ahead of that, we're seeing a bit of a rout when it comes to some of the German 10 yield. Certainly the spread between, for example, the French, the German, and the Italian being widened. European bonds really tumbling, extending the rout that started a couple of days ago as investors worry that the ECB will no longer be there to close that gap. Now, coming up on the European close, Andreas Venditti, head of banks research at Vontobel. He joins us next. We'll talk Credit Suisse. We'll talk possible mergers. It was amazing to see that whipsaw of the share price for Credit Suisse. We're expecting State Street, of course, at the center of this news story. That's according to Paraderblatt, a Swiss blog. They're also expected to come out with a statement. We'll have maybe that statement in the next hour or so. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Thanks to Scott's cheap flights, I'm taking my whole family to Hawaii.
A great deal to Japan dropped in our inbox.
Guess who's going shopping in Paris? $176 round trip. $202 round trip. $297 round trip.
This is Lisa from 4imprint. Yes. I like 50 welcome wows, 300 customer I love it, and 200 team member. Oh, yes. Certainly. You know, we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Never be afraid of your strength. Because your body is capable of amazing things. The one they said you shouldn't have. The one driven by a power they can't see. Own your strength. And see how far it takes you. Tonal. Be your strongest.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Enjoy the magic of freshness from Nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
It's Wednesday, the 8th of June. Stocks trading in the red. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Well, let's get a check on these markets. You can see European stocks down some 0.8%. Sentiment not as good as it could have been after a little bit of buoyancy from Chinese stocks earlier this morning, now down because of persistent worries about inflation. And of course, if central banks only focus on inflation, risks of a possible recession, not only in the US, but worldwide, certainly in Europe because of the proximity to Russia is really what is on investors' mind. And again, that sentiment has been fragile for a couple of weeks. I'm also looking, and this is the big one tomorrow, I know, then we go into CPI prices in the US, but tomorrow it's ECB. Now, they have not started to normalize in quite some time. When you speak to Italian officials, Spanish officials, Greek officials, they're worried that they won't take care of actually narrowing that spread. If you take a country like Italy, for example, extremely dependent on Russian gas, and you can see that spread widening and the rout in a lot of the periphery bonds continuing over the last couple of days. So we'll see what they do with that tomorrow. The German 10-year yield at 1.349, the France 10-year yield at 1.870. There are also quite a lot of stock movers. We'll get to that in a second. But Alex, certainly Credit Suisse for me, front of my mind.
Yep, definitely. In the other parts of the market, dollar-yen also is a lot of what traders are talking about right now. The U.S. market not really doing that much at all. Let's get some update here with Bloomberg's Abigail Doolittle. Abigail?
Some interesting divergences here, Alex. If we take a look at the S&P 500, down 0.4%, closer to the lows than the index's best levels. On the other hand, you have that NASDAQ 100 up slightly. That has a lot to do with the NYSE FANG Plus index up 1.7%, those mega cap tech names. Some big winners within there have all to do with China tech, which is surging another day as the backdrop there continues to be positive. We also have Facebook, Meta Platforms, up 1.8%. This is interesting because this is the last day that you'll have Meta Platforms trading under the Facebook ticker. Tomorrow it will be Meta. And one pressure for stocks overall, of course, yields rising just a little bit here. You do have that 10-year yield up about 3 basis points. We've had so much volatility, though, recently, Fran. It's going to be interesting to see how this one shakes out. But right now, mixed moves here in the U.S.
Yes, certainly mixed moves, and I guess investors trying to find direction. Abigail, thank you so much. Now, Credit Suisse shares bouncing back after a report saying that it may have a buyer. Now, earlier, there were reports that it's considering cutting staff. We spoke with the Credit Suisse chief executive, Thomas Gottstein, just a couple of weeks ago in Davos.
It's very clear that when results are not there, people are asking questions. But I have a clear mandate. And my mandate and the rest of the executive board is, number one, execute the strategy. Number two, strengthen risk management. And number three, be here for our clients. We are back to business as usual, and we are here to serve our clients.
I have to say, a very relaxed-looking Gottstein when we spoke to him in Davos. Joining us now is Andreas Venditti. He's Vontobel, head of banks research. Andreas, I mean, this blows my mind because we haven't had any serious M&A talk amongst European banks for about 6 months. The premium is huge. I don't exactly know what the rationale for State Street even looking at Credit Suisse would be right now.
Yeah, no, I agree. I must say I cover Credit Suisse. I do not cover State Street. But the point really is, from a Swiss perspective, which I have, you know, there is quite a few businesses which I think Swiss clients and also international clients like to bank with a Swiss bank. And therefore, I think, the potential to lose clients, let's say, in the wealth management side, definitely on the domestic Swiss business side, is quite large in case of such a takeover, in my view.
Right, and at the same time, let's remind everyone, the market caps of these two banks are actually quite similar, so it'd be more of a merger of equals. Andreas, are you surprised that the share price reacts so much, and what does it tell us about the Credit Suisse investor base right now?
Yeah, well, I think this is probably a lot to do also with short squeeze. I guess, I mean, we all know the issues of Credit Suisse. There are shorts in the shares, and every now and then there's some rumors about takeovers. I'm, not so convinced, but anyway, I mean, anytime you have this kind of rumors, there is kind of a short squeeze and a bounce in the shares.
And that would explain it today. I mean, we went down from a share price being down 7.5% to now gaining.
No, absolutely, absolutely. And again, I'm not so convinced about this takeover rumors, frankly.
But nonetheless, Andreas, I feel like it does raise the question of what is Credit Suisse going to do? I mean, they have some serious problems, as known from potential job cuts, their client base in Asia retrenching. They've had macro-specific and also micro-specific. Can they actually recover right now in this environment?
Well, my base case for Credit Suisse is clearly that it's going to take quite some time to recover, to regain trust from all stakeholders. I mean, this includes obviously clients, but also own staff, regulators, and so on. And, this is not a thing that you can do over a few quarters, rather a few years. And, well, we're looking forward to hear actually pretty soon at the Investor Deep Dive what they intend to do. They specifically said this morning they would, talk about the cost side. This is always a bit an issue. I mean, we had restructurings and cost cuts at Credit Suisse for years now. The problem always is you cut costs, revenues come down, then you have to cut costs more and revenues come down even more. This actually over the last few years in a very favorable market environment with booming markets and in a more difficult environment like we are actually in, this makes it even more difficult.
But Andreas, what does Credit Suisse focus on now? So I guess they're losing talent because people that, want to make a difference could possibly find a job elsewhere. I don't know how they stop this flow from some of their Asian clients. Is it a reputational damage? And can the chief executive stay?
No, absolutely. Reputational damage, I think it's very clear from what happened, this string of missteps and scandals. Very clearly a reputational damage, again, on the client side, but also internally on the staff side. And therefore, you have obviously people leaving. You have Credit Suisse having to pay retention to keep some staff, having to, pay up to get staff, new staff to replace. And in this context is very clearly, a transition year, how they say, because compensation is going up this year, revenues are collapsing. So, I would not be surprised to see a full year loss this year.
I know you were mentioning that the move in the stock price after the report of a potential sale was more short covering, but it does raise the question to me, do investors want to see either Credit Suisse bought or do they want to see it break up? Like, is the sum of the parts worse things to different banks?
Yeah. The point of a breakup is very difficult because you have parts of the business which can very well work standalone. I'm thinking of the Swiss business, the Swiss bank, potentially also the wealth management side. However, on the investment bank, I don't really see how this can work on a standalone basis. I also don't see any interest, frankly, from other players to buy this piece. And in this respect, there's in my view, the only way forward is, try to improve on their own. Again, this is a huge challenge and something that might take years.
But Andreas, I mean, it might take years. I mean, does this remind you of Deutsche Bank in the early 2010? And, you know, for Deutsche Bank to get away from that took 7, 8, I mean, you could also argue a decade. Are we going to see the same with Credit Suisse?
Well, Credit Suisse is actually in a restructuring mode for a number of years now. And yes, I think this can take a number of years.
Is there anything that you think in the macro environment that could change? Like, for example, the ECB could wind up hiking into positive territory by the end of the year. I'm just wondering on a broad basis, can the macro environment help? Can it change? Can it help Credit Suisse?
Obviously, increases of rates obviously would help, that's for sure. Credit Suisse guided already on the impact we might see this year and next on the rate side. Actually, it's smaller than, for example, what UBS guided, not having such a large wealth management business in the US. Their UBS is much more, you know, benefits much more from that. However, high rates in euro and in Swiss franc would clearly help Credit Suisse as well. But, you know, the dilemma obviously is how much can rates go up until the economy collapses, you know.
Right. Right. So good for rates, but then if the demand side suffers, then you're still back into the same position. Andreas, thanks a lot. Andreas Venditti, head of banks research over at Vontobel. Well, coming up, we're going to talk more about that big event that investors are watching this week, and that's the ECB's policy meeting tomorrow. Bank of America has one of the most hawkish calls on the street on the ECB's rate hike path, and we'll speak to the woman behind the call, Evelyn Herman, the bank's Europe economist, coming up next. This is Bloomberg.
CME Group, where risk meets opportunity.
Throughout history, I've observed markets shaped by the intentional and unforeseeable. For investors who can navigate this landscape, leveraging gold, a strategic and sustainable asset. The path is gilded with the potential for rich returns.
You asleep? Do we have enough life insurance? How would just one of us afford the house, car, Jason's college?
Ethos Life.
Ethos Life?
Go to ethoslife.com and get your personalized quote in seconds and apply online in minutes, often without a medical exam. And Ethos is very affordable.
Hey, I just got my free quote with Ethos.
That's great, sweetie. Sweetie? Get a free personalized quote at ethoslife.com.
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
100flowers.com just made my birthday.
I can't stop smiling.
Wow, it's so cute. And there's berries too?
Hello! How can you compete with flowers?
It's like a whole garden, just for me.
Best birthday ever.
Thanks, 1-800-Flowers.
To start eating better? If only it were that easy. Fresh and Lean thinks it is. Meals with fresh organic ingredients delivered to your door, ready to heat and eat in under 3 minutes. So if you're looking to eat healthier, we got you. How easy is that? Fresh and Lean.
As far as monetary policy is concerned, we have, still healthy growth, employment, and high inflation. So what we're saying is remove some monetary policy accommodation. Monetary policy, as you very well know, cannot address supply shock, but they can signal that they will target this, by telegraphing what they are doing. And in those countries where there is obvious excess demand, then yes, monetary policy should be tighter.
That was OECD Chief Economist Lawrence Boone speaking earlier on Bloomberg Television after slashing their outlook for global growth this year. Let's focus in on the Eurozone as well, because the big event is going to be the ECB meeting tomorrow. Now, Bank of America, the most hawkish on the street, predicts 2 half-point steps from the ECB in 2022, 150 bips in July, another in September. Evelyn Herman, Bank of America Global Research European economist, is part of that call, and she joins us now. Evelyn, what's behind the more hawkish call up front?
Yeah, I think it's just the communication we've gotten from the ECB, right? They seem to be in a very pronounced rush to normalize policy, and that has been growing and growing over time. So we are now in a situation where everybody on the Governing Council seems to agree to get out of non-conventional policy, asset purchases, negative interest rates. But once you agree on that, the hawks are pushing for more. And that's exactly the trajectory we've been seeing evolve. So now 50 bips are clearly emerging in the discussion from the ECB. We saw Lagarde's post blog from last week as an attempt to perhaps push back against the 50 bips to start with. So that is a consensus that we think still has to grow for July, but at the margin we think it's likely. But you can see that the debate is nascent, and incoming inflation data really will just bolster the hawks to move further into that direction. So that is really why we are working. We've been working on the assumption for some time that given this rush of the central bank, they will go at every meeting this year starting in July. Now the debate has moved to 50 bips, so we came to the conclusion that 100 bips for some total of hikes this year is probably too little compared to what they're intending to do.
But Evelyn, there's been quite a lot of pushback actually against the half-point hike. So after Christine Lagarde tried to take charge of the Governing Council, doing almost a Draghi and putting everyone in line and putting that blog that I have to say was applauded by many ECB watchers, she then came on Bloomberg TV and told us that A, they're not in a crisis mode, and 2, that they'll be very gradual. We then spoke to the central banker of France, and he says, whoa, 50 basis points? No, we're going easy at it.
Yeah, but you've had at the same time some Governing Council members who were arguing, including Lagarde herself, I think in your interview as well, arguing that 50 bips is not systematically and strictly at odds with going gradual. So it's a nascent debate, right? It's growing. We're moving in that direction. It's just that given the May inflation print that again surprised expectations, given that June has yet the potential for another very strong inflation print coming up, we think that dynamic within the Governing Council is likely going to grow. And then you have all the other phenomena that are kicking in the second half of the year. To be clear, we are more hawkish than consensus on the ECB call. We are much below consensus in terms of growth expectations. So this is not something we think the economy necessarily screams for, rather the opposite. We're quite worried about what the effect of this policy trajectory will eventually have. But from a pure negotiation dynamic within the Governing Council, incoming data on inflation and wages are likely going to bolster exactly that debate towards 50.
Well, Evelyn, I feel like that brings up a good point of either way, it looks like we're getting to neutral, or not neutral, zero by the end of the year, right? Like it feels like that's baked into everyone who's asked about this everywhere. After that, what happens? What does the economy look like in the early part of 2023? Can they do more? Do they have to cut? Where do we go from there?
Yeah, so I think we're getting to zero within the third quarter, right? So we're going to be in our profile now at the lower bound of recent ECB communication on what neutral would be. They are recently arguing that somewhere between 100 and 200 bips. So that we are getting there. We would argue it's a little bit lower than that, somewhere between 50 and 100 bips. So we are entering a territory in which ECB monetary policy is borderline a little bit restrictive. For us, that means, well, if you have a central bank going very far towards neutral rate in a situation in which your economy is not in equilibrium, because that's the idea behind a neutral rate, right? The neutral rate goes with an economy in equilibrium. We're nowhere near that in the euro area. At some stage, you get stopped out. We have a lot of bad news in terms of activity data still having to come in via the purchasing power shock to consumers, also corporates who have to digest a lot in terms of profit margin squeeze from what's going on in the energy sector. So by the end of the year, growth will have probably slowed enough to really question the ECB's trajectory to move beyond. So for now, we have a pause in the profile, a long pause in the profile, and no further ECB moves in 2023, simply because, as you mentioned, I mean, the growth challenge is going to be more blatant. We also have the issue of spreads in the euro system, where it's never easy and there's never a straight answer from the ECB, or at least so far. There isn't any, and we have this globally synchronized policy tightening, which can create quite a bit of synergy effects on the euro area economy as well.
So, Evelyn, where do you see euro dollar by the end of the year? I mean, euro tomorrow can really go for it, depending on whether Christine Lagarde is seen as wanting to hike very urgently or not.
Yes, so that's part of our FX strategies team call. They have it at 105, if I remember correctly, for the end of the year. Risks, in their view, are becoming a little bit more balanced simply because the ECB is turning a lot more hawkish. But from an FX perspective, I think the point I would make here is there is a lot of discussion within the governing board. There was at some stage flagging the euro weakness as a challenge. Mm-hmm. You could equally argue it's a bliss, right? I mean, two elements. The first one is nominal effective exchange rates actually haven't moved that much in the euro area. From that perspective, the whole currency basket still looks fairly okay. And the other one is a weakening of the euro really helps your manufacturing sector at the moment. It helps the profit margins you can make on exports. At the moment, it's not really clear-cut to be a big challenge to the economy. It might actually help.
So, Evelyn,
I think that's something that...
Last quick question, just staying on economy versus market. Spreads. What are you looking at for spreads tomorrow?
I mean, as a base case, we work under the assumption that the ECB really is reactive when it comes to the spread instrument. Now, there was this article in the FT on Monday flagging that there might be some communication on the ECB working on or having some kind of compromise or looking into a spread instrument that could perhaps help a little bit, at least for the short term, but really we don't expect any details. And the details is what would make such communication really powerful. We would need to know how the ECB intends to step into spreads and at which level. Otherwise, it's probably a communication tool they would hope to be effective, but at some stage that would get prone to market testing of it. So the credibility and longevity of any such communication will probably depend on the details, and it's too early for details.
Thank you so much, Evelyn Herman of Bank of America. And of course, we'll watch with bated breath that ECB press conference tomorrow. Now, coming up, the British Prime Minister Boris Johnson says absolutely nothing will stop his agenda. He says he will not be blown off course after the revolt. That's after 40% of his own party said they have no confidence in his leadership. More on that next, and this is Bloomberg.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
When I look at ransomware, I look at it as a much more efficient business model. You compromise a system, you encrypt it, and you get paid.
So you steal from a company and then force them to buy it back, which is how hip-hop works. Good job, music industry. You're ransomware.
This is Lenovo Late Night IT.
Accenture. Let there be change.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Tune in to today's Options Insight, sponsored by Thinkorswim, by TD Ameritrade.
If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at hurricane.com.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
assure her that in a long political career so far, I have, of course, picked up, barely begun, I have, of course, picked up political opponents all over.
He's back and he's on fighting form. That was the UK Prime Minister Boris Johnson speaking to MPs in the House of Commons earlier today. Now, he plans to press ahead with legislation, giving him the power to override parts of the Brexit deal. Now, let's get more with Bloomberg's EMEA economics and politics correspondent, Lizzie Burton. Lizzie, I mean, we've been talking, I mean, you've had really a baptism of fire. It was your first day on TV on Monday and worked for 25 hours because there was that vote of confidence. But now he's back. He feels like he's won, although the majority was really thin, and he wants to get Brexit done, you know, in any way possible, really.
Classic Boris Johnson, boosterish as ever. There are some doubts as to whether they can get this bill over the line tomorrow, because, first of all, we're hearing that they may not have their ducks in a row in terms of the legal advice. They might not want to overshadow the housing bill that's coming, and they're not going to want to look bad before the by-elections on June the 23rd. But if this is, and this is such a massive gamble, because it risks stoking anger among the pro-EU MPs who voted against Johnson on Monday. The EU's not going to want to compromise when Johnson's weakened, and if they retaliate with a trade war, it's going to add to the cost of living crisis.
So is his main opposition, right, the Labour Party leader, Keir Starmer, loving this? Did he do well in Prime Minister questions today?
You would have expected. It was an open goal, and yet he chose to focus on policy instead of personality in a week when 40% of MPs, of Johnson's MPs, nearly deposed him. Why did he choose to do this? We don't know. Johnson's message was that he's getting on with the job, that, yes, you heard in that clip, he's got enemies. That's the inevitable consequence of being bold in politics, and it's necessary. And his press secretary says that there's no reshuffle on the cards. So it seems that Boris Johnson thinks he's strong enough without.
Yeah, I guess, Alex, I know, I mean, do you watch Prime Minister Questions? I heard that actually when he's in New York in the U.S., the Prime Minister gets stopped as the guy that does the Prime Minister Questions on TV in the U.S.
Yeah, because we don't do that here. It's just like and how rowdy you guys get. I mean, it's kind of awesome. Rebel party, like I love all of that. Lizzie, talking about rebels, have you heard any chatter among his cabinet about how loyal they're going to continue to be to Boris Johnson to be able to push through any of this legislation? Well, I think what's interesting about the Brexit bill is that it reveals this divide maybe between Number 10 and the Foreign Office. Is this actually coming from the Prime Minister, or is it coming from the Foreign Secretary Liz Truss? Because she used to be a Remainer, and so she has to prove that she's not afraid to stand up to Brussels. That's what this bill would do. And so the timing couldn't be worse for Boris Johnson. Is it coming now because the Foreign Office has said that it would come in this 2-week window post June the 6th?
Lizzie, thanks so much. Lizzie Burton there with the very latest on UK politics. I have to say, Alex, the Italians come up to you and say, look at the UK. It's almost like Italian politics. What are they doing? It's like Berlusconi 15 years ago. Now, let's also take a look at where European markets are trading as we head to the close. Now, a lot of speculation or still a lot of uneasiness out there on how central banks will deal with inflation, whether they deal with inflation at the cost, of course, at growth, what that means from some of the value stocks, and overall, where do you put your money in this kind of environment? We're seeing losses across the board in Europe. This is Bloomberg.
Super excited to open up my diploma from Southern New Hampshire University.
I'm nervous, I'm excited.
Okay, let's see it. Let's see it. Oh my gosh!
Jesus Chisores. I did it. And it's here.
Yeah!
Next term starts soon. Visit snhu.edu.
Everything you've seen me do was made possible by what you don't see. Because when you're not looking, I go to work. Strength isn't a given. It's grown. It's earned and tested. We all have the strength to see what's possible. It's up to us to unlock it, Tonal, be your strongest.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Thanks to Scott's Cheap Flights, I'm taking my whole family to Hawaii.
We've always dreamed of exploring Asia.
We just didn't think that we could afford it.
We joined Scott's Cheap Flights, and a great deal to Japan dropped in our inbox.
The flights were so cheap, guess who's going shopping in Paris? My teenagers now officially think I'm the coolest mom ever.
And eat a lot of sushi.
All of the sushi. $176 round trip. $202 round trip. $297 round trip. Thanks, Scott's Cheap Flights.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
If you know what it's like to keep the books and pay employees, you're one of the few. Navigating taxes, shifting laws, protecting your bottom line makes you realize how valuable time really is. That's why Patriot Software lets you handle your accounting and payroll all in one place. Every dollar out, every dollar in, saving you countless hours and giving you a complete financial picture for peace of mind.
With PatriotSoftware.com, accounting and payroll, keep your time and money.
Go to PatriotSoftware.com today.
Stocks finishing up the day in European trading. You can see we're actually seeing some losses across the board. Now, the CAC 40 down 0.9%. The FTSE MIB over in Italy down 0.5%. The DAX 0.8% lower. And the FTSE here in the UK maybe not as low. Now, the focus firmly on inflation. European bonds also tumbling ahead of that crucial ECB meeting today. So watch out for any kind of divulgence of what they can do if they can narrow the spread, even if they want to narrow the spread, or whether we look at fragmentation in European bonds. Again, it's persisting worries about high inflation slowing growth, with investors really bracing for the ECB that had a kind of funny old day when it comes to European Stock 600. Funny old day is not CFA level 3, but it might as well as be, because this is what we're seeing right now. You can see it was kind of like a steady decline for no apparent reason other than the fact that there's more and more talk about central banks focusing too much on inflation, maybe not focusing so much on growth. And then if your earnings, if you're a retailer, you could see, of course, recessionary earnings, which means that no, we don't see the economy in recession, but actually you just can't cope with the higher inflation passing on to consumers, and so your margins get significantly squeezed. Now, the other thing we need to watch out for is some of the groups on the move. I would also suggest that the UK was extremely interesting today, as we have a renegotiation of the Northern Ireland Protocol, and that could reprice some of UK assets. Retail auto parts, the only ones that are doing okay. Retail 1.8%, led higher by a lot of the luxury groups that have that pricing power. And you can see basic resources, insurance, but also telecoms on the way down. Now, there are also a couple of individual stocks that we need to watch. Credit Suisse really left, right, and center. I mean, this has been the stock that's been whipsawed this week. Credit Suisse down 7% at the open after they did a profit warning on their IB, but also overall on the group profits. And then it went up on bizarre, frankly, speculation from a blog that State Street could be looking at buying Credit Suisse. We look at valuations. Does it really make sense? Where do they find synergies? We're still expecting State Street to come out with a statement. It's now, though, gaining 4.5%. And then Prosus. Now, this is a nice little company, 7.6% higher. And this is because just earlier this morning, China approved 60 video game licenses. And really, that bolsters the bed for this kind of industry after they lost some $2 trillion because of the crackdown coming from China. And then Inditex, better than expected, thanks to Zara. And the share price, Alex, is gaining almost 6%.
I've literally seen a line around the block for the Zara outside in Midtown Manhattan. It gets a little crazy, summer. Right? So that brings us to the consumer story that we've been watching the last couple days. So you have certain retail doing well, other retail getting hurt. Then you also have airliners crushing it for the summer. Budget airline Wizz Air came out with results reporting a full-year loss as the coronavirus pandemic continued to affect passenger numbers. But their outlook for the summer is pretty strong. CEO Joseph Varadi spoke to Bloomberg's Anna Edwards.
We are seeing systemic issues across the industry globally. The supply chain is out of labor resources. We are seeing constraints in ATC, air traffic management. We don't have enough controllers in the system. As a result, we are suffering a lot of delays and ending up with cancellations at the end of the day. We are seeing airport security, ground handling, not having sufficient staff. As a result, they are putting a lot of strains on the operation of the industry.
Okay, I know that sounded really bad, but in theory, you're looking at summer demand is still quite bullish when it comes to travel, and crewing ratios are back in line to pre-pandemic levels. So let's get the real take on the consumer here. Isabel Allen is KPMG Global Head of Consumer and Retail. Isabel, I feel like what the consumer is spending on is one of the most unknown but asked questions out there, particularly when it comes to retailers. In your work, what are you noticing?
Well, I think we echo everything that you've just talked about the level of unpredictability and very contrasted performance between different categories. And I think that's the landscape we're going to have to live with for the foreseeable future. We've never lived in a world with as much data as we have currently, and yet all our clients are talking about how difficult it is to predict what the consumer, you and I and other people, are going to do in these unprecedented times. What we've got to remember also is this sector, retail, consumer, travel, is coming at the back of a very disrupted period with the pandemic, which has made the understanding of the performance and understanding of the behaviors much more difficult. And now also in the backdrop of quite intense geopolitical pressures, this doesn't make for a much easier to understand landscape. So what we're seeing, exactly as you said, nobody's got a crystal ball and they wish they had, but we are starting to see the beginning of something that we're going to be monitoring in the year to come, I think. We did a pulse check in the US recently. Yeah. Sorry.
Does anybody have price elasticity? I mean, this is the million-dollar question. So I imagine like boardroom meetings, chief executive, sweating and saying, my price is going up by this much. How can I pass it on to the consumer but still keeping them as shoppers?
That's right. And price elasticity and all the models of price elasticity have been built in a world which is not the world that we're in today. It's been built in a world where the availability of choice and your ability as a consumer to shop around and see what's available in your country, out of country, is not what it used to be. And the behaviors of the consumers is driven by very contradictory patterns that we're seeing. On the one hand, you've got the millennials behaving in a particular way and the aging population behaving in another way. You've got, ESG, planet-conscious consumers who are starting to form an opinion, and I think their behaviors in the current climate is going to be particularly interesting to see. You've seen in the economic news recently, the collapse of some, actors in this space in the fast fashion. Yeah. At the same time, you saw in the Texas result today, and they're doing really, really well. So I think price elasticity is going to be, as you say, the number one question. Isabel. I think companies' access to data and observing their particular consumer is going to be key here.
So Isabel, that's the one side, right? Like how much price elasticity you have. On the back end, which companies handle their inventory and their costs best, like in terms of either hedging costs or supplying the stuff better, being able to manage inventory better? The guys who we thought were going to be really good at it, like a Target, for example, aren't right now.
Well, and this is one of the new conundrums, and this is why this industry is so fascinating at the moment, is that what used to make you successful in the past might not be what makes you successful in the future. If you think about the supply chain in particular, everybody's been talking about just in time for your supply chain for years. That was the best way to control your costs. That was the best way to manage your inventories. And then come, pandemic and geopolitical events, which put pressure on the availability of products on the shelves. And all of a sudden, you're realizing that just in time might not be the best business model for you to be successful. So I think we're up for a very turbulent time ahead. I think we're going to see some very contrasted performance between categories, but also within a category between players. And what I think is going to be really interesting also as we watch this story unfold is the way that consumers transfer between categories of spend within their overall household budget.
So how do they do that? Do they cut? I think you believe that they actually, not wear less clothes, but buy less clothes, but spend more on other. Or we could just go to the beach and just wear a bikini. So Isabel, how do patterns shift?
Yeah, so what we're starting to see already, and we're keeping a tab on this, is you're having people who are convinced that they're headed into a recessionary environment. And in our survey in the last few weeks, 70% of consumers in the US expect a recession within the next 12 months. So it doesn't matter whether it is a recession or it isn't, from the central bank and the government's perspective, if the consumers believe that they're facing into a recessionary environment, of course that's going to impact on their consumer behaviors and spend. What's interesting in that survey is 2/3 of them say that they've got a plan in place to prepare for the financial challenges ahead. And they're starting to develop mitigation strategies, things like delaying spend, things like shopping around, things like looking for bargains, and, which should be a concern to some of the companies in the sector, switching providers and retailers when they think that they're really not getting as much value from money as they could elsewhere.
Just quickly, Isabel, when we talk in 6 months, are we going to talk about retail being inflationary or more of a disinflationary force?
I think we're going to see different types of retail working in different ways. I think there's going to be a food retail answer. There's going to be a non-food retail answer. To be honest, I think it's too early to say, but you can invite me again in 6 months' time, and I'd be happy to help you with that.
Honest
Isabel,
answer.
it's an invitation. Yeah, we'll see you in 6 months. I don't know, Alex, I feel like Isabel was describing me. I buy less clothes, but actually I want to go on holiday more just because of the 2 years of COVID we've had.
I'm exactly the opposite. I keep buying clothes, but I only buy at discount. That's the thing. So that's going to be great with me with Target, but not for like Bloomies. That's going to be the distinction for me, I think.
Oh, yeah, that's brilliant. You and I make the perfect consumer together. Isabel Allen there, KPMG Global Head of Consumer and Retail. Now, this is a picture for where we end up with European stocks. They've settled. As we head to break, we're still seeing quite a lot of pressure across the board. European stocks, of course, down 0.6%. The FTSE really directionless. As we heard from Boris Johnson, what exactly he wants to do is not change track. We haven't seen much on the Northern Ireland Protocol. And then the CAC 4 and the DAX really bracing themselves for the ECB tomorrow, Alex.
All right, well, coming up, you got the next generation of space companies. We're going to talk to the CEO of the first space launch company to be traded on the NASDAQ. Chris Kemp of Astra Space will be joining us next. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
In a global economy, there are countless moving parts. If you want to grow, you've got to know. Vertex, cloud-powered tax tech that enables frictionless transactions, invoicing, and payments. Companies who know, go with Vertex.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
We're all horrified by what's happening in Ukraine. Hundreds of thousands of civilians are fleeing for their lives, and an estimated 12 million people need humanitarian assistance. I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been on the ground in Ukraine since 2014, when conflict first broke out in Crimea. Now, with attacks by Russian forces across the country, we are scaling up our relief efforts inside Ukraine, as well as in Poland, Romania, and Moldova, to provide medical and mental health services, protection for women and children, and clean water, sanitation, and hygiene. The needs are immense, and the situation is worsening by the day. You can help. Please visit internationalmedicalcorps.org to find out how. Thank you.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is Bloomberg Markets at European Close, and you're looking at live pictures of the principal room. Well, coming up, Anna Han of Wells Fargo Securities joins Bloomberg TV, 3:30 p.m. New York time, and this is Bloomberg.
Well, later on today, one thing that Bloomberg TV is watching is SpaceX. Falcon 9 is going to launch another satellite into space. This is the Falcon 9's 23rd launch this year. Now, that space is quite competitive. One other company in the space is Astra. It offers one of the lowest cost per launch services and is the first space launch company to be publicly traded on the NASDAQ. Chris Kemp, Astra's CEO, joins us now from the Bloomberg Technology Summit in San Francisco. Chris, I feel like every day we get a new launch of a company going up and delivering a payload into space. What's next for you guys? Where are you now? What's next?
Well, we've delivered several successful orbital flights for our customers, and we're actually just getting ready to do a series of launches for NASA. In fact, we're expecting a launch license on Friday to enable us to begin a series of launches for a tropics mission that's coming up out of Cape Canaveral. And our launch window will actually open up on Sunday, this Sunday the 12th, should we receive the license on Friday.
So, Chris, is your launch rocket technology now stable and reliable, or are you still having to work to try and minimize failure risk?
Yeah, we're focused on really scaling up the number of launches. Astra has already sold over 50 launches, and so we're in a phase right now of increasing the production rate of launches, increasing the number of spaceports that we'll be launching from. We just announced that we'll be conducting our first launches out of the UK as early as next year from the Saxford spaceport, again, working through the license process there as well. And really just expanding our launch operations is what we're focused on today.
Yeah, and like you mentioned, that June 12th potential launch, that's new, that's huge, and we appreciate you breaking that news with us here. Can you talk to me a little bit about the business? Like, are you taking any business from SpaceX, or is this all just growth in the business?
Well, there's such a demand for getting things into space. Over the past couple of months, we've seen $12 billion raised in public markets. We've also seen the launch market consolidate because of sanctions against Russia. A huge amount of the supply of launch came from the Soyuz launch vehicle, which is no longer available to Western companies. And of course, we're seeing a tremendous amount of capital being invested in large projects from companies like SpaceX and Amazon. And so it's really a trifecta where we're seeing increases in defense spending, yet more demand being created here. So I think it's a really exciting time in the space industry. A number of analysts are forecasting this industry is growing to $1 trillion over the next decade or two. And really, we're kind of, I think, we're timing this pretty well as we're scaling our business.
Yeah. Chris, what can you tell us about the economics of your launch service compared to rivals? I mean, I know that, the way you calculate, it's a little bit geeky, but I was really quite into it, is, I think dollar per kilo delivered on an LEO orbit, and can get that price down.
Well, I can tell you that economics that people are focused on are what is the lowest price per kilogram that you get into space, and of course, what is the lowest cost per launch itself. And you see companies building very large rockets that are reusable, that are driving the price per kilogram down. What Astra's focused on is driving the cost per launch down. So having the smallest launch vehicle manufactured in the greatest quantities, launched much more frequently, and that's driving the lower cost of access to space, enabling new companies, startups to get to space more easily, put their payload exactly where it needs to go, exactly when it needs to get there. So it's really enabling a lot of innovation in the market right now.
So do you feel like you have more pricing power then as you focus on that part of it and as there is so much demand, or do you tend to look more at your operating costs and how you as a company can kind of bring that down in a world where inflation's kind of running all over the place?
Yeah, I think Astra's focus since day one has been the most frequent launch, right? So we're focused on the mass production of our launch vehicle. We have a rocket factory here in the Bay Area where we're in the process of scaling from a monthly to a weekly production cadence. We have economies of scale that start to kick in. So as we start to add automation to the factory, add automation to the ability to launch with fewer and fewer people, we begin to drive better economics. So Astra's already providing the lowest cost per launch. I believe we're about half the price of our nearest competitor, and we're going to continue to focus on driving scale up to drive our costs down so that we can continue to drive better economics for our customers.
So Chris, what type of companies from which sectors are actually looking to put satellites up?
There's basically two primary areas. There's connecting everything on the planet, so communication services, and then there are companies that are really trying to give us better information about what's happening here on the planet through Earth observation, help us understand how to make crops grow better, how to use our natural resources, how to understand where we're polluting the atmosphere. And so these are the key areas of growth in the space industry today. And all of these things are really focused here on Earth. And so I think if you look at the overall space economy, the vast majority of it is how do we improve life on Earth? It's not how do we kind of put people in rockets and go explore other worlds. It's how do we make our world a better place for our children.
Right, and that's where low Earth orbit gets so competitive, because that's where you do that from. It's not about going to Mars necessarily for you guys. Last question when it comes to talent. We talk a lot about the cost of labor and how competitive it is. It feels like that potentially could be very true for the space industry. Talk to me a little bit about your hiring practices and what it's like to get talent.
Yeah, Astra is based here in the Bay Area, so we have a lot of great tech talent here. We just hosted the governor last week, and one of the strongest benefits of California is all the great tech companies that are here. We've often called Astra the first space tech company, right? Where we're really trying to bring the technology, the automation, the software into what we're doing and how we're doing it. And we're bringing a lot of talent out of great companies like Google, Apple, Tesla, that are based here in the Bay Area. And with a mission like improving life on Earth from space, it's definitely easier for us to get folks that are coming out of these companies, working on smartphones, working on rockets, and working on satellites that are helping create a healthier and more connected planet.
Chris, thank you so much for joining us. Chris Kemp, their Astra Chief Executive Officer. Thank you. Now this is Bloomberg.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
Another crazy day? Of course. You're a CIO in 2022, but you're ready. Because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want. Your team, ours, or a mix of both. With the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
What if you were a gigantic snack food maker and you had to wrestle a massively complex supply chain to satisfy cravings from Tokyo to Toledo? So you partner with IBM Consulting to bring together data and workflows so that every driver and merchandiser can serve up jalapeno, sesame, and chocolate-covered goodness with real-time data-driven precision. Let's create supply chains that have an appetite for performance. IBM, let's create.
U.S. stocks really going nowhere. 10-year yield staying right around 3%. Abigail Doolittle is tracking some of those moves. Abigail?
Yeah, Alex, stocks really are looking for direction. We have the S&P 500 down slightly, the NASDAQ 100 up slightly. What way will we end? Right now, the NASDAQ on pace for a third up day in a row. The S&P 500 trying for that. The S&P 500 right now on the day down ever so slightly, but over the last 3 days up 1.1%. The best stretch in more than a week. Let's see if it continues. As for some stocks moving beneath the surface, the relatively flat surface. Let's take a look at what's happening. And one standout is Meta Platforms trading under the FB ticker. This will be the last day of that classic FB ticker. After about a decade or so, shares up 2.3%. Tomorrow, it will be Meta through and through. ExxonMobil up nearly 2%. This, of course, is the oil giant is hitting another record high in sympathy with oil climbing. Intel, however, down 4.3%. Cut its Citigroup as the company pre-announced tempered guidance in a way, so a little bit of a soft pre-announcement similar to so many other companies that we've seen recently. And Altria down 5.6%, this on a negative view from Morgan Stanley. As for the S&P 500 and whether or not we may get this 3-up-day bounce and the bear market rally, if that is what it indeed is, let's take a look at this chart that we've been looking at for weeks. Here we see this downtrend, that bear market on an intraday basis ever so briefly. Toward the top of it, maybe near 4,300, that RSI continues to creep higher. Signs, Fran, maybe that the bulls are going to be in control at least for a little bit longer. It will be all about that CPI and the FOMC meeting next week.
Yeah, it's a big week this week and next. Abigail, thank you so much. What a great chart. Abigail Doolittle there. Now, here's what we're watching in the next 24 hours. Today, SpaceX, the Falcon launch. We were talking to Chris Kemp about that and, of course, what it means for the space industry. Then President Biden will be at the Summit of the Americas in Los Angeles, and we'll also be doing an interview with Jimmy Kimmel. Also on Bloomberg today, tune in to Kathy Wood's Fireside Chat with Bloomberg's Ed Ludlow. Don't miss that. That's from the Up Summit, and we'll carry that live.
Looking forward to that. Also tomorrow, we've been talking about all day. It's the ECB decision. Don't miss that. Plus, Meta changes for its ticker from FB to Meta. I'll probably still call it Facebook. And the January 6 hearings on Capitol Hill, that will be prime time and quite a big deal here in the U.S. Staying with politics, coming up, Senator Rick Scott of Florida joins Balance of Power with David Weston on television and radio. Francine, thank you so much for joining me in for Guy Johnson there in London. I'm also headed off to radio. Bloomberg, the cable, DAB digital radio. Join me there. This is Bloomberg.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
We believe there's an innovator in all of us. That's why we build technology that makes it possible for every business and every person to come to the table and do more incredible things.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Hi, this is Lisa from 4imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes. Certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items. Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
From the world of politics.
It's really going to be very, very important in the next few weeks to see how well the Ukrainian forces are absorbing all of what the U.S. and other NATO and non-NATO Western countries are providing to Ukraine.
To the world of business.
I think the president has been very clear that fighting inflation is his top domestic priority.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Some form of gun legislation may be inching its way forward on Capitol Hill, and the White House yesterday enlisted Academy Award winner Matthew McConaughey, native of Uvalde, Texas, in the cause.
I'm here today in the hopes of applying what energy, reason, and passion that I have into trying to turn this moment into a reality. Because as I said, this moment is different. We are in a window of opportunity right now that we have not been in before. A window where it seems like real change can happen.
We welcome back now someone who too sadly has had his own experience with mass shootings in schools when he was governor of Florida. He is now the senator from Florida. He's Republican Rick Scott. So, Senator, thank you so much for being with us. As I say, sadly, you've had your own experience when this happened on your watch down in Florida. When that happened, I'm curious about the reaction because part of it, as I understand it, was legislation that you signed.
Yeah. Well, first off, you just can't imagine this happening. One, you can't imagine that somebody would want to do this to another human being, especially a child. And two, your heart just goes out to these families. I still talk to many of the families that lost their loved ones at Parkland, and I talked to them right after Uvalde happened. And I think they're in the same position I am. We've got to do the right things to make sure schools get safer. So what I did when I was governor is within, I think, 2 days after the shooting, I put together 3 teams of people. One that came in and gave me their ideas on mental health issues. One, educators said, what should we do from an education standpoint? And 3, what should we do from a law enforcement standpoint? And within 3 weeks, I signed historic legislation that said we are going to add more mental health counselors at our schools, and we're actually going to do assessments of our students that are struggling. Number two, we're going to do real threat assessments of our schools. We're going to harden our schools. We put way more resources into our schools, and we're actually going to do drills, and we're going to make sure we do drills and make sure that happens. Number three is, we did put law enforcement in every one of our schools in Florida. There's a law enforcement officer when the school's open. They're there. Then we said, if you're threatening harm to yourself or somebody else, then through the court system, through due process, your weapons, your guns can be taken away from you on a temporary basis. Because, we've got to figure out, how do we make our schools safer? And so that's what I focused on, and that's what we've got to do. We've got to figure this out. How do we make our schools safer? A lot of people just want to take away people's guns. I don't want to take away the guns. I believe in the Second Amendment of law-abiding Americans. But if you're threatening harm to somebody, then, and you shouldn't have access to a gun. The other thing we did was we worked with the FBI, and I was very vocal that the FBI had to change how they were doing their call center operation, because they had prior knowledge. They had 3 times that somebody had called about this shooter at Parkland before it happened. Right. So they've completely changed their hotline and their call center operation, which is a real positive.
Senator Rick Scott, I really beg your indulgence, because President Biden is speaking right now at Joint Base Air Andrews. We're going to go there just for a moment. We'll be right back to you, sir. Here's President Biden.
It's time they move. It's time the states and the localities spend the money they have to deal with crime, as well as retrain police officers, as well as provide for more community policing. It's time to get on with doing that, and that's what I think the message last night from the American public was in all the primaries. Thank you.
Okay, that, of course, was President Biden speaking on his way out to Los Angeles for that Some of the Americas. Senator, I apologize for the interruption there, but I suspect you would agree with some of what you just heard from President Biden, that the states and local governments should be spending the money they have on law enforcement.
Absolutely. When I was governor, by the time I finished, we're at a 47-year low in our crime rate. We have sheriffs by county in our state, and we got police chiefs by city. And I did everything I can to get everybody to share information. One of the things with regard to school safety is at the federal level, at the state level, and at the local level, we've got to share information. I have a bill that would have our Secret Service, who does threat assessment, put more resources into how do you, school shootings, and make sure we know. On top of that, I've got a bill named after 2 of the students that lost their lives, Luke and Alex, that would say we're going to codify a plan right now to make sure we find best practices in our schools, and all parents can say, at my school, they're doing that, or if they're not, I'm going to get involved to make sure that happens at my school. We got to find best practices, keep our kids safe.
Senator, you mentioned you don't want to be involved in taking guns away from people. What about keeping people from getting guns that otherwise would? Because as I understand it, the legislation you signed in Florida also increased from 18 to 21 the time for long guns, including some of these AR-15s that are being used in some of these shootings, and also had a 3-day waiting period. Do those things make sense as well?
I think, again, we ought to do this at state-by-state basis. In Florida, it made sense. We changed the age to be able to buy a gun to 21. Now, you could own a gun under 21, but you couldn't go buy a gun under 21. So if your parents, are with you, and eventually they want to give you a shotgun that you want to go use for hunting and things like that, that's all doable. But you couldn't go buy one by yourself until you're 21, unless you were law enforcement or military or correction officers. So I think we have to take everything we're doing and say, what works? And I think most of this we have to focus at the state level, because what happens is they know what fits to their state, and you can make changes if it doesn't work right.
So Senator, we obviously had a federal system, and there are certain things that the states do and certain things the federal government does. But I'm curious about where in the gun legislation and gun regulation area it should fall to the states. I mean, do you believe in federal laws about any guns? I mean, like machine guns or bazookas and stuff like that? That's done at the federal level, not state.
Well, we already have federal laws with regard to automatic weapons and things like that, and I think that makes sense. But I do believe in the Second Amendment, and I don't want to impact a law-abiding American's ability to own a gun. It's just that first off, we generally have a good idea, people that are having problems. So let's create systems to stop them from having access to guns. We've got to deal with mental health. We've got a lot of 18, 19, 20-year-olds that are struggling right now. We know who they are. Let's make sure we help them, and let's make sure we assess them. Let's make sure we share information. In the Parkland case, many of the students that I met with told me, hey, we knew who was going to be the school shooter. I mean, he had posted a video saying he was going to be a school shooter. And unfortunately, the FBI had that. It didn't share that information locally. So that's been resolved in that case. But we've got to figure out, we've got mental health issues. Let's deal with them right now in this country.
Now, as I understand it, there's negotiation going on involving Republicans as well as Democrats right now up there on Capitol Hill. We've even had the Minority Leader, Mitch McConnell, while not saying he's going to do something, really indicate that he's open to something. I know you don't have specific legislation in front of you, but at this point, from what you've seen, are you against any further federal legislation on guns?
Well, I don't support gun control legislation. I support school safety legislation. That's what I did. The way I look at what I did in Florida, I made our schools safer. That was my job. Make our schools safer. Make sure parents know that when their child goes to school, they're going to come back alive. That's what I want to focus on. Unfortunately, a lot of people on the Democrat side they really don't believe in the Second Amendment. I do believe in the Second Amendment.
So, Senator, I know that the first and foremost is really the safety of our children. That's for you, certainly from your experience in Florida, for all of us across the country. At the same time, there are politics involved here, and there are reports now that part of the strategy on the Republican side is to sort of let this issue slide for a while and then come back and really emphasize things like inflation when we come to the midterms. You're part of the process of getting more Republicans elected in the Senate. Is that part of the strategy?
No. I mean, and I hope no one believes that way, because I think what we ought to really do, while inflation is probably going to be the biggest issue in the election in November, and I'm the head of the National Republican Senatorial Committee, I believe what you have to do is you have to do the right thing. That's what I did. In 3 weeks in Florida, after Parkland happened, we got people together and we came to a conclusion that we got bipartisan support to make our schools safer. We can do that here. There's things to do. I mean, Schumer blocked a common sense bill to just have a database of best practices. Let's start doing everything we can do. Instead of saying, oh, let's go to our sides and get nothing done. There's good things we can do right now. Let's do those things.
But good things we can get done on things like mental health and hardening the schools. But just to be absolutely clear, you don't think there are good things that can be done in terms of further gun legislation at the federal level?
I think what we ought to do at the federal level is, I have a bill with Marco Rubio that said we're going to incentivize our states to do these risk protection orders, what some people call red flag laws, to say when you're threatening other people, or you're harm to them or yourself, you have to have a good due process. We're going to take away your weapons on a temporary basis. I think we should be doing that.
So you would be in favor of that in federal legislation right now?
Yeah, and there's other things that we can do, more things on mental health. We can do. Right. We can help put more money into our schools for hardening our schools. But you know, David, the other thing is our parents have got to demand this. They have to go to their schools and say, I demand that my child is safe. What are you doing? That's going to help move this whole process along.
Okay, Senator, it's always a pleasure to have you with us. This was very informative. Thank you. That's Senator Rick Scott, Republican of Florida. Coming up, we turn to Ukraine for an update on the ground war in the Donbass from retired Marine Corps Major General, he's Arnold Punaro. This is Balance of Power on Bloomberg Television and Radio.
CME Group, where risk meets opportunity.
I know the 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
That's exactly what I was thinking.
Wonderful.
Ask your financial advisor about Bitwise.
Adapt in a changing world. You could hire a professor of theoretical mathematics.
We all know this equation, right?
He'd crunch numbers day and night.
That's it.
To maximize profitability.
Morning.
I have quarterly numbers. They're beautiful.
And forecast revenue from every corner of your organization.
Is that important?
Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster. For a solve problems like a genius world. Workday, for a changing world.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ. A fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Fidelity, your dedicated advisor, will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The battle continues for the Donbass in the eastern part of Ukraine, where the Russians now clearly have narrowed their objectives there to some very specific places in the east, and they seem to be making some slow progress. I emphasize slow, but nonetheless, apparently some progress. To give us his perspective on how this war is going at this point, we turn to retired Marine Corps Major General Arnold Pernara. He is CEO of the Pernara Group. So, General, thank you so much for being back with us. What do you think we know about what's going on in the Donbass right now?
Well, David, a privilege to be with you. And let me sort of give an overall strategic overview first, and then go to the tactical details. I would say at the 100+ days of Russia's unprovoked and very aggressive invasion of Ukraine, there are some positives and there are also some negatives. On the positive side, obviously, because of the fighting spirit of the Ukrainian military, the Ukrainian people, the tremendous leadership of President Zelensky, Russia has been precluded from achieving their big strategic objective, which was to topple the Zelensky government and take Kyiv, and that has not happened. NATO has jumped in with both feet, very strong. The West is responding with lethal and humanitarian aid. Sweden and Finland have asked to join NATO, so that's another 803 miles of border with Russia that now will be in the hands of NATO. And obviously, the sanctions are starting to bite. Having said that, if you look at it from the other side and some of the negatives, Russia continues to pulverize Ukrainian cities. They've now acknowledged at least 40,000 civilians that have been killed that are non-combatants. The wanton killing of women and children continues. I think the death toll is probably higher than that. Zelensky said the other day that in the Donbass fight, as you said, it's a slug out. They're losing 100 killed in action a day and many more wounded. Those are the totals that we saw in the worst days when I was there in Vietnam in 1969, where 18,000 Marines and soldiers were killed that year. And so they're suffering tremendous casualties. And so I think what we've got to focus on is basically helping Ukraine limit the Russian advances. Right now, if they begin to secure the Donbass through this war of attrition, Odessa, which is a prize for Russia, is less than the distance between Washington, D.C. and Philadelphia. And already they're blockading the Ukrainian grain, the 5th largest exporter of grain in the world, while they 360,000 barrels of oil a day are on Russian tankers going through the Black Sea. And by the way, even though we've given in the U.S. close to $20 billion and other NATO countries in the first 100+ days, the European allies, even though they say they're going to cut off Russian oil and gas, have spent $100 billion that have gone into Putin's war coffers. So we've got to look at sort of the balance. And I would say right now, if I look at the situation overall and balance out the pluses and minuses, I would say the outcome is still uncertain and to be determined. So the West needs to quit patting ourselves on the back and dig in with both feet.
So what more, from your point of view, based on your vast experience and also what information we have, what more do the Ukrainians need to keep the Russians from taking all of the Donbass?
I would say that the West should not be dictating to the Ukrainian military where they can strike Russian targets and Russian supply depots, oil reserves in Belarus and Russia. They need longer range artillery. You never give a military a sanctuary. I mean, that was one of the problems we had in Vietnam. We at some point declared things that were off limits. And Russia, to get the forces into the Donbass, to get them resupplied with fuel and ammunition, They're bringing that in from Russia, and they've got supply depots that would be just across the border that Ukraine could range. I think we've got to give them a heck of a lot more artillery. There are those in our military today that say artillery is passé. I will tell you, the 40,000 Ukrainian civilians that have died at the hands of Russian artillery would tell you that is just not the case. So we've got to stick to it. We've got to help Ukraine keep Russia from taking Odessa. And also, by the way, in a country of 40 million people, 14 million are displaced. So we've got to help Poland and the other countries help take care of these refugees that have been displaced. It's almost like the entire state of Pennsylvania has been emptied of all the people that live in it.
So, General, just listening to what you have to say, it sounds like attacking the supply lines for the Russians is an important thing you would pursue if you were conducting this war. Can they affect